So let's begin the CA Final Advanced Auditing Revision Marathon applicable for May 26, September 26 and Jan 27 exams. Now please do not skip this introduction video. Immediately below you have timestamps for each and every topic that we covered. So this introduction I'm especially giving you what is this marathon, how many years it is going to be, what are we covering. We are going to cover 90 marks weightage. You will have paper for 118 marks with choice, MCQs, everything put together 180 marks. We are going to cover 90 marks. That too, we are going to cover it in two parts. First, part 1, 12 hours. Part 2, 12 hours. Simple, watch below timestamps. If the timestamp starts with audit report chapter, then that's a part 1 marathon. If the timestamp starts with ethics related continuation topic, group audit SDG, then that is part 2 marathon. So what I'm going to cover in part 1, audit report 20 marks weightage, Caro in-depth discussion I did, review chapter in-depth discussion, specialized, professional ethics, everything. It's like an in-depth marathon. It's not even like a routine just formality kind of marathon. Intensely, detailedly we discussed each and every concept. Then ethics continuation, group audit and SA 600. By the way, before I talk about part 2, let me tell you one important thing. What material I have used in this marathon? Goat notes. And at certain places, I have even opened my question bank and then showed. I even solved past exam question papers also as a part of this marathon. So what are all things you need? One is Goat Notes 2026. If at all you already followed some other faculty book, absolutely you can use that book along with this marathon, no issue. But if at all you are using my Goat Notes, it will be breeze for you. The marathon will be utmost easy for you. And question bank of mine 2026. One small request to every student before they watch the marathon. As soon as you finish one topic, go back and download my question bank PDF of 2026. PDF is there on our website. If at all you are already having a hard copy, see, I hope every one of you know my particular question bank is a colored question bank like this. This is complete like a colored question bank where we highlight keywords, everything. So this is how beautiful the question bank will be. And if you observe, the question bank will have 3 parts. You see blue color background, the color is here. Here it is yellow color background, the color. Again you see here orange color background, the color. Every chapter is divided into 3 color codings. Orange color background you will have test your knowledge, test your understanding illustrations. Blue color background test your knowledge questions of ICA. Yellow color background we name it as MRP, mock revision past exam papers. Up to Jan 2026 attempt, this question bank is updated. In the May attempt, coming MTPs if at all were there, that will be updated later. We will give you an additional PDF. In this question bank, you will find something called exceptional at few questions. Like these questions, the answers were slightly different. In every chapter, you will find exceptional. Must and should. After finishing one chapter, go and solve the question bank. Something which I notice commonly in every CA final student and CA inter students also is they are neglecting question banks. Question bank you should never neglect. That is the most important resource in addition to the concept notes. Then there is something called chart book of mine is also available in my website. In our website, Shrestha for CACMA, you can download the chart book PDF and then use it. Chart revision is also uploaded on the YouTube for previous attempts, which I will re-upload. Whereas this part 1, part 2, which I am doing is completely a fresh new marathon. Okay. So part 1, I told you. Part 2, professional ethics. Okay, so professional ethics is continuation. Group audit 6 marks weightage, SDG 6 marks weightage, NBFC 6 marks, bank audit 8 marks weightage, related service 4, gap 10 marks. So almost you will find 12, 18, 18 plus 4, 22, 30, 40. So here it is 40 marks and here it is 25, 30, 46. So easily minimum 45 to 85 to 90 marks in these 2 parts. Apart from this, I will also, we have a chapter in CA final audit evidence, which is our 5th chapter in our book. Completion and review is there. These 2 topics were discussed in CA final only briefly. For those 2 chapters, I request you to watch my CA inter audit marathon. This is must, but this you should do only after you finish these 2 parts marathon. Apart from that, the first chapter in our CA final book is quality control. I will do a live revision of the same day before exam. Your day before exam, I will do quality control live revision. With these topics also put together, you can easily attempt 100 marks of the paper, minimum 90, even a worst case scenario. That's it. So what I'm going to cover in this marathon, part 1, part 2, everything I spoke. Below, look at the timestamp. You will understand which part you're watching. That's it. This is a common introduction video. So I spoke about the notes and material, colored material, book you can order on the website. PDF is also freely available on the website. Which part, what topics I'm covering, what is the level of coverage, question bank I spoke, and everything I clearly mentioned about this marathon, what you're going to get. That's it. Make use of it and do well. All the very best. Please continue watching. Now let's begin schedule number 1, part number 1, which has 12 clauses. In this schedule also there is an order in which we need to understand things. Okay, the order is 1, clause 1, 2, 3, 4, 12. Then you can think of 11, correct, 11, then 10, 9, then 8, then 5, 6, 7. These 3 are put together. According to me, it's only one clause. These 3 put together, to me it's like one clause. Though there are 3, it's actually one and same. Technically they're all interlinked clauses. Now 1, 2, 3, 4 we're dealing with how you have to do the business. 12 is dealing with who should sign. 11 is dealing with can you do additional occupation. 10 is dealing with, we already saw mystery audit, that time I told you this, you cannot charge fees as a percentage of profit or contingent upon a finding. 9, I already discussed it along with clause number 5, part number 2, schedule number 2. Then 8, you should not accept the audit which is previously done by another auditor, NOC concept. Okay, fine. So first of all, 1, what is this first clause is dealing with? A CA in practice is deemed to be guilty of professional misconduct if he allows others to practice in his name. If at all a CA is allowing somebody to practice in his name, this is what linked with branch office provisions. This is nothing but what? Linked with branch office provision. You should not allow somebody to use your firm name, your name, unless he is a partner of the firm or employee of the firm. Are you clear? So unless the other person is also a CA and he's associated with you as an employee or he's associated with you as a partner, then he can use your name. Correct? Yes or no? Now look at that provision. So clause number 1. Now before I just wanted to discuss once the disciplinary mechanism before I proceed with clause number 1, just briefly. Okay, now there is a website called disc.complaints, DISC. So what is this website? This is nothing but disciplinary directorate website. Here you can file a complaint on a CA. Okay, if at all you see, you can file a complaint here. So e-form you can choose, some 3,000 rupees approximately you have to pay while filing the complaint, and once you win the case you get back the refund of the fee plus all damages whatever that you incur. Okay, so you can file a case on the CA by filing with this. Once you file the complaint, the complaint will reach to disciplinary director. Right now I showed the website is nothing but disciplinary director website. Yes or no? So it reaches first, based on the facts you given. Okay, he will classify whether is it a guilty or not guilty. First of all, we have totally so many types of guilties, right? 35 plus other provisions of CA Act, so many were there. So prima facie will see whether it's guilty or non-guilty. Suppose if it is not guilty, he will just submit this information to list of complaints. He will just submit list of complaints which are not treated as guilty to Board of Discipline. Sometimes Board of Discipline accept it. Yeah, okay, fine. They are also by default they accept it. They won't verify once again. Okay, they'll accept it and close the matter. That's it. Suppose Board of Discipline said no, that's a guilty. Discipline director, you misinterpreted. Then if it is a schedule 1 offense, Board of Discipline itself will proceed investigation. If it is schedule 2 offense, then there is another committee called disciplinary committee. They will proceed with investigation with that committee. Are you clear? Now first of all, you look at ICA. You look at ICA website, ica.org. You might have heard of Accounting Standard Board, Auditing Standard Board, Peer Review Board, Quality Review Board, all that, right? Quality Review Board is an independent authority which is created by central government because of the power given under Chartered Accountants Act. Just like it's an NFRA. NFRA, how it got the power under 132 section of the Companies Act. Same way, Quality Review Board has a power under section some 28 of CA Act. Whereas, see, Quality Review Board is an outside authority from ICA. Within ICA, there are totally 40. You might have seen in this ethics entirely. Council. What is council? 40 members. The Central Council of ICA. That's nothing but 40 members. Out of it, 32 will be elected candidates. 8 will be nominated by central government. You know, even in ICA also, the federal structure is like 3 steps. In ICA, the structure will be like a 3-step. First, there will be Central Council, Regional Council, and then branch level managing committees. Central Council, there are 40 members. Then regional councils, they have SARC, WARC, EARC, CARC, NIRC. These are all regional councils. Then branch level management, which are nothing but in your own city, you will find chapter office of ICA. That chapter office is managed by some group of individuals. That's branch level managing committees. Okay. Then regional committees will be there. Then central council will be there. The central council is called as Council of ICA. There are 40 members. Out of it, 32 will be elected. Within the 32, 6 council seats were allocated to South India. Okay. Some 6 were allocated to Eastern. Some 8 were allocated to Western. Like that, some allocation was there. Okay. Depending upon the region size, all that. Okay. So that's it. Totally 40 members will be there from the council right now. Within this 40, every year, one person will be elected as president and the other one will be elected as vice president. The current year vice president will be naturally next year president. President tenure is 1 year. Vice president tenure is 1 year, basically. Then council members tenure is 3 years. Every 3 years in ICA, elections happen. This is the council means. They're basically, council is nothing but what? They are board of directors for ICA. For a company, how board of directors are? They're same way like board of directors for ICA. And these council, do you think, like, look at a company, for example, a company will have a board of directors. Reliance, you take 14 directors they have, 14 board of directors they have. Now, Reliance also has committees. Finance committee, risk management committee, corporate governance committee, CSR committee, audit committee, yes or no? So, stakeholders relationship committee, remuneration and nomination committee, like that there are many committees which a company has to form as per SEBI regulations. Who will be part of this committee? Directors only. Like that, ICA also has some committees: disciplinary committee, examination committee, board of studies committee, accounting and accounting standard board, auditing standard board, peer review board, financial reporting review board, quality review board, audit quality, tax audit quality review board, TA, tax audit quality review board, like that, so many, auditing and assurance standard board, yes or no? So advisory boards, there are so many boards, so many committees or boards which are created. They are nothing but committees of ICA. Accounting standard board is nothing but a committee of ICA. Just briefly look into it. So committee is there, right? You look at non-standing committees. Look at the non-standing committees: accounting standard board, AI committee, audit committee, board of studies, corporate law committee, direct tax committee, management committee. All these are various committees. Ethical standards board, you might have seen at the end of our chapter, ESB. What is ESB? Basically, that's a committee of ICA. Who will be part of this committee? Who will run this committee? Central council members only. Council members only will be part of this committee. Just like in a company, how board of directors will form audit committee for audit purpose, here also they formed some multiple committees for various purposes, and those committees are called as non-standing committees. Okay, and again, standing committees were there. Within ICA, there is something called standing committee. Examination committee is a standing committee. Executive committee, finance committee, and disciplinary committee, these are permanent committees. These are permanent. Whereas non-standing committees are created for a specific purpose, which may be permanent, which may not be permanent. That's it. So this is what ICA means what. Okay. Enough. So that is the meaning of council. I hope you understood now the council. Now look at. So if upon receiving the complaint, if it is first schedule, board of discipline will proceed. If it is second schedule, disciplinary committee will proceed. Now once board of discipline, just a minute. Yeah. Once board of discipline receives the complaint related to first schedule, they will conduct inquiry. Yeah, they found guilty. Then they will warn the member. First they will reprimand the member or remove the name up to 3 months or levy fine up to 1 lakh. Suppose if it is disciplinary committee related to second schedule, they got the complaint. Then they investigate the matter. They found guilty. Then they will again reprimand the member. Reprimand means warn the member. Okay. Remove the name permanently or for any duration, and also impose a fine up to 5 lakh. So board of discipline or disciplinary committee will levy punishment, penalty, all that. If at all member is aggrieved by that, So no, like member feels, no, they didn't listen to me correctly. So member has an option to appeal, and to where he can appeal to appellate authority. He can appeal to appellate authority. Within how many days? Within 90 days. Within 90 days of order by Board of Disciplinary Committee, as the case may be. Not only the member. Disciplinary Directorate is the one who proposed this case, right? If at all he felt the action taken by Board of Discipline, the action taken by Disciplinary Committee is not proper, then Disciplinary Director also can go to appeal. Just like in income tax, in assessing officer, if at all, yes or no, a CIT, if at all he fails, who can go to the next level? Either CIT can go or even the SSA can go for. Exactly here also. Clear, everyone? Now, what appellate authority can do? They can completely cancel the order and issue a new order. So they can set aside the order, they can issue a new order, or they will ask them to do a fresh investigation altogether. Anything, the appellate authority has ultimate power. They will decide it. That's it. Are you clear? Next step. Now look at the clause number 1. Look at the clause number 1. So a chartered accountant in practice is deemed to be guilty if at all he is allowing another person to practice in his name. However, if the other person is a chartered accountant and either he is in partnership with the CA or employed by the CA, then no problem. If at all you are a CA with COP and in practice with me, in partnership with me, then no problem. You can use my name, my firm name you can use. Or if you are an employee with me, you can use my firm name. That's what a branch office provisions also says. That's it. Clause number 1 over. Clear? Everyone. Next, clause number 2. What is this clause number 2 says? First clause says you don't allow others to use your name. Okay, fine. I will not allow others to use my name, but I will indirectly get some clients from them. Through them, I'll try to get some clients and I will share profits to them. This is also prohibited. A CA is prohibited to share profits. A CA is prohibited to share profits of his professional business with others. However, if at all others come under the below list, like he is also a member of the institute where I'm paying referral fee, or he's a partner of our firm, I'm paying, profit share to my partner, or my retired partner, I'm paying profit share, or I'm paying to the representative of the deceased partner, I'm paying remuneration, or I'm paying fees to another member of professional body approved, or any person with recognized qualification. So what do you mean by person with recognized qualification or professional body? CS, CAA, Bar Council, lawyers. You are paying to architect, you are paying to actuaries, or you are paying to engineer and MBA. In September 25 exam, they have asked one question. MBA from local university. He did MBA from local university. There the assumption is not a recognized university. That's what the assumption they have taken. Therefore guilty. If at all you are paying any profit share to an MBA who is graduated from local university, which is not recognized institution, and you are paying profit to him for getting some client or for some work, whatever reason, you are treated as guilty. In September 25, this question has been asked. So MBA means only if they say recognized qualification, recognized institution, then only allowed. Are you clear? So basically, I am prohibited to share my profits with anybody. However, I can share my profits to another CA or my partner, retired partner, legal representative of the deceased partner, and a member having recognized qualification or a member of professional body. So who are all recognized qualifications? CA, CMA, Bar Council, Indian Institute of Actuaries, architect, engineer, MBA. That's it. Doctor, not covered here. Yes or no? Actors, not covered here. Film artists, not covered. Okay, only few professions were covered here. Are you clear, everyone? Now further, if at all you are sharing some profit as a deposit, you are sharing some profit as a deposit with a government treasury for administrative expenses related to cooperative societies audit, that is not treated as guilty. Now here, in entire ethics, there are some council decisions which will contradict with one decision with another. You might have found some contradictory. Sir, at some places firm name has to be used. At some places firm name they don't permit to use. First of all, where firm name is permitted to use, where firm name is not permitted to use, you might have seen. For example, in Jan 26, one question has been asked on CSR activities, where the member is sponsoring CSR activities. In the CSR activities, firm name has been used, where he is using the firm name. Firm name is not permitted. This we know it. Firm name is not permitted. Now, like that, I have identified certain cases. I have identified certain cases and classified at one place in my chart notes. If you look at my chart notes at the last page, if you see the chart notes last page, you will understand it. You go to the chart notes, confusion on firm name usage. Look at where it is permitted. Firm name, publication of books, articles, presentations, greeting cards, invitations, TV, movie credits, firm website. Even of course visiting cards, all that. Not permitted, sponsoring activities, you should not use firm name. Publications, announcements and prospectus, you should not use firm name. Online third party platform, you can mention your name as a chartered accountant, you can mention, but you are prohibited to mention firm name. On a company portal where the CA is a director, you can mention that he is a chartered accountant, but you should not mention firm name. So like this, I've given certain, issues like, I've given certain diagrams like this in the chart notes. It will be really useful. Chart notes will be really useful. It's 200 pages chart notes. You will really get a good overview of the entire subject within the 200 pages. Clear? Now again, come back to this. By the way, in clauses understanding, especially part 1, issues will be so many. There will be so many examples, so many issues will be there. Now here one context you should understand. These are decisions taken at different points of time by different people. For example, sponsorship activity. A CA should not mention his firm name. Tomorrow, if a similar incident comes and if Board of Discipline takes up this scenario, they might say it is not guilty. And these examples are applicable only in that case. They are not applicable for other scenario. These are decisions given. It depends on necessity of the firm name usage. If firm name usage is necessity there, then you can use the firm name, and sponsorship not a guilty. First of all, firm name, what is the importance of firm name? Yes or no? Like, it's a member who actually gets the service. It's a member who actually provides the service. He is the one who build the network. Yes or no? It's not a firm name. Firm is not a big deal at all. First of all, you see in all television today, many CS are coming mentioning their firm name, contact details, everything, which is actually guilty as per clause number 6. But nobody, LinkedIn profile, they're mentioning all the achievements, everything. That's actually guilty as per clause number 7. Yes or no? So see, whatever decisions you see in clause number 6, clause number 7, clause number 5, clause number 11, everywhere, whatever decisions you see, they are decisions. They are not rules. There is a difference between a rule and a decision. Decision can change. That's why some decisions at some places you will find it is permitted, at some places it is not permitted. For example, there is one question in our question bank, illustration or TYK, one question is there. Books and articles. Can a member use firm name in the books and articles published by him? You know, in the book, no, it says yes, provision. But in the question bank, it says no. In the question bank, the answer given by them, it says no. Which is right? I will say both are right. I will say both are right. It depends upon the facts. I kept that as an exceptional question, that's why. Yes or no? Books and articles, you're not permitted to use your firm name. For example, look at this question. Yeah. I think in articles related only. Books and articles. Yes, look at this. Now here I think he mentioned his professional service, not this. Look at. You look at, there is an illustration in ISA book, 7th illustration, correct? Huh? While elaborating on solicitation of work, the council has specified that a member is not permitted to indicate in a book which is published by him. He should not indicate what? His association with any firm of chartered accountants. In a book or article, he should not mention his association with a firm. Look at clause number 6, books and articles. Look at clause number 6 in your book, book and articles. Or even you look at ICA book, anything is fine. You look at ICA book, anything is fine. books and articles, or ICA book itself I will show you. Wait. Huh? Forename can be mentioned. You see here. You see here. It is not permissible for a member, yes or no, to mention in any book or article or presentation any professional attainments, whether the member is a, whether of the member or a firm of chartered accounts with which he is associated. Okay, firm attainments, all this is not permitted. However, he may indicate in the book or article designation chartered accountant as well as name of the firm. Here, two interpretations are possible. One is you should not mention about your firm name, or another interpretation, you should not mention attainments of the firm. Yes or no? But look at the question bank which they gave. They did not mention that indirect. They did not mention it clearly. Look at. While elaborating forms of soliciting, the council specified that member is not permitted to indicate in a book his association with a firm. His association with any firm, no, he should not indicate in a book. That's given in the very below illustration itself. Above you are saying you can indicate firm name. Below you are saying, you are telling again not to indicate the firm name, which is right. I think here itself, I think there itself, illustration 7 I will show you. What is it, illustration 7? Huh? Yeah, look at. The council specified that a member is not permitted in a book published by him his association with any firm of chartered accountants. Have you observed this? This kind of inconsistency is there in ethics chapter. Why this inconsistency is there? Now here we just now saw one rule, right? We just now saw one decision, right? These are all council decisions at different cases. Now here there is a decision, right? This is a council decision at some particular case law. There they mentioned a member can indicate in a book or article presentation his firm name, which is right. But in the below illustration, you should not mention in the book or article your association with a firm. What does it mean? You should not mention your firm name. Both are conflicting with each other. This kind of inconsistency is there at so many places. Okay, this is one example. Immediately you can correlate. In exam, what you should write? Two alternatives you should write. As per council decisions, a CA in practice is permitted to mention his association with the firm. Yes or no? About in the book and article. Alternatively, a council, in one of the decision of the council, a CA is also not permitted to mention. That's it, both. I don't know like why they gave like this. Ethics has this kind of inconsistency. That's it. At so many places. See, these are basically what? They're not rules. They are decisions. We have at the last to know ESB decisions. They're just decisions. These decisions are fluctuative. In the process of making the book, in the process of making the law, people obviously do mistakes. There is a lot of possibility for people to do a lot of mistakes in making the law. Okay, I mean, that's how the system, because these decisions were not given at one time. These were given at multiple points of time by multiple people. Correct? So that's why this kind of inconsistency is something that is unavoidable. You can't avoid it. So like this, but what we need to know, we should know that this inconsistency is there. If you don't know this, what will happen? You write something and come in exam, and you will check the answer later. You will be surprised. Sorry, I read this one. Here it is there. If I don't show this, if at all a student is solving one illustration and then comparing my good notes, what he will think? I wrote wrong in the notes. I wrote right in the notes, which is as per IC book. Yes or no? But in the illustration it is wrong. What can I do? That's it. Understood? Have you found this earlier? So this is the problem here. By the way, anyhow, I'll just show you once the question bank also. The question bank, we made it very clearly. 1 minute, it's loading. Yeah, you can see here the question is in orange background, right? Again, later the question is in blue background. Later the question is in yellow or green background probably. Yeah, you can see here. So what is it? Every chapter we divided into 3 parts. Illustrations from ICA book. TYK questions from ICA book is blue background. MRP, mock, revision, past exam paper questions. All that in the yellow background. And in every of this question, we figured it out and identified exceptional in that. Something which is different. Where when you read the question, you think of some other answer, but actually different answer will be there. So that kind of questions we identified, and even we marked it as exceptional. So like that, in every chapter this working has been done. So if you rely upon this question bank, I'm telling you, absolutely this is a masterpiece. There are so many scanners that are available in the market. You just compare this with the other scanners, you will understand. Because moreover, we even highlighted the keywords, everything. We split it in points, we added headings, more neatly we presented. PDF is available at free of cost on the website. You can happily download and put it on laptop and then read. Okay, next. Fine. So why I need to tell this? This is one decision which council has taken. That's it. Then conditions for sale of goodwill. Conditions for sale of goodwill. Now quickly let's finish it. I hope you understood the inconsistency. Okay, this is there at so many clauses. Okay, at respect to clause, I will tell you why that inconsistency is there. That's why it is not enough if you understand the sentence meaning. You should understand the context of it. Then you can remember better. Now, conditions for sale of goodwill. Suppose a member, he has a firm. He cannot share profit with non-member. He can share profit with another member, a partner, a retired partner, legal representative of deceased partner, like that he can share. Or he can share with a member of recognized professional body having a recognized qualification, correct? Now, sir, I'm a sole proprietor. Yes or no? Now, can a sole proprietor share profit to another? Only one member you can share with. Another member of the institute or another person having recognized qualification, or that one. Partner concept will not apply. Sir, sole proprietor died, sir. Now this firm has been taken by another proprietor, sir. He started paying fees, profit share to legal representative of proprietor. Earlier proprietor, not permitted. Once proprietor died, the legal representative has only one option, sell the firm to somebody and get a lump sum money. That's the only option you have. Now, what are the conditions for sale? Simple. First, legal heir should intimate the council within 1 year from the date of demise of the proprietor. Complete the sale within the same 1 year. Yes or no? And the new buyer is there, right? He can use the firm name. That's why I told you, an individual should not practice in his name directly. He should practice in the name of the firm, so that the firm will be forever. So if tomorrow that firm can be sold by the tomorrow partners to somebody else. So like that, the firm can keep on exist. So this facility is there. Now, if the proprietor died before 1998, unnecessary for us, no? We are in 2026, so not required. Okay, next. Same way, you are prohibited to share to others, no? Same way, you are prohibited to accept from others. You are prohibited to accept any fees, profit from others. Kickbacks, nothing but. This is something like what? Kickbacks. Okay. However, you can accept from some people. From whom you can accept? Whatever mentioned in clause 2, no. With whom you can share. From the same people you can accept it. So clause number 3, typically not a big deal. Okay. Next, clause number 4. What is clause number 4? Now look at 1. You should not allow others to use. So clause number 4. Once you recap, 1, you should not share. You should not allow others to use your name. 2, you should not share profits to, excluded. You should not share profit to others except to few. You should not accept profit or share from others. Yes or no? Now clause number 4. You should not enter into partnership with others. A CA in practice is deemed to be guilty of professional misconduct if at all he is forming partnership with non-permitted members. If at all he is forming partnership with others who is not a member of the institute, then you are guilty. However, exceptions. Yes or no? You can enter into a partnership with a CS, a CMA, a lawyer, an engineer, an IIA, architect, yes or no? An actuary. However, MBA is not there here. Be careful. So MBA partnership is prohibited, because MBA does not have any practicing power. MBAs does not have any practicing power. Engineers, they have a membership. Actuaries, they have a membership. Architect, they have a membership. So with whoever membership bodies were there, regulatory bodies were there, disciplinary bodies were there, with them you can have partnership. Are you clear? MBA does not have a membership. MBA does not have a regulatory mechanism. Therefore, you cannot enter into partnership. But can I share profits with an MBA because he's bringing me certain services? Yes, no problem. That is profit sharing point clause 2 permits MBA. Clear? That's it. Now, so which means indirectly this clause says what? You can form partnership with other disciplines. Yes or no? Which means you can form multidisciplinary firm. That's what clause number 4 indirectly says. However, until multidisciplinary firm guidelines were released, right now it is halted. So clause number 4 theoretically permitting multidisciplinary firms, but practically right now guidelines were not yet issued. Clear, everybody? Hello? Then clause number 12. Why are you staring at me like how you stare zero at petrol bunk? Everyone, respond. As if gas cylinder you didn't get. Yeah, fine. Clause number 12. What is clause number 12? A CA in practice is deemed to be guilty of professional misconduct. Always start sentence like this. As per clause number 12, part number 1, schedule number 1, a chartered accountant in practice is deemed to be guilty of professional misconduct. Examiner should impress by this line. Okay, so if he is allowing a non-member and a non-partner to sign on behalf of the firm, correct? Full clause you have to write. If at all he is allowing others who is not a member of the institute, who is not a partner of the firm, if at all you are allowing somebody like this to sign on your behalf, you are guilty. However, you can allow others to sign provided he is a partner of the firm and also member of the institute and also having practice. He must be a CA with COP and he should be partner of your firm. Then only he has a right to sign on your behalf. Yes or no? Sir, can my employee CA sign on my behalf? No, he's an employee. By the way, I can allow somebody to sign on my behalf provided the document is not the final report. The document is not a final report or final certificate that you are giving. It is some correspondence document or a routine document, yes or no, or query sheet or information received acknowledgement giving. These kind of clerical documents, article also can sign, no problem. On behalf of your article also can sign. But ultimate service delivery will be given through one report or certificate, right? Ultimately service, the firm have accepted some work, agreed upon procedure. They need to give one certificate directly, finding, report of findings they need to give. Finally, they need to give a report of finding. That's ultimate document, ultimate deliverable. That only the partner should sign. That only the member plus partner. Only he should sign. Are you clear? Everyone. What about if it is not a service delivery document? It is not ultimate service delivery. It's not a report or it's not a certificate. It's a correspondence. It's some query sheet. I'm asking queries. For that, I'm just signing and then sending query sheet. Or I received some data. I'm just sending an acknowledgement of receiving of data. Like that, I'm doing some clerical correspondence. Anybody can sign on your firm name. Anybody can sign on your behalf, because that does not involve expression of opinion. That does not involve certification of fact. That does not involve a report. Clear, everyone? That's clause number 12. Easy. Over. Yes or no? Now, clause number 11. Now, clause number 11. Clause number 11. A CA in practice is prohibited to engage in any occupation. First of all, again as usual clause. A CA in practice is deemed to be guilty of professional misconduct if at all he engages in any occupation or profession, any occupation, in addition to a CA, in addition to practice, without obtaining permission of the council. First of all, if at all you're engaging in any occupation, you're guilty. However, exclusions. If he has obtained from the council the permission, or if at all he is permitted to take as per general permissions route, or he is taking that occupation as a director. Yes or no? He is acting as a director other than whole-time director, managing director. Where you are acting as a director simpliciter, acting as an independent director, no need to take permission. So it is given in the exception in the clause itself, ma. Exceptions to the guilty. If it is a business or occupation permitted by council, happily you go. No need to get permission. You can engage in that business. You can engage in that occupation. Or you can be a director of a company other than a managing director role, whole-time director role. But you know what? You can be a managing director. You can be a whole-time director in a company which is established for providing MCOS. There you can be a managing director, whole-time director. No need to obtain specific permission for that. Why? Because this company itself is already approved by ICA. This company itself is already approved by ICA. If a company is establishedly incorporated, if a company is exclusively incorporated for MCOS by a group of CS, that company is already approved. In that company, a chartered accountant can take up a full-time directorship role, even though he is having COP. He need not take separately permission for this because the company itself is approved. The company itself is approved for this, approved by ICA, first of all. Able to understand. Okay, so look at. A CS treated as guilty of misconduct if at all he is engaged in any occupation or business in addition to practice. Exception, if it is permitted by council, no problem. Or if at all you are acting as a simple director, no problem. So acting as a simple director is covered in the clause itself, is permitted in the clause itself. Now, sir, here we say, here they said business or occupation permitted by council, right? Now, what are permitted, what are not permitted? That we need to see. Just 2 minutes, okay? Yeah, we'll proceed. Now, by the way, you're also allowed to take the following activities unless on an employment basis. Okay, you are a practicing CA, you are also permitted to take the following activities. What activities? You can act as a liquidator, trustee, executor, arbiter, administrator, receiver, advisor. You can even act as a representative for costing, financial, taxation matters. Yes or no? You can act as a representative for costing. So this can be taken as an additional occupation, and moreover, if you're acting as a advisor for representative for taxation, it's excluded from MCOS. Moreover, it's excluded from MCOS. And a CA can take up appointment that may be determined by central government, state government, or a court, or any other law. You can take up any appointment made by central government or a state government or local authority or a court. Or you can act as a secretary in the professional capacity. This was asked in May 24 or maybe November 23. In one of the exams, they have asked as a secretary. Unless your employment, that employment that you're taking up, right, that should not be on a full-time come salary basis. It should be like a P2P. As a principal to principal, you're acting as a secretary, you're acting as a liquidator, you're taking up some central government appointment, no problem at all. Suppose central government appointed you as an advisor to NFRA. You can take up, provided the advisory role must be on a principal to principal basis, but not on an employment basis. Fine. So these are all permitted in the clause itself. Now, apart from the clause permitting certain activities, there are some activities which council is permitting. Which council is permitting. These activities are broadly divided into, general permissions, special permissions. What are they? General permissions, special permission. General permission means what? They listed out certain activities. For example, agriculture is listed here. You can do agriculture because it's a right given in the constitution. Yes or no? Which does not require anybody's permission. So for that reason, agriculture is added here. So general permissions means what? A CA in practice can take up all these activities without even getting specific and prior approval of ICA. Not required. ICA does not require to permit you. You can take up these activities. Rest all other activities which are not mentioned in general purpose route, rest all other activities require permission. What? Prior permission, special permission. Prior, you should get prior to starting that activity, not after executing it. You should get a prior permission. Now, general permission route, the list is exhaustive. What is that? That list is exhaustive. That's the maximum services that you can render without permission. These are the only services you can render without permission. General permission list is exhaustive. Special permission, they listed some items here. This list is inclusive. What is this list is? Inclusive. First of all, they should not give this. Their provision way of drafting is wrong. See, you said this doesn't require permission, which means anything else is requiring. Then why are you saying this again? Unnecessary, just to confuse students. Yes or no? These activities require permission. Any other activity also require? In this list, no, last point is any other activity which council may decide. What? Yes or no? Any other activity which the member want to take has to obtain prior permission of the council. When you put a residuary clause in this, why are you giving that list first of all? Any other activity require permission. Yes or no? So remember only general permission list. No need to remember special permission list. If you try to read and remember special permission list, you will confuse and write a wrong answer in exam. Remember only general permission list. Don't even touch special permission list. Clear, all of you? Now, in the general permission list, write few more points. I don't know whether you have in your book or not. M and O. Okay. For example, I listed out like this. O. What is permitted? Forex derivatives. What is it? Forex derivatives. Nothing but currency derivatives. I can call it as what? Currency derivatives. Comma. Equity derivatives. As per council ethical standard board decision, it is permitted automatically. Okay. If a member is taking a transaction in equity derivative or is executing or is trading in currency derivative, no permission is required. Are you clear? However, if you are dealing in commodity derivatives, what is it? Commodity derivative, it requires special permission. Commodity derivative require special permission. Why commodity derivative is permitted? Why equity and currency is not permitted? Nobody knows it. Yes or no? These decisions are given by different people at different points of time. That's it. Both are electronic transactions. Both are transactions happening at exchange. Both are done with a technical analysis. What? You're permitting two, you're not permitting one. What is the logic behind it? Nothing. It's all just mistakes. These are all just mistakes while compiling the rules and regulations or while taking some decisions. That's it. Clear? Maybe here the CA would have done extreme commodity transaction where he ignored practice. So for him it would have been prohibited. That these people are testing it as a rule. Yes or no? These people don't understand. So in the question bank they tested this. This question is there. Commodity derivatives is prohibited. Currency derivatives, equity derivatives is permitted. There is one more point here. Equity research advisor. What is it? Equity research advisor. Suppose I am advising my friends, my relatives and clients. Yes or no? Where to invest, how to invest. I am charging fees on that. No problem at all. Permitted. However, you are maintaining portfolio of the client and you're only transacting on behalf of the client with the client money and you're charging commission on that. That's an asset management service here. That's an additional occupation that requires permission. Asset management service, portfolio management service is not permitted. You can be an advisor. You can be an equity research advisor to your clients, friends and relatives. No problem at all. And you can charge fees. So that is also one more thing which is permitted automatically. Understood? Everyone? That's it. Now, what are all other permitted list by default? Can I, sir, I'm already a CA in practice, sir. Can I work as an employee with another CA in practice or a firm of chartered accountants? Happily. You can go and work happily. No permission is required. Sir, can I teach privately on my own? Yes. To anybody you can teach, provided weekly hours should not exceed 25. Can I write a book, an article, novel, fiction, anything? Yes, absolutely. No problem at all. Can I have life insurance agency license just for the sake of renewal commission? I'm not doing fresh business of LIC. I'm not acting as an agency, insurance agent and then selling insurance policy, getting commission. No, but earlier I sold some policies before I start my practice. But now I need to hold the license so that I will get renewal related commission. So for renewal commission purpose, you are holding license? No problem at all. Then can I attend classes and appear for any exam? Yes, there is no such requirement like form 108, 109 like that something, in articles you have no some 112. No, 112 form. Pursuing other qualification. Yes or no? When you are in articles, you are prohibited to study any other course. But if you are studying, you need to get the permission of the council. 112 form. Yes or no? Like that, there is no form here. So can a CA in practice pursue other courses, attend classes, everything? Absolutely. Foreign courses, Indian courses, doesn't matter. Next, you can be an MP, MLA, MLC. You can be a leadership of charitable, educational, non-commercial, honorary leadership. This is not an executive role. That's a non-executive role. You can act as a notary public, justice of peace, special executive magistrate, etc. You can be a part-time tutor under the ICA coaching institute. So if ICA inviting you to take a classes, you are a practicing CA, you can happily go and take. Why you need again their permission? They're only calling you. Yes or no? Next, you can be a valuationer for papers. You can be a paper setter. You can be head examiner. You can be moderator for any exam. 10th class exam, 11th standard, 12th standard, 8th, whatever, IIT, any exam. You can be a valuationer. And you can be editor for a professional journal. What is a professional journal? You know, there is a body called BCAs, Bombay Chartered Accountant Society. There is Chartered Accountant Study Circles in Chennai, Hyderabad Chartered Accountant Society in Hyderabad, Bombay Chartered Accountant Society. I'll show you BCA's website, much more dynamic than ICA website. BCAs. You see how robust the site is also. Bombay Chartered Accountants Society. You see this. They publish journals. You know, they publish so many journals. BCS journals you see here. Research publications they'll give you. BCS references you see, so many will be there. You see how many journals were there. They are running a parallel ICA. Just that they are not conducting exams and giving a degree. Yes or no? Maybe they can start tomorrow that also. Hey, ICA are not functioning well at all. Students are all complaining, valuation at all, worst. I will take this entire, they can go with that, provided they get a permission from Parliament. That's the only thing pending. Okay, fine. So, you know, in BCS, I can publish an article. I can publish a journal. That's called professional journal. Suppose a stock exchange, you know, they want to publish journal. Dalal Street want to publish a journal and they're asking me to publish the journal. They're asking me to editor for it. That's a retail journal. Retail journal is not permitted. Only professional journal which are educative in nature is only permitted. Retail journal which are business oriented is not permitted. So retail journal not permitted. I can act as a surveyor, loss assessor on behalf of an insurance company, no problem at all. I can act as a recovery consultant in a banking sector. In the recent September 25 or May 25 or Jan 26, MCQs has been asked on this. MCQs has been asked on this. You can own an agricultural land and carry out agriculture activity, no problem at all. You can own and carry out agriculture activity, which is a fundamental right given in the Constitution. Special permission list, don't even study. Okay, any other activity require permission. Now here most important clarification. Can I acquire shares in a company? Can I simply buy shares in the company? Equity derivatives permitted here. Obviously you can buy shares in the company, no problem at all, because buying a share in the company means buying a ownership in the company, but that does not amount to participation in the affairs of the company. Am I right? So in a company, shareholders are completely different from those who participate in the management of the company. So by default it is permitted. So can I see a buy ownership in a company form of organization? Yes. Second question, can I see a buy ownership in a partnership form, which is some business concern, not a practicing CA firm. There is a partnership firm which is having a rice mill. They have a rice mill. Okay, that's a business which they're doing, a partnership firm. In that, one of the partners is leaving, and they were my old clients. Now they're asking me, so can you join as a partner now? They're asking me. I should not. They're asking me as a sleeping partner only. I should not. Sir, if the same rice mill is a company, if they're asking me just as a simple shareholder, happily I can take up that ownership. But if the same rice mill is a partnership firm, not permitted. Why? Because a partnership firm, by default, people think partners are actively involved. By default, the fundamental assumption is what? In a partnership firm, in an LLP, even in a sole proprietary concern, the proprietor and partners by default involved in day-to-day operation. They have unlimited liability generally. So by default, you are involved in day-to-day operations and unlimited liability. Definitely the risk is high. There you need to get permission of the council. Sir, actually my father has a rice mill. Okay, he's a proprietor. Proprietor concern, sole proprietor. He expired. Now I am inheriting the rice mill. I am the only heir. So the rice mill is now inherited on my name now. What should I do? Now should I get permission of the institute? Yes. Institute also gives you permission only when you do not actively participate there. Okay. So if at all I am inheriting a sole proprietary business or a HUF business or a partnership where even though I am not actively participating in the business, I just inherited, the ownership devolved upon me. I inherited through will, succession. Yes or no? Inheritance, I did that. Okay. So still require permission of the council because it's not a company. Able to understand everyone? That is what given below in the next point. Member in a practice in a HUF business. A member of the institute can acquire interest in family business, which may be proprietary, which may be partnership, or which may be HUF. Conditions: prove evidence that the interest is devolved on him because of inheritance, succession, or partnership, partition. And it is also necessary to show that you have not actively engaged in that business. That's it. Hello. Everyone, if you understand these logics, that's more than enough. Sir, I am a sole proprietor now for a rice mill where I inherited from my father. I also want to participate in that business. Again, get permission. Sir, just a passive owner. I'm not taking care of it. My family members only taking care of it, but the business is in your name. Get a permission. Partnership, I want to become a partner. Get a permission. LLB, get a permission. HEF, get a permission. That's it. Sir, whether you're actively involved or not doesn't matter. You need to get a permission. The same permission does not require in case you want to enter into ownership in a company. That's it. Able to understand? If you understand this logic, this clause number 11 is over. That's it. Then we have completed 1, 2, 3, 4, 11, 12. Then now go to the clause number 10. What is clause number 10? A chartered accountant in practice is deemed to be guilty of professional misconduct if at all he is accepting fees as a percentage of profit or which is contingent upon finding. Yes or no? A CA in practice is deemed as guilty of professional misconduct if at all he charges or if he accepts fees. Yes or no? Fees for professional employment, which is as a percentage of profit, which is contingent upon finding, which is contingent upon result of the employment. Yes or no? However, that is prohibited. However, if at all you're accepting it because of permission given in the regulation, then no problem. Council has given certain permissions. What? You can accept fees as a percentage of the activity performed or contingent upon the finding. You can accept for the following assignments. 1. You're acting as a receiver or liquidator, not on a full-time employment basis, by the way. Yes or no? And you're auditor of a corporate society. Fees can be based on percentage of paid up capital, percentage of working capital, percentage of gross or net profit. Remember, only paid up capital, working capital, gross or net income or net profit only is gross profit or net profit, only these three. Working capital, paid up capital, gross profit. Suppose if the company is paying you percentage of fixed assets, not permitted. Are you clear? They can test like that also here. Yes or no? They can test like that also on MCQ. Or you can be a valuationer under direct tax. You can charge fees as a percentage of value. You can charge fees for MCOS services, for entire MCOS services. You can charge fees as a percentage. Fees may be based on percentage or which may be contingent for result of the work performed as decided by council. Fundraising services. You promised a company to get a bank loan. You can charge as a percentage of loan. You debt recovery as a percentage of debt recovered. Cost optimization. You saved some amount of money, some savings for the company. You can. And any other services like fees for other services or audits as decided by council. Accordingly, insolvency professional, if at all you are providing non-assurance service to non-audit client, yes or no, as prescribed by council. If at all any non-assurance service you are providing to non-audit, which non-assurance services which are prescribed by council? Maybe mystery audit is not prescribed by council. Maybe mystery audit is not prescribed by council. Since it is not a prescribed non-assurance service to a non-audit client, guilty under clause number 10 attracts. Able to understand? Improvisation to the previous answer. Yes or no? Basically, it's a non-assurance service to non-audit client. Prescribed by council, since the word is used, they will need to list out. Till now, there is nothing prescribed. So if I take that logic, mystery audit is not prescribed. No. It's not a prescribed non-assurance service to a non-audit client. Since it is not prescribed, clause number 10 exception will not apply. You are charging fees as a percentage of profit, contingent upon finding, therefore guilty. The answer is correct. But to best of my knowledge, the person who drafted the answer would not have this level of understanding for sure. Because he should have mentioned this exception. No. This logic she should mention. Since it is not prescribed, if at all he put that logic, then I feel that answer is complete. Correct? Huh? That's it. Clause number 10 is over. Hello, everyone. Able to? Next, clause number 9. Any doubts? Anybody? Clause number 9. What is this clause number 9? This is the biggest clause. 8 and 9 are biggest and lengthy clauses within this. Okay, within entire part number 1. Clause number 9. A CA in practice is deemed to be guilty of professional misconduct if at all he is accepting an audit of, if at all is accepting audit of company without ascertaining Companies Act provisions, without checking Companies Act provision, you accepted audit of the company, or you accepted audit without checking any other law related to appointment of auditor for the time being in force. For example, you are acting as a tax auditor. An individual wanted to appoint you as a tax auditor. Basically, you are disqualified there. You accepted without checking compliance with the law and regulation. So you are deemed to be guilty. Now here, the incoming auditor must verify with the company that correct procedure for for appointment is followed or not. It is your duty. See, client may not aware of all the rules and regulations. Tell me, terms and conditions, who should decide? Buyer or seller? Seller. Always seller. In a service, who will decide the terms and conditions? Service provider. Example, best example, you are going to a movie. You are a service receiver, movie theater owner, service provider. Who is writing terms and conditions there? Movie theater owner. You're booking a ticket in Book My Show, or you're booking a ticket in Paytm for bus ticket or something. Who is deciding terms and conditions? Seller, service provider. In audit, who are the service provider? Auditor. That's why 210 says you should give terms of engagement. So why we should give terms? Because only you know the complications. Receiver doesn't know the complications. He doesn't know what are all issues that comes. You know what issues comes. So it is the auditor who should give terms and conditions. The same way, it is the auditor who should check whether his appointment is as per law or not. Client doesn't know. He might think, sir, I informed, no, appointment is done. He thinks over a phone call, he informed you that you are the auditor from today, sir. He thinks appointment is done. He don't know whether ADT1 form is filed or not. He does not know that. You need to educate the client. And here, by the way, when you are appointed as an auditor, how you were appointed? You might have been appointed by a recommendation in the AGM. You might have been appointed to fill casual vacancy caused by previous auditor death. You might be appointed by filling casual vacancy of the previous auditor caused by resignation. You might have been appointed to fill the casual vacancy caused because of removal of the previous auditor by central government permission. Any of this incident could have happened. So here, what is your duty? Previous incident happened, right? Check whether it is properly happened. And now your appointment happened, right? See whether it is as per the law. Only everything is as per the law, then accept the appointment. Sir, previous auditor retired from the company because rotation principles apply. Now you were appointed as an auditor. See whether rotation is correctly done or not. See AGM resolutions correctly done, passed or not. See notice of AGM correctly distributed or not. It is your responsibility to check whether company sent notice to all the people, eligible parties, whether they complied with notice conditions. You should check that. Hello, everyone. Like that, 4 pages discussion is there in ICA book. If at all you are appointed as an auditor, as a first auditor for a non-government company, what points you should check? If at all you are appointed as a subsequent auditor for non-government company, what points you should check? If at all you are appointed as an auditor for a government company, what points you should check? If you are appointed to fill casual vacancy caused by resignation, what points you should check? Casual vacancy caused by removal of auditor, what points you should check? In the recent exam, Jan 26 or September 25, one question was asked, 140 subsection 4. This question was asked. 140 subsection 4. Appointing the auditor other than retiring auditor. Okay, special notice, that provision is asked. First of all, what is special notice provision? All that you should know first there. That question was asked in September 25 attempt. One question, 5 marks question. The auditor, company has an existing auditor. He was not reappointed. You were appointed here. You were appointed where the existing auditor was not reappointed. Why he was not reappointed? Shareholders sent a special notice to the company saying, no, you should not appoint them. And the special notice is circulated to all the other shareholders. Originally, company is willing to reappoint the same auditor. Originally, the company is willing to reappoint the same auditor, but shareholders are not ready to appoint the same auditor. So they sent a special notice. AGM notice I sent 21 days before, which says same auditor will continue. Shareholder sent one special notice saying, no, you should not appoint. Then I distributed AGM notice to all the shareholders, special notice also to all the shareholders. Now this auditor gave a written representation. This auditor gave a written representation because shareholder gave a special notice in that he made certain allegations on the auditor. For those allegations, auditor is now replying his clarifications. Okay, that written representation shall also be circulated to all the shareholders. In the AGM, shareholders will decide whether the auditor will be reappointed or whether he will not be reappointed. That is what 140 subsection 4 says. Now when he is not reappointed, automatically a backup plan, your name is proposed and you were appointed by the shareholder. You should not accept it without checking whether special notice is circulated correctly, whether AGM notice is circulated correctly, whether written representation given by previous auditor is circulated correctly. You cannot accept the appointment without checking all this. Are you clear? This question was asked in previous exam, September 25. You understood the impact. Okay, fine. Now, in the written representation, no, the auditor against whom a shareholder sent a special notice, right? Where in the special notice some allegations were there, right? This auditor is giving representation, no? In the representation, he should not seek unwanted publicity. I have done so much to this company. I have added so many benefits to the company. I discovered so many frauds and made you benefit. You should not. There is a question on that in our question bank, exceptional question. If at all auditor is using any contributions, highlighting any contributions made by him, it's a clause number 7 guilty. Professional attainments, you should not advertise. A member is not, a CA in practice is prohibited to advertise his professional attainments. Clause number 7, that's an indirect solicitation, guilty. This point is there in clause 6, clause number 7 case laws. Clear, everyone? That's it. So with this, clause number 9 is completed. Confident? Yes. Next. Remember, wherever the vacuum will be there in every clause, that point where you generally have confusion or not having clarity, that I clarified in every clause, that vacuum points, wherever gaps are there, definitely I'm touching those vacuum points and then clarifying you. Clear? Next. Clause number 8. Fine. We'll take a break and get back. Okay. So 10 minutes, relax and get back. We'll finish ethics in the next session. That's it. Another 1 hour, this topic will be over. Ethics topic will be over. Confident, everyone? Getting clarity? More? Yes. All the dots has to be connected. That's it. So guys, we have completed 1, 2, 3, 4, 9, 10, 11, 12. Total 8 clauses we completed, right? Yeah. So now let's go with 8th clause. Once 8th is over, we just have left with 5, 6, 7, right? So what is 8th clause is dealing with? Communication with previous auditor. Communication with previous auditor. So tell me, what is this clause says? Any type of audit, only audit. Any type of audit, not other services. Whether it is internal audit, stat audit, tax audit, concurrent audit in case of a bank, non-statutory audit also. Please be clear. Please be clear. Every type of audit. If previously some CA has performed it, and now the client is replacing with you, you have a requirement to get NOC from the previous auditor. You have a requirement to get NOC from previous auditor. So simple. What is NOC? You, without communicating priorly with the previous auditor, you should not accept the appointment as an auditor. That's it. So if a CA accepts the position of an auditor previously held by another chartered accountant without first communicating in writing, then such CA shall be treated as guilty of misconduct. See, not only professional courtesy, here one of the reason why we communicate is professional courtesy. One of the reason that is, but that's not the primary reason. Mainly to protect independence. Sometimes what happens is, a company is so powerful, they get contacts in central government, they get permission easily. You know, the Companies Act proudly might say, removal of auditor before expiry of term requires central government permission. They will give easily, and they can pass a special resolution and then they can remove the auditor. Auditor might be removed in an unjustified manner. Yes or no? Auditor can be removed in unjustified manner. Now, when an auditor is removed in unjustified manner, how to protect his independence? ICA is now entering. Look, you are a member, he is my member. He was removed unjustified by the third party with his influence everywhere. Yes or no? He will not give NOC to you. Don't accept without his NOC. So, no matter how external authorities, everybody colluded and then trying to affect your independence, ICA is protecting the member's independence through this particular clause. So, if a member previously aggrieved by the client, you don't take up the role. So, this is what indirectly clause number 8 objective. So, a CA in practice is treated as guilty of professional misconduct if at all he is accepting audit of a client. If at all he is accepting audit of a client without prior communicating with previous auditor. Now tell me, I should communicate, no? How should I communicate? Letter of posting not permitted. What is letter of posting? It is just like delivering a letter. For example, how newspapers, they throw newspaper. That's posting only. Yes or no? You sent a letter to your article, there is an audit from nearby, okay? So previously they are the auditor, you just go and submit your article. Just went and posted this. Yes or no? He's already fed up with the stipend. So he went and just throwed this. That is not sufficient. The posting must be through RAPD mechanism, RPAD mechanism, registered post acknowledgement due. The other person has to sign that he received it. Only through that mode you should send it. Second permitted mode, you can communicate it through mail. Which mail ID? Two mail IDs are there. Official mail ID as per ICA database. Two, last known mail ID. That word many will miss. Okay, there is one practical question asked. The CA has communicated to the prior auditor based on the last known mail ID, which the address of the mail ID is taken from the company. And he communicated to that mail ID. And that mail ID is not registered in the ICA official database. It's no problem. That's not an issue. It's a last known mail ID of the auditor with which he used it. He used that mail ID and communicated with the company. You can even communicate with it. This is one more issue where you might do a mistake. In exam, they might give you last known mail ID within bracket, office address not found. Office address not found, all that he would have mentioned. Yes or no? So address not found, last known mail ID, it is not registered in official database of the ICA. They'll give you within bracket like this just to confuse you. You should not. So you can communicate with either official mail ID or last known mail ID. 3. Suppose you are sending registered post only to the address of the previous auditor's office and the mail went there, the office itself is not found. It is deemed to be delivered. It is deemed to be delivered. Yes or no? And so like that, there are some, these are few issues, and general reason why a change of auditor happens is probably dispute over the fees. So the client would have not agreed. The client would have not agreed for the fee which the auditor is demanding, or some dispute related, some dispute would have been going on. So auditor would have, the auditor would have been changed because of the dispute. Next. So a fees dispute may be the reason for changing the auditor, but it does not constitute professional reason for rejecting. Nothing but if at all previous auditor fees is pending, for example, this is the main reason. Most of the clients don't pay us the fee on time. This is one of the very big issue that is going on. Big Four is very good at collecting fee. Yes or no? But a small and medium practitioners are not good at the collecting fee. In fact, you want to grow in life with the practice. You start educating people. I even made one video on what are the opportunities, how practicing CS can find opportunities. I always tell this, be a content creator. Okay, open an Instagram page, open a YouTube channel, start educating the clients. You can't sell a product by talking about the product. You have to sell the product only when you educate people. How do you enroll to my marathon? How do you enroll to my course? Because I'm educating. If every time I post a video in my website, I have this course, in this book I have, that book I have, this is the price, that is the price. If I only focus on that, nobody will buy, nobody will even watch me. How people will get to know us, and then how they will buy our course? Only when you give you free education. Yes or no? Giving you right guidance, giving you the marathon, giving you all this. Yes or no? The same way you have to build your own practice. Tell the client what is the advantage of having MSME. Tell the client how to negotiate with a banker. Educate people about how to get funding. So if you educate people, don't think that if you tell your business secrets, yes or no, how we do practice, how if I teach everything to the client in an open platform, educate everybody, how do, simple example I'll tell you. Today you can get much more better examples in ChatGPT than what we teach in the class. But why are you coming here? Comfort. Yes or no? What I personally feel is the students are paying us the fee for the comfort that we are giving, for the certainty of service that they are getting. So that is the only reason what we believe. So create that comfort zone for the client so that he can come into you. So, and in the process of educating, definitely you will not get so many clients, but you will also get so many clients. Because we upload a marathon on YouTube, there are so many students who will not buy the course. Array, marathon is sufficient, not required paid course. But some students will understand, no, paid course also will have some content, and they will enroll it. So that's what it is. That's how the business mechanism works everywhere. Today, any business product you see, they are educating about what this product, where the product is sourced from, what material we are using it, from where the product can be purchased, everything they are educating. This is what important for you. Okay, so tomorrow you want to set a practice, start educating people on what are all mistakes that they're doing, why maintaining accounts is important, how to maintain accounts, what softwares are available in the market, which is cheap, which is best, which is what software serves what purpose, how to file your own IT return. Tell the client, don't come to me for IT return. That's a simple task. You file on your own. He will be impressed and he'll come to you only. Understood? You tell, I will file IT return, 599 rupees only. Nobody will look at you. Tell him you can file on your own. Okay? At the end, add one alert. Just a professional guidance, if it is there, it will be much more better. That's it. So that will trigger. You should know how to market. Yes or no? That's it. Fine. No, these are all not tactics. Honestly, I'm telling you, you educate the client, try to make him self-dependent, he will definitely come to you. Because you're transparent. You're transparent. So that's what attracts people. So olden days, they think you have to be dishonest, you should not be transparent in order to be successful in life, that and all old formulas. Today, the success is only driven by transparency and ethics. If you are ethical and see, actually, what is most important for success in life? The skill is most important. It's not even honesty. It's not even, your transparency, all that. The skill. If you are skilled enough, whether you are doing dishonest act or honest act, doesn't matter. You make money. Skill is what required. Even a thief requires skill. Yes or no? So it is the skill ultimately gives you the money. It's not honesty or dishonesty. People often who failed with respect to financially who fail to make money, they think I'm honest, because of that only I'm not making money. This is what people feel. No, it's not because of honesty you're not making money. It's because you're lacking skills. That is the reason why you're lacking to make money. For example, today I posted one video regarding my car service bill. One video I posted. What I told in the video, actually few days back I gave my car for service. I have a Benz car, one car is there. I gave it for service. He sent me estimate. Estimate is 6 pages. Who will read all that? I only saw big items. Okay, big items, more than 10,000 rupees components only. I think they are necessary. I just approved it. For a moment there, if I just took 1 minute precaution, 1 minute, I could have saved 10,000 rupees in my bill. But what I did, after invoice is received, after I paid the money, then I saw, first of all, what items he put. I opened invoice, so lengthy. Then I uploaded in Ch3 and asked it. Then Ch3 showed me these are the useless items. Okay, cosmetic, alloy wheel cleaning, deep cleaning. What deep cleaning? It's already good only. Okay, and tire lubricant. What? That and all useless services. I didn't pay attention. So I wasted some 11,000 rupees. Had I posted that estimate in the Ch3, I would have taken that day itself decision and 10,000 rupees I would have not lost. But again, how to make profit, I know. So even though I lost that 10,000, I took it as an education and then explained my students on the video. Yes or no? Where the students will share it to so many others. And more people get to know me. Yes or no? See, everywhere. A negative thing, I know how to convert it into an opportunity. Yes or no? For a moment, I felt 10,000 rupees. That 1 minute I would have been careful. Then immediately I got an idea. Why can't I make a video on this? My mistake, let me show it to others. Yes or no? And what I did, then I educated in the video saying everybody use Ch3. In every part, make Ch3 part of your day-to-day routine. So that's it. Now, after the incident, my team has to make a timetable for one CA intercourse. Okay. Immediately I told them, no, you just upload video list, accounting, law, tax, all that, and give a prompt. I want every day 7-hour schedule. Okay, a student has to watch 7-hour schedule, and the video should not have any open end. In the sense, if a video, it can be either 5.5 hours or it can be the 6.5 hours. It need not be .6 hours. Otherwise, what will happen is one video in between it will stop. Again, the same video will be continued in the schedule. So that instruction you give, 5 minutes it gave entire timetable. Earlier, she will be doing 4 days the timetable. Now in half an hour. This incident made me use there everywhere else. Yes or no? So now I'm rigorously integrating AI in our academy, almost in our entire work everywhere, even our thumbnail designing, everything we are using AI tools. So everything is a lesson. So when you find something, when something hits in your life, just see how can I make it positive in me? How can I turn it into a beneficial thing to me? So you just think like that, idea will pop up. That's it. You failed once in exam, how to make it plus for you? You already succeeded in exam, how to make it much more powerful to you? So you just start evaluating like this. I'm telling you, AI tools will of course replace so many jobs, but at the same time, they also create so many opportunities. Those who are on the creative side, Those who are using it, you know what, there is a saying, AI will replace so many jobs, but AI will not replace a person who is using AI. Understood? AI can replace a manpower. It's a lot of jobs, but a person using AI, he cannot be replaced by AI easily. So make yourself so fast, very fast. Even my CA final regular course video index we need to prepare. Our team has not made an Excel sheet for it. What I told is open the app. In that video list will be displayed. We don't have export to Excel function also. I told one thing, take a screenshot, post in Ch3, ask it in Excel, give it 5 minutes, done the task is. Entire Excel formatting, everything it is giving us. So we have to use it in our day-to-day life. That's it. Again, don't stop buying our courses, okay? Because of AI. We give you the comfort, no? Yes or no? Why you have to research? Why you have to struggle? We are struggling. Yes or no? You pay for us. We struggle a lot on behalf of you. That's it. Next. Fine. So again, come back. So communication with prior auditor. Communication with prior auditor. It is required for all types of audit: stat audit, tax audit, GST audit, internal audit, concurrent audit, any other audit, including non-stat audit. Please remember, if at all a non-stat audit question is asked in exam, many students might think clause 8 will not attract. No, for every type of audit, it attracts. Even the council recommends use this clause 8 principle even for other works also, not necessarily audit, consultancy. Previously, the consultancy work is performed by some other CA. Now you are taking up that role. Communicate. It's recommendatory here. It is recommendatory here. Next. Further, suppose how do you handle undisputed fees when the previous auditor is unavailable? Generally, suppose the company replacing the auditor. You checked clause number 9, you are eligible. And you got to know that some fees is pending to the previous auditor. Some fees is pending to the previous auditor. Now, what you need to do? See, this fees is again two types. Undisputed fee, disputed fee. What is undisputed and disputed? Originally client and auditor agreed 10 lakhs. But after audit is performed, auditor billed 15 lakhs. Because audit volume was very high. Originally auditor thought it's only 10 lakhs. Later, based upon the volume, he billed the client how much? 15. Extra 5 lakhs he billed. What he billed extra? 5 lakhs he billed. Client said, no, originally you agreed only 10, I'll pay 10. In fact, in books of accounts also, he made a provision only for 10. Undisputed audit fee is the fee for which client made a provision in the books of accounts. This is a definition which is given in SIC unit point. SIC unit 1 point is there, remember? In case of SIC unit, even though the fees is not paid, you can still accept the appointment as an auditor. If the client is a SIC unit, you can still accept the appointment as an auditor. If that client does not pay fee to the previous auditor, you can still accept. Sir, it is not a SIC unit. Then make sure client pay pending undisputed fee to the prior auditor. So, to the previous auditor, whatever undisputed fee pending. What is undisputed fee here? 10 lakh. 10 lakh is something both of us already agreed. Extra 5 lakhs which auditor billed, that client is not agreeing. There is a dispute going on for that rupees extra 5 lakh. Disputed fee, that is something we also can't do anything. But remaining 10 lakhs rupees which client is ready to pay, 10 lakhs provision is created, undisputed fee, that also he didn't pay. Then I have to make sure, use my influence to make sure, dear client, first pay the 10 lakhs to the other previous auditor. Only when you pay, I will take up the appointment. If the client is saying, sir, previous auditor bank account details were not available, he is not even traceable also, do one thing, buy a DD in his name. Okay, then I will accept the audit. So that's what. If the previous auditor is unavailable for payment of undisputed fee, the incoming auditor should ask the client to purchase a DD for the amount and ensure payment to the retiring auditor. That's it. Now, procedure for accepting the audit. What is the procedure for accepting the audit? Generally, if at all a client is changing the auditor, what is the procedure? Remember, client has absolute right to choose his own auditor. To choose his own auditor, client has absolute right. Previous auditor is the right. He should not object it. You change me, I will do one thing. I'll give adverse opinion. Give, no problem, give. You should give basis for adverse opinion. Reason, no. What reason you will put? Some solid reason, evidence should be there, no. So it's not that easy. It's not that easy. The client can put an adverse opinion. That and all is not easy. You want to give disclaimer opinion saying that I'm not cooperative? Okay, give, no problem. I will reply to MCA that the auditor is doing all this. No problem. I'll complain to ICA. You're bringing disrepute to the profession. Yes or no? That's it. So, if a prospective client want to change the auditor, check whether retiring auditor was informed. I have to ask whether previous auditor was informed. And if not, I will ask the client why you didn't inform. If there is no valid reason to change the auditor, don't accept the audit. If at all client is already communicated previous auditor and it is already accepted by him also, then happily communicate with the retiring auditor and then accept the appointment. So objective of the communication, the previous auditor might have been changed due to a modified report given by him, or he is wishing not to continue because of so and so issues. The retiring auditor may share some insights about the client, so which incoming auditor must consider before accepting. Why you should communicate? You will get to know. See, generally the issues comes out only when the relationship is going to be exited. Only when you are exiting from the client relationship, all the issues will come. He'll start complaining, all this. So why client want to change the auditor? He might tell some reason. Ask the previous auditor. He will tell you the exact reason why he is changing. So some valuable information you might get. If at all you get information where integrity of the client is something wrong, don't accept the audit. SQC, acceptance and continuation of client relationship. 3 points you should obtain: integrity of the client, competence of the team, relevant ethical requirements you should check. 3 points you should check. Integrity of the client, if at all is questionable, don't accept the audit. Resignation of previous auditor, for example, is a doubt, is an integrity questioning factor. Clear? That's it. Method of communication, RPAD, everything I told. Yes or no? If at all office is locked, you sent a registered post, office was locked and the post was rejected to you. I mean, it returned it back to you. The post returned back to you saying office is locked. It is deemed to be delivered. Sir, office itself is not found. It is deemed to be delivered. Are you clear? Hello. Sometimes what happens is some newly qualified CAs, they may not have an office. They will put some public office as an office. Now there are some companies which are offering you address for GST purpose. There are companies, WeWork. Have you seen WeWork? That's like a co-working space. That company is offering you an address in your name. A rental agreement will be there on your name. An address will be there on your name. You just have to pay some fee and you can get GST registration with that address without you having a physical office. Virtual office you are hiring with a rental agreement, all that. Understood? So these services also they started now. So sometimes some CS will have an office with a dummy address. So that time, if the new auditor sent a communication to previous auditor at that old address where office itself is not found, the communication is deemed to be delivered. This backdrop you remember and then study this clause next time, you will understand. Clear everyone? Yeah. Next clause 567 ma 567. Clause 567. So what is clause number 5? You look at it, only 567 is pending, right? Yes, 567. All the 3 are related clauses. What clause number 5 says? A CA in practice is deemed to be guilty of professional misconduct if at all he is procuring business through services of any person. You are guilty, other than if you are securing through employee, if you are securing through a partner of the firm, or if you are securing through any means which are permitted to a CA. If at all you are securing professional business through the employee, through the partner, or through the permitted ways, then no problem. If at all you are securing professional business through any other way which is not open to CA, which is not permitted for a CA in practice, then you are guilty. So look at, a CA shall be treated as guilty if they secure professional business through services of a non-employee, non-partner, you are guilty. Through employee, through partner, you are getting not guilty. Or you are securing through some mode, some means you are getting the business. That means is not open to a chartered accountant. That mean is not open to chartered. What are the means not open to chartered accountant? Clause number 6, clause number 7 tells you. What are the means of securing business not open to a CA? 6 and 7 talks about that. So next, it's like You must always get the professional work through talent, skill and reputation, not by using agents and unethical methods. Okay, and all forms of canvassing is strictly prohibited. Now look at clause number 6, which is most important. What is sixth clause says? A chartered accountant in practice is deemed to be guilty of professional misconduct if at all he is securing professional business directly or indirectly through solicitation, circular, advertisement, personal communication, interview or any other means. What do you mean by any other means? That is what? Tender guidelines, sponsorship, CSR activities. There are so many ways, yes or no, through which you can bring some client, referring to another CA, asking another CA, greetings and invitations. There are so many ways through which you secure business. Out of that, some are permitted, some are not permitted. So what are all? Look at in that one of the most confusing point is tender guidelines. On this, in September 25, I guess one question has been asked. Okay, fine. First, let me read this question. Let me explain this provision. Then we will discuss that. By the way, until now, confident everyone? Now, tender guidelines. What is this? You know, some organization would have made an announcement in the newspaper where they want some professional service. Can I respond to that? Is a question. You know, they said, you know, interested service providers can respond to us by sending a mail about their firm profile, all that they asked. Now the nature of work is such that anybody can do it. The nature of work is such that anybody, typically it's a consultancy service which they're asking, and they said anybody is open. There is no specific qualification. So interested parties, CAs, CMAs, CEs, lawyers, everybody, MBS, anybody can apply, like that they mentioned. And now I responded to the tender. No problem. Yes or no? If at all, the tender is open for everybody. Yes or no? The tender is open to all professionals along with chartered accountant. You can happily respond. Sir, that's a company looking for stat auditors, and they want to receive, you know, proposal forms from various firms. A stat audit is something only a CA can perform. If at all a tender document is open only for the members of the institute, you know, a CA can respond. A CA can respond only when the minimum fee is mentioned in that. What is it? Only if the minimum fee in the tender document is mentioned. Simple once again. A company is looking for stat auditor. The stat audit service is something that can be performed only by chartered accountants, which means it's a service which is restricted only to our professionals. Here, can I respond to the tender? Yes. Condition: in the tender document, minimum fees is prescribed. If minimum fees is not prescribed, you should not respond. Why? If minimum fees is not prescribed, you might tempt the client with a lower fee. Yes or no? Quality of service gets affected. So if a client already fixed the minimum benchmark fee and now you're responding, you can only convince the client based on your skill. You can't convince him based on anything else, fees. Yes or no? So that's the reason minimum fees point is mentioned in the tender document. Now in exam, one question is there. Maximum fees, one question is there. September 25. Look at this question where the answer is given something different slightly. Look at. So this is a TYK question. Sanjeev Associates, a firm of chartered accountant, respond to a tender from PF office for filing quarterly ETDS return. The terms of the tender are: some deposit 7,500. It is open to all categories. Maximum fee point irrelevant when it is open to all category. Correct? So in this case, they responded to the set tender. Therefore, they can respond to the tender as it is open to all the CS. Now here maximum fees is prescribed, doesn't matter because it is open to all. Now there is one more question. Maximum fee. Yeah, look at this. This is exceptional. Wait, this is exceptional. This is there in MTP and this is also there in a previous exam question. Okay. Now CDR Associates is one of the 3 firms shortlisted by JDB Cooperative Bank. Okay, the bank mailed the list of branches to audit firms along with maximum fee per branch and asked them to submit quotation. CDR Associates responded to bank and submitted their quotation. Comment with respect to CA. They are looking for stat audit exclusively reserved for members of the institute, and in that maximum fees is mentioned, minimum fee not mentioned. Look at the answer what they are given. So here, in response to CDR, they submitted the quotation, yes or no? Such a response is not permitted since the assignment relates to audit service exclusive reserved for service, and moreover, maximum fee is only prescribed but not minimum fee. Yes or no? Accordingly, since you responded to a tender document which does not contain minimum fee guidelines, which contains maximum fee, but minimum fee guidelines were not contained. Moreover, that's a work reserved exclusively for CA. When a work is reserved exclusively for CA, you should respond only when the minimum fee is prescribed. Yes or no? So you're held guilty of professional misconduct. That's it. Yeah. Next. So that's it. That's the main observation in that tender guidelines. I hope you are confident on the tender guidelines. And again, in MTP, there is one more MTP in May 25 or November 24 attempt, one MTP. In that, one MCQ was there regarding minimum fee, maximum fee. There the answer was wrong. Okay, that was a service exclusive reserved for CA, where minimum fee is not prescribed, and still CA responded. There the answer said not guilty. That's actually wrong. Okay, so in MTP sometimes wrong answers might be there. Ignore it. Next. Further, whenever you are responding to tender or whenever you are rendering services to the client, you must maintain cost sheet when responding to tenders. The cost should include number of persons involved, hours spent, all that. The cost sheet must be available for the institute upon request. Okay, that's it. Now further, it should prescribe minimum fee which should commensurate with size, value, manpower, nature of the work. You know, this one, recently one incident happened 5 months ago. I made a video on that. There is one video of mine. Oh my God, audit fee 1 rupee. One student thought my audit subject fees is 1 rupee. Ray, how can NFRA? I even put NHA logo also. Okay, NHAI has a subsidiary company where they are looking for auditors. Where in that document minimum fees mentioned was 1 rupee, and one of the audit firm quoted exactly 1 rupee fee, and then they got the assignment. They would have got the assignment not based on fee. They would have got the assignment on something else. See, they responded with 1 rupee fee, but I don't know exactly how much fee is exactly fixed later on. But there the news article mentioned that the firm quoted 1 rupee only as the fee and then got the tender is what the news article mentioned. Now there the fees quoted by them does not commensurate with size, manpower, nature of the work. So the question is, are they guilty or not? Publicly they are doing. It's actually guilty. Guilty when only when I say punishes. Not based on the clause. Yes or no? So tender, as per tender guidelines, they're technically guilty. That firm can be disqualified by ICA. But I don't know what happened later on. I think they have not disqualified them because that became a national issue that time. 2 days it was circulated among entire finance professionals like anything crazy. You saw that? I made that video also. Oh my God, audit fees 1 rupee. I just made a video 4-5 months ago. It was in September or October month. Fine. Next. Can a CA publish books, articles, presentations? Yes. He can even mention firm name. Yes or no? But in the book and article, you should not mention professional attainments of the member, attainments of the firm. Your achievement should not be mentioned. You can mention your name, the designation that you are a chartered accountant. You can even mention your firm name. Can a CA issue greeting cards and invitations? Absolutely, provided the greeting cards are issued only to clients, relatives, a friend. On this one question is there exceptional. What Misty, Srishti. There is one question. Okay, Srishti, Misty, like that some question is there. What happened is both of them are partners and they opened one new office and they are sending invitation for office, where one partner sent invitation to his friends, relatives and all that he sent. He also sent it to other partners, friends and relatives also. That's guilty. So that's the answer which they gave. Generally what happens when you read that question? He sent only to partners, friend only. No, what's wrong? That is allowed. No, you are permitted to send invitations to your friend, family, relatives, your friend, family, relatives, not your partner's friend, family, relatives. But technically tell me, in a partnership firm, when we both are forming a partnership firm, his friends become mine, my friends become his, yes or no? How can you apply that logic? But in the question they said guilty. Srishti is guilty because she is distributing greeting cards to Misty friends. Yes or no? No, that question is there, question man. See, everywhere I'm telling you exceptional questions. You don't even have to go back and read there. So all the exceptional question, different adjustments, that and all I'm telling you. Okay, that's it. Next, can a CA firm advertise celebrations and all? Yes, silver jubilee, golden jubilee, diamond jubilee, platinum, 100 years. They can advertise. They can even publish in newspapers. Yes or no? Advertisements for silver jubilee, all that. Can they advertise about events organized by the firm? No. Normal any event that you are organizing with your own firm, yes or no, get together, don't advertise that. Yes or no? Some article assistant got all India first rank. For that, some part is hosted by the firm. Yes or no? Which they don't do generally, but I'm just telling. Yes or no? So if at all they are hosting it, in fact, he got all India first rank because he's jealous of you. I mean, sorry. Because he want to take a revenge on you. Yes or no? Fine. So any event, if at all firm is organizing, that should not be advertised. Only these can be advertised: silver jubilee, golden jubilee, platinum jubilee, and then century. That's it. Okay. Now actually they need to reverse it. Yes or no? Platinum has to come before gold, because platinum price, gold crossed platinum price 12 years ago. 12 years ago. Platinum is cheapest than gold. Gold is now 16,000 rupees per gram. Platinum is 4,000 only per gram. It is almost, so which means gold is 400% costlier than platinum already. 400%, 4 times. Next, sponsoring. Recently, Jan 26, this question only asked. So, can a member sponsor CSR activities? Yes, absolutely. But CA logo should not be used. Firm name should not be used. Can a firm send profile of the firm to a prospective client? You can send only when he asks. Don't take MCA entire mails of the client's database, company's database, and send a bulk mailing. That's not permitted. Next, can a CA have a television and movie credits? In movies, our bankers, our channel partners, our media partners, our auditors, like that it will come. No, there your name can appear. Your name can appear just like how other names appear. That's it. Okay, it should not appear differently. That's it. Yeah. Next, can I seek work from professional colleague? Sending an advertisement or circular to seek work from professional colleague would be violative of this clause. See, professional colleague means, in the sense here, probably an employee here, for example. Yes or no? He is asking work from other employees. Yeah, your IT return, I will file all that. That is actually prohibited. You are deemed to be in practice services. Remember, CA in practice includes CA who is deemed to be in practice. Really, are you holding COP? Doesn't matter for Schedule 1 Part 1 applicability. If you are deemed to be in practice, that's it. Schedule 1 Part 1 is applicable. Then representation. This is what even in the September 25, 144, where the CA gave a representation. I told you, remember, in the representation you should not mention any unsolicited, solicitative kind of message and all. You should not distribute. Okay, so you can give a representation whenever company is changing the auditor. You can give a representation to member where it should be simple, bare statement of facts. You should not talk about what you contributed to the company, like that. On that, there is one question on this. Okay, contribution. The auditor, in the representation, he will highlight about he has worked a lot in the internal control mechanism of the company where he made it effective. Next, acceptance of clients introduced by another member. My friend who has started a practice, yes or no? For example, he just called me for silver jubilee and he's introducing his clients. I'm calling their clients. How much he's charging fees? 2 lakhs. No, you pay me, I'll charge 50,000 rupees. No, you should not do this. Yes or no? That's guilty. You see, everything here, ICS is protecting the members. Yes or no? By standards on auditing, by standards on assurance, by ethical guidelines, code of ethics. If any regulator want to touch the members, if at all members showed that I complied with standards on auditing, everything perfectly, no regulator can touch. Okay, I will explain you this situation when I'm explaining group audit and SA 600. When I'm discussing group audit and SA 600 coffee day scenario, what happened to KPMG, I will tell you. Okay, next, can a member give public interview? Yeah, absolutely. Only factual response should be given. Yes or no? It should not amount to publicity. Advertisement under box number, this is a very oldest form. Okay, very oldest form. Can a member post educational video? Yes, absolutely. You should not make about the firm name. You should not discuss about your firm details, firm contact number. You can happily educate CA students, all that. Now you see members of the institute are tweeting, no, council members and all. So as long as they are only mentioning about, only bare statement of facts, you can make educational video, you can be active on social media, nothing, no problem at all. Next. Then clause number 7, what is this? A CA in practice is deemed to be guilty of professional misconduct if at all they are advertising his, if at all a CA is advertising his professional attainments or advertising services offered or uses any designation other than chartered accountant on professional document, visiting card, letterhead and signboards. A CA in practice is deemed to be guilty if he advertises professional attainments, all India first ranker, all India second ranker, all India third ranker, being practicing CA. You should not advertise like that. Services offered, you should not advertise about service offered. We provide consultancy, we provide tax audit, we provide IT returns, like that. You should not. In the website you can mention. You should not advertise or distribute pamphlets and all like that. Uses any designation other than chartered accountant. Designation point I think we have already covered. However, you can absolutely use a degree from a university recognized in India. Can I mention a degree which I got from a university or any body authority recognized by government of India? Yes, you can. Sir, can I mention foreign qualifications also? Yes, you can mention if they are recognized by ICAI. Accordingly, 3 foreign qualifications are recognized. South African Institute, ICAEW, CPA Finland, I think. Ireland. CPA Ireland. I think that point is there somewhere here. Yeah, you see foreign qualification. You know, on this, in May 23 attempt or maybe in 22 attempt, one question has been asked. You know, what is this? A member, no, a CA in practice, no, he printed visiting card. On the visiting card, he mentioned CA, CMS, CS, and he also mentioned CPA Ireland. He also mentioned, SAICS, CPA Ireland, ICAEW. Is this permitted? Yes. These 3 qualifications of foreign bodies are permitted. Sir, I have ACCA also. Can I mention ACCA qualification on my visiting card? No, because that's not a recognized qualification by ICAI yet. Only these 3. Maybe in reality ICAI would have recognized it, but in the book it is not recognized. You should only write answer as per the book. Yes or no? That's it. You should not mention date of setting up of practice. The date on which you started the practice, you should not mention it on letterhead, other professional document, website also. Website can contain in which year you started. It should not mention date on which you started. I don't know what is the logic behind this. Okay, next. Rest all are easy. Yeah, can a CA firm give a press release of examination success of article assistants? Yes, they can release, no problem, even though there is 0 participation from their side. Yes or no? In the success of the article. Yeah, next. Can a CA appear on electronic media like TV, television, internet, all that? Yes, absolutely. You can happily mention yourself as a chartered accountant. You can even mention about specialized knowledge, but you should avoid exaggerated claims or comparisons. Yes or no? As a well-known firm, you should not talk like that. Yes or no? Yeah. The focus should be on professional view, giving a professional advice. That's it. The publicity for appointments not required. 1 minute. This you see. Publicity allowed for appointments for important positions or views on important matters. Members may mention their membership of the institute. The aim is to achieve suitable publicity for the institute and its member. Foreign name should not be referenced. For example, no, my friend who is a CA has been elected as an advisor for, let us assume, NFRA. That's a very respectable role. I made a newspaper congratulatory message to him. No problem. If it is some other congratulatory message, yes or no, he opened an office, I put his big photo on the newspaper, yes or no, and congratulations for opening new office, that's a solicitation. Even if my friend did out of love and affection, it makes me guilty before the ICA. Yes or no? That's it. No, it is not permitted. Sir, my friend did without my knowledge, sir, what should I do? You should tell them not to do all this. Yes or no? Yeah. Next. Then signboard, you know signboards, right? Outside, for example, outside our buildings raised up, that much size firm board should not be there. Yes or no? Your firm name board should be very small. Okay, you can have any colors, whatever, no problem, but it should be decent. That's it. Glow signs and all, night time on the roads, light, laser light show will come. That and all should not be there. Yes. Next. I'm only touching complicated points. Can a CA firm use a logo? No, no logo is permitted. That's why what members are doing, you know, the firm name itself, they're designing like a logo. When institute asks, no, that's our firm name. They're designing the firm name. How are they printing firm name on visiting cards, everything with a different font, which itself appears like a logo. Okay, but that is, legally it's not permitted, but they're doing it. So we all have one common logo, which is CA logo. I hope you know right now, new CA logo, CA will come below India. Yes or no? They won't update the syllabus here. Yeah. That's it, guys. Common CA logo will be there. Logo guidelines will be there. There we will discuss. With this, schedule 1, part 1 is completed. And mainly what we focused is on critical issues we focused. Wherever you generally confuse, for example, greeting cards issue, that one answer you will confuse. Yes or no? And silver jubilee, golden jubilee there. Only that is permitted. Remaining forms of advertisement of events that you are organizing is not permitted. Yes or no? Like that we have discussed all the key points. That's it. Clear? Remaining, no confusion. Book and article, I told you. Illustration 7 of ICA book says, in the book, you should not mention firm name. Whereas in the rules, in the actual discussion in the clause number 6, they are clearly permitting you can use firm name. So like this, some inconsistency is there. We can't avoid it. So that's it. Clear? Yeah, fine. We'll take just 5 minutes gap and then immediately we'll start schedule 2 part 1. Okay. Yes. So now we completed schedule number 1, part number 1. Correct? All the 12 clauses we completed. So tell me, regarding clause number 1, I have one question. What is clause number 1 in part number 1? A CA in practice is treated as guilty of professional misconduct if at all he is allowing another person to use his name. Now there is one question in the question bank, Sant and Pant. Okay. In that, what happens is, my father is a client for one CA who is in practice. Now I cleared my CA final examination. Now my father recommended to that CA, please train my son also. Accordingly, I went and started working in his office. I started providing services to the clients, all that. Okay. Using their name, I started providing services to the client, to all the third parties, everything. And once some 3-4 months of service is over, I left from that office where that practicing CA, who was my father's service provider, my father's auditor, he paid me some lump sum amount. Entire issue is fine. But I have used his name while providing services to third parties. Even though I am a CA, even though I am having practice, yes or no? He is also a CA and also having CA in practice, but I am using his firm name without bonding with him as a partner, without bonding with him as an employee. Tell me, I can use others to use my firm name provided they are a CA and having COP and associated with our firm as a partner, or at least he must be employee of the firm. Then only it is allowed. That is a point which is tested. If you see that, if you see the entire case study, you will understand what's wrong in this. So Sant and Pant, that's the case study. Okay, that's it. That's there in the question bank. That is one exceptional question. That's it. Clear? Now, so tell me, what are the 12 clauses that we have? What are the 12 clauses that we have? Clause number 1, a CA in practice is deemed to be guilty of professional misconduct if at all he is allowing another person to practice in their name. Exception, the other person should also be a CA with practice and having a partnership with this firm, or he must be a CA and having employee relationship with the firm. Then only they can use. Then clause number 2, a CA is deemed to be guilty if at all he is agreeing, allowing, or accepting others to pay or the profits, yes or no, or commission or brokerage by whatever name you call, yes or no, any part of the profit, commission or brokerage you're allowing to pay or agreeing to pay with somebody, yes or no, then you're treated as guilty. However, with the following person, you can share profit, commission, brokerage. These 3 only they'll be using the words. Either you call it as profit, you call it as brokerage, you call it as commission. If at all you are allowing to pay these 3 to the following persons, another CA, whether in practice or not doesn't matter, another partner of the firm, retired partner of the firm, representative of the deceased partner, or a person having recognized qualification, or he is a member of recognized professional body. What are the recognized qualifications and bodies? CS, CMA, actuary, architect, Bar Council of India, MBA, engineer, total 7. Now in clause number 4, you can form partnership with these professionals, right? Engineer is not covered, MBA is not covered. These 2 were not covered. Rest all other you can form partnership. That's clause number 4, correct? Then clause number 3 talks about what? A CA is treated as guilty if at all he is accepting profit, fees, share from a non-member. However, the following persons you can still accept. Whatever persons referred under exception in clause number 2, the same persons were referred in exception in clause number 3. Clause number 4, a CA in practice is guilty if at all he is forming partnership with a non-members. However, with the following members you can form partnership, yes or no, with another CA, yes or no, and a CS, a CMA, Bar Council members, actuaries, architects. That's it. Engineer also there? Okay, fine. Yeah, only MBA is not there. Engineering is there. Yes, engineering will be there because of the membership requirement they have. That's it. You can have, but multidisciplinary firm formation right now is stopped because of guidelines were not issued by other professional bodies in this regard. That's it. Then clause number 12, a CA in practice is deemed to be guilty if at all he is allowing others to sign on behalf of the firm who is not a partner, who is not having COP. If at all you want to allow somebody to sign, he must be partner of the firm, he must be VCA, and he must have COP. Then only they can sign on behalf of the firm. Signing of what? Ultimate deliverable. Either it could be a report or it could be a certificate. That's the deliverable actually in that entire contract. If at all they are signing routine documents, correspondence, questionnaires, all this, that's not an issue. Are you clear? Then clause number 11. A CA in practice is guilty if at all they are engaging in any additional business or occupation without permission of the council. Then general permission list is given exhaustive. To that I told you to add 2-3 points. Equity advisor to clients, relatives and then family members on a fee, no problem. Equity derivatives, no problem. Currency derivatives, no problem. Then commodity derivatives is prohibited, means you should get prior permission, otherwise it is not permitted. As per ethical standard board decision, trading in commodity derivatives is not permitted for a CA in practice. In the given case, if the CA in practice is engaged in trading in commodity derivatives, he is deemed to be guilty. That's it. Then clause number 10. What is clause number 10? A CA in practice is deemed to be guilty of professional misconduct if at all he is accepting fees as a percentage of profit or contingent upon finding. Is it guilty? However, the following cases, you can accept fees as a percentage of profit: liquidator, surveyor, debt recovery, funding services, management consultancy, cost optimization services, then internal audit, yes or no, corporate societies audit, where percentage can be as a percentage of total capital, paid up capital, working capital, net profit or gross profit. Correct? Then non-assurance services to non-audit clients. You can accept fees as a percentage of profit if the services are prescribed by the council. Right now there is no prescribed list. Accordingly, Jan 26, mystery audit is not prescribed. That logic we can apply and then say mystery audit. Charging fees which is contingent upon finding is not permitted. That logic we can draw. Correct? Further, insolvency professional, they can do. Registered valuer, they can charge as a percentage of finding. Correct? As a percentage of value. Valuer under direct taxes, they can charge fees as a percentage of valuation. Correct? That's it. Then clause number 9, a simple clause. If a CA in practice is deemed to be guilty of professional misconduct, if at all he is accepting the audit of a company or other entity without ascertaining compliance with the Companies Act or the other law for the time being in force. Then clause number 8, a CA in practice is deemed to be guilty of professional misconduct if at all he is accepting an audit of an entity without first priorly communicating with previous auditor. We saw method of communication, we saw why communication is required. If at all undisputed audit fee is pending, what we should do? Remember, undisputed audit fee point is not applicable for SIC units. If the company is a SIC unit and they could not pay audit fee to the previous auditor, you don't have to compel that company to pay the audit fee. Not required. Yes or no? That point is there in council guidelines. What is a SIC unit? It is established for minimum more than 5 years. First of all, that company is operating for more than 5 years and net worth is negative. The net worth is what? Negative. Complete erosion. The net worth is completely eroded. Then that company is called as what? SIC unit. Fine. Then 5, 6, 7. What is fifth clause? A CAP is deemed to be, a CA in practice is deemed to be guilty of professional misconduct if at all he is securing professional business by not through employee, by not through partner, or by means not open to CA. Apart from this, if you are getting, you are guilty. What are the means open to, what are the means not open to CA? Clause number 6, clause number 7. Clause number 6, a CA in practice is deemed to be guilty if at all he is soliciting clients directly or indirectly through a personal communication, interview, circular, advertisement, or any other means. Clause number 7, a CA in practice is deemed to be guilty of professional misconduct if at all he is securing, if at all he is advertising professional attainments, services offered, or uses designation other than the word chartered accountancy. Correct? That's it. I think all the points we have covered. In clause number 8, one exception I missed to tell. In clause number 8, clause number 11, you can engage in additional occupation, right? If you want to be a normal director, simple director in any company, no problem. But if you want to be MD or whole-time director, compulsory permission is required. Again, the same permission is not required if you want to be MD or whole-time director in a MCOS company. Correct? Further, you can act as a liquidator, receiver, trustee, secretary, appointment made by central government, state government, local authority. For all this, no permission is required, provided the appointment is on a principal to principal basis, but not on a salary come employment basis. Easy. That's it. So with this, entire part 1 is completed. See, less than 10 minutes, less than just 9 minutes it is. Entire revision of all the 10 clauses. If with the cases you want to revise, it will take hardly 1 hour. It will take hardly 1 hour. So that's it. Now we are having schedule to part 1. Schedule to part 1 is very easy. Just 1 minute. Let's begin Schedule 2 Part 1, which has 10 clauses. Okay, I will discuss first 10th clause. What is it? A CA in practice is deemed to be guilty of professional misconduct if at all he fails to keep the money of the client received in professional capacity in a separate bank account. The money received from client should not be kept in your regular current account or savings account. It must be kept in separate bank account, because you have to use it for the client purpose only. You should not use it for your purpose. That's what the meaning. Separate bank account concept is there in Companies Act in almost every provision. Share application money, keep it in separate bank account. Loan received from a bank, keep it in separate bank account. Dividend declared, keep it in separate bank account. CSR money, keep it in separate bank account. Like that, separate bank account concept is there across so many places in the Companies Act. Simple. Allocate the fund, that's it. The fund you allocate, you need to spend it only for that purpose. So for that you need to allocate there. How do you show that you allocated? Keeping it in a separate bank account. Now client gave you some money so that you will pay ROCP, you will pay tax liability, you will pay GST liability. For that reason he paid you. If at all you are going to spend in shortest period of time, you can keep it in the normal bank account and then spend it. But if at all it takes little time, keep it in separate bank. In exam, no, shortest time, that and all also illogical, not required. If at all auditor received money which is not fees, or which is not even advance for the fee, which is not advance for audit expenses. For audit expenses purpose you got the money, for fees purpose you got the money, then no problem, you can keep it within your own bank account. If at all you are receiving fees on progressive basis, you can even keep it in your own bank account. Now what do you mean by progressive basis? Is there any percentage calculation for that? No. If at all in the exam they mention that auditor is collecting fees on progressive basis, you consider that as progressive basis. You felt the progressive basis fees structure is unreasonable, you felt, are 10% work only completed, 50% is receiving fees. That is irrelevant for you. Progressive basis means what? Not defined. If at all in the exam they say progressive basis, you consider that as a progressive basis. That's it. If at all you are getting money for some other purpose of the client, for some other purpose, for client purpose, you have to spend it on behalf of the client, must and should keep it in a separate bank account. Liquidator, receiver, arbiter, they must keep the money in separate bank account. So that's what clause number 10 ma. Look at the clause number 10 once. By the way, corresponding there is one more clause dealing with money. Clause number 4, part number 2, schedule number 2. Defalcation or embezzlement of money received in professional capacity. Okay, that's it. That's it, I think. Okay, money received for expenses to be incurred for statutory fee, purchase of stamp paper, which are all to be spent in reasonable time, you can keep it in the same bank account. No need to have a separate bank account if at all you are going to spend in reasonable time. In the question they said unreasonably the auditor kept with him. That means you must transfer it to separate bank account. That's it. If at all you are received by a CA, amount is received by CA in the capacity of trustee, executive, liquidator, you shall always keep it in separate bank account. That's it. So again, now clause number 9. What is clause number 9? A CA in practice is deemed to be guilty of professional misconduct if he fails to comply with GAAP. GAAP means what? Audit principles, generally accepted audit principles. Yes or no? If at all you fail to comply with GAAP while performing professional work, you are guilty. You know, here one point they mentioned. SEBI has given one notification. What the notification says is, this question was asked in May 25 attempt or November 24 attempt. Okay, November 24. This question was asked. SEBI gave a notification where listed company audit can be conducted only by that firm of chartered accountants who has a valid peer review certificate. What is it? A valid peer review certificate. What do you mean by audit gap? Tell me, what do you mean by gap? Simple. It could be standards on auditing. It could be guidance notes. It could be guidelines given by SEBI. It could be guidelines given by ICI. It could be guidelines given by MCA. Simple. What are all rules and regulations that you have to satisfy relating to the service that you are providing? That all comes under gap. Clear? So if you fail to comply with any rule and any regulation of any regulatory body, it amounts to clause number 9 attraction. So that's why this point I told that day before exam I made a video that time. Exceptional question, exact question came in exam. If you have not noticed this point of peer review, if at all tomorrow this question comes, you don't know which clause to quote. It's actually clause number 9. Clear? That's it. And that's it. In this clause number 9, that is a typical point. Okay. Then we have clause number 1. Then we have clause number 1, confidentiality requirement. A CA in practice is guilty of misconduct if at all he is disclosing client's information without permission from the client or without there is a requirement in the law. You can disclose the client information without his permission. When? Mandatory to disclose under law. You are disclosing it because of a requirement in law and permitted by the client. Then you can disclose. Sir, he didn't permit. Then see, is it mandatory under law? No. Then don't disclose. If it is mandatory under law, whether client permits or not, leave it. You can disclose it. Are you clear? Now, for this confidentiality, introduction, confidentiality principle is there. That principle you must read. You know, what are the principles or factors you should consider? Whether the information is confidential or not, how do you consider? Some factors, one question is there. This question has been asked in May 24 exam for 5 marks. What are the factors that you should decide? What are the factors that you should consider? If some third party is asking information of the client, whether to disclose it or not, what points you will take into your mind? Like that one concept is there in confidentiality principle discussion. That principle you should discuss. Are you clear? Next, then clause number 2, again clause number 3 and 4. These two clauses are also somewhat different again. What is clause number 3? A CA in practice is deemed to be guilty of professional misconduct if at all he is certifying any statement which contains estimated earnings. Simple. A CA in practice is deemed to be guilty if at all you are certifying projected financials, forecast, prospective financials, you are guilty. However, this guilty will not attract. In the report, if you are clearly giving the disclosures, 3 disclosures you should give. What is the source of information for PFI? What are the basis for preparation? What assumptions are used? And the fact, you should clearly state the fact that I did not vouch accuracy. I did not vouch accuracy of the information. I only saw reasonableness of the assumption. I only saw sources of the information. That's it. If you clearly mention you are not certifying the accuracy of that number, if you clearly mention that in the PFI related report, yes or no, then you are not guilty. This point I will show you in the PFI discussion. Okay, how in the PFI we give a report. We give assurance report. In the assurance report, how it looks like, I will show you in the assurance related discussion. Okay, so that's clause number 3. I hope you're able to. Then clause number 4. What is clause number 4? You should not certify financial statements of the entity in which you or your partner has substantial interest. Now there itself one clarification you must know. Even if relative has a substantial interest, that also you should not certify. That's a council guideline decision. So council has decided even if a CA whose relative has a substantial interest in an entity, even that entity financial statements you should not certify. Not only you and your partner directly, even if your relative is having financial interest, substantial interest in that entity, you should not. Substantial interest means what? In a company, 20% voting power. In non-corporates, 20% profit sharing right. Hello, everyone? That's it. Then, which means we completed 1, 3, 4, 9, 10. 5 clauses we completed. Now we are left with 2, 5, 6, 7, 8. 2, 5, 6, 7, 8. Correct? Huh? Clause number 2. Look at 2, 5, 6, 7, 8. They all look similar. The meaning is same. Substance over form is same. Clause number 2. A CA in practice is deemed to be guilty of misconduct if at all he reports, he certifies without examining. What is it? Without examining, either by him or by his partner or by his employee. None of us examined and we certified it. Yes or no? A CA in practice is deemed to be guilty of professional misconduct if at all he is expressing opinion on the financial statements without examining by him or by his partner or by his employee. None of us examined. We just signed it. How negligent are you? Clause number 7 attracts. What is clause number 7? A CA in practice is deemed to be guilty of professional misconduct if at all he fails to exercise due diligence or he is grossly negligent. Fails to exercise due diligence or grossly negligent. What do you mean by gross negligence? What do you mean by fail to exercise due diligence? Without even checking, I'm signing it. You need to diligent. You need to be diligent. You need to check whether everything is right or not. Report, facts, everything right or not. You need to check. Only after checking thoroughly, only after diligently verifying, you should. One of the fundamental principle, professional competence and due care. Due care means what? The CA has to act skillfully, diligently. in the professional services. That's a violation of fundamental principle also. That's clause number 2. And clause number 7, I hope you understood. Grossly negligent. There one common example they give is circulation of newspapers. Okay, as recommended by Audit Bureau of newspapers related, one Audit Bureau of Circulation, ABC. One point is that Audit Bureau of Circulation, one department is there. You know, every newspaper agency, you know, they need to submit every month how many newspapers that they are circulating this month. Okay, they need to, so that will give ranking of the newspaper based on the trustworthiness. So that's also some ranking. Now each newspaper agency will approach one chartered accountant. Okay, they will approach either CA or CMA CS as per the Audit Bureau of Circulation qualifications. Okay, and you just have to certify how much this newspaper is circulating. How do you know that? You look at paper consumption, you look at money received, you look at how much they are distributing, you look at everything that. After verifying all that, then you will get a reasonable assurance how many the newspaper is really circulating, how much this newspaper company is really circulating. You will understand that only after you verify this. Without verifying that, if you certify the figures of newspaper circulation without verifying, that's a guilty. So that example is there in the clause number 7. Clear? Now 2 and 7 understood. Now look at 5. A CA in practice is deemed to be guilty of professional misconduct if he fails to disclose a material fact that is not disclosed in financial statements. Some material fact is there in the financials that you signed, no, that material fact is omitted, means that's a non-disclosure. That's what? Non-disclosure. You know it. You know that the company is not disclosing a material, you're not disclosing a material fact, you know it, still you certified. You are guilty under clause number 5. Clause number 6, what is it? You certified financial statements which contains material misstatement which you are aware of it. A CA in practice is deemed to be guilty of professional misconduct if at all he is certifying a financial statements which contain material misstatement which is aware of it. In spite of it, you certified, you are guilty. Misstatement definition includes non-disclosure. Non-disclosure is covered under clause number 5. So clause number 5 basically is redundant. Clause number 6 covers 5 also. Because a material misstatement that is there in the financial statements and you know it and you failed to report it. Yes or no? Material misstatement includes non-disclosure. Non-disclosure of material fact. So 5 and 6. 5 is not required technically. 6th clause. And tell me, so you are certifying without examining. Yes or no? You are certifying even though you know material misstatement that is there in the financials. You are certifying even though you know some important fact is not disclosed in the financials. So important fact not disclosed in financials and you still certifying it. Clause number 5. Material misstatement is there in the financials and you know it, still you certified it. Clause number 6. See, suppose if you give a modified opinion, no, because of material misstatement, then no problem. You didn't give modified opinion. You know that there is a material misstatement. Why you didn't react? You are guilty. Sir, I don't know that there is a material misstatement. Then that's an audit risk. Then that's an audit risk. If the other party can prove that you are aware of the misstatement and still you didn't act upon, then clause number 6 guilty will attract. 7 I told you. Clause number 8. What is clause number 8? A CA in practice is deemed to be guilty of professional misconduct if at all he certify any report or document without obtaining sufficient and appropriate evidence. Without obtaining evidence, if you certify, yes or no, you are guilty. Without obtaining evidence is nothing but clause number 2 only, no? What is clause number 2? Without examining. Without examining means what? Without looking at evidence. So 2 and 8 basically redundant. Now here the most important thing. If 2 attracts, 7 and 8 automatically attracts. Be careful. If clause number 2 attracts, 7 and 8 automatically attracts. 2, 7, 8 attracts. Clear? If 5 attracts, automatically 6 attracts. Clear everyone? That's it. Hello? That's it. So 2, 7, 8 interlinked. If you write 2, you must write 7, you must write 8. You're writing 8, you must write 7, you must write 2. 2, 7, 8 interlinked. 5 and 6 interlinked. If 5 attracts, 6 automatically attracts. But if 6 attracts, 5 need not. 5 need not attract. Suppose if there is a material misstatement in amount, not a disclosure related misstatement, then 5 will not attract, but only 6. And when 6 attracts, 9 also might attract. Why? You're not complying with GAAP. You know material misstatement and you're not reporting it. You're not complying with GAAP. As per audit GAAP, standards on auditing, you should give a modified opinion when you know material misstatement, yes or no, and you're not responding. So when 5 and 6 attracts, 9 will attract. When, now look at, when 2, 5, 6, 8, 2, 5, 6, 8, when these 4 attracts, 9 will attract. Able to understand? Okay, 9 will attract for all the above clauses, because you, without examining, you gave a report, which means you didn't comply with audit gap. A material fact is not disclosed and you didn't respond on it. Failure to comply with gap. MMS is there, you know it and you didn't respond on it. Failure to comply with gap. Without obtaining sufficient appropriate evidence as per clause number 8, you certified non-compliance with gap. Able to? That's it. Okay. So when I post this video, you once again see this and then make these markings if at all you require. So that's it with this. Schedule 1, Schedule 2, fully done. Easy or not? That's it. Now, we are having one more thing. Council guidelines were there. Can I continue for another 15 minutes? Okay, fine. Don't cry. We'll leave. Okay. So we'll continue in the next session. Okay. We are now left with what, number of tax audits, number of company audits, audit ceiling, fee ceiling limit, network firm ceiling limit, and then we have to discuss about corporate form of practice, MCOS. No CLAR I will discuss along with 250 standard. I will discuss no CLAR along with 250. Until now confident? Sorry? ESB some decisions were there that we will discuss. ESB some decisions were there. Where in ESB one decision will be there. PF internal auditor, stat auditor of the company, internal auditor of the company cannot be, that one silly discussion is there. That we have to discuss. What is that point? You are an internal auditor of the company. You can act as a stat auditor for PF trust. But you are an internal auditor of the PF trust of the same company. You cannot act as stat auditor for the company. Means I'm a stat auditor for the company and the company has a PF trust also. Can I act as a stat auditor there? No problem. Can I act as internal auditor? No problem. Sorry, not permitted. A stat auditor cannot take internal audit assignment. For the company, for the PF trust, doesn't matter. Sir, I'm an internal auditor. Can I act as a stat auditor for the PF trust? Yes. Provided you are not internal auditor for the PF trust. For the PF trust, I hope you know, right? Big companies like Reliance, Tata, listed, all these listed companies, they will have a PF trust separately. The trust will have a separate bank account. They collect PF from employees, provident from employees, that PF, whatever they collect from employee, whatever their contribution, both will be transferred to that bank account. And the PF trust is there, right? That will have a separate management. What they will do, they invest this money in government securities, fixed deposits, like that, and they generate return. Using that return only, they will add you interest in the PF account. Interest on employer contribution, interest on employee contribution. That how PF trust is adding you. They are getting return from their investments. That's it. Now the PF trust has to be audited as per RPF rules. As per RPF rules, PF trust has to be audited. Who can audit that? This is the question. Simple. Appoint an independent auditor, or you can appoint internal auditor of the company. He can do the stat audit of PF trust. But yeah, that's it. If at all our company has a stat auditor, can he also do stat audit of PF trust? No problem. No problem. Company has a stat auditor. Can he do internal audit of PF trust? No. Prohibited service under 144. For a stat auditor, 144 says don't take internal audit of the company or PF trust. They won't say PF trust, but that's an allied entity. No, that's an associate company, right? That's an associate, right? 144. 141 subsection 3 clause number J. A person or a firm is disqualified to act as an auditor if at all they are providing services listed under 144 to the company, holding company, subsidiary company. Okay, their intention of the law is associate also you should not. Intention of the law. Yes or no? PF trust is basically controlled by this company only. PF trust is basically controlled by the company. Controlling the composition of the board of directors of the PF trust, that PF trust naturally becomes subsidiary. I'm a stat auditor. Can I act as an internal auditor for PF trust of the same company? No. Hello? PF trust management, who will control? Company. Control on composition of management or directors. That's a control example. That becomes a subsidiary for you. When it is a subsidiary, can a stat auditor of holding company act as an internal auditor of subsidiary company? No. That's it. Can an internal auditor of holding company Act as a stat auditor of subsidiary company. Technically speaking, ethical standard board should prohibit it, but they permitted it there. They permitted it there. Sir, I'm an internal auditor for the company, sir. Can I act as a stat auditor for PF trust of the company? As per principles of ethics, no. But as per ethical standard board decision, yes. MCQ can come. Sir, internal auditor of PF trust. Can he act as a stat auditor for the company? No. Because you're already providing 144 service. You cannot act as stat auditor. Now, I'm an internal auditor for the company. 144 section does not apply to me. So, can I become a stat auditor there for the PF trust? You can. Able to understand. But actually, that decision was wrong. That's not a correct decision at all. Okay. But that one decision is confusing. For that reason, I'm repeating. Okay. So, apart from that, there are 3 to 4 more decisions like this were there. We will discuss that. BRSR, one ethical standard board decision is there. That and all we need to discuss. So, in the next session, few ethical standard boards and few council guidelines will discuss. Some around half an hour to 45 minutes. That will be over. Clear? That's it. So let's begin council guidelines. We have completed schedules. So we have completed provisions of CA Act, few sections. Now we need to discuss council guidelines. In that, important guidelines are, one is network guidelines. In that, there is only one question which is important in network guidelines. Ethical principles, ethical standards that a network has to create. Okay, only that guidelines are important there. And another one, tax audit number of limit, number of assignments you can sign. Company audit number of assignments you can sign. Audit fees, related ceiling limit. Okay, so that and all we need to cover. Now look at. Now one of the important guidelines is maintenance of books of accounts by CA in practice. The moment you started practice, the moment you are in practice, it is compulsory for you to maintain books of accounts. Whether are you reaching 44 AE, 44 AA under income tax, whether are you satisfying that section or not doesn't matter. Even if you are an LLP, for example, if the CA firm is an LLP, yes or no, or it's a partnership firm, whether the governing act is silent on books of accounts or not doesn't matter. The CA Act says you must maintain books of accounts. Okay, it is mandatory. So a cash book and a ledger book has to be maintained. So they have to be maintained irrespective of the turnover limits, irrespective of the income as given under 44 AA. Clear? Then limit on number of tax audit assignments. How many tax audit assignments a CA can sign? Okay, tell me, this number is to be calculated per financial year. It is not per assessment year, per previous year. The number has to be calculated per financial year. So in a financial year, how many tax audit returns or tax audit reports a CA can sign? Now a financial year means what? For example, you know, there is a financial year 1st April 2025 to 31st March 2026. Okay, within this financial year, I am signing, for example, I am a sole proprietor firm, only one person, the proprietor, he is a CA with the COP, full-time COP. How many he can sign? In this year, no, I have signed tax audit reports for a client who is filing updated return for assessment year 24-25. So updated returns we filed 10. Relating to it, tax audit was applicable. So tax audit report was also given related to those 10 clients. Assessment year 25-26 related, some 15 we filed. And assessment year 26-27, actually that year it will not come here. Okay, fine. Assessment year 25-26, 55 is signed, for example. Let us assume it is 55. That's it. This is the composition of the data. Is the CA in practice deemed to be guilty here? Yes, because he signed totally 65. It doesn't matter to which assessment years it belongs to. You know, for all this, if you see UDIN generation date, 65 UDINs were generated for tax audits. 65 UDINs were generated for tax audits within this particular 365 days time period. Within this 365 days time, you know, 65 UDINs were generated, automatically guilty. Now this is per person, right? Per CA 60. Suppose if it is a firm of chartered accountants, a partnership firm or LLP, for example, 3 partners they're having, then 3 into 60, 180. Now third one, I hope you understood, 180 is the limit applicable. Then third point, now if at all the firm is liable for 180 rate, firm is eligible for 180 rate, all this 180, how they have to distribute it between the partner? Like, should I distribute 60 each to each partner, Or can I let one partner sign all the 180 on behalf of remaining two partners also? Yes. So one partner can sign all the tax audit reports, on behalf of remaining, provided the remaining partners are not signing anywhere else. Further, if a person is a partner in multiple firms, how the limit has to be calculated? It doesn't matter in how many firms you are a partner, per person it is 60 eligible. Suppose you already signed on behalf of firm A 30 signatures. 30 UDINs you generated for tax audit. On behalf of other firms, you can only generate another 30. That's it. It is per person. Clear? Now, recently, there is one clarification given on this, some in 2025 itself, but that was not made applicable in the book. In the ICA book or even in the RTP, to best of my knowledge, there is no indication about this. Like, we know, right? The number of signatures on behalf of a firm is, in this case, 180. We can distribute it to the partner, between the partner in any ratio we want. No problem at all. At the end of the day, per partner, on an average, it should not exceed 60. If that condition we satisfy, that's enough. Even one partner can sign on behalf of all the partners. This is now restricted. Okay, as per the latest provision, which is not there in our syllabus right now, as per the latest council guidelines, each partner should not sign more than 60 reports. That's the latest guidelines. Okay, these guidelines came long back, 6 months before itself they came. But that is not updated in the CS study material. That is even not updated in RTP, to best of my knowledge. Even in RTP also this was not there. Getting it? So since ICA itself does not made it applicable, that amendment, you don't have to worry. Remember, in direct tax, indirect tax and audit, everywhere, whether an amendment or notification applicable to you, simple. If it is there either in the study material or it is there in this supplementary material, only then it is applicable. If at all a notification, circular or some clarification issued by ICI, ministry, CBDT, whatever it is, if at all that information is not given to you in the circular, in the supplementary material that is released, right, for every exam they give supplementary material, amendments material, supplementary book, or in RTP they will, at the introduction they'll mention what are the amendments that is applicable, sources of amendments related information they'll mention. In those sources, if it is not covered, then that circular is not applicable, then the notification is not applicable to you. Are you clear? See, Central Board of Direct Taxes will issue every day one circular, every day one notification. Who the hell will read all that? Yes or no? So ICI knows which circulars and notifications to be relevant for academic purpose. There are many which they don't even consider. So don't think that every circular notification that is there is applicable to you, because academically some are not relevant at all. Clear? That's it. So I hope you are clear on this. Next. So next time when you are looking for whether that amendment came, is it applicable or not, simple. Look at the supplementary material. If it is not covered, not applicable. Look at ICA study material. It is not covered, not covered. That's it. ICA material plus supplementary, both you should see. Clear? Next. So further, under tax audit, 44 AB, this is the section under which you do tax audit. It has 5 clauses, A, B, C, D, E. Okay, if at all you are doing tax audit under clause number C, clause number E, D and clause number E, if at all you are doing audit under these clauses, these tax audits will not be counted in this 60. These audits will not be counted in the 60 limit. Okay, these are the audits which are conducted not because SSC turnover is higher, but because in these clauses tax audit is conducted because SSC violated presumptive taxation some provisions. SSC is not complying with certain provisions of presumptive taxation. For that reason, these clauses were applicable. Okay, and if at all SSC is doing, when you are filing tax audit report in 3CA, 3CB, okay, you need to select under which clause you are doing tax audit. If you select clause A, clause B, then that AB will be counted in 60 and CDE will not be counted in that 60. This question was asked in September 25 attempt or probably May 25 attempt. In one of these attempts, this question has been tested. Are you clear? That's it. With this, tax audit ceiling limit is over. Now we have just like a tax audit. By the way, this tax audit ceiling limit for which tax audits? Income tax audits. Earlier until 22-23 year, or I guess so 21-22, GST audit also there. But now it is removed. Again they might introduce it back also. We don't know. But for GST audits, there is no ceiling limit which is given. Fine. Now coming to company audits. How many company audits a CA in practice can sign? If you observe, under Companies Act, already the ceiling limit is given. Under Companies Act, through disqualifications provision, ceiling limit for companies is given. A CA in practice cannot become auditor for more than 20 companies. Yes or no? Which excludes This 20 companies excludes what companies? One person company, small company, section 8 company, dormant company. Am I right? No, small company is not covered. One person company, dormant company, section 8 company, and section 8 also covered. Exclusion. Section 8 company, dormant company, private limited company where paid up capital is less than 100 crore. Can you just look at this? Section 8 company covered or not? Not covered. Okay, I think only 3 companies. I think it's like private sector companies is what they mentioned. Private limited company with paid up capital less than 100 crore. These are the 3 companies which are excluded. Just check it out once. Dormant company, section 8 companies covered or not? Just Google it. Small companies covered. Okay, I think section 8 is not covered. Small companies covered. 4 companies will be there. Yeah, 4 will be there. Okay, small company and other private limited company. Other private limited companies with paid up capital less than 100 crore. That's it. Fine. Anyhow. So 20 companies, beyond 20 companies you cannot do audit. This is what Companies Act says. Whereas CA Act Council guidelines you look at. Council guidelines if you take, how many companies you can do audit, maximum, not more than 30. Subject to the following companies will not be considered. One is one person company and dormant company. That's it. I think 2 exceptions only. Yes or no? Only 2 exceptions were given. As per CA Act, you have to do audit of maximum 30 companies. Maximum, that is a maximum limit. Excluding 1% dormant. Means if you are doing 1% and dormant company audits, no count at all. They will not be considered at all in the counting of 30. Now tell me, this I have to comply or this I have to comply? Both. We have to comply. Law and regulations. The multiple laws and multiple regulations are harmonious in nature. You have to apply, you have to comply with all the laws and regulations that are applicable to you. Now, how to comply with this? For example, right now I am doing audit of, let us assume, 20 small companies. How many I am doing? 20 small companies, 31% companies, 5 government companies, and private limited companies of 10 whose paid up capital is more than 100 crore. This is my situation. By the way, tell me, in tax audit I told no, it is per financial year 60. What about them? What about company audit? Is it per financial year, per calendar year? What? At any point of time. What is this? At any point of time. Today, if a client asked me, okay, if a company client approached me today, right now he approached me and he's asking me, sir, I want to appoint you as an auditor. Then I have to look at my existing companies where right now I'm holding the position as an auditor. Right now I'm holding the office of an auditorship, right? In existing companies, some companies, I'm already an auditor, right? Right now I'm holding that position, right? I will just list out. When I listed out, this is how the list came. I'm already right now acting as an auditor for 20 OPCs, 30 1% companies, 20 small companies, 5 government companies, and 10 private limited companies whose paid up capital is more than 100 crore. Fine. Let me once check with this. So here, how many I'm doing 1% company total? How many, by the way, I'm having? So 20 plus 30, 50, 55, 65 I'm having. Total how many? 65. Minus OPCs, 30. Dormant company I don't have. Small company, 20 I'll reduce it. Correct? Huh? So 20 I'll reduce it here. Private company with paid up capital more than 100 crore. Only here I should reduce only if it is less than. So as per Companies Act, right now I'm doing audit of 15 companies. As per Companies Act, 5 more companies I can accept. But Companies Act justification alone is not sufficient. You should also satisfy CA Act. Now let me apply as per CA. Right now I took 65 company audits. Eliminate 31% companies. Dormant companies I don't have. Oh, I already violated CA Act. Which means I am already doing audit of how many companies as per CA Act permitted companies? 35 I am doing. Only CA Act permits what? 30. Only when the new client came and asked me, I checked it and I found out that I already was guilty. Yes or no? So I need to first withdraw from remaining 5 companies as per CA Act. I hope you understood. So maybe under Companies Act you are permitted, but under CA Act you are not permitted. Forget about the new client. Existing clients you need to come out of it. Able to understand. That's it. So these are the points that you need to clearly understand regarding ceiling limit. And even company audit also. This, by the way, this 30, that 20 is per partner. If at all the firm having multiple partners, number of partners into the number. Now, the distribution between the partners can be in any ratio, just like how the logic is applicable for tax audits. That's it. Now, sir, what about remaining companies? For example, one person is there. How many I can do? Any number you can do. 100 companies also you can accept. 150 also you can accept. Ultimately, there is only one point that they will notice there. One point only they'll observe. Are you doing audit qualitatively? Are you doing in compliance with GAAP or not? That's it. If you are satisfying that you are complying with GAAP, you accept no matter how many audits you want to. See, the ceiling limit objective is to protect quality of the audit, to ensure the audit quality is not compromised. That's it. So that's regarding limit on, ceiling fees, all that. Then there is one more chapter, in the council guidelines. By the way, do I have to remember chapter number? Not required. You just have to remember council guidelines and then council guidelines on, non-payment of undisputed audit fee. Like that, you can check it out. Generally, a CA shall not accept appointment as an auditor in case fees of the other chartered accountant, yes or no, who carried out statutory audit or various other statute, who carried out company audit or some other audit. If it is not paid, the incoming auditor should not accept the audit if the outgoing auditor fees is not paid. Which fees, ma? Undisputed fee. I told you what is the difference between undisputed and disputed, yes or no? Now, explanation. What is undisputed fee? It is a fee which is already, for which provision is created in the accounts, which is signed by auditee and auditor along with other expenses incurred in connection with audit. The provision for audit fee which client agreed and then already created a provision plus expenses that he created provision in the books of accounts, right? That provision is called as what? Undisputed audit fee. Suppose auditor is demanding extra fee that I worked extra, originally terms of engagement 10 lakh, now I worked extra, I want extra 5 lakhs. Extra 5 lakhs is the rate. That's disputed audit fee. Are you clear? Next, explanation 2. SIC unit. In case of SIC unit, however, this prohibition shall not apply for SIC unit. Incoming auditor should not accept, no? Yes or no? This incoming auditor not to accept, that restriction is the right? That will not apply if the company is a SIC unit. What is a SIC unit? A company which is registered for at least 5 years and has an accumulated losses which is equal to or more than net worth of the company. Nothing but the company net worth completely eroded. That's what the meaning. You take net worth with accumulated losses, if you apply, it will be negative net worth. Simple. Next, specified number of audit assignments. This also I told. Limits on fees for other services. Now, first of all, this particular guidelines apply only when you are doing audit of. Only for these companies, these guidelines apply. What companies? PSUs, government company, listed company, okay, or applies to any other public company whose turnover is 50 crore or more. If at all I'm doing audit of these companies, this chapter will apply. If at all I'm doing an audit of private limited company, this guidelines will not apply. What these guidelines says? Self-interest threat. These guidelines are meant to protect you from self-interest threat. One of the example given in self-interest threat is undue dependence on fees on the client. Undue dependence on the fees. Undue dependence on other services on the client. These all create a self-interest threat. For example, I told you at the beginning of the ethics, MCOS services. Suppose I'm providing audit to one client. To the same client, I'm also providing some consultancy services, other services other than 144, prohibited. If it is prohibited, I will not provide. Other than prohibited, consultancy and other services, I am providing to my audit client. Now, if this client is paying me for audit is paying me some 1 crore fee. For other than audit, remaining services I'm providing, right? For that is paying me 1.5 crore fee. I am guilty of professional misconduct. So here, the fees that I'm receiving for other services is more than the fees that I'm charging for audit. Where other services are dominating here. Where in an assurance engagement where I am providing, in an audit engagement where I am providing, beyond audit I have an interest on other services. That created a self-interest threat. This is not permitted. You want to provide multiple services to a same client? Do provide, no problem. But make sure the total services for management, consultancy and other services that you are accepting, the fees of which should not be more than the fees that you are charging for statutory audit. Indirectly, the council guidelines objectives are very clear. Audit service should be the major service that you are providing to an audit client. If at all he is an audit client, you are providing audit plus other services, no problem. But audit service should be the dominant party there. Yes or no? Other services should not be the dominant element. The audit must be the dominant element so that self-interest threat can be avoided. Are you clear? If at all other services is dominant, if at all I have an issue in audit, I'll be worried about my other services continuity also. So for that reason, to protect independence of the member, they brought this particular clause. Now some big four and all, or even many audit firms, what they started doing, they create a company, they create a firm. On the firm name, they provide audit. They create management consultancy company separately. They incorporate a company separately. In the name of the company, now they are providing consultancy. Even if you are providing indirectly through an associate or subsidiary company like this, other services, that is also counted here. It's not just directly billed from the firm. Okay, whether fees for other services that you are billing from the firm account, from the firm invoice, or from the consultancy company invoice, doesn't matter. So because that's an associate company, that's a subsidiary company. Basically that's a subsidiary. For the firm, the consultancy company is a subsidiary. Subsidiary means what? This firm will control it. That's what the meaning. Yes or no? Sir, first of all, it's not a holding company. No. How come subsidiary company logic will apply? Subsidiary company logic I can apply even for individual. I can apply for a partnership firm. A partnership firm can have a subsidiary company. What is a subsidiary company? A company in which you have major ownership. That's it, logic. Yes or no? To become a subsidiary company, you need not be holding company first of all. Clear? Fine. So this restriction applies to fees for other work, services, assignments paid to stat auditor and their associate concern. What is associate concern? MCOS company that you create. What is associate concern? MCOS company that the CA is creating. Now further remember, associate concern do not include network firms. Associate concern do not include network firms. Network firms, how are they my associates? I am also registered as part of KPMG network. Just like me, another firm is also there. They also registered as part of KPMG. We don't have any association. We don't have any sort of association except that we are part of a same network. Associated companies do not include what ma? Associated concern do not include what ma? Network firm. See, typically my firm owners and the another entity through which I am providing consultancy, they're the owners. Minimum significant influence must be there. Minimum 20% or more common ownership must be there. Then the other concern will naturally become what concern? Associate concern. Able to understand? Sir, I am a BSR & Co. Chartered Accountants, a KPMG firm. And there is another firm called DEF & Co. which is also registered with KPMG. Let us assume. BSR & Co. is providing audit. DEF & Co. is providing non-audit services. Now, is this particular guidelines applicable? No. Why? That's not an associated concern. But ethical standards under network guidelines will apply here. Here, ethical standard under network guidelines will apply. Now, what is that particular guideline? For example, I will call audit firm and associated concern. What is the audit fee and what should be the maximum ratio for audit fee and other services? 1:1. Am I right? Yes or no? If your audit fee is 1 rupee, your other services and management consultancy should not be more than 1 rupee. Yes or no? If at all you are charging this, then other services should not be more than that. Am I right? Suppose along with me, in my network firms are providing management consultants and other services to the client. Where first of all my audit fees is 1 rupee. First of all, the fees that I am charging is 1 rupee. You know what? My network firms are charging 4 rupees fees for other services. My network firms are charging 4 rupees for other services. Not permitted. Only maximum 3. So which means if I am rendering audit, for example, KPMG is the network. That network is typically providing services to XYZ Limited, which is a listed company. Okay. Now, in this KPMG network, firm 1 and its associated company, it is charging 1 crore fee for audit, and it is also charging 90 lakh fee for management consultancy other services. One of the council guidelines satisfied. Now there are 3 more firms, firm 2, firm 3 and firm 4. They are also providing to the same company XYZ Limited, management consultancy and other services they are providing, where they are charging fees of 3.2 crore. Guilty. That's not permitted. The network is not permitted to render that. Yes or no? Because one of your network firm is providing audit. I will tell KPMG, one of your network firm is providing audit, which is where they're charging 1 crore. And they're already providing other services to them, 1:1 apply. To the remaining network firms, it's maximum 3x. What is permitted is 3x, which means your network up to maximum 4 rupees worth of other services they can provide. In that, 3 rupees breakup is for the networks, 1 rupee for the direct audit firm and associate concern, which is already providing audit. Do you understand? So which means 1 rupee for audit and maximum 4. Within this 4 also again sublimit. 1 for the actual firm which is providing, remaining 3 for the network firms. You can't interchange this ratio also. Able to understand. That's it. So this is what network related ethical guidelines on ceiling limit for audits. This ceiling limit is applicable for government companies, listed companies, public limited company having turnover more than 50 crore. Okay. Then we have that's it. Private limited companies, this is not applicable. That's it. I think major council guidelines were over. These are the sensitive council guidelines. Then rest all were nothing much. Now look at network related bylaws. In one of the exam they have asked, once a network is created, see, first of all, multiple firms, they can form together, they can come together and create a network. Ultimate objective of network creation is a brand. Creating a brand. Basically, SEs are not permitted to use logos. But a group of firms can come together and then form a network, can develop common quality control policies. Yes or no? Common work methodologies and tools. So they can implement that. See what exactly happens in KPMG and Deloitte and all these cases. How the business model works in Domino's and McD. The same business model is what they copy. Yes or no? What happens? McD and Domino's, if you see, worldwide, the pizza making process is standardized. There is a quality control policy and procedure. Yes or no? Wherever you go, any Domino's outlet you go in India and then you try pizza. Any outlet of McD you go across the world and order a particular burger, the taste same. 95% accuracy they will maintain. Yes or no? That's a quality control. How are they achieving it? Because the the burger making process, the pizza making process is now standardized. Same way, when we are providing audit services, we have to standardize the service that we are providing. Like for example, how to file an ITR 1. Have an SOP. A new article came. He don't know how to file an ITR 1. Give him this SOP. He will read it and then file it. Because of this SOP, what will happen? You will get a minimum assurance on quality. You will get a minimum assurance on quality. So you want to get an assurance even in my absence, even as a supervisor or as a reviewer, where I review overall work atmosphere in my firm. Even if I'm absent, my team should be able to provide the service in the same way what I will provide. For that, what I should do, how I provide the service, I should standardize it. SOP creation. Any business today you want to do, a restaurant, a business of, you want to sell sarees, you want to make a coffee, any business you want to, you have to bring SOPs. Okay, and that's the only way you can compete with Big Four. You want to compete with Big Four, all these Big Four companies are 170, 180 years old. Deloitte is incorporated 200 years ago, not 200, 160, 170 years ago, 1880. KPMG was incorporated somewhere in 1890s or 1900s. So these are all created centuries ago and they're all standardizing the work and then coming, and today they were dominant. So no, Deloitte turnover in India is 10,000 crore. 2,500 to 3,000 crore comes from audit. Remaining 7,000 crore comes from consultancy. It doesn't matter at the end of the financial spectrum, right? Yes or no? Deloitte global turnover is 2.5 lakh crore. Global turnover is 2.5 lakh crore. Deloitte. And all these Big Four entities put together occupying 10 lakh employees. Big Four. You take Big Six. Big 10 you take. They're employing even more. Only Deloitte has employees of close to 5.5 lakh employees. Within India, 2 lakh employees were there. See, this is the scale at which they are growing. The only way you want to grow at that scale, have SOP. You wanted to practice, design everything, standardize everything. The way you work, everything has to be standardized. Think larger, think longer. Yes or no? 20 years it will take for you to establish a brand. 20 years in finance domain. It's not an AI, it's not an AI tool that we are inventing. No, ours by default, one disadvantage that we have is any service that we bring will take time to know the impact of the service. Yes or no? If it's a tech product, one viral product if I create, immediately the next day it will, if at all it's really good, just the Gen Z, some platform user, they just virally, they make it viral. But any tool that you develop for finance, it will take time for it to, reach to masses. Yes or no? So it will take 15 years to 20 years to build an identity like this. So it's a long journey. Okay. But actually, ours is the safest course. Safest course, less risky. You know what? MBBS doctors, at 34, when their age is 34, they will see the salary of 1.5 lakh rupee. They will see per month salary of 1.5 lakh rupee. By 34, my friends were there who are also 34, 33, 34, like my age. Okay, so they're all earning minimum 8 to 10 lakhs per month. At the same time, when a doctor is starting the profession, 1.5 lakh. You don't know, in doctor medicine course is 11 years, 13 years. You want to get that? If you just clear MBBS and go, 20,000 they'll offer. You clear MD, super specialty you clear. Okay, specialization you get. So, you need exam 1 year after 12th. Then 4.5 years MBBS. Then 1.5 year mandatory internship. Then again you have to write NEET exam for MD. Specialization. Again that will be for 3 years. Again you have to do some 1.5 year internship. Again you have to write NEET exam for super specialty. Then again it will be for 2 years. Then after that you finally come out as a specialized expert doctor. Because specialties today is not recognized in the market. So many were there. Only if you do super specialty, there. Even tomorrow they reach a position where it has to go advanced level. Now to complete this entire process, 13 years they are spending. And you are crying here for 4.5 years. Yes or no? Even if you multiple times fail and then by the time you come out, max your age is 26 or 27. Worst scenario. Worst scenario. The worst scenario. Average CA qualifying age is 24 to 25. Average age. Understood? Excluding dropouts. So, in MBBS, doctor on an average age is 32, 33, they start making money. Until then, they won't see the money at all. That to the first salary they see is 1 lakh, 1.2 lakh like that. My friends do, big corporate hospital internal audits. I know the wage structure. Apollo, I know the wage structure. Sunshine, there is one big group. I know the wage structure. How much they pay to the doctor. They very pathetic. So when I see, thank God I choose CA course. And above all this, forget about it. Within this 13 years, they spend 1.5 to 2 crore in expenditure. That's more than. That is even more painful. They spend 1.5 to 2 crore. If at all they invested that amount at the beginning of their education time, that within the 13 years it would have become 5 crore. Correct? Huh? So they buy a medical seat, need coaching, everything. And our students, 5,000 rupees, 1,000 rupees discount, sir, subject wise. So no, you are so commercial. What commercial? Look at medicine, look at engineering, look at MBA, the fees that they're charging and the certainty that they're offering. So our course is highly certain, relatively easy. You don't know, I'm telling you, go and check medicine. Go and check that. Don't compare a course difficulty just by pass percentage. That's very narrow thinking. Compare course structure as a whole. How much time we are investing. Tell me, any student who invested 4 months before exam, there is nobody failed. 4 months who invested. Yes or no? On audit, any student who spent 300 hours and above, no one failed. No one failed. Those who will fail in audit, those who invested only 150 hours or less than 150, no, 150 more than enough in audit, they go and see 28 marks he'll get in exam. Then he'll realize, I would have spent another 50, 60 hours extra. That's what we are saying from the very first attempt. Okay, don't neglect. Give how much time you spend in coaching in FR, that much time you spend totally for audit. 60 plus time sure. This is the formula for audit. 300 hours. No, some students believe that 1,000 hours they'll spend over 10 attempts. They'll not spend in 1 attempt. 1 attempt, 300 hours you give an audit, nobody can fail you. Because you left the audit syllabus is less, no, compared to FR. Compared to AFM. That's it. Fine, next. So if at all you're feeling you have came into the wrong course, you don't know about the other course, right? That's why you're feeling like this is wrong. Just look at medicine. Look at BTech. They need to do MTech. They need to again do MBA. Only then they see a package of 25-30 lakhs. By the time if you hit the job industry, you at least start with 9. By the time 5-6 years complete, you will be somewhere around 35-40. Yes or no? Then he is just starting at 20. But okay, for them there is an accelerated growth. Tech guys, for them the growth is accelerated. Like first year they might start with 4 lakh. Second year it can be 20. Third year it can be 50. Fourth year it can be 1.5 crore. Fifth year it can be like growth is accelerated there, geometric progression. For us it is arithmetic progression only. Simple. They are risking a lot, they are investing a lot, they are studying a lot, they are spending a lot of years. So is the return. You are spending hardly less than 2 years, excluding internship. If at all I have to compare medicine course with CA course, medicine course excluding internship, it is 9 years or 8 years. Excluding internship CA, 2 years. So tell me who should be rewarded most? And they're going to a regular college paying that much of money. Who should be rewarded the most? And they are also working like you 12 hours. You know, medical colleges timings will be 8 hours, 9 hours, the college timings. And they'll have labs. I'm talking about serious colleges. I'm talking about IIT timings. IIT timings, 8 hours classes daily. You people hardly listen 4 hours in a day. That's it. And this, you listen only for 6 months. CA final, that to maximum. I'm telling you, maximum level 6 months. They listen 5.5 years. The same class, the same environment, the same campus. 6 years to 8 years they'll spend in the college. Attend classes, attend labs, attend projects. That's why they're making money like that. And we want to see that much success within 2 years. This is the problem. The system is wrong. So if you think I came into wrong course, no problem at all. Just go with other course and go and inquire. Just look at what a tech guy, once he completed 12th, going for BTech, then MTech, how the entire journey, how many years he invested, how much money he spent, how many regular college days he went, all that. Again, don't say they have life in college, sir, we don't have life. What life? What are you doing every day? If at all we talk facts, as if you're studying every day 14 hours, not sleeping. Majority pretend like that, no? Honestly speaking, class we started with some 60, already 20 were absent. Just third day or fourth day. What happens? I'll see in marathon, YouTube it will come, no? Dedication is not there, first of all. Continuity is not there. They have college, so they blindly go because they have a minimum percentage requirement. 80% of attendance should be there, 85. If 85 is not there, they'll not promote. So blindly they'll go. They don't have an option, they have to go. Unless they show disability certificate like that. Every year they have to show 85%. 9 to 10 months college will be there. 2 months summer holidays will be there. You might have seen movies, no? Yes or no? In that will show, no? That's it. So relatively we are in a safer zone. We are easy course. Relatively we are pursuing an easy course compared to those courses I'm telling you. MBBS, IIT. Don't compare with degree college nearby. Some college is there, na, where they don't even study and qualify. Don't compare with that. Compare with better courses than this. UPSC guys. In UPSC, you think UPSC is and CA? In UPSC, all toppers compete. Toppers from IIT, toppers from CA, toppers from IM, toppers from MBBS, medicine. All the toppers, they compete in UPSC. You see UPSC interviews, they're all already well established. They have a track record. Most of the UPSC candidates. 2 years they study. 1.5 to 2 years they study. Every day 10 hours. For 2 years straight routine. 6 months, 9 months to 1 year they prepare for prelims. Then again they'll prepare for another 6 months for mains. Some people, they prepare for prelims immediately within 6 months mains will start. So they start preparation 1.5 year before. They go to Delhi, they go to Hyderabad, they go to some other, academy. They pay 2.5, 3 lakh. With hostel, everything 6 lakhs. They'll be spending for 1.5 year. Every day 10 hours. Continuously for 1.5 year. Are we having that level of dedication? For studying 2 months before exam, I'm not getting feelings to study. My mind is getting diverted. I'm already just what? 2 months. They're studying 1.5 year. And you say CA course is tougher than IBS, IES, IAS, IPS, UPSC. My friends are there who have done UPSC and withdrawn. All India rankers. 2 persons were there. One All India 18th, one All India 12th rank. In 2013 attempt. Okay. So they went 3 times. They failed and came back. They told, I know I have so many people who from medicine who went and tried UPSC. Oh, no, this is something different level. That's a different league altogether. If you are already hardworking in medicine, IIT and CA courses where you are disciplined at least, then there is a slight possibility to crack UPSC. If at all you studied some degree college or BTech college with complete college life, you can't first of all, make yourself immerse there. So that's the level of coaching there. CA, CMA courses quite easy. You want to know it? Go and experience this, go and ask this. Even coming to foreign courses, they're not easy. People say foreign courses 4 papers. ACCA paper you should see. They will test on internal control. They'll give you 4 options. In the given scenario, which control we have to implement? in the following four, which of the following four is best control? They'll ask. All the four are relevant controls. They'll ask you which of the following is best control. There is a course called Certified Internal Audit. In that, 200 questions will be there. 400 marks the paper is 400 marks or some 200 marks the paper will be. Some questions have 0 weightage. Some questions have 10 marks weightage. Some questions have 4 marks weightage. You don't know the question that you are attempting. What is the weightage? You don't know. You blindly go 200 questions, you fill and come. 60% is a pass mark. Okay. So, and all these questions are completely on control topics. They're not on tell me professional ethics clause number 1. No, not like that. They're easy. In fact, our syllabus is easy. CIA, that's very tough. CFA, very tough. ACCA, very tough. Because there the discussion is completely rigorously practical. Only a person who has seen industry and worked in industry can easily crack it. You only see CPA past candidates. You should see the failure list. The bigger failure list is. The many CPA institutes were there, right? They show all their passed out candidates, right? How many enrolled there? That you look at. You will shock the number. Out of 1,000, 150 will qualify. After incurring 5 lakhs, 3 lakhs, 3.5 lakh. After paying for exam, single sitting 1.5 lakh. Single exam fee, 1.5 lakh fee. So know the value of our course. You know, we never know what we have. We always think that is best, this is best. So next 1.5 month, whatever the time you're having, every day 10 hours, make a routine. Weekly 1 day break, that's it, strict with yourself. Every day 10 hours, if possible 12 hours. Okay, the 10-12 hours if you make a routine and study for 50 to 60 days correctly, one group, no matter whoever it is, no matter whether you're starting afresh or not, it doesn't matter. 2 months, 50 days, 500 hours, high probability that you will clear. That's a mantra. If you have 3 months time, pakka you'll clear, provided that 3 months you spend every day 10 hours productively. It's process, the process which makes you succeed here. Unlike other courses where process may not guarantee, here process is guaranteed at least. Fine. So look at network. So network must establish operational bylaws. And just one added to it. If you don't believe my words, just ChatGPT. Whatever I told is based on ChatGPT and my friends' experience. Okay, I have some friends, all that. So with there, because generally your friends also, some of them into medicine, some of them into ask them. Okay, daily what is your college timings? Tell me how many years you have a course. What are your next plans? When are you going to start a job? Ask them. You will get the answer. So they will tell you, oh, you're completing CA, very good. I just completed MBBS. I have to do another 7 years. So then you will realize how valuable the course that we are doing is. Investment low, risk low, effort is less, everything is less. Yes or no? And we are getting return decently with certainty. Their risk is high, investment is high, certainty is very low. So much risk is there. Yeah, fine. Anyhow, look at. So when a network is formed, they need to form a committee first of all. So committee means what? Like 2 or 3 firms will put together, form a network. Network should have a managing committee. So they should form a managing committee. And from every member firm in the network, one partner should be responsible for the assignment. Okay. Then training and development material, issue of newsletter, development of software, development of library, peer review of member firms. KPMG Global will continuously review Indian KPMG firms, whether are they complying with the network guidelines or not, whether they are doing audit as per network SQC or not. You have standard on quality control. What is the standard says? SQC is the established policies, established policies, established policies. Establish policies for ethical requirement, establish policies for leadership requirement, establish policies for acceptance and continuous of client relationship, establish policies of human resources. Everywhere it talks about what? Establish policies. Nothing but what? SOPs. SQC standard is nothing but asking. It is asking you to prepare SOPs. Clear? Some medium-sized firms in India, they continuously complain. Big Four is dominating. Big Four is dominating. Okay, recently budget released. Have you presented a newsletter to your client? No. What are you doing then? Chit-chatting with friends, outside having a tea, nothing, discussing budget, all this. Why can't you sit 1 hour, 1.5 hour, prepare on the PDF, prepare a PDF. You know, what are your observations? Forward it to your clients. Make a video and educate your clients on this. How many CA firms did this in India? They yet complain. Big Four, morning budget came, evening 3 o'clock, they sent a newsletter. That's the reason they're leading, they're conquering. And we want to conquer without doing anything. Morning budget came, by afternoon 1:30, 2 o'clock, 3 o'clock budget wound up. 1 hour exactly. Newsletter KPMG released a newsletter on budget. Deloitte released they compete like anything. No, I should release faster than KPMG. They compete like anything. They release the newsletter with all analysis, everything. They have a team. At beginner, you should only develop that. Some budget issues. You are GST practitioner. GST is dominant. What happened in GST? In my client, any business. To him, what should I advise now? MSMEs are there. What new proposal came? To them, what should I advise now? Issue a newsletter. Reminders. Send reminders to your clients. Continuously engage with the clients. Tell them investment advisory. Give them investment advisors. Okay. So tell them how to maximize the wealth, not minimize the tax. It's not how to minimize the tax. It's maximize the wealth. So think like this. Engage actively. He will bring one more. He will bring 10 more clients. If you just do a compliance service, he will not be impressed. If you not do, somebody else will do. You should never be replaceable. You should be irreplaceable. Then you can command. Next. So logo guidelines, I hope you know. Logo guidelines I'm not referring to. Next. Now coming to website, very important for MCQs. Okay, sometimes I can ask you a descriptive question also. In fact, there are multiple times where website guidelines related descriptive questions have been asked. In website, what are the common guidelines? Can you disclose client name? No, not permitted unless it is required by a regulator. And moreover, when it is required by a regulator, you're disclosing client names in the website. Below the names, you should mention that this is a requirement of a disclosure. This is a disclosure requirement as per so and so regulator. Whatever is permitted to be disclosed or whatever, only that you should disclose. So you should give a mandatory disclaimer stating the disclosure is in terms of requirement of so and so regulator. Now, in the website, can firm publish photos of the partners, all that? Yes, passport style photos. And the CA can include article, professional updates, bulletin, educational videos, everything. Chat rooms may be provided, yes or no, while maintaining confidentiality. Firms may also offer a document management system with secure login access per client. This is nothing but document sharing platform. Generally, in all big clients, big audit firms, they don't take documents through Gmail, all that. They'll have a document sharing platform. Through the document sharing platform, the client will upload information. We download it. It will be saved everything in the cloud only. You can't even download it on the disk. Getting it? To maintain confidentiality. And website content should not have any solicitation kind of advertisement. If any content violates the code of conduct, ICA may take a disciplinary action. The website must ensure secrecy and protect client information. No advertisements. You see, there are so many websites where advertisements will pop up. That kind of advertisement should not pop up in a CA website. Moreover, the CA firm website should work on pull mode but not push mode. But recently, new code of ethics has been published in 2025. As per that, CA firms can run push websites. Okay, but that particular new guidelines were not yet applied for our exam. First September 26 or Jan 27 also, are they applicable or not? No clarity on that unless they give a supplementary material. Okay, so until then, don't accept any information. No matter what amendments they let them announce in institute, let them announce. Okay, it does not apply to you. Only when it is covered in supplementary material, it is applicable to you. Clear? Next. And the website must reflect dignity of the profession and must not contain any inappropriate material. Websites can provide links to ICA, links to income tax department, links to GST department, all that. The website address should be close to the member's name, firm name, trade name, but should not solicit advertisements or promote services. Website information must match with ICA records. That's it. Mostly all the points were over. It should be running on pull mode. Yes or no? You cannot advertise website names anywhere. Yes or no? Same advertising guidelines as usual. We have seen clause number 6. You can't mention your website name anywhere, everywhere. Wherever you are permitted to mention firm name, there you can mention website name. If firm name is prohibited to be mentioned, website name is automatically prohibited because website directly indicates firm profile. Next. Then online third party platforms. Okay. Can a CA register on an online third party platform? For example, Taxman is there. Clear Tax is there. Okay. There they have a chat option. Put your query, a CA will reply to you. Like that, on those platforms, can you register? You can register, you can mention your name and fact that you are a chartered accountant, but your firm details, website details, contact details should not be mentioned. And that particular online platform should not even advertise your professional attainments. Okay. Then publication of name in the firm directory is very simple. there will be so many industry chambers like that. They will just develop the database of rubber industries, cement industries, what are the companies that are dealing with iron, what are the companies that are dealing with so and so pharma products, what are the firms or entities that are providing financial services. So in the financial services, all the CA firms that are there in the city will appear. So that's a directory. In that directory, can my firm name appear? Can my firm name appear? Yes, absolutely, no problem. In the alphabetical order. It should appear in alphabetical order. No special prominence must be given to your firm. So that's what the directory's point. Can the firm register on an aggregator platform? No, not permitted. On an aggregator platform, you cannot. Here, there is one important question. GEM portal. What is it? GEM portal. In our question bank, there is a GEM portal question, TYK question. What is GEM? Government e-marketplace. What is it? Government e-marketplace. See, basically, in Amazon, what happens? Sellers will register, buyers will register. They buy goods from the seller. You see, NBFC peer-to-peer lender. Lenders will register, borrowers will register, and NBFC will act as a mediator, peer-to-peer lending. So these are all aggregator models basically. Tomorrow, somebody might bring a service sector aggregator model, which is already there. Urban company, for example. Urban company, quicker service. For example, quicker service started a service, professional services. In that, they're asking you to register as a service provider. You should not. But can I register on GEM portal, where in the GEM portal, all the CAs, all the sellers, so many service providers and sellers and manufacturers, they can register on GEM portal. In GEM portal, there is only one buyer, government. In GEM portal, there is only one buyer. And what government has implemented at central level is, if any government department, government office, government company, they want to buy services, they must register in GEM portal, and through GEM portal only they should buy the service. Now, if at all I am a CA practicing, I have not registered as a seller or service provider in the GEM portal, the government department don't even know that I am existing. So for that reason, I am paneling, I am registering myself in GEM portal, where I just gave a write-up. What is my firm? What am I doing? What are the services that I offer? So write-up, we call it as what? Write-up. I just give brief profile about my firm. Getting it in the GEM portal. Now, registering on GEM portal, will it amount to registering on aggregator platform? No. Aggregator is a commercial platform where multiple sellers will be there, multiple buyers will be there. GEM portal is only a government buyer will be there. On that, there is a question in the question bank. You just search in my question bank PDF GEM, you will find the question. Clear? Wherever complex questions are there, I'm just telling you. Next. That's it. Self-regulatory measures not important, not at all important. Then ethical standards board decisions. Okay, now I'll just go to the ICA material for this. I'll directly discuss it from the ICA material. Ethical standard board decisions. Yeah, you can see here there is a question on GEM. 30th question. Don't worry, in my PDF it is there. Answer everything clearly was given with highlights, everything. Technically, today ICI TYK questions are updated with many MTP questions and all. Typically, whether you solve past exam questions separately or not is not a big deal, because most of them were included in TYK now. Very few questions were there. So you can use our material also. In that, we have clearly given. I showed even in the previous class. Every chapter is divided into 3 parts in our material. So this is these are some ethical standard board decisions. We discuss all this in regular class, so the same material I'm using. Now look at what are recent ethical standard board decision. A member in practice who is a stat auditor, yes or no, it is not permissible for a member in practice being a stat auditor to prepare BRSR report. Simple. An auditor cannot provide compilation service. Simple logic. If at all a company is asking me to prepare BRSR, asking me to assist them in preparing BRSR report, no, I cannot. To the audit client. However, he may provide advisory service on the same. It is permissible for a member in practice being stat auditor to be an assurance provider. Okay, I should not prepare BRSR, but the company, they prepared BRSR with some other auditor or some other consultant. Now on the BRSR, we should give assurance also. Can stat auditor give assurance on that? This is assurance, that is assurance, so no problem. One assurance and one non-assurance, that is not permitted on the same subject matter, especially. Correct? So if I'm a stat auditor, I cannot be a compiler for BRSR report. If I'm a stat auditor for the company where I'm giving opinion on financial statements, I can simultaneously give assurance on BRSR report also. Assurance on BRSR, Sustainability Reporting Standard. Okay, there is a standard, sustainability standard on sustainability reporting, SSR. Some 3000 is there. SAE 3000, that's dealing with standard on sustainability reporting, standard on reporting with greenhouse gases, like that. Some standards were there. Next, stat auditor of the entity not permitted to provide compilation, which we know. Correct? It is permissible for a member to accept mystery audit. This point only they tested in Jan 26. Mystery audit, it is permitted to accept. What you need to tell? I will accept even if this decision is not there. Yes or no? Where is prohibition? MCOS is inclusive. So I will accept even if this decision is not there. So this point is useless. But this useless point they took and linked it with clause number 10 and then asked a question where the answer is wrong. Yes or no? Next. Okay. It is permitted for a member in practice to mention position as a promoter or director in the portal of the company. However, member cannot mention professional attainments, name of the firm where he is associated. There should be no violation of clause 6 and 7 in doing so. Wait. Yeah. However, he cannot mention. That's it. Okay. Simple here. In a company, I'm a director and all that. I can mention my name and my designation as a chartered accountant. That's it. My firm name should not be mentioned. Just because I'm mentioning my name and chartered accountant word, there is no guilty. Next. You can even set up a practice in IFSC, which is Gift City in India. There is only one IFSC, which is Gift City. Rest are not that. A firm is not permitted to publish vision, mission statement on letterhead, visiting card or stationery. They may be printed on the firm profile, may be provided in response to a specific request. In website also vision, mission can be there. But on visiting card, all that you should not. It is not permissible for a member who is a stat auditor of the bank to accept the ASM audit of a customer. Okay, agencies for monitoring, agencies for specialized monitoring. ASM refers to what? Agencies for specialized monitoring. Did they give full form here? No. Fine. Agencies for specialized monitoring. Generally, a borrower who has more than 250 crore loan, on them, the monitoring by the bank will be much more severe. Now, that monitoring task will be given to one CA firm sometimes. Who should not be stat auditor? Simple. If at all you are acting as a stat auditor for a bank, you cannot do stock audit. You cannot do concurrent audit. With respect to banks, these are the rules. You want to be a stat auditor? Fine. But don't take concurrent audit role. Don't take stock auditor role. Don't take ASM. Don't take ASM assignment. Because concurrent audit, stock audit, ASM assignments are internal tasks. Whereas you are doing already a stat audit. Conflict. Clear? It is permissible for a member in practice to charge fees on percentage of utilization of amount of education institute for certifying amount spent by education institute out of the grant. Some education institutes, they get grant from state government, and the state government will ask them to present a grant utilization certificate, and they approach you to prepare a grant utilization certificate, and for that you are charging fees 0.5% of the grant utilized. Yes or no? You can charge, no problem. So Ethical Standard Board permits it. It's a non-assurance service to non-audit client, which is permitted by Ethical Standard Board. By the way, what is Ethical Standard Board? I told you. It's a committee in ICA. In the previous session I showed you. Yes or no? Next. You can become a member of Board of Management in cooperative bank. So position of member is a role attached to a similar position that of a director, simplicity. Any managing committee role you can take up, provided it does not involve active participation in the day-to-day affairs of the company or the entity. Next. A member in practice cannot act as trademark or patent attorney. You should not act as an attorney, but you can provide services related to trademark application, all that. Okay, but you can't act as an attorney. Attorney means what? You will grant trademark, you will grant patent, you'll have a license. How a digital signature you will develop and then grant? No, like that. But you can assist the client. However, the advice relating to IPR is a routine professional work, and the same is permissible. You can advise the client on how to get trademark application, how to file it, all that you can advise. No problem. But you can't grant a trademark like that. See, trademark, IPR, one body will be there. You can register with the body. and then on behalf of the body you can provide, and you can take trademark applications and you negotiate with the body, and then you argue everything and then make sure your client gets a trademark. Like that, there are many consultancy firms which are exclusively participating in that. New Source, like that, some which are very popular companies for there. Getting it? So a CA cannot do like that if you are in practice, because that comes under additional occupation. If council give a special permission to you, then go ahead. Otherwise, not permitted. A CA firm can register on MSME website, no problem at all. Udyam registration is there, right? You can register. And 2 or more CAs in practice, no, they can collectively have a joint training session for their clients on GST and share the fees collected from clients thereof. You can't conduct it to public. Understood? Because that amounts to solicitation, because it's only clients. I'm only, yeah. A CA in practice may be equity research advisor, but cannot publish a retail report, because publishing retail report amounts to a business or occupation. Even in the special permission point, it is there. Next, you can be a registering authority for digital signatures. That no problem. A CA is not permitted to accept audit of a bank in case he has taken loan against fixed deposit held by him in the bank. This is something different. If at all you have a loan in a bank which is taken against FD, you should not accept the audit of the bank. Probably in that case, in that scenario, FD would have been more than 1 crore and loan would have been close to 1 crore. Since bigger amount is there, they would have disqualified the CA in that decision, but they made it as a rule here. In bank audit, introduction one point will be there. I mean, in acceptance, you should give declaration of indebtedness. You can have indebtedness up to 5 lakhs. Beyond 5 lakhs is not permitted. Now I have a loan against FD which is 4 lakhs only. Now tell me, what should I do? Should I accept or reject? Because ESB says, if at all you are having a loan against FD, you should not accept the assignment, audit assignment of the bank. Whereas general provision says up to 5 lakhs indebtedness is possible. Which one I should follow? That's the problem. They don't give full information here. What are these decisions basically? These are all council decisions or ESB decisions which are taken in an application which, some CS will apply. It's like how we apply in income tax for authority for advance ruling. Same way they apply for ESB. Suppose tomorrow you're having a dilemma, you can apply to ESB, you can send a mail and they'll reply you. So there they would have given all the facts, so much information would have been there. Last 2 lines decision will be there, no, that they copied and pasted here without looking at the facts. Right? Once you come out as a director in a company for 2 years, you should not take up auditor position in the same company. Okay? Actually, this kind of disqualification is not there in the Companies Act. It's a recommendation in the council. Are you clear? That's it. Actually, later they modified this, saying it is recommendatory only. If at all, after 2 years of acting as a director, you want to become an auditor later, you resign from director post, you can take it, because there is no statutory prohibition on this. So like that, they made it recommendatory. That's what entire answer they have given. But in exam, in question bank, when a question similar to this like this comes, the 2 years logic only they are applying. Once you become a director, withdrawn from a director, 2 years, you are prohibited to become auditor. A CA cannot become financial advisor and receive fees or commission from financial institutions. You can be an equity research advisor to your friends and family and relatives, no problem. But you cannot be a consultant or financial advisory services to financial institutions. That's an investment advisory service. Next. You cannot exercise lien over client documents for non-payment of fee. It is not permissible to put vision values behind visiting card. That already we saw. It is permissible to be a settler of a trust. Liquidator, settler, all this. So no, settler is someone similar to liquidator. A chartered accountant in service may appear as tax representative before tax authorities on behalf of employer. See, when you are providing representation, you are treated as deemed to be in practice. But you are an employee on behalf of the company you are representing, no problem. But on behalf of colleagues, but not on behalf of other employees. If you are providing on behalf of other employee, you are doing some service which a practicing CA is doing. So you are deemed to be in practice, you must apply COP. A CA who is a stat auditor of the bank cannot for the same year accept stock audit, inspection audit of the same branch of the bank or any other branch of the same bank or sister bank for the same financial year. Simple. You're a stat auditor. Don't take up stock audit, inspection, concurrent, ASM assignments. Next. A CA firm which is appointed as internal auditor of a PF trust cannot be appointed as stat auditor, but ulta permitted. Vice versa is permitted, correct? Look at a CA firm can act as an internal auditor of the company and stat auditor of PF fund under the Companies Act. Yes or no? For the PF fund, you can act as a stat auditor even though you're internal auditor of the company. But if at all you're internal auditor of the PF fund or PF trust, you cannot be a stat auditor for the company. I don't know what is the logic behind it. Okay. You can be a director simpliciter in any company, no problem. That's it. Important decisions we covered. Wherever generally confusion will be there, those points we covered. Okay. And compulsory, once again I'm telling you, question bank solving. Please go look at my question bank. PDF will be there. Exceptional questions will be there at least. That questions you please solve. Don't neglect it. They're very important. Okay. Exceptional questions alone at least you try to solve. If possible, entire question bank, single reading you give. I'm telling you 99.99% from that question bank only you'll find a question. A similar question only you'll find maximum. Any question you can answer with the knowledge that you gain in the question bank. Many students I'm noticing they're neglecting question bank, which is not correct at all. Question bank should be given most importance. Again, provided make sure the question bank is structurally arranged. Don't just randomly buy and then follow some question bank. Trust question banks which are prepared by faculties, because we know the exam standard in depth than any other service providers who simply compile and then copy paste and then give you. Anybody can do that question bank preparation, but that's not a big deal. But knowing which question to retain, which question not to retain. I told in one of the video, in standards introduction video, some standards were not there in the syllabus. Some standards were there in 2024 before. Some question papers are irrelevant. Yes or no? Many don't know this. Past 10 attempts you should solve. Past 10 years you should solve. So dumping all the questions, no use. Because the syllabus from 2024 is different from the syllabus that is there in 2023 in terms of scope of standards. Now the syllabus is much more clear. In old 240 is not there. 250 402 is clearly not there in the ICA book. You look at old material of ICA, 402 standard is not given. 320 related questions, so many will be there, but now it is not relevant. So like that, so many were there, inconsistencies. So follow resource book, which is only covering from May 2024 onwards. Even in my question bank, selectively some 15 to 20 questions I've taken from old books, old questions also, but only that 15 to 20 because there's something different. Only those questions I retain. Rest all other I ignored it. I told already 29 resources we have. That itself first you fulfill, completed, more than enough. Clear? That's it. With this, ethics is completely done. We spent close to 4 hours on the ethics. I mean, you're confident? That's it. I think all the doubts related points, everything, I think we closed it. All the dots we connected and closed it. All the doubtful topics in ethics, we specifically focused and closed it. Okay, that's it. Yeah, let's begin group audit discussion. But before I start actual group audit, first we'll finish 600. One standard essay, 600. Regarding this, one example I gave in 706 other matter paragraph example, State Bank of India. I'll briefly tell you 2 minutes. State Bank of India, first of all, it's a company which has subsidiary companies which also has branches. This State Bank of India will prepare 2 sets of financials. Consolidated financials, where they consolidate the company plus subsidiaries, joint ventures put together, a consolidated financials, and the bank also prepares something called standalone financials, where head office, administrative office, marketing offices plus 24,000 branches, they combine it and prepare standalone financials. Now the State Bank of India has 11 joint auditors. Let us assume there is only one auditor. Okay, all 11 put together we call them as principal auditor. Now these 24,000 branches, out of them some were not audited, some were audited by branch auditor. Coming to the consolidation point of view, holding company financials were audited by State Bank of India auditor, but subsidiary company financials were audited by other auditors. Yes or no? Now in the consolidated financials, holding company financial information is included, subsidiaries, associate, joint venture information is also included. Yes or no? Same way, in standalone financials, head office, marketing, administrative officers, which are audited by principal auditors, that information is there. In the same standalone financials, information belonging to 24,000 branches is also included. But on the standalone financials, on the consolidated financials, principal auditor is the one who is giving opinion, whereas he has not done the entire audit. Major portion of the financial information audit was performed by other auditors. Now, in this regard, what is the responsibility of principal auditor and what is the responsibility of other auditor? That is what explained under SA 600. Now, in SA 600, there is a definition for component. You see the definition, it has initially branch, division, subsidiary, joint venture, other entity. Branch and division, they are component for standalone financials. Subsidiary, joint venture, other entity, they are components for consolidated financials. Are you clear? They are component. These three terms are component for consolidated financials, whereas these two, division and branch, are component in standalone financials. First of all, why should we know about these components? Because these components were audited by other auditors. Yes or no? These components information which is included in financial information of the entity audited by principal auditor. Now, who is other auditor? He is an auditor who is responsible for component whose information is included in audited financial information by principal auditor. Who is a principal auditor? He is responsible for reporting on entity's financial information, whereas that entity information includes information of components audited by other auditors. This is how the definitions were drafted. Okay, now look at acceptance as a principal auditor. This is something which many don't understand. In fact, Cafe Coffee Day, their auditors, BSR & Co, was penalized by NFRA because they violated this principle. Okay, they accepted audit of holding company of the Coffee Day, where in the holding company, transactions were not major. First of all, business is not happening there major. Major businesses happened in subsidiary companies, but that subsidiary companies are audited by other auditors. Now, this KPMG, because they're not doing audit of subsidiary companies, they used the work of the other auditor, report of the other auditor. As per SA 600, they satisfied rest of the principles, everything, and then they gave an audit report of unqualified or qualified some opinion. Later, frauds were discovered in the one of the major group company, which is what the substantial portion is consolidated financials. Okay, that group company, so many transactions, frauds and errors were involved, which were not audited by BSR. So when BSR company, when they were BSR & Co, when NFRA investigating them, hello sir, SA 600, division of responsibility is there. Look at the division of responsibility. Look at the principal auditor is not responsible for work of other auditor unless there is a reason to doubt their ability. So BSR KPMG told other auditors are chartered accountants, so I don't have any doubt about their ability. So they gave everything true and fair. I considered that everything true and fair, and they gave an opinion which is true and fair. How can I be responsible? You are responsible because you accepted principal auditor role without doing major portion audit. How can you accept as a principal auditor? So if at all a company approaches you for becoming a principal auditor, you cannot take up that role without satisfying certain criteria. What? Materiality of the portion audited by principal auditor. You see, that's why in bank, as per RBI guidelines, central auditors must audit top 20 branches. Top 20 branches must be audited by central auditor. Why? You must audit the business. Major portion, at least a significant portion of business you must audit. If you never audited business, you just want to act as a central auditor. No, not possible. You have to take up at least significant portion of the financial information you should audit. That's why RBI made top 20 branches along with head officers. Principal auditor only should audit. Remaining branches, branch auditors can audit. You take their reports. You can tell you are not responsible for the branches also in other matter paragraph. No problem. But top 20 branches you must audit. Tata Sons, the auditors are TCS auditors. Why? In Tata Sons, TCS, Tata Motors occupy major share. So whoever is auditing TCS, Tata Motors, yes or no, they should only become the auditor of Tata Sons. Simple. Subsidiary company auditor, which is a significant subsidiary, their auditors only can audit holding company. If at all holding company is already doing significant amount of business, then no problem. If holding companies for namesake, entire business happens in subsidiary, then you cannot have a separate auditor for holding company, separate auditor for subsidiary. The same subsidiary auditor must be holding company, because the one who is involved directly into the business, The one who audits that business can only report on the overall business. Correct? That's the logic. So the auditor must assess whether participation is sufficient to act, whether no company is asking you to participate as a principal auditor, no, where some terms and conditions were given. Is that participation sufficient? For that, how do you know whether your participation is sufficient? First point, significance of the portion of the financials that you are auditing directly. How much portion you are auditing directly? How much knowledge you have in the business of the components? What is the risk of MMS in the components audited by other auditor? How much risk is involved in components? And whether principal auditor need to perform additional procedure so that you will have a significant participation. In Coffee Day, BSR & Co, NFR told you didn't have a significant participation. That principle you violated in 600. So you're boycott. I mean, you're guilty. 10 crore penalty was levied. See, they complied rest of the standard. This point they missed. Able to understand. Next, so acceptance as principal auditor. In one of the exam, 5 marks question came. Number 22. In number 22 exam or May 22 exam, in one of the attempt, this acceptance of principal auditor, one question came. On this, in our question bank, we have a question also. In that also, significant participation related discussion only will be there. Coffee Day issue only. That's actually Coffee Day issue only. Next. Now, okay, sir. I checked whether I am eligible to act as a principal auditor or not. First, I checked it. I am only major portion, I am only doing audit. I have very good knowledge of components. As I know, I am having significant participation in the overall group. I'm 100% fit to become a principal auditor. I accept at the role. What should I do now? Basically, for other auditors work, you are not responsible. You can happily use the report and then directly give your report, give your opinion. As I know, suppose if other auditor gave an unmodified opinion, on the remaining head office portion, you also have an unmodified opinion. As a whole, you give unmodified opinion. Sir, other auditor gave adverse opinion on the components, sir. What should I do in the overall financials? Look at the component impact on the overall. If the component is material only at the overall level company, but not pervasive, then you give qualified opinion based upon the other auditor's adverse opinion. If at all that component is immaterial to the group as a whole, then you ignore that and you give unmodified opinion. But remember, for the component whose financial information is included in the main financials, for that financial information, tomorrow if something went wrong, though I gave an opinion on this as a whole that everything is true and fair, but I am not answerable to it. If somebody comes and questions me, look, just like how you relied upon my audit report, I also relied upon other auditors' report. You know, in performing audits, we will be using work of multiple. We'll be using work of joint auditors. How your responsibility will be 299. You'll be using work of other auditors. Right now I told your responsibility will be decided by 600. You'll be using the work of your interns, paid assistants, staff, colleagues, SA 220. That standard is 220. Engagement partner is ultimately responsible. No division of responsibility there. SA 610, using the work of internal auditor. No division of responsibility. You have a sole responsibility. Then SA 620, using the work of an auditor's expert. You have the sole responsibility. Using the work of a management expert, 500. You have the sole responsibility. Only in 299, only in 600, sole responsibility will not be there. Division of responsibilities existing, because in 299 and in 600 the other auditors are also stat auditors. They are also external auditors, whereas internal, expert, they are first of all not stat auditors at all. They are not certifying the financials at all. Able to understand? So the division of responsibility will not apply. That's it. Clear, all of you? Next. So what are the principal auditor? What procedures he can do? One, he has a right to visit and examine the accounts of a component. He has a right to visit a component and review its financial records if required by law. Or he can generally what he'll do, he'll rely on the work of the other auditor unless there is a special circumstance which will make me to directly review. No, you have to assess competence of other auditor before relying on another auditor. Before you rely upon another auditor, evaluate his competence, especially when the other auditor is not a member of the institute. See, when he is not a member of the institute means what? For example, foreign component. Foreign component. This company has a foreign subsidiary. So that auditor is not a member of ICA. So I should assess whether he is competent or not. Then, so what are the procedures you will perform? The principal auditor should perform procedures to ensure adequacy of the work done by other auditor. You need to perform some procedure so that you can check whether they are performing the work adequately. At the planning stage, what you should do? Advise him how his work will be used and coordinate the efforts. And inform the other auditors about what are the areas where they require special attention, intercomponent transactions and audit timetable, and advise other auditor what are the accounting requirements, what are the auditing requirements, what are the reporting requirements, advise him. So principal auditor should perform procedures to ensure adequacy of the work of other auditor. Now further, you have one more option. You can ask him what procedures he performed. Send him a questionnaire, ask him to fill it and review the written summary of the procedures performed by other auditor. Generally we do this when the other auditor is not a CA. If at all other auditor is a CA, we don't ask all this. Hello boss, give me audit report directly, over. How you do audit, I'm not worried, because if you did not do audit properly, ISA will take care of you. I don't have to worry. So I believe on you. I believe you, assuming you did your work properly as per standards on auditing. Able to understand. But under the standard, whatever my responsibilities are there, I must fulfill. Suppose if I have a direct information that he is not doing audit adequately, then I must react upon it. I should not be quiet. Clear? Next, when that NFRA incident happened, entire Big Four protested, saying, we are only holding company auditor. The company has not appointed us as an auditor for subsidiary company. Okay, acceptance, all that is fine. So as long as other auditors, the Big Four complaining, other auditors were not as disciplined as how we audit. They don't have quality control practices. We can't rely upon other auditors. So give us a power to select other auditors and recommend to the holding company who should be the other auditor. So like that, one proposal came. Even this particular proposal was there in the ISA 600. In 2024, this issue is big. NFRA proposed a revised 600 standard. Revised standard on 600 they proposed. It was not posted, it was not updated. Okay, as per the revised standard, holding company auditors will be given power to decide other companies, subsidiary company auditors. And there, the report and all, they came up and said, in India, almost 70 to 80% of the market capitalization of the listed companies were audited by big six companies, big six firms. And out of private limited companies which are there in India, 50 to 60% of the private limited companies were subsidiaries of these companies, listed companies, which are directly audited by big six. So if at all the power to choose other auditors, selection participation power was given to Big Four or Big Six or the holding company auditors, it will directly threaten the small and medium practitioners. So Small and Medium Practitioners Association made an opposition statement on this again. Then SA 600 revised, which is proposed by NFRA, was still pending. But future it might get implemented. Yes or no? Because this holding company, big company auditors, listed company auditors, they're not at all, they're not ready for this. I mean, they're having the risk. They have the ultimate risk. Yes or no? So whether their own participation is sufficient or not, they're unable to comply with this. So they are unable to comply with the existing 600 requirements. So the proposed 600 is very lucrative for them. That's it. Next. So the principal auditor may discuss audit procedure with other auditor, review summary of the procedures and findings through a questionnaire or checklist, or you can also visit other auditor. What is the extent of these procedures? To what extent you review written summary? Will you visit or not? It depends upon my knowledge of his competence. Clear? Next. Same way, significant findings. If other auditor at one of the components, some significant findings were there. Okay, I will discuss with the management. I will discuss significant findings and other financial matters with the other auditor and component management. Additionally, you may decide to apply supplementary procedures to verify records and statements if necessary. The supplementary test can be conducted either by principal auditor directly or other auditor. I will request him. I will send him. Please test this boss and then send me a report on that. So I can send it. And especially when the other auditor is not professionally qualified. For example, it's a foreign law. The other auditor, sometimes in some cases, the other auditor may not be professionally qualified. That time only we generally perform supplementary test, or we will ask him to perform supplementary test. Further, principal auditor documentation requirement. What you should document. This itself can be asked as a 5 marks question. Now here, what are principal audit procedures? Yes or no? 3, 4. Put together 5 marks question. Then sometimes they will ask, what are the procedures to be performed when using the work of other auditor? Like in exam, they'll test you this. The principal auditor should perform procedure to ensure adequacy of the work done by other auditor. This statement they'll give you. And what do you mean by that? Explain. You need to write below this answer. What are principal audit procedures? Like that, they will ask you this. Means you need to write at least 4 points. 1, 2, 3, 4, main important. Okay, that's it. Documentation. You should document what components are. Principal auditor must document the audited components. What components you audited? Top 20. In bank, you should only audit. So document it. And what process you perform, what conclusions you reached. However, if sufficient evidence confirms compliance with quality control practices, I think this is not required. In answer also, this point is not there. In question bank answer also it is not there, but in IC book it is there. But in question bank when answers were given, this point is not there, leave it. If the other auditor report is not unmodified, nothing but what? If other auditor gave a modified report, the principal auditor must document how they addressed qualifications, adverse remarks when forming their own report. I told you, other auditor gave a qualified opinion, adverse opinion. You need not exactly copy paste it. You consider and understand its impact on the overall company, and accordingly you decide whether to give unqualified opinion, qualified opinion, all that. Suppose other auditor included emphasis of matter paragraph. Should I include that as it is in the company overall audit report? Depends upon its significance to the company as a whole. Because no, other auditor will apply materiality at branch level, and accordingly for him whatever appears material may not be material at company level. Yes or no? That's it. Then there must be proper coordination between principal and other auditor. This itself can be asked as a 5 marks question. Yes or no? Sufficient coordination is necessary between principal and other auditor. What is cooperation here? If a principal auditor get to know any information that will affect the work of the other auditor, I must communicate him. Same way, other auditor, if at all he identifies any information that is important at overall entity level, he must communicate it to principal auditor. Yes or no? And the principal auditor may require other auditor to complete a questionnaire. At the time, other auditor has a duty to respond to the questionnaire. He cannot say, who are you to dictate me? No. Yes or no? Next. If at all other auditor gave a modified opinion, what? The principal auditor should assess whether that modified opinion impacts the overall report. The principal auditor should document how they dealt with qualifications or adverse remark. If principal auditor is unable to use the work of other auditor, suppose other auditor is not cooperating me at all, company is not letting me to interact with other auditor, with respect to component I don't have evidence, which means I will give qualified or disclaimer of opinion unless the component is immaterial. That's it. 600 over. Easy. Okay, please go back and then read. Then we'll now discuss group audit. Okay, we'll take a break and then get back. Okay, and then we'll continue discussion of group audit. That's it. Easy, no? Until now. Yeah, let's begin group audit discussion. In that, the most important point, only important points we are going to discuss, and MCQ point of view, what is important, that also we are going to discuss. So first we'll look at reporting on consolidated financials. Group audit means what? Obviously you are acting as a group auditor, you are acting as a principal auditor, where you are taking, where you are signing the consolidated financials or standalone financials, which include components financial information. Now in a group audit, depending upon who is auditing the entity, who is auditing the component, depending upon that some 5 combinations have been derived. What if the principal auditor and component auditor one and same? No special reporting requirement. You just give opinion on the overall financial statements. Normally, for example, you take banks, they have branches, but they don't have branch accounts. Private sector banks. For private sector banks, there is no branch accounts concept. So though business operations happen at branch, generally the central stat auditors only do the entire audit. There is no branch auditors first of all, in fact. Or even if there is a separate branch and branch is audited by the principal auditor himself, both of them are same auditor. You just give an opinion, that's it. There is no reporting requirement like we saw no other matter paragraph, division of responsibility we have to state, no, that and all does not apply. So where principles and procedures for CFS follow relevant accounting, we just have to see whether procedure for CFS is followed or not as per accounting standard. If not, modify. So look at when parent auditor audits all components. Second one, when parent auditor is not the auditor of components. When components are not audited, what is the requirement here? For example, you take SBI, parent auditor is auditing few components, parent auditor is not auditing few components, and some components of the SBI were not at all audited. 3 combinations in this particular 5 cases are applicable to SBI. Suppose you are signing some financials, in that some component information is there and that component is not at all liable for audit. What is the requirement? You have to give a disclosure in other matter paragraph. Unaudited branches information which you should give. You should mention how many unaudited branches were there, and you should also quantify them. How much worth of asset, how much worth of liability, how much worth of deposit. For example, you take State Bank, They clearly tell some 30% of the advances, 30% of the deposits, 20% of the interest income, 40% of the interest expenditure were not liable for audit. They were not liable for audit. They quantify it. So ideally, all the components should be audited. If a component remains unaudited, yes or no, the principal auditor must evaluate modifications to the audit report. Remember, it's not audit opinion, guys, report. Because it leads to non-availability of sufficient appropriate evidence. Sometimes we might treat it as non-availability of evidence and we give a modified opinion. But sometimes, like if audit itself is exempted, yes or no, we ignore that part. Rest of the financials we give opinion. In the other matter paragraph, the auditor must assess qualitative and quantitative impact of unaudited financials and decide on what modifications to the opinion is required, if at all required. Apart from this, in case of banks, if any branches were unaudited, excluding that branches, rest of the financials you can give opinion. That branches were unaudited, right? That fact you should mention in other matter paragraph. So if at all, even though there are 16,000 branches which are not audited, still auditor is giving unqualified opinion on State Bank of India, because as per RBI guidelines it is permitted. If at all there is no permission in the RBI guidelines like that, you have to give a modified opinion if significant portion of branches were unaudited. Okay, this is a general requirement. A specific requirement in case of RBI is what? Unaudited branches information, you should just give it. How many branches were unaudited? What is its share in the total business? How much in the deposits their share? How much in the advances their share? Share of income, share of expenditure of these branches, how much you should quantify that. Such a kind of reporting I think I showed in State Bank of India. Correct? Next. Suppose parent auditor is not the auditor for component, which means component is audited by other auditor. In such a case, you must disclose that in other matter paragraph. What you should disclose? Quantification. You should specify the amount of assets, revenue, cash flow audited by other auditor. If possible, percentage, either amount or percentage. And further, disclose total assets, disclose revenues, disclose cash flows before applying consolidation adjustments for unaudited components. Yes or no? If at all the components were not audited, especially if at all, so disclose how much asset that and all were unaudited before you combine them, before you consolidate them. Actually, this point they should have classified here, because some components are not audited, right? That point is supposed to be classified here, but they mention there itself. Okay, next. Mentioning other auditors' work is not a qualification but shows divided responsibility. Correct? That's why even in other matter paragraph at the end we give our opinion is not modified in respect of the above matter. Like that we give in other matter paragraph also. So just because I'm mentioning division of responsibility, don't think I'm objecting something. So my opinion is not modified. So this is the responsibility when component is not audited by principal auditor but audited by other auditor. Next, sometimes the component, see, consolidation is what? Holding plus subsidiary combined, put together is combined financials, or that's called consolidated financials, holding and subsidiary. If it's a head office plus branches, we call it as combined financials. Yes or no? Sometimes what happens is the component is following a different accounting framework. Component might be following a different accounting framework. Regarding this, I think I uploaded one video. Components accounting framework, like that one video I already posted on the YouTube, my regular class video. That also you can watch, you'll get a better idea. Fine. Generally, group companies, what they do is, group company, the ultimate holding company will have a manual, group accounting manual. Okay, whenever they acquire a company into this group, okay, whenever they acquire controlling ownership in another company, immediately what they do is that another new company which we acquired, we will give them the group manual, accounting manual, and we'll ask them to align their accounting procedures, accounting policies, accounting ledger codes, everything as per the group accounting manual. For example, Tata Consultancy Services, they need to create professional fees ledger account. In the group accounting manual, professional fees ledger account would have been already created and it would have been already codified. Okay, here they will have an access to the total ledger data, total the account data, account names, account code numbers, and all they'll have access. They will also use the same name, so that in the consolidation tool, okay, uniformly everything will be consolidated. Consolidation is not done manually. It is used through consolidation tool. So whatever ledger names were there in the holding company, same ledger names, account categories will be there in subsidiary companies. This uniformity can be achieved only through group accounting manual. So that discussion is there. Some foreign components might have a different GAAP and their auditors may not be familiar with parent's GAAP. Parent management converts these components to parent GAAP before consolidation, and the parent auditor will verify conversion adjustment. Further, some components may prepare financials directly under group accounting manual. So the auditor has to ensure group accounting policies comply with parent GAAP and determine whether or not rely upon component audit report and make a reference to them in my audit report. So if there is a foreign component which is preparing financials on a different GAAP, that has to be converted into Indian GAAP. Conversion adjustments audit. Some components, what they do, they directly prepare accounting records and financial statements using Indian GAAP. Parent GAAP using parent group accounting manual. Yes or no? That time you just see whether group accounting manual is in line with applicable financial reporting framework as per the GAAP. Parent GAAP. That's it. And see whether referencing to the component auditor information is required or not. Check it out. Yes, generally as per other matter paragraph 706, audit responsibilities, you have to give a division of responsibilities. That's it. Sometimes, component auditor for a foreign component, he might have conducted audit as per foreign law. He might have performed audit as per foreign GAAP, audit GAAP. Now here in Indian auditing standards, we have to verify certain elements and he may have not verified those elements. Yes or no? We need to ensure that the extra whatever he missed, either we have to audit or we have to ask him to do the audit. Supplementary audit procedure. Yes or no? In SA 600. So component audit should be conducted under Indian GAAP for consistency. If component auditor follow different framework, then it should be aligned to Indian GAAP so that the parent auditor can rely upon it. Here GAAP means audit GAAP, in the above GAAP means accounting GAAP. Clear? These are the 5 circumstances. That's it. If the parent auditor audits the component, if parent auditor does not audit components, if components were unaudited, if component follows different accounting framework, if component auditor audits using a different audit framework, what are all the reporting requirements? That's it. And all these 5 situations were tested in past exams. Clear? Then now, so what is audit reporting under consolidation? That's what we discussed. The parent auditor generally audits all the components. Sometimes parent auditor is not the auditor for some of the components. So you need to follow all the standards on auditing: 700, 705, 706. Further, you need to follow another standard called SA 600. And these are the 5 reporting requirements. That's it. Okay. Next. With respect to group audit, parent auditor should get certain management representations. Okay, with respect to consolidation group audit, parent auditor has to get certain representations. What representations he should get? He should get representation. In exam they'll ask you, what are the examples of representation? 4 marks question. What representation you should get? Representation that all components are included in CFS. Representation, management should give written promise that they identified reportable segments. Management should give representation that they identified related parties and transactions for reporting. Management should give representation for appropriateness and completeness of consolidation adjustments, including elimination of intra-group transaction. Consolidation adjustments are 2 types: permanent adjustments, current period consolidation adjustments. So auditor has to get a written representation from management that yes, all the components are included. 2, they need to give a representation about segment reporting. They need to give representation about related party transactions and identification and reporting. And they need to give a representation that all consolidation adjustments were adjusted. Like that, you should get representation. And in fact, these are responsibilities. What are responsibilities of parent management? This only. Parent management is responsible to prepare a consolidated financial statements or group financial statements in accordance with the parent GAAP. Parent management is responsible to identify all the components that are liable for consolidation. Yes or no? Parent management is responsible for identifying reportable segments. Parent management is responsible for identifying, related party transactions and relationships and further accounting and disclosure. Parent management is responsible for consolidation adjustments, which may be permanent or which may be current period. Like that, one question is there: management responsibilities of parent. What are the responsibilities of parent? You see, management responsibilities of parent. Wait. Yeah, look at what are the responsibilities of parent for consolidated financials. A 5 marks question they can ask. Sometimes they can ask you what are the representations you should get from the management of the parent. Simple. I will ask written representation about whether they fulfill their responsibilities or not. So the same answer will be there. Are you clear? Next. Now, you know what? The parent which is liable for preparing consolidated financials has to give certain instructions to the components. Because only when the components follow these instructions, consolidation process becomes simple. Yes or no? Like parent management will generally give certain instructions to components management regarding accounting policies to be followed, disclosure requirements that they need to comply with, reporting identifiable segments, related parties, reporting timetable. Reporting timetable means by what time subsidiary should finish the preparation of their financials so that consolidation process can start. So regarding this, parent management will give instructions to component. You see, mostly the points are similar. What are the responsibilities of management of the parent? What are the instructions parent management should give to the components? What are the representations the auditor should get from the parent management? Clear? All the three are similar. Understood? Able to recollect first of all? Have you studied first of all group audit? Everyone? Huh. You studied in FR consolidation, no? If you have that idea, this you can reasonably understand this. Next. First of all, what about preparation of consolidated financials? Earlier, no, in the old scheme, the chapter name is Consolidated Financial Statements Audit, Audit of Consolidated Financials. Later it renamed into Group Audit. That's it. Content is same. Okay. Now, which companies has to consolidate? Every company which has a subsidiary or which has an associate or a joint venture must do consolidation. Yes or no? That's it. Now, there are some companies which are exempted from consolidation if they satisfy three conditions. All the three they have to satisfy. One, that company is an unlisted company. That company, first of all, is an unlisted company. And it has a holding company. Where this company, what I'm talking about, it has a subsidiary, it has a holding. Which means this is intermediary holding company, or you can also call it as intermediary subsidiary company. Okay, it's basically an intermediary holding company. Okay, this is not the ultimate subsidiary or ultimate holding. This is a middle, yes or no, intermediary holding company. If it is an intermediary holding company which is not listed in stock exchange and where 100% of the members have given their written consent for this company to exempt from preparing consolidated financials, three conditions, then that intermediary holding company is exempted from preparing consolidated financials provided the ultimate holding company is preparing consolidated financial statements. If Tata Motors is preparing consolidated financials, Jaguar Land Rover Range Rover, which is a subsidiary company of Tata Motor, but a holding company for some other companies, where JLR is not a listed entity. Where JLR is not a listed entity. It's an intermediary holding company which has some subsidiaries. And if JLR shareholders pass 100% resolution that, we are okay for not providing consolidated financials of the JLR, and its holding company Tata Motors, if they are preparing consolidated financials, and if JLR is unlisted entity, then JLR is exempted from preparing consolidated financials. Are you clear? Then we also have another exemption, investment entity. Investment entity, for example, investment entity. What is an investment entity? There are two types of investment entities in NBFC. You might have seen core investment company, non-operative financial holding company. There are two investment companies. One is non-operative financial holding company, which comes under base layer. Didn't remember? Non-operative financial holding companies come under middle layer or base layer? Base layer only. Core investment company comes under middle layer. Okay, fine. So non-operative financial holding company, what comes under base layer in NBFC? Peer-to-peer account aggregator, non-operative financial holding company, and a company NBFC which does not have access to customer, which does not have public interface, which does not have access to customer funds. That's it. Public funds. So that these four companies will come as part of base layer. Correct? Huh? That's it. So non-operative financial holding company means this is a company which is also ultimate objective is investing only, but they can invest only with a controlling interest. They can't just like that buy 5% shares of some other company, 1% shares of another company, 2% shares of another company. So these companies are called as what? Non-operative financial holding companies. These are basically non-operative companies, but they're mainly meant for becoming a holding company for some other companies. Core investment company. These companies also, their ultimate business is investing only, but they don't have any responsibility to become a holding. They want to buy 2% share capital in company, they can buy, no problem at all. So these are core investment company. Both in non-operative financial holding company, core investment company, one common criteria is 90% of their assets are represented by investments. 90%. To be eligible as an NBFC, if 50% assets are financial assets, that's enough. But here 90% of the assets must be financial assets, and that too it must be investment, not even loans. So then only we call them as investment entities. These investment entities are exempted from preparing consolidated financials because it's not about group picture which they want to exhibit, because they're basically investing entities. So there is no purpose for them to prepare consolidated financials, because in these investment entities, basically investment entities were not listed on stock exchange. Tata Sons not listed on stock exchange. Aditya Birla Holdings not listed on stock exchanges. Reliance, some ownership, trust and all will be there. Holding entities will be there. They are not listed on stock exchanges. So in investment entity, investors first of all will not be expecting them. So investment entity need not prepare CFS. If at all, it is measuring subsidiaries at fair value through P&L. Yes or no? And what about parent of the investment entity? Parent of the investment entity, what is that entity? That entity is a normal company, not an investment entity. Yeah, they need to prepare. They need to consolidate. What if the parent is also investment entity only? Again, it is exempted. Simple. Am I liable for preparing consolidated financial statements? What are you? Are you an investment entity? Yes. The answer is no. If at all you are investment entity, you are exempted from preparing consolidated financials. Sir, I am a Tata Motors Private Limited. I am a Tata Motors company, a listed company, for example, Tata Motors. I have a subsidiary which is investment entity. What about me? Am I investment entity? No. So you have to prepare. It doesn't matter whether your subsidiary is investment or not. It doesn't matter whether your holding is investment or not. Doesn't matter. Are you an investment entity? No. Prepare consolidated financials. Are you an investment entity? Yes. Exempted from preparing consolidated financials. No need to mug up holding. No need to mug up. Understood the logic? Next. What is investment? It raises funds from investor for investment management services. They invest funds purely for returns from capital appreciation or investment income, and these companies evaluate investments directly on fair value basis. That's it. Then we have, what are the audit objectives? What are the objectives of audit of consolidated financials? A 4 marks question they can ask. What is the objective of consolidated financials audit? Very simple. I have to ensure consolidated financials are prepared in accordance with applicable financial reporting framework. I need to express opinion on whether consolidated financials are true and fair or not. And I need to inquire into matters given under 143 subsection 1, 6 inquiries. I need to report on matters under 143 subsection 3, A to J, 10 matters plus 6 matters. And I need to validate whether the company is required first of all to prepare consolidated financials on. If at all they're required to prepare and they prepared it, then I will check whether they prepared as per applicable framework or not. What are the auditor's objectives? Simple. I have to ensure consolidated financials are prepared as per applicable framework. I have to first ensure, is the company liable for consolidation? Then I should give opinion on true and fair. I should also report on 143.1. I should also report on 143.3. CARO 2020 does not apply for consolidated financials. Only 21st clause is applicable. That's it. That's it. What are the audit considerations? Materiality determination, one of the important point. 4 marks question, many times asked. Remember, the materiality that you fix as a parent company auditor for the parent company, that materiality is different from the group. Yes or no? So for standalone audits, materiality computed on component wise, but for CFS, the materiality is computed group level. So why we need to compute materiality? 2 SS, consolidation adjustments, 2 SS, whether component financials significantly impact the group. How do you know whether a component is significant, material or not? You compare it with consolidated assets, you compare it with consolidated turnover, you compare it with consolidated profit. When a component is a material component, material subsidiary, if that subsidiary turnover is 20% of the total turnover of the group, If that profit is 20% of the total profit of the group, then automatically that subsidiary or component will be material component. So why I need to compute materiality at group level? 2 S's. Significance, 2 S's first. Consolidation adjustments, are they correctly accounted? 2, whether component financial significant impact, whether additional component should be included in audit. The principal auditor may communicate the materiality to component auditor for a consistent approach. How I determine materiality? No? Process of determining materiality, no? That materiality I can communicate to other auditors, or sometimes principal auditor himself will decide the materiality and tell the component auditors to follow the materiality. Then that's it. Now audit process. Audit process. First you need to plan before starting the audit of consolidated financials. What are the points you consider in planning? So before you plan the audit of consolidated financials, what points you will consider? You will consider understanding group structure, group-wide controls including IT systems used, understand group structure, review accounting policies of the parent and component, and see whether translation is required for foreign components. Then determine nature, timing, extent of audit procedure based on risk of MMS involved in consolidation process, and evaluate need for other auditors and coordinate the efforts. Now what is the audit process? Get the list of components, okay, and ensure they're all included in CFS unless a component meets a valid exclusion criteria. Temporary control, like that, some benefits, some exclusion criteria were there. If at all you don't have interest to control them, first of all, okay, then that might be excluded from consolidation purpose. Maybe under India some other rules might be there, correct? Next, you need to verify completeness of components included. You need to verify completeness of components included in consolidated financials, a 5 marks question. So they might ask you, one of the important duty of the auditor is to ensure that all the components are included in consolidated financials unless a valid exclusion criteria is satisfied. What are the points auditor has to perform to ensure completeness? Simple. Review last year working papers. Inquire management whether any new components acquired, or is there any component that is disinvested. Check investment details of parent and component. Look at joint venture and arrangements. Look at the statute records maintained by the company. Look at related party register. Look at investment register. Next, identify shareholding pattern. So all these items will give you, all these procedures will give you information about, are there a new component, are there existing components deleted, what are all constitute group entities, what entities will come as part of group, and document audit procedures regarding completeness. You can obtain control, there are look at the various means of control, like you have a joint control, you have a significant influence, like through board meeting minutes, shareholder agreements, and post year-end transactions. By looking at all this, you will understand what are the ways in which the company is having control over other entities. It might be absolute control, it might be significant influence, all that. Look at board meeting minutes, look at year-end transactions, after year-end transactions. All this will give you an idea about what are all, you will get an idea about completeness of the entities included in the consolidated financial statements. Next, method of consolidation, I'm not touching that, okay. Now special considerations, on this, in the recent exam, I'll tell you, September 25, I guess, they have asked some questions. Jan 26 also, Jan 26 also, there is a question on group audit. 1 minute. Yeah, look at this. They have asked a question on this. There is some information which we must give in the notes to separate financials. Separate financials are also called as standalone financials, okay, which we need to give in standalone but need not be given in consolidated. There are some information, some points which a parent management has to disclose only in standalone financials of the parent but not in the consolidated financials. What? Every company individually, they need to disclose sources from where bonus shares are issued. They need to disclose unutilized money out of which a disclosure of all unutilized money out of the issue, indicating the form in which unutilized money has been invested. Some public issue you raised money was unutilized. Now you might have invested this money somewhere temporarily in a bank account or maybe in a fixed deposit like that. Details of the unutilized money and the amount invested out of the unutilized money, you need to clearly disclose that. In exam, no, they removed this word un, and then they asked it as an MCQ. That MCQ Jan 26, I guess. Yeah, is it Jan 26 exam? Huh? Fine. Yeah, look at. This is the question, and I'll tell you this question is wrong. MCQ was wrongly tested, but if you interpret too much only, it will be. Okay, like look at. During the course of audit of global reach, in his opinion, the following information is given in the notes to separate financials, need not be included in consolidated. So they have given some information which are included in parent financials but not in the consolidated financials. What information they gave? Sources from which bonus shares are issued, disclosures under MSMED. Yeah, it is there. Disclosure under MSMED is there. Yes or no? Disclosure under MSMED, correct? Then a statement of investments, separate classifying trade investments and other investments. So you need to give a statement of investments made in body corporates. Yes or no? In whose shares or debentures investments have been made, and nature and extent of investment made. What is the nature of investment? What is the extent of investment? Value of imports calculated on CIF basis. Yes or no? And expenditure in foreign currency on account of royalty, know-how, professional consultancy, interest and other matters. Expenditure on foreign currency. Value of imported raw materials and spare parts and components which are consumed during the financial year, and value of indigenous raw materials and consumed, and what is their percentage to the total consumption. Consumption of raw material procuring within India, how much? Procured outside India, how much? What is this percentage? The amount remitted during the year in foreign currencies due to dividends. Okay, who are the non-resident shareholder, number of shares held by them on which the dividends were due. Earnings in foreign exchange calculated on FOB basis. Export of goods calculated on FOB basis. Royalty, know-how, professional, interest and dividend, other income. Simple. Earnings in foreign exchange. One from export of goods, other income. Revenue from operations you should disclose, other income you should disclose. Yes or no? So export revenue has to be calculated based on FOB, not CIF. Import goods will be valued at CIF because carriage, purchase price, carriage, inward, freight charges put together. In export, no, until we deliver to the board on the ship only our responsibility. Then after he will bear the expenses. Yes or no? So only on FOB basis we will recognize export value. Able to understand? Now look at this question, what they have asked. Disclosure of all utilized money. That's wrong. Yes or no? Unutilized money, indicating the form in which the utilized funds. This is also unutilized. Sometimes here unutilized they'll put, here they'll put utilized. So be careful. Next, earnings in foreign exchange classified as export of goods, not calculated on FOB. That's wrong. It must be calculated on FOB. In separate financial statements, you disclose these 4 points, no doubt. But here what you disclose is unutilized money. Here what you discuss is export of goods on FOB basis you disclose. Yes or no? But the company disclosed differently. Now look at the question MCQ which they have asked. Which of the following information given in the notes to separate financials need not be included in consolidated financials? All the 4. They have given all the 4 points, right? None of them will come in consolidated financials. The questioning is wrong. Which of the following information given in the notes to accounts which is included in separate financials need not be included in? Look at the question carefully. The company gave in the separate financials 4 points, no? Out of that, which points will not come in consolidation? All the 4. Hello? Correct, huh? Technically, they should have asked it as SFS. Which of the points the company included in standalone but not included in CFS were not actually correct? If that is how the question is drafted, Then export on exports calculated not on FOB basis. That is not correct. Unutilized money information is not required. Unutilized money information is what required in SFS. Yes or no? So 2 and 4. Actually here the answer will be, I'll tell, it's actually 1, 2, 3, 4. That questioning was wrong. See, technically these 4 points, original points, they will come only in SFS but not in CFS. Okay. Here, third point and fourth point were not there in the original list. Does it mean these 2 will come in CFS? Hello? No. Or does it mean these 2 also will come in CFS? None of them will come in CFS. They are asking question what? Which of these points will not come in CFS? Which of these points will not come in CFS? Which of the following information given in the notes in the separate financials need not be included in consolidated? All the 4 will not be included. Again, within 4, 2 of them is including. What 2 of them they included? That is also not correct. So the questioning is wrong. But anyhow, now here the problem is, out of the 4, 2 points were wrong, 2 points were correct. Are they asking me about correct 2 points or wrong 2 points? That's the question. You're able to understand? So what I felt is, in this question when I see, the company included 4 points, 1, 2, 3, 4 in separate. 3 and 4 are not correct. They should not come under SFS and of course SCFS. 1 and 2 points will come in SFS only but not come in, of course, in CFS. Whereas 3 and 4, they don't come in both. Am I right? So which of the following information given in notes as a part of SFS need not be included? Probably I feel they're asking me about right points, not the wrong points. Vice versa. They might be asking wrong answer. Yes or no? So the answer could be either 1 and 2 or 3 and 4. The answer could be 1 and 2 or 3 and 4. What answer they gave? 11 A they give, which means they're asking you the correct points. But actually, is that indication there in the question? Do you understand? That questioning was wrong. Their intention, everything was good, but their questioning. You know how the question should be supposed to be? Which of the points included in SFS but not included in CFS is correct? 4 points included, 1 and 2 only correct. 3 and 4, no, that's not correct, because no, utilized money you don't need to show, unutilized money you need to show. 4th point, exports on FO basis you need to show, but not on otherwise. That should be the question. Sometimes what happens is, the paper setter, no brain. Yes or no? Look at that. Oh, 4 points are. We'll ask question creatively. And he asked the wrong question. You understood? See, I'll show so many mistakes. Understood? When I say this question, no, I generally do paper review immediately. Within 15-20 minutes, I'll put this question took 10 minutes from me. What are they asking? Are options itself wrong? No, all 4 will not come in CFS. Correct? No? Huh? Fine. Next. Continuation. Okay. Do you understand that? Next. Now, what are permanent adjustments? Hey, don't interpret much. What I told correct 100%. Never interpret based on the question and answer given. Based on logic, you should interpret. Some students know they get logic based on the answer given. You should never interpret based on the answer. Yeah, you should interpret based on the question. Yes or no? That's it. They gave 4 points in SFS. Out of the 2 wrong. Which of it will not come in CFS? None of it. It's not 1 and 2 or 3 and 4. None of it will come in CFS. Correct? Huh? That's it. Next. What are current period adjustments? What are permanent adjustments? In September 25, 1 MCQ they have asked. In September 25, 1 MCQ they have asked. Look at, what they asked is this diagram. Wait. Where are they? Permanent adjustments, current period adjustments, where are they? Current period and permanent. Look at this. They asked this in September 25 exam, MCQ. Okay. Determination of amount of equity attributable to non-controlling interest. That's a permanent adjustment. Permanent adjustments are determination of goodwill capital reserve as applicable to applicable accounting standard. Determination of amount of equity attributable to minorities interest, determination of amount of equity related to minorities. These are permanent consolidation adjustments. Determination of goodwill and capital reserve, combination of minorities interest equity portion. These two are always permanent adjustments. This question they tested. Again in current period adjustments. What are current period adjustments primarily related to intra-group? It's okay, I think look at determination of movement in equity attributable to minorities interest or non-controlling interest since the date of acquisition of subsidiary. So after acquisition of the subsidiary, anything is that, that's a current period adjustment. At the time of acquisition, whatever is there, that's a permanent adjustment. That point, they can test that also. So be careful. That's it. I mean, main observations are completed. Now that remaining matter, whatever is there, no, I generally, what are permanent adjustments and permanent adjustments or what? Current period adjustments or what? You just look into it, you'll understand it. Okay. Nothing, I mean, they won't 99%, they won't ask from that. Only MCQ can be possible. So I think technically we have completed most of the chapter. So disclosures in SFS but not in CFS. Bonus shares related sources, correct? Unutilized funds from public issue, status of that. Disclosures under MSME. Details of investments in body corporates, correct? Shortcut, short format. CIF value of imports, expenditure in foreign currency, value of imported versus indigenous raw material consumed, foreign remittances, foreign exchange earnings, exports, no, 1 point, FOB, no, yeah, correct. What is it? FOB basis, correct. That point alone you had enough, over. That's it, over. Easy, no? Group audit, not that big. Okay, so within 1 hour we completed group audit and 600, where minimum 5 marks up to 10 marks also. That's it. Confident? Yeah, let's begin. ESG and SDG audit, environment, social governance, sustainable development goals. Okay, that audit. In this topic, you have a lot of unnecessary discussion like ESG evolution, how ESG evolved in India, globally how it was evolved, timelines, what are the 17 SDG goals. Like that, there is a lot of discussion involved. That's completely irrelevant. It's useless. Okay. Yeah, typically useless. There is no point reading that, and they will not test also. Even if they test, you will not write also. What you will write? There are so many committees that are there across the world regarding SDG. There are so many committees. Okay, task force committee will be there. Some task force committee will be there. UK, some, sustainable reporting board will be there. US PCOB approved sustainable reporting board will be there. International accounting standards, international IFC, International Federation of Accountants, their related sustainability board will be there. In India, ICA related sustainability development board will be there. There is a sustainability development board. Okay, standards on sustainability development. Okay, standards on sustainability reporting board, SSRB. Yeah, that's correct. Standards on sustainability reporting board. That's a non-standing committee of ICA. Like that, there are so many discussions about different authorities, different committees, different associations which are there. That the entire discussion is there, which is impossible to remember. And they will not test also. What they will test in this chapter? Integrated reporting, 1 important topic. 2, BRSR, business responsibility and sustainability reporting, 9 principles. Principle wise, you have to give 2 types of disclosures: essential indicator, leadership indicator. Okay, like the 2 kinds of disclosures you need to give. That's one. BRSR, assurance on BRSR. I think in the recent exam, assurance on BRSR is asked. Okay, in the recent exam or that before, they have asked assurance on BRSR, assurance. Then we have role of chartered accountants in sustainability reporting. That's one more topic, role of CS in sustainability reporting. So these are the 4 topics. Then we have at the beginning of this chapter, what are the 3 pillars of sustainability reporting? Environment, social, governance. What are the elements of these pillars? This is one topic. I think if you are perfect in this, okay, that's more than enough. Only 5 to 7 topics it will come. If you are perfect in that, more than enough. No need to touch remaining topics at all. Okay, look at, for this I just want to show once Reliance BRSR report. This is Reliance sustainability report. Okay, we generally discuss this to make the student understand some practical questions, because in exams, no, they'll give you practical questions. They'll give you one case study. In our question bank, it is there. They will mention that under a particular principle, they gave the following disclosures. Whether those disclosures come under essential indicator or they come under leadership indicator, you should identify. That syllabus is not there in the book, but they're asking in the questions, MTP, RTP, that questions were there. Whether a disclosure comes under essential indicator or leadership indicator depends only, you can understand only when you once at least see the sustainability report. You see, this is a sustainability report, 100 pages almost, Reliance sustainability report, where they integrated with integrated reporting. They integrated it with integrated reporting. You see here, sustainability report, you have a question, right? BRSR, a topic is there. BRSR is divided into 3 sections. You might have seen this. Section A contains general disclosure. Section B contains management process and disclosure. Section C contains principle wise performance disclosure. Again, within section C, 9 principles will be there. In each principle, we disclose 2 things. Essential indicators, which we already implemented and following, which are mandatory. Leadership indicators, which are not mandatory, but you have taken certain measures, okay, beyond what is required in the SEBI requirement. By the way, BRSR is a SEBI requirement. Top 1000 listed companies in India must prepare BRSR report, and on that report, stat auditor should give an assurance report on that, whether BRSR report is prepared in accordance with SEBI requirements or not. Yes or no? So an auditor has to give an assurance report on this. For that, you have an assurance standard. Hello? Able to? So now, what are all principle wise disclosure? For example, section A, what section A contains? General disclosures about the company, where they mention about what company, listed or not, when it is incorporated, registered office, paid up capital how much, where stock exchanges, where they listed, all this. They will give you information about what products and services they are selling. Reliance is dealing with totally 12 types of products they're dealing with, and what is its percentage, and what operations, nationally how many, internationally how many markets are they serving, 108 countries and 35 states within India. Then what is the contribution for exports? 51% is from exports. What products they are dealing with? 92% they are dealing with oil to chemical, and then oil and gas exploration. Like that, they'll give you some information. Who are all the customers? Oil to chemical, OTC customers. Who are all the customers of the Reliance? Then they will talk about how many employees they have, how many workers they have, differently employed, differently abled, participation of women, representation of women, how many women employees were there, what is the attrition, turnover rate in the employees. These are all general disclosures, and they will give you complete list of holding, subsidiary, associate companies. How many were there in this holding company, subsidiary? I told no, 500 companies will be there easily. 300 companies were there here, only subsidiaries and associate joint venture. Maybe at this time, the number of companies would have reduced. Then, transparency and disclosure compliances. How many complaints or grievances you received? From communities, how many you received? Investors, how many you received? Shareholders, how many complaints you received? This entire complaints list you need to. Number of complaints filed during the year. Number of complaints pending resolving. Customer complaints, how many pending? See this entire, like you read BRSR report of a company, you get exactly what is company is doing, what is company about to do, what they did already. Much more useful than financial statements. Yeah, sustainability report statement, business responsibility report is much more useful than financials. First of all, in this, how many meetings are conducted, how many meetings directors have attended, everything they'll give you. Performance, all key performance indicators they'll give you. Look at how the company is achieving innovation in technology, efficiency in operations, sustainable supply chain, customer satisfaction. So look at this, how many they're giving general information about the company. Then management process and disclosure. Here they will give you all the links. What is the code of conduct for the company? code of ethics followed by the company, sexual harassment policy of the company, whistleblower policy of the company, environment policy of the company, data privacy policy of the company. What exactly in the company they're following, processes, internal control. You need to understand the entity and its environment. Read these documents, you will understand the entity and its environment. Yes or no? Next, then you need to give disclosures. Principle wise disclosures you need to give. For disclosures, what to disclose, how to compute them, some standards were the international standards. So that requirement, they are giving disclosures on principle 1 as per these standards. GRI, Global Reporting Initiative. Yes or no? Like that. So National Accreditation Board, all this, these are all were there. Universal Declaration of Human Rights, like that we have in our book also. Next, then section C. Then section C, yeah, here it starts. Section C, principle wise performance disclosure. Principle number 1. Now you see in principle number 1, which is addressing 3 types of capitals: human capital, social capital, finance capital. BRSR has to be integrated with integrated reporting. So you need to integrate both and then give. You take Reliance annual report, inside that integrated report will be there. BRSR report is published separately. So in that, essential indicators, percentage covered by training and awareness programs. First, is the company taking initiatives for principle 1, like how many directors were there, how many awareness programs were conducted, what is the attendance, key managerial persons, how many programs were conducted, for employees how many programs were conducted, for workers how many programs were conducted. Like this you need to give some metrics. Every company has to take principle wise key performance indicators. For that you need to give quantification disclosure. This is essential, mandatory. Apart from that, for sustainability reporting, what additional measures you have taken, that is leadership indicator. These essential indicators, leadership indicators, you must give principle wise. For example, there is a principle called principle number 6. You see this is regarding, employees. Principle number 3, which talks about employee welfare. Yes or no? Where they will talk about, how many employees were insured by health insurance, accident insurance, maternity benefits, paternity benefits, daycare facilities. So, right, principle 3, employees must be given work-life balance. Like that, some principles were there in employee, principle number 3. So there, that points. Then again, then you see principle number 6, water consumption, that and all they'll give you information. This is principle number 4. Which capital it is addressing, that also they are mentioning. Don't worry, I'll make you how to remember the principles, okay? Immediately. Principle number 6, essential disclosures, you see. Details of total energy consumed. You need to give in joules and multiplies. Okay, energy intensity. How much from renewable source, how much from non-renewable source. That entire information. Water consumed. How much surface water, groundwater, third party water, sea water, other rainwater. How much you are consuming, how many kiloliters you are consuming in the current year, in the last year. So this is what, provide the information on water discharged, means chemical water, industry water, whatever the water used in industry, how you discharge, with the treatment or without treatment, without treatment, zero, without any treatment they didn't discharge. Okay, everything is discharged with the treatment, chemical waste, all this water, so they need to treat it and then discharge it. How much carbon dioxide, all this was, emitted, greenhouse gases emitted. These are all essential indicators. Apart from this, there are some leadership indicators. Now the companies, the entity has undertaken some initiatives or using technology to improve efficiency or to reduce. Like if at all a company is doing something for betterment of this, they all come under leadership responsibilities. And those indicators comes under leadership. Leadership indicators is optional. But these companies compete with other companies to demonstrate, to showcase that we are energy, we are environment compliant, we are social compliant, we are governance compliant. Like that, these companies compete with each other. Most of these companies. Today, you can develop practice in ESG reporting itself. What I need to practice, where I can practice. You go for example, you want to go for a job. ESG practice is there or not, ask them. ESG related reporting, that's going to be huge demand. Most ESG reports are going to be most important than financial statements coming times. Understood? So you work in ESG domain. You work in sustainability reporting domain. The level of knowledge that you accumulated different level altogether. Because you understand how industry is consuming the resources, what damage that it is causing to the environment. Tomorrow, you will be given carbon credit. If you don't have a carbon credit, you can't manufacture. In US, carbon credit policy is implemented. Slowly, it is implementing. Across the world, it will come. You want to manufacture some goods, do one thing. Have a forest with you. Why Bill Gates is buying forest? Why Anil Ambani, Mukesh Ambani is investing in forest? That Vantara. That is something which they contribute to the environment. You contribute, then you have a right to damage it. Yes or no? This is what? Carbon credit accumulation. They are all nothing but big companies. Why are they investing in geological parks, biodiversity? For these reasons only. Understood? Now look at the principle. With this backdrop, you read the principle, you remember like anything. Always the context is important. Without context, it's tough to understand. Yeah, look at. So first I will discuss BRSR. We will make sure the 9 principles you remember. I will directly discuss this particular topic from the ICA book. Okay. Now look at. So BRSR report. If at all, earlier also you have seen all these points, but without looking at the BRSR report means you are mugging up the subject. After seeing the report, you can visualize it much better. Okay. Now, this section contains details of the company, products, services, operations, employee details, holding, subsidiary, associate. Correct? Then section B. It contains policy and management process, governance, leadership and oversight. So, it contains questions related to policy, information related to policy. The company has given links, complete reliance. Then section C, it contains principle-wise performance disclosures. Companies are required to report upon key performance indicators in line with the 9 principles of National Green Tribunal for Responsible Business Conduct. Okay, NGRBC, National Green Tribunal for Responsible Business Conduct. Like this, so many forms are there in this chapter. Don't remember all that. Remember only whatever I'm going to tell you. Okay. Then these indicators are classified into 2 categories. One is essential, which is mandatory. Leadership, which is optional. Essential indicators would include data on training programs, environmental data on energy, emissions, water, waste management, etc. Leadership indicators, it would include life cycle assessment, details of conflict management policy, additional data on biodiversity, energy consumption, supply chain management, measures that the company is taking for, improving. That comes under life cycle assessment. Next, 9 principles. In this, I will discuss first principle. It talks about ethics, transparency, accountability. What this principle says is, business decisions in organization should be open to disclosure. Whatever decisions you are taking, it must be open for disclosure. Accessible to interested party. Like the core elements of associated. What are the elements associated with first principle? See, if at all, in my GOAT notes, SDG chapter, I simplified a lot because remembering at this level might be little tough. You read this and understand. If at all you want to remember in an easiest way, you just write what is there in the GOAT notes. That's a minimum. That's reasonable assurance, high level of assurance. You want to get 100% mark. This is absolute assurance. Okay. But my notes on SDG chapter will give you high level of assurance. If I say reasonable assurance, nobody will understand. Reasonable is what? High level of assurance. So that's it. People think reasonable is low. High level means high. Reasonable itself means high. Understood? Yeah. So the core elements are the entity governance structure should develop policies and procedures ensuring the ethics is not compromised. Information relating to policies must be made available to stakeholder. How the information regarding policies is made available? Section B of the report. They are making it available. In case of adverse effect, more care has to be taken on transparent. If at all company has adopted some procedures where there is an adverse effect, you need to be even more careful to disclose it. The entities in value chain should be encouraged to adopt these principles. Value chain means what? Right from my suppliers, right till my customers. Everybody should adopt BRSR practices. And the entity should proactively respond to outside entities which violate 9 principles. It may be supplier, distributor, subcontractor, regulatory, whoever it is. In exam, they will give you one of these option and they will ask you which principle is addressing it. Option A, principle 1, option B, principle 2, option C, principle, like that they'll give you. So they'll give you one line. Entity should proactively respond to outside entity which violate BRSR. This element is addressed by which of the following principles? Option A, B, C, D. Principle 1. Principle 1 talks about ethics, transparency, accountability. Yes or no? Where it talks about, you should first develop the policy, then you should disclose it. You need to make sure transparent disclosure if it is adverse. And everybody in the value chain should be encouraged to adopt. Take action with those who are not complying. Over. Yes or no? Next up. Principle number 3. I'll come in a different order. I'll discuss in a different order. Principle number 1. Ethics, transparency, and then governance. Ethics, transparency, and accountability. Governance includes accountability. That's what. Okay. Now, promote well-being of employee. What is it? The third principle, where you need to take initiatives for the benefit of the employees to protect the dignity, health, and well-being. The essence of the core elements are: the entity should ensure compliance with all regulatory requirements. First of all, comply with law, employee laws, employee welfare laws. Respect dignity of employee. Don't restrict them from forming associations, unions, all that. The entity should prevent all kind of child labor and bonded labor. Yes or no? Articles, bonded labor. Next. Fine. The entity should have a system in which work-life balance of the employee is not compromised. The business must ensure timely payment of wages. The payment of wages should be as per living wages. That should take care of their basic economic security. Entities which are responsible, they are responsible to create a workplace, work environment comfortable for the people to work for long duration. The skill development, career development, training is another responsibility. The creation of workplace should be free from harassment and violence is a responsibility of the entity. So all these are employee related points. Any 5 you have to write. Principle number 3, most important principle. Okay, theory question, most important principle, this one. Clear? Now see, reading from ICA book, is it tough? Not at all. Correct? You take any chapter, give me any chapter, I make it interesting. From ICA book. No need to have a short material and all. And if you read from ICA book, I'm telling you, even though my notes is very high selling, this is best. If you ask me which one you choose, I choose ICA material. I'm honestly telling you. I choose ICA material because it's easy, risk is very low, and it's easy for me to understand the content even much more better way. For revision, I will use my notes. Only for quicker revision. Okay? Just for a easy carrying, that's it. But if you have command on the content once, it's easy for you to revise it. It doesn't take much time. Your brain naturally has filtering ability. Your brain, when you see entire page, it knows what information to look at, what information to ignore naturally. So what we think, full page, this much book is there, oh my god, how do I filter? No need. You have an inbuilt filter. We think over. We imagine problems more in our imagination than reality. No. Look at. So principle 3, easy. Principle 1, ethics, transparency, accountability. Principle 3, employee well-being. Principle 5, human rights. What is human rights? Here, again, employee related human rights also will come into picture. Look at. The concept of human rights is a vast topic which covers variety of violence and abusive issues. If you find any difficult word, ignore and then read, you will get the meaning. Yes or no? It refers to human rights issues that happen directly or indirectly due to the business. What are all human rights issues are affected? So that entirely addressed by principle number 5. What the core elements are? You should have a clear understanding of human rights and various ways through which human rights can be violated. From the perspective of Constitution of India, laws and regulations, International Bill for Human Rights. Entity, when developing their system, should integrate human rights element into their policies. So you must know first what are all human rights. Develop your policies by integrating protection for human rights. 3, recognize and respect human rights of every stakeholder, including workplace, nothing but employees, including communities, consumers, vulnerable and marginalized groups. Yes or no? So you should recognize and respect, all the relevant stakeholders. Respect and promote human rights. What is it? Respect and promote human rights. Okay. Sometimes they will ask you, they'll give you principle number 5 is dealing with what? Respect and promote human right. Respect and promote stakeholders well-being. respect and promote employees. Like that, they'll give you options. Respect and promote human rights. Next, principle number 6. Protect and restore environment. You have to protect the environment, and damaged environment, you have to restore it. Yes or no? Like what? The core elements are: entity should have a policy first of all in place to assess and rectify impact. So the company first of all should have a policy to identify the impact they are causing on the environment. This should cover life cycle of the product. The entity should make use natural and man-made resources in an optimum manner to ensure sustainability. The entities have to measure their performance relating to pollution, destruction of forest, waste generation, all that. See your performance in all this. Entities have to contribute towards climate change resilience in line with Paris Agreement, in line with National Action Plan for Climate Change. The entity should explore comparison of activities with best practice in the industry to reduce, reuse, recycled resources. Entity should explore comparison of its activities with industry best practices so that they will reduce the usage, reduce the resource usage, reuse the resources, recycle the resources, recover the materials and resources. You should explore activity. You should explore this. The entity should explore the comparison of its activities with the industry best practices. So what are you doing for reducing, recycling, all that? See, in industry, what are they following? Adopt best practices. Again, once again, reduce, reuse, recycle will come in principle number 9. Principle number 9, customers will be encouraged. This is regarding customers. Consumer, educating consumer in a responsible manner, business manner. You see here, entity should inform consumers on safe and responsible ways of usage, reuse, recycle, disposal of their product. So recycle, reuse, that is there here as well as 9. If at all you are educating consumers on how to reuse it, how to recycle it, then that's a principle number 9. See, what is BRS? Simple. You need to ensure sustainability. For that, take care of your employees, take care of your disclosures, take care of your stakeholders, take care of the consumers, take care of communities. Yes or no? Participate in policy framework, policy making, principle number 7. So like that, so many things were there which a company has to address. Sometimes in exam they'll ask you this question, this point, which principle this is addressing. Simple. You are informing customers, means you are educating customers. Customers comes under principle number 9. Provide value to the consumers in a responsible manner. As an enterprise, as a business enterprise, you must think of giving best to the consumer. Okay, what do you mean by giving best to the consumer? Make product in such a way, that have that reduces negative impact. When designing and marketing the product, you should not in any way prevent freedom of choice and fair competition. So make sure competition is also survives. That's why Competition Act and all is there. Pricing and all should not be anti-competitive. The entity should be transparently and accurately disclose all kinds of adverse impact to the user. Yes or no? You see on the cosmetic, cruelty free, animal testing free. Yes or no? Like green, vegan. Why are they showing all this? So they make sure the adverse impact on the user, on the planet, on the society, and on the biodiversity. Then when handling customer data, respect their privacy. Next, when advertising about their product, yes or no, should ensure misleading and confusing information is not exposed. Business enterprise should make transparent grievance. Means you must have a grievance. You buy even half a rupee chocolate, turn the page, turn that behind note, that cover will be with an extra layer. So turn it, you will find toll-free number. Yes or no? That's a redressal grievance mechanism. You must implement that for the customer so that they can give a complaints. And entities, especially if you are engaged in providing essential goods and services like utilities, milk, agriculture produce, all that, make sure the goods are accessible universally without any discrimination and in a responsible manner. These are all what is this principle? Provide value to consumer in a responsible manner. Are you clear? Easy now? You're able to? Intensity. When you're reading, intensity is important. That decides how better you remember, how better you understand. So that's it. Principle number 9. Over 1. Ethics, transparency, accountability. 3. Employee. Promote and respect. What is it? Employee well-being. Then principle number 6. Principle number 5. Promote, respect and promote human rights. Yes, sir. Then principle number 9. 6. Protection and restoration of environment. Principle number 9. Provide value to the consumers in a responsible manner. 5 principles we covered. Yes or no? That's it. Now we are left with 4 more. Now in that, principle number 7, public and regulatory policy. What is it? Public and regulatory policy. What is this? Public and regulatory. The principle further highlights that, they have to, the core elements of BRSR has to be met holistically when the organization is going ahead with contribution to policy formulation and policy advocacy. Generally, any law and regulation gets developed with a corporate push also. So when a government is making a policy, so when you're participating in policy formulation or when you're participating in policy supporting advocacy, make sure BRSR principles are satisfied in that policy. Then the collective associations such as trade groups, industry chambers have to be utilized when moving ahead with policy. Reliance Open, principle number 7, they give where and all their members. 42 associations were there in India. They are member of 42 different chamber of commerce associations, chamber of industry, petrochemical related associations. They are member in 42 associations. Yes or no? So they give a list. When you are promoting a policy, when you're in policy formulation, policy advocacy, when you're doing, make sure BRSR principles are satisfied and make sure push others also in the community. Yes or no? In the association, no, when you're moving ahead, so please, the collective associations such as trade group, industry chambers have to be utilized. Utilize the associations and push a better policy advocacy and formulation. The role in policy advocacy should be in such a way it encourages fair competition, prevent human right abuse. The moment when you see this word in MCQ, you will select principle number 5, wrong. Yes or no? What you should select? Policy advocacy means what? Principle number 7. In the policy advocacy, make sure human rights are not disrupted. So which means it's a principle number 7 it is talking about. Are you clear? So 6 principles we covered till now. 1, ethics, transparency and accountability. Principle number 3, promote employee well-being. Principle number 5, respect and promote human rights. 6, protection and restoration of environment. 7, provide value to the consumers in a responsible manner. 7, I'm sorry, that's 9. 7, so influence on public and regulatory policy. This is a bit tough to remember. Influence on public and regulatory policy. When government is asking your inputs on public policy formulation, regulatory policy formulation, give inputs in such a way that 9 principles are satisfied. Use your association, use your influence that you have, collective association, push them, yes or no, and also consider human rights when you are formulating a policy or policy advocacy that you're doing. Clear? Easy. You just try to read like this, bird eye view every time and then read in depth. You will understand better, you remember better. Next, in every exam, 1 principle they're asking on an average. At least an MCQ they're asking. Okay, that's it. Then, so almost 6 principles we covered. Now we need to discuss respect for stakeholders and responsiveness. Respect for stakeholders' interest and responsiveness. Like, to all the stakeholders, it is your responsibility to communicate the impact of their business decisions and operations. Okay, the policies, decisions, impact, they have to be disclosed transparently without any ambiguity. For example, in principle number 6, you are giving some disclosure of consumption of economic resources, environmental resources. Honestly disclose it. So what is this? Respect for stakeholder interest and responsiveness. Responsiveness means what? If they raise any issues, you have to be careful in responding. So you have to resolve it. So you need to be transparent and communicate impact of your business on these various principles, people and the nature. And the policies, decisions, impact of the operations to the stakeholders have to be disclosed transparently without ambiguity. The entities have to systematically determine what is the context of their operation and identify their interested party. It is you who has to decide who are all stakeholders. Yes or no? Somebody from external force cannot come and then give you. So the concept of interested party or a stakeholder has a point of discussion in all the regulatory and voluntary system that relate to management of system, be it related to quality, environment, occupational health and safety of the worker. Stakeholder is a debatable topic. In every point of time, everywhere, in every law, in every regulation, stakeholder is a very wider term. So that's why you should only identify who are all the stakeholders. Next, principle number 4 is also over. 7 principles we covered. We are now left with 2 and then 8. So let's focus on the 2. Safe and sustainable goods and services. What is it? Safe and sustainable goods and services. When you are manufacturing, it should be longative, qualitative. Safe and sustainable goods and services. Look at when the product is designed, the production methods and technology has to be implemented in such a way it will minimize the resource usage. The entities are responsible to educate and make aware their consumers and clients about their rights. Again, when you see consumer client rights, immediately you will think principle number 9. No. Entities are responsible to educate and make aware their consumers and clients about their rights. So here the focus is on making them aware about their rights. Okay. So technically here, there is a chance that you might select principle number 9 if an MCQ comes. Yes or no? But actually, this point, I told you some 2 or 3 points like this, confusing. Only those 3 points you have to stress and then read and then understand next time, so that you will not do a mistake if the same point is tested. To best of my knowledge, that much skill is not there for the paper setter. Okay, to test like this. So, no need to worry. Next. The entity should take measures that reduce over exploitation of natural resources by consuming sustainably, encourage methods for reduce, reuse, recycle. Once again, you see that word reduce, reuse, recycle, that is there. 3 places we saw. Yes or no? Entity must explore methods for reducing, reusing. That's environment principle. Principle number 6. Educate consumers on reusing. That principle number 9. Yes or no? This is the entity should take measures that reduce over exploitation of natural resources by consuming sustainably. Here they are talking about consumption, means goods and services, means principle number 2, safe and sustainable products and services. What is principle 2? Safe and sustainable goods and services. So when you are consuming, you should adopt methods in such a way where you will reduce the usage, reuse the usage, recycle the resources. So in consumption time, if at all you are taking measures on reducing, reusing, recycling the resources, then that's a principle number 2. Safe and sustainable goods and services. Then 8. Principle number 8. What is this? Promote as a whole inclusive growth and equitable development. Growing means not alone you. Growing means everybody along with you. Yes or no? That's why I'm concluding this at last. Okay. They should renumber this. They should number it in a supply chain order. Yes or no? They just numbered. Okay, 9 principles. Let's number it. They would have given 2 articles. Number it first. We'll release it. Everywhere interns only do the work. Yes or no? Shareholders think company published audit report. We know that. We copy pasted from last year and then changed the date and then published. Yes or no? So fine. Next. Promote inclusive growth and equitable development. Just 1 minute. Yeah, look at inclusive growth and equitable development. This can work. Inclusive growth can only happen only when you work only with entities, authorities, civil associations contributing to one another for a better livelihood and assistance to marginalized communities. Only when you work with everybody on all these aspects, inclusive growth can happen. Inclusive growth and equitable development. Promote inclusive growth and equitable development. The core elements are: entity should have a system in place to identify and address impact of their activities on social, cultural, economic aspects of the people. This includes business created issues like land acquisition, use, construction activities. Entity should have a system in place to identify and address impact of their operations. Similar point we have seen at some other principle. 6. First point you see, you must have a policy to assess impact of their operations on the environment. Yes sir? On what they said? That's what in principle number 6, first point. The entity should have policies and process in place to assess and rectify impact on the environment. When they say the word environment is 6. You must have a policy and procedure. Yes or no? You must have a system. System is nothing but what? Policy and procedure. You must have a system in place to identify and address impact of their activities on the social, cultural, economic aspect. If at all you are assessing impact on economic, social, cultural aspect, it's about inclusive growth and equitable development, principle number 8. If at all you are assessing this on environment, then it is principle number 6. You understood now? Next. The entities should review, measure, track adverse impact of their activities on the society and environment, make action plans. The entity should review and measure, track adverse impact of activities on society and environment. Since society word is also there, principle number 8. The entity should make efforts to bring creative products, creative technologies, business concerns that help marginalized consumers. Okay, this is also principle number 8. We have one question in question bank where they developed an app. They talk about one app development which is given, where feedback is taken from people for a quicker processing all the technology they invested. So principle number 8 point they mention. They give one practical question sometimes and ask you which principle is addressing, what are the core elements. That's why I'm discussing like this. How to remember this? Not sufficient. Look at the question bank. You will understand the type of questions that they're asking. Next. Entities when designing CSR activities should review the local and regional development priorities to help marginalized groups. So you should design, when designing CSR, you should give priority to local and regional development and help marginalized groups and communities. Make sure your locality is developed, inclusive growth and equitable development. The entity should take care to ensure business-induced displacement or relocation of communities does not happen. First of all, whenever you're taking a factory, when you're constructing a factory, see that the people residing there should not be displaced. If at all displacement is required, make sure you're giving, it is on a mutually agreed, participative, informal negotiation and fair compensation is given. Able to understand? All forms of intellectual property, traditional knowledge should get deserved respect from the organization, and efforts should be made to ensure that benefits derived from the knowledge are shared equitably. Make sure who have contributed to IPR, make sure they were rewarded correctly. So in this way, it is promoting what? Inclusive growth and equitable development. Look at the community, see that they are not affected because of your factory operations. Look at people who contributed IPR. Yes or no? Then when you are designing CSR activities, give importance to local areas, and you should bring creative products, technology. You should review, measure, track impact on society. You should have a policy to identify. You should have a system in place to identify impact on social, cultural, and then economic aspects of the people. That's it. 9 principles over. Easy. I hope you can remember. What is principle number 5? Respect and promote human rights. Principle number 8, promote equitable development and inclusive growth. Principle number 9, provide value to the consumers in a responsible manner. 2, safe and sustainable products and services. 1, ethics, transparency and accountability. 6, protection and restoration of environment. 7, public and regulatory, influence on public and regulatory policy. 5, already done. 4, stakeholders, respect for stakeholders. What is it? Respect for stakeholders' interest. And responsiveness. That word responsiveness. Yeah. Then we have 3, promote well-being of employees. Employees. Then what else is there? Including. Okay, fine. Including those in the value chain. Fine. That's it. 9 principles. So, you remember, right? Now, let's look at assurance on BRSR. Assurance on BRSR. Simple. First of all, SEBI has currently stated top 1000 companies must have BRSR. Further, BRSR is single means for disclosing sustainability related information. This would be the main document for stakeholders, investor, analysts, everybody. Hence, assurance in reporting becomes more critical. ESG. So, assurance on BRSR is called ESG audit. ESG audit is a process where it will help the company to evaluate environmental, social risk of the company, products, services, operations, etc. Conducting ESG audit helps business look at their supply chain, risk management, all that. Accordingly, ISA has given standard on sustainability assurance engagement, SAE 3000. Yes or no? It's actually SAE 3000. Since it's a sustainability related standard, they call it as SAE 3000. The intended users of this standard. Who will use this standard? 1, of course, the person who is providing assurance. 2, the company which is receiving this assurance service. 3, users who are going to use the assurance report. So all these 3 people can use this standard to know what the standard is exactly conveying. So the users are assurance provider, entity seeking the help of the practitioner, regulators, investors, other users of the sustainability reporting data. Next. This standard applies for assurance engagement which pertains to providing reasonable or limited assurance on sustainability information. We give on certain elements reasonable assurance, on certain elements of BRSR we give limited assurance. On certain elements we give reasonable assurance. So you can see BRSR assurance report of Reliance auditors, you can identify. So this is mandatory on or after 31st March 2024. MCQ. What is the methodology to provide assurance on BRSR? What is the methodology? This itself can be asked as a 4 marks question. What is the methodology? What are the steps involved in BRSR audit, ESG audit? What are the steps involved in audit? First, preliminary review of ESG report. Then on-site assessment. Issue a basic assessment report. Review the response and clarification on the findings. Submit the findings and prepare the assessment, report and give recommendations. That's it. This itself can be asked as a 4 marks question. What are the steps involved, or what write about methodology to provide assurance on BRSR? Social audit standard not required. Role of auditor. Considering of climate related risks in an audit of financial statements. What is the role of auditor? The role of auditor is generally to obtain reasonable assurance whether financials are free from MMS in all material respects in accordance with applicable framework. You write this first point, 1 mark you will get. Okay, next. I think in Jan 26 this only was asked. Integrated reporting. Okay, they asked about 2 capitals. Okay, they gave you some information. You need to identify the capital and explain. Yeah, correct. 2 capitals they asked. Finance capital, intellectual capital. I think so. Yeah, okay, we'll see. Then next, finance capital is asked, that I remember. Human capital, okay. Then in developing an understanding of the entity, the auditor should include consideration of climate related risks. So when you're understanding the entity, see, your objective is to give opinion on financials, whether they're free from MMS. For that, you need to first understand the entity and its environment. While understanding entity and its environment, you need to understand climate related risks, climate related disclosures. Yes or no? You need to consider climate related thing. The climate related risk could be more relevant in certain sectors like banks, insurance, energy, transportation, material, building, agriculture, food, everything is covered, no? Next. Many investors and stakeholders are seeking information from audit report about how climate related risks were addressed in the audit. Not about us. There are so many others who are seeking information like this from the auditor. And I'm telling you, very soon a new index will come where in the financial statements itself sustainability related reporting will come. That time we are compulsorily have to learn how to audit that. Okay, see, this sustainability assurance, who will do? Who will provide assurance on this? CS only. How to provide without because we are not experts. That's why ICA is conducting some certification course. In this chapter, that question also there. What are the initiatives taken by ICA? If at all a patriot of ICA testing the paper, he will ask, what are the initiatives ICA is taking regarding sustainable reporting? They'll ask that question. It's there in the book, you see. It's there in the book. Initiatives by ICA. They have constructed sustainability standards reporting board. They've established that board. Yes or no? They issued so and so standards. All that. They have certification course on BRSR. Like that, we have a question, we have a topic on that. Next. The audit report is key mechanism of communication to user about how the audit was performed. It provides information about audit responsibilities and when required, understanding of the matters which are most significant, how they addressed user's point, but still 1 mark weightage will be given. Is there anywhere in this sustainability point is there? General, this first point is also not there. First point is also sustainability point is not there. General point, this is also general point. Audit report is a key mechanism to provide users about how the audit was performed. It provides information about responsibilities. It provides information which are most significant to unit, nothing but key audit matters. Yes or no? In some circumstances, auditor may include an emphasis of matter paragraph to draw attention to disclosure that are fundamental to users' understanding. So emphasis of matter paragraph definition. Then the auditor should also determine whether entity has appropriately disclosed climate related information and financials in accordance with applicable framework. Right now there is no standard on that. Climate related disclosure. Even IFRS S1, IFRS S2, 2 standards were there on this. IFRS sustainable reporting 1, IFRS sustainable reporting 2, like the 2 standards were there. Corresponding Indias, I think it is not there, I guess, right now. Okay, fine. The auditor should read other information for consistency. So simple, role of auditor, what you need to, SA 200 objective. Yes or no? Then SA 701 key audit matter you write. 706 definition you write. 720 information you write. Over. You'll get 4 marks. Just write those points, you'll get 4 marks. Role of auditor. Previous September 25, I think this was asked. Na? Just once check it out. Number 24 it was asked. Yeah, number 24 it was asked for 4 or 5 marks question. See how easy it is. Correct, huh? Hey, everyone. Clear? Now, integrated reporting. Once that is over, this entire topic will be over mainly. You see here, what are all there? BRR become mandatory when, BRSR when, national guidelines on responsible business. National guidelines, I think earlier I told National Green Tribunal. It's national guidelines. Actually, NGT, one question also there in a question bank. National Green Tribunal, SA 250, one question is there. My mind went there. That's it. It's actually National Guidelines for Responsible Business Conduct, NGRBC. So be careful, okay? Essential indicators, leadership indicators, section B, section C, there we saw this. Evaluation of GST, ESG in India. In sometimes in exam, they'll ask you number 2021, IFRS Foundation, what they announced. Yes or no? Don't worry, he will have a special place for him in the hell. Yovodal is asking like this. Who will, sometimes some brainless people will be there here. They'll ask like that only. What to do? Now look at integrated reporting. So now, every business, whatever resource that they're having, whatever property that they're having, that is broadly classified into 6 capitals. One is finance capital, manufactured capital, natural capital, human capital, social capital, intellectual capital. Intellectual capital means what? Key element in intellectual capital plays a key role in organization's growth. Yes or no? Future earning potential, where there is a tight link and contingency between investment in R&D, innovation, human resource, external relationship, which can determine organization's competitive advantage. That's intellectual capital. What is social capital? Institutions and relationships established within and between each community. Principle number 7 and social capital linked. Understood? Intellectual capital and principle number 3, inclusive growth, equitable development, human rights, multiple places intellectual capital will be linked. So social capital, institutions and relationships established within and between the community, group or stakeholders, which includes social capital includes what? Common values and behavior, relationships that the entity has, trust and loyalty an organization has developed and strives to build, protect with customers, and an organization's social license. Social capital is an image of the organization. It's a social license to operate. Next, human capital. It's nothing but my people, skill and experience and their capacity and their motivation to innovate. Okay, like alignment with and support organization governance frameworks and values, ability to understand, implement organization strategy, loyalties and motivation for improving processes, goods and services, including their ability to lead and collaborate. The people that you develop over a period of time, your workforce, that's a human capital. Then natural capital, the access to environment that we have. It is an input to the production of goods. An organization activities impact either positively or negatively on natural capital. It includes, natural capital includes what? Water, land, mineral, forest, biodiversity, ecosystem. Yes or no? Then manufactured capital. It is human created, production oriented equipment and tools. These are available for organization for use in production of goods and services like buildings, equipment, infrastructure, roads, ports, bridges, waste, water treatment plants, all these chemical treatment plants, sewerage plants, all these are manufactured capital. Then finance capital, nothing but pool of funds. Pool of funds that is available for organization for using, like this finance capital is obtained through equity, debt, grant, or it can be generated through operations or investments. That's it. So in exam they'll give you some case, they'll ask you to identify which capital it is and then you need to answer it. Reason that exam, that question only was asked. Easy only. Next, I think that's it. Everything is done. Important points from exam point of view were done. That's it. Sometimes no, there is a possibility. What is governance? What are its elements? They'll ask you this. What is social element? What are its elements? They'll ask you. Human capital is one of the social element. What human capital includes? Our students will write human capital, that points. But they're asking elements of human capital. Very worst scenario. If the paper want to be really, really, really hard. And if examiner does not have anything else in his mind except this. Yes or no? Human capital means what? Labor management, health and safety, human capital development, supply chain standards. Who will remember all this here? How many mnemonics and keywords you'll remember? It's impossible. You think you'll remember, just recollect all this. You'll understand at a time. One standard you study, mnemonic helped me. No, don't think like that. Just recollect one random topic and then try to recollect that. You will understand then how mnemonics works. They won't. Only when you understand it thoroughly, analyze it thoroughly, remember and revise it thoroughly. Only when you revise, analyze, understand. That's the only way that the data will enter into your mind, retain in your mind. Again, after 3 weeks, you'll forget. 9 principles. Day after tomorrow, you ask me, I'll forget. So again, I have to read. So if I have day after tomorrow or 2 days later exam, I have to sit and read. I don't have an option. But to make my reading faster, if I understand it, I can make it faster. I can revise it faster. Understanding is important for faster revision. Clear? That's it. 50 minutes. This chapter SDG is over. Role of auditor we covered. Assurance on BRSR we covered. BRSR we covered. Integrated reporting we covered. A methodology in ESG assurance that we covered. That's it. Not required. Rest of it you can take light. This is what important. Okay. That's it. Yeah. Let's begin NBFC audit. Remember, the basic difference between a bank and NBFC. NBFC is prohibited to accept demand deposits. That's the first difference. But an NBFC is permitted to accept public deposits. Demand deposits is not prohibited. It is prohibited. And moreover, even if you have a public deposit with an NBFC, term deposit, nothing but. Generally with a bank, when you have a deposit up to 5 lakh rupees, some insurance is there. Okay, some central government credit guarantee insurance program, some insurance is there. That insurance will not be there if at all you are having term deposit with a NBFC. Okay, so you generally won't have any insurance. Now, so I mean that's called, basically it's a financial institution. Okay, NBFC, banks, insurance companies, chit fund companies, all these institutions are basically what? Financial institutions. Even NBFC comes under a financial institution. It's a finance entity basically. Primary role of NBFC is what? Generally either giving a loans or investing or both. Mainly these two only. Primary role is investing or investing or giving loan or both. Okay. Now, just 1 minute. Yes, look at. When an entity is called as an NBFC, if the entity satisfy principal business criteria. If the entity satisfy principal business criteria. Okay. So what is the principal business criteria? Two. One is asset criteria, income criteria. If the financial assets of the entity is more than 50% occupied by financial assets. Simple. If the financial assets are more than 50% of the total assets. And that second condition is there. Only one condition, satisfaction is not sufficient. There is a second condition. Income from financial activities is more than 50% of total activity, total income. So income from financial assets is more than 50% of total income. Financial assets more than 50% of the total assets. Any enterprise satisfying these two conditions, then the enterprise is deemed to be engaged in finance activity and it must register with RBI. However, registering with RBI is not that easy because there is net owned fund requirement. There is net owned fund requirement. In net owned fund, no, generally many have confusion in NOF requirement. By default, now any NBFC newly applying for registration, 10 crore. What is the net owned fund requirement? 10 crore. And for certain NBFCs, 2 crore net owned fund requirement is sufficient. What are those NBFCs? Peer-to-peer, account aggregator, NBFCs with no public funds or no customer interface. For these NBFCs, 2 crore net owned fund is sufficient. Basically peer-to-peer, that company will not lend. Account aggregator, that is not involved in lending business. No public funds, customer interface. So basically they don't have any lending facilities. That's why they have a limited net owned fund, a lesser net owned fund requirement. Whereas infrastructure finance company, infrastructure debt fund must have how much? 300 crore. Getting it? So NBFCs which are IFC, IDF, they must have minimum 300 crore. That's it. And RBI has set a deadline of 31st March for existing NBFCs to increase it to 10 crore. That is 31st March. Look at, there is a, we call it as what? Gliding path. Gliding path was given. That is given only for 3 NBFCs, not for everybody. Gliding path was given for only 3 NBFCs. ICC, Investment Credit Company. Investment Credit Company means it's investing, it's lending. Credit means what? Lending. And microfinancial institution and factor. For them, current net owned fund is this much, but by 31st March 2025, they need to either increase it to 5 crore or they need to increase it to 7. But by 31st March 2027, 10 crore. In the recent exam, this one is asked. in the recent MCQ Jan 26. Okay, that's it. What is a microfinance institution? You know, a microfinance institution is where at least 60% of the total assets are continuously used for microfinance loans. If at all minimum 60% of the total assets are used for microfinance loans, then that institution is called as what? Microfinancial institution. And if an NBFC does not meet required criteria for continuously 4 quarters, they must submit remediation plan. That's it. I mean, nothing but if at all they did not meet with this one net owned funds criteria continuously 4 quarters after reaching this deadline. Continuously for 1 year they didn't meet this, they need to submit with the RBI remediation plan, because net owned fund is a liquidity. That's it. So these are the important points with respect to net owned funds. Next, you know, there are some NBFCs which are exempted. Even though these entities are involved in finance activities, but these entities are typically exempted. What are the NBFCs which are exempted? Housing finance institution, merchant banking company, stock exchanges, insurance, Nidhi, chit fund companies, specified microfinancial companies, mutual benefit companies, core investment. That to remember, only that core investment company where the asset size is less than 100 crore. Only that core investment company is exempted from NBFC registration. Suppose if the core investment company having more than 100 crore asset size, that is liable for registration. You know, we call them as systematically important core investment company. We call them as what? Systematically important core investment company where the asset size is more than 100 crore. Remaining NBFCs, no. The NBFCs are again broadly divided into deposit taking, non-deposit taking. If at all the word D alone is used, then that's a deposit taking. If at all it is not a deposit taking, then we will call it as non-deposit taking NBFC. And a non-deposit taking NBFC or deposit taking NBFC, they will become systematically important only when the asset size is more than 500 crore. It is more than 500, but this was a old criteria. Once upon a time, NBFCs used to be classified as deposit taking NBFC. Remaining NBFCs into 2 types: systematically important non-deposit taking, non-systematically important non-deposit taking. NBFC non-deposit taking, non-systematically important. NBFC non-deposit, systematically important. NBFC deposit taking, they are by default systematically important. Since you are accepting public deposits by default. Now these 3 criteria, these 3 classifications were there, right? Now they changed it. Now RBI in 2023 or 2024 released something called scale based regulations, where they classified NBFCs into multiple parts. Like, what are the parts? How RBI classified NBFCs now? They classified into base layer, middle layer, upper layer, top layer. Right now top layer is empty. Top layer is something where RBI will pick. The RBI will pick NBFC from upper layer and then keep it in top layer. It's RBI manually pick based upon risk exposure. If a systematic risk of the NBFC is increased, RBI might select an NBFC which is already there in upper layer and then bring it to top layer, which means direct supervision. Whereas upper layer NBFC, what is upper layer NBFC? Top 10 NBFCs by asset size. You take NBFCs, list of NBFCs, top 10 NBFCs by asset size. They come within the upper layer. You know, these are the list of NBFCs. We have totally 9,000 NBFCs registered with RBI. So you will understand which layer it is coming from. What is the classification of NBFC? You know, all that you will understand. So whether they have a certificate of registration, what is their corporate office address? You can find at the introduction beginning page, 9,185 NBFCs were there. There are 27 asset reconstruction companies. Asset reconstruction companies are nothing but bad banks. You might have seen in bank audit, no, sale of NPA, purchase of NPA. Who will sell? I mean, bank will sell to somebody. To whom? Either to another bank or to ARC. ARCs can buy NPA or a bank can buy an NPA. So bank also is permitted. First of all, bank is by default permitted to all the activities which an NBFC is permitted to do. Every type of NBFC, IDF, Infrastructure Debt Fund, ICC, Infrastructure Credit Company, IFC, Infrastructure Finance Company, peer-to-peer lending. Peer-to-peer lending for banks right now, license is not there. Okay, most of the NBFCs, whatever they can do, a bank can do, because bank scope is wider. Okay, next, look at. So these are exempted NBFCs, stockbrokers, venture capital funds. These are all exempted. Securitization, reconstruction companies. Why they were exempted? Because they are already having been regulated by other regulators. Chit fund company, MCA regulates. Nidhi company, MCA regulates. Insurance, IRDA regulates. You apply principal business criteria for all these companies, they satisfy. Principal business criteria you apply. All these companies will satisfy principal business criteria absolutely without any, a doubt. But they are exempted from NBFC registration because they are already having a current regulator. Next up. Now look at the layers. So layers are what, by the way? Base layer, middle layer, upper layer, top. I told you top is already empty. Upper layer, top 10 NBFCs. Then the question is, remaining NBFCs. Top 10 NBFCs come under upper layer. Remaining NBFCs, will they come under base layer? Will they come under middle layer? This is the question. Deposit taking NBFCs, middle layer. No question, nothing. Are you taking deposits? Yes, middle layer. Sir, I'm not a deposit taking NBFC. Then what is your asset size? More than 1000 crore. Again, middle layer. Sir, I am not a deposit taking NBFC. My asset size is less than 1000 crore. I will come under base layer. That NBFC comes under base layer. This is based on asset size criteria. Again, certain NBFCs, based on activity they perform, they were either classified as base layer or middle layer, irrespective of asset size. What is it? Irrespective of asset size. What are the NBFCs? Irrespective of asset size comes under middle layer or base layer. What are the NBFCs? Look at NBFCs engaged in peer-to-peer, NBFCs engaged in account aggregator. I remember I told you non-operative financial loaning company, that's an investment entity. Yes or no? And NBFCs not availing public funds and not having customer interface. Further, NBFCs engaged in standalone primary dealer, NBFCs which are IDFs, NBFCs which are core investment companies. By the way, which core investment company having asset size more than 100 crore? And NBFCs which are housing finance companies and infrastructure finance companies. And if you observe, exempted NBFCs, if you take, housing finance companies are exempted. You see there, exempted NBFCs, housing finance is there. But again here classification is coming. In somewhere around some 3-4 years ago, what happened is, housing finance companies were regulated by NHB. Later NHB was acquired by RBI. Now housing finance companies are also monitored by RBI. Therefore, any new housing finance company that is going and registering right now will be registering as an NBFC and will register with RBI. For that reason, this point is appearing at there and here. That exempted NBFC list which is given now, that list is based on 2015-2016 material. Whereas this list is based on 2023 material of RBI. That's why that inconsistency is there. If at all you are thinking housing finance company is exempted there and why it is again covered here middle layer, this is the reason. Now, what are they? SPDs, IDF, core investment company, housing finance company, infrastructure finance company. Simple. One is infrastructure debt funding, infrastructure finance, 2 infrastructure, housing finance, core investment. Only first one you should remember. Standalone primary dealer. That's it. SPD. We simply call them as PDs, primary dealers. They deal directly with government securities. They deal directly with what? Government securities. That's it. They are dealers in government securities. That's it. So I hope you are clear with the list. What NBFCs will come always under base layer, what NBFCs will always come under middle layer. I hope you are clear. Remaining NBFCs based on asset size we will classify. More than 1000 crore middle layer, less than 1000 crore base layer. Deposit taking always middle layer. Again within middle layer, if at all they are coming within top 10 NBFCs, they automatically go to upper layer. Able to understand? Now there are some government owned NBFCs. Government owned NBFCs will be either placed in base layer or middle layer depending upon the asset size, all that. Government based NBFCs can never be in upper layer until further notice. Right now RBI has taken one norm, RBI has taken one rule. Government owned NBFCs will never be transferred into upper layer. Okay, even though it comes within top 10, still it will be categorized under either middle or base layer as the case may be. Clear? Next. That's it. Remaining points not required. If you understand that, that's more than enough. Now, prudential norms. What are the prudential norms for NBFCs? First one, we have different prudential norms. One, capital requirement adequacy ratio norm, income recognition norm, asset classification norm. Okay, one is capital requirement adequacy ratio, income recognition, asset classification. Fine. So capital requirement ratio. NBFC must maintain a minimum capital of 15% of the risk weighted assets. Simple. What is the capital requirement ratio for NBFCs? 15% of what? Risk weighted assets. The same logic is applicable for banks, but for the banks it is 9%. What is the capital requirement adequacy ratio? 9%. You know what? In May 25 or September 25, risk weighted asset calculation they have asked. There's something unfair. They should not ask this, you know. They asked some assets, they gave some assets and asked you to put a risk weight. They didn't give risk weight. You should put risk weight and then you should identify the capital. Risk weighted asset you should identify. So which is not fair at all. In September 25 attempt, I guess it is asked risk weight question, MCQ. 2 marks MCQ they have asked. Fine. We'll come to it. Now, by the way, so the capital requirement is what? 15%. Now, this capital, no, for financial entities, no, capital is broadly divided into 2 tiers. Tier 1 capital, Tier 2 capital. Tier 1 is premium capital. Okay. First quality capital. Whereas Tier 2 capital is not that premium. It is not that powerful capital. Okay. For Tier 2 capital also, in repayment time also, we give less importance to them. Subordinate debt, all that comes under what? Tier 2 capital. Look at what are all Tier 1 capital, what are Tier 2 capital. By the way, before that, what is the capital requirement? 15% of risk weighted assets. Tier 1 must be 10% of risk weighted assets. For NBFC, which is lending against gold jewelry, it will be 12% of risk weighted assets. Now, Tier 2 capital. What is Tier 2? I mean, Tier 2 capital can be balancing figure. If you take Bajaj Finance, you take Muthoot Finance, Tier 1 capital is more than 14%. Tier 2 capital is some 0.1 or 0.5% only. It's very negligible. In fact, Bajaj Finance, they have maintained capital requirement ratio of 22%. Bajaj Finance, where 21.2 or 21.3 majors, 90%, 95% of the capital is Tier 1 only. In fact, as per the rule, 2/3 should be Tier 1 minimum. And in case of gold based NBFCs which are lending against gold jewelry, the Tier 1 capital should be minimum 12% of risk weighted assets. Now, what do you mean by risk weighted assets? They will give you balance sheet asset values and liability values and multiplied by, you need to apply the applicable risk weight given there. Okay, what are the risk weights given there? Earlier we tell straight away don't remember, but now after September 25 we are telling people to remember. Okay, so what are the risk weights here? We'll come back to capital accommodation later. What are the risk weights here? Look at here, fixed deposits or certificates of deposits or bonds of PFI 100 risk weight. Suppose if it is with a bank, 0 risk weight. In the recent exam they tested on the PFI. September 25. So there is a fixed deposit or there is a certificate of deposit or a bond of PFI. What is the risk weight? 100. Then shares of all companies, debentures, bonds, commercial papers, mutual funds, again 100. In this, just a minute. In this, other secured loans and advances. Secured loans and advances, which includes consumer credit exposure, which is categorized as retail loan. All retail loans, risk weight is how much? 125. But exclude loans given to priority sector. Actually in NBFC, no, banks, no, they have a mandatory requirement of lending to priority sector. But NBFCs, they don't have any mandate requirement of lending to priority. But if at all you are lending for housing loan, education, vehicle loan, loans against gold jewelry, microfinance and SSG, these loans will be excluded. So excluding that, remaining loans, if at all you are having, 125. And you know, credit card receivables, 125. First of all, in this chapter, what is the level of expectation from you? ICAI is expecting you to have a moderate understanding. You need not be expert in how you are expert in standards on auditing. That much expertise they're not expecting here. A moderate understanding is what is expected from you. Okay, not expertise level. Because for NBFC audit, how to do, guidance notes were there, certification courses were there, bank audit how to do, certification course is there, concurrent audit certification course is there. So it's not a small subject, it's a very big domain altogether. It's a different audit domain altogether. Bank audit, NBFC audits are very heavy. Regulatory requirements are so extreme. Now look at So risk weight means what? They will give you asset, the asset value they'll give all fixed assets 100. Other assets, income tax, TDS, advance tax, interest paid on government, these are all assets which are held with government. For that 0. Any other asset if at all you are having, including leased asset, ROU means right of use assets. What is it? 100. Then domestic sovereign, in the recent exam these 2 points also tested. State government guaranteed advance you gave, not yet default, 20 risk weight. State government guaranteed claim where they already defaulted for more than 90 days, then 100 risk weight. Not defaulted or default for less than or equal to 90 days, then the risk weight is 20. So like this, some risk weights were there. You have to apply some logic and remember this. Okay, you have to remember, because they can ask. September 25, they asked all these risk weights, especially this point. Balances, deposits with bank, 0 risk weight. Deposits with PFI, 100 risk weight. In India, first of all, there are no PFIs right now. Very few. Indian Railway Financial Corporation, SIDBI, yes or no? Like this, some 3 or 4 financial corporations, PFIs only were there in India. Still they asked that risk weight. They could have said bank risk weight. Bank means, see, if at all I have asset with a bank, that cash is absolutely available always. And what is the logic behind these risk weights? We are not liable. We are not required to know it also. Clear? Next. Now tier 1 capital. What should be the tier 1 capital? On tier 1 capital and tier 2 capital in question bank, some 2 questions were there. Okay. 2 questions were discussed in question bank. Please compulsorily solve those questions. Don't miss it. Now look at tier 1 capital includes own funds and perpetual debt instrument. Which perpetual debt instrument? Perpetual debt instrument up to 15% of the tier 1 capital as on 31st March. In exam, they'll give you last year tier 1 capital. On that 15% you apply. Last year means as on last year 31st March tier 1 capital information they'll give you. On that apply 15%. In the given problem, for example, they gave 100 crore tier 1. Sorry, 100 crore perpetual debt they gave. Perpetual debt information is how much? 100. Last year tier 1 capital is 1000 crore. 15% of, no. Last year tier 1 capital is 200 crore. Let us assume. How much is the tier 1 capital last year? 200 crore. 200 crore into 15%? 30. Out of 100, 30 crore will be perpetual debt forming part of tier 1. Remaining balancing figure 70 will be forming part of tier 2. So, sir, I have a perpetual debt. I have issued perpetual debt. Okay. So, will it be a part of tier 1 capital or tier 2? Minimum 15% of the last year tier 1 capital will be part of current year tier 1. Balancing figure will be tier 2. Able to understand? And own funds. What is it? Own funds. Actually, earlier in CA Inter you have advanced accounting subject. There NBFC accounting is there. That time you will be computing own funds, how to compute all that. Now it was removed in CA Inter. So that's the problem. Those who did CA Inter in the old scheme, where advanced accounting paper in group 2 is there, for them own funds means what? All that they will be understanding better. This entire capital computation, all this is there in CA Inter. That only is there in the final. Now look at tier 1 capital includes perpetual debt up to 15% of the last year tier 1 capital as on 31st March. Further, it also includes own funds. When you are calculating own funds, minus investments in other NBFCs and shares and bonds and loans in group companies. Investments in other NBFCs, shares, bonds, loans with other group companies. Total it in excess of 10% of own funds. Okay, in excess of 10% of the own funds you excluded. Suppose if the own funds information is given 1000 crore, excess of 10% means, first of all 10% means 100 crore. Yes or no? Now if at all I have investments in other NBFCs and all the 200 crore I have, then own funds means 1000 minus investments in other minus 10% of 1000. So is equal to 1000 rupees minus own funds, 200 minus 100 is equal to 900. Like that you should calculate. Now sometimes what happens is last year tier 1 capital information they'll not give. That time we assume if perpetual debt is given, so and so amount is given, last year how much is the tier 1 capital they didn't give, then entire perpetual debt we assume that it is within 15% of last year tier 1 capital. We take an assumption and we classify that perpetual debt as part of tier 1 capital. Okay, just go and solve the question bank. 2 sums were there. Definitely you will understand that. Then what is tier 2 capital? Preference shares which are non-convertible Revaluation reserve discounted at 55, nothing but, you know, in exam they'll give you revaluation is 100 crore, discounted at 55 means multiplier will be 45. Multiplier will be 45. Discounted means what? Yes or no? So discounted, this value is equal to, this value is derived by 100 minus 55, like that you need to. Yes or no? So you just multiply with 45. How to discount with 55? Just multiply with 45 is equal to, you'll get some value. Correct? In one of the MTP, they multiplied with 55. Later they gave a corrigendum and then they rectified the answer with 45. Okay, so if at all you come across any old MTP where it has 55% multiplier, ignore it. It's actually 45% multiplier. Hello? Then general provisions and losses. In exam they'll give you provisions and losses. How much amount they gave? Don't take as it is as part of tier 2 totaling. Compute 1.25% of risk weighted assets. Compute that. That value or provisions and losses together, whichever is lower. That much value only will be taken as part of tier 2 capital. Hybrid debt capital, subordinate debt, excess perpetual debt. What is excess perpetual debt? 15% of the last year tier 1 capital will be added to tier 1. Balance will be part of tier 2. And remember, if at all NBFC is a base layer NBFC, and if they gave perpetual debt, that perpetual debt will not be considered in capital computation. That perpetual debt will not be considered in capital computation. Now, how to compute whether NBFC is meeting with capital requirement or not? First to know, calculate tier 1 capital plus tier 2 capital as per the rules which we discussed now. Some number you will get divided by risk weighted assets, assets multiplied by risk weights. Then you will get risk weighted asset value is equal to percentage, you will get, right? That percentage compare with 15% over. Able to understand? All of you. Sometimes in exam they'll give you this tier 1 tier 2 information risk weighted. You just have to calculate percentage. That's it. For this question bank only you should solve. Those two questions if you solve only, you will get an idea on this. Okay. That's it. This is with respect to, you know, NBFC capital requirement ratio. Now here within this NBFC there is one gold loan related clarification is given. Some separate clarifications was issued by RBI. See, for NBFCs, no, RBI will issue rules. We will not call them as rules, we call them as directions. We call them as what? Directions. So NBFC lending against gold jewelry Reserve Bank directions 2025. Okay, they have released some directions. So that directions RBI has announced it, right? That fact is given in our book. That's it. That's not an amendment basically. In NBFC, is there any amendment? No amendment. They just added two clarification. One is microfinance institution 4 quarters. That clarification is there, right? That one. NBFC lending against gold jewelry, that directions RBI issued, no? The directions related information is given. That's it. They didn't give you directions. What are the directions they should read? The directions not required. So typically that's just informative in nature. They are not amendments. Only informative points, 2 points were added in NBFC. That's it. Next, coming to income recognition norm. So income on NPA is recognized only when actually realized. Any income recognized before the asset became NPA and remains unrealized must be reversed. So income on NPA is recognized only when it is actually realized. What do you mean by that? You know, for banks and NBFCs is a common point. Once a loan given turns into NPA, the criteria is 90 days. If at all you gave a loan, principal, EMI or interest, either principal and interest both, nothing but EMI, or only principal or only interest, from the due date more than 90 days, if it is defaulted, 91st day, we will call it as NPA. Now what you need to do? Banks and NBFCs, no, they recognize interest on a monthly basis in their books of accounts. On a monthly basis, they pass an accrual entry. Just like that, for next 90 days also they'll pass accrual entry. But 91st day, what happened? This loan became NPA. Now you might have learned this point in CA Inter. Interest on NPAs will be recognized only on cash basis. It should not be recognized on accrual basis. Have you? Yes or no? That point only they are saying. Now 90 days I recognized on accrual. 91st day the loan became NPA. Once it become NPA, I will no more recognize it on accrual. However, further, already in the past 90 days, we passed journal entry on accrual basis. Now the asset turned into NPA. That interest amount I booked, but I didn't realize it. Now the asset turned into NPA. Reverse it. What is it? reverse it. That's reversal of interest. Hello, able to? Next. Now, once a loan become NPA, straight away it is classified as first substandard. Straight away it is classified as first as what? Substandard. So NBFCs, they must classify their assets based on, risk into a standard asset, substandard, doubtful, and loss asset. Standard asset is nothing but performing asset. Remaining asset is called as non-performing assets. So this is called as performing, this is called as non-performing. Okay, asset upgradation. Now further, in bank audit you have some point called upgradation. What is upgradation? Once a loan become NPA, you have to upgrade it. Once a loan became NPA, you have to upgrade it. When only when the customer settle all the pending dues and agree with the bank as per the upcoming scheduled plan, rescheduled plan, then a customer who has cleared all the pending liabilities on an asset which already became NPA, he cleared all the pending liabilities, and RBI has given certain upgradation rules and regulations. As per that only, a bank can upgrade from a substandard asset to a standard, or a doubtful asset to substandard or standard. That's called upgradation. So the asset cannot be upgraded merely because of rescheduling unless it satisfies required conditions for upgrading. So this is performing assets, remaining or non-performing. Now look at, we have provisioning also, right? Provisioning requirement. How much provisioning? When do it become standard asset? By the way, okay, fine. We'll go ahead. We'll go ahead with the provision discussion. Then I will talk about duration. Okay, when it becomes substandard, when it becomes D1, D2, D3. Here D1, D2, D3. Yes or no? And substandard assets. Look at, why should I classify standard asset? No, you are required to create some provision. Generally on standard assets, provision is not required. First of all, they are performing, but still prudence concept, 0.4%. What is it, 0.4% of outstanding amount will be created as a provision against standard asset. If it is a base layer NBFC, 0.25% provision only we will create. If it is a base layer NBFC, we just create 0.25%. Substandard, what is the provision that you create? 10% provision you create on the outstanding amount. Once it turns into substandard. Once from substandard, after 12 months or after 18 months, we convert that into D1, D2, D3 slowly. On D1, 20% provision. On D2, 30% provision. On D3, 50. This is aggregate provision to be maintained. It's not incremental. What is it? Aggregate. If an asset, if a loan given to customer is outstanding and it is right now in D1 category, maximum provision you should make is 20. If it is in D2 category, maximum provision you should make is 30. And if it is in D3 category, maximum provision you should make is 50. In exam, they'll give you D1, D2, D3 data. You don't have to compute whether it's a D1 or whether it's a D2 or you don't have to apply it. Okay, we have a question in the question bank also. So if at all D3 directly apply 50%. Suppose no, it's a doubtful. Loan is there, but security is not there. Then straight away 100% provision. Or until now I'm talking about secured loans. Remember, for substandard, secured or unsecured, that is not there. 10%. For doubtful, we have up to 1 year, 1 to 3 years, more than 3 years, all that. Then further, loss asset. How much provision you have to create? 100% of the outstanding amount must be provided for. If the assets are remained in the books, or entire asset should be written off. Loss asset, no, just like D3 category, or just like unsecured doubtful asset category, not D3. We should not interpret like that. Why? Because D1, D2, D3 secured portion 20, 30, 50. Unsecured doubtful asset, what rate will apply? The same rate will apply for loss asset. Once a loan given is treated as loss asset, we should either write off. Write off means what? Don't continue in the balance sheet, or keep 100% provision. That's it. First of all, what is the criteria for an NBFC? First of all, when a loan given will be turned into NBFC, they say 180 days everywhere, ma. They say what? 180 days everywhere. But right now, gliding path. As per gliding path, by 31st March 2026, what is the due date? What is the number of days applicable? 90. For your exams, this only applies. Why? For you, Those who are writing in May 26, September 26 and Jan 27, these 3 attempts are in which financial year? 26, 27. Yes or no? For you, what is the completed financial year? 25, 26. On 25, 26 only you will have a question. So when the question is tested based on 25, 26, what is the NPA norm here? As on 31st March 2026, every NBFC should comply with 90 days norm. So 90 days norm, if you remember, that's enough. Hello everyone, that's it. Suppose if already some existing NBFCs are already following 90-day norm, this rule will not apply. This rule will not apply. Okay. Earlier, the same point is given as systematically important NBFCs, non-systematically important NBFCs. For non-systematically important NBFCs, 180 days. Systematically important NBFCs, 90 days. So if already those NBFCs which are already a systematically important NBFCs which are already following 90 days norm, now new gliding path is introduced, they should not take the benefit of the gliding path. They are already following 90 days norm, so they should not again go back to 2024, 150 days, 120 days. That they should not use. That is a point relevance now. This point is irrelevant now technically. Okay, that's it. Then when an asset will be treated as substandard, 2 assets will be treated as substandard. 1, an asset whose terms have been renegotiated. An asset whose terms have been renegotiated, rescheduled, restructured, and 1 year of performance is not achieved. An asset which is renegotiated, rescheduled, and restructured, and 1 year performance is not achieved. If a customer, he has not yet defaulted, remember this, he has not yet defaulted, but he is having some financial difficulties. After 3-4 months, he is predicting. He approached in advance to the Bajaj Finance and applied for rescheduling, and Bajaj Finance approved it. He has not yet defaulted, remember. Still, since you rescheduled it, since you extended the credit period, since it's a renewal, automatically we will apply substandard classification norm, and we will wait for 1 year. What I will do within this 1 year? This 1 year, easy paying the EMIs, everything as per the rescheduled terms properly or not, I'll see. If at all 1 year satisfactorily performed after rescheduling, then again I'll go back and then upgrade it to standard asset. That's the meaning. Second one, how an asset comes into substandard in another way? He defaulted. What he defaulted? More than 90 days. He defaulted for more than 90 days. Loan he didn't repay for more than 90 days. 91st day onwards. First day of substandard asset starts. First day of the substandard asset. For next 12 months. It's a substandard for middle layer NBFCs and above. Suppose it's a base layer NBFC, then 18 months we will apply. Sir, from substandard to doubtful, when it will be? After 18 months or 12 months, as the case may be completed, of traveling in substandard category, 19th month or 13th month starts, then it will come into D1 for next 12 months. 24 months to almost 24 months to 48 months approximately will come to D2. That next it will be directly classified as D3. That's it. Loss asset. What is the loss asset? An asset which is identified as loss by NBFC, either auditors or RBI or inspection team, but not yet written off. These are loss assets. That's it. So with this provisioning norm and asset classification norms are clearly discussed. Are you confident on this? Is there any doubt in this? Substandard 2 types were there. Remember, 1 is based on period, 2 rescheduled. This point many will forget. Okay, be careful. Like they'll give you MCQ, 4 options they'll give you. For an NBFC, an asset becomes substandard only. They'll give you this word only when the asset is overdue for more than 12 months or more than, like that they'll give you more than 90 days, it will be overdue and it will come into substandard. Like that they'll tell up to 12 months. That's not the only route through which substandard classification comes. Rescheduling is another route through which an asset can come into substandard. That's it. Audit procedure. In audit procedure, this 4th point is important. In one of the recent exam also they have asked. Okay, if at all NBFC is accepting public deposits, you should verify what is the first of all maximum ceiling. Okay, fine. I'll do one thing. This I'll come back later because it's not that important in order of importance. The next important is auditors report regulations. What is it? Auditors report regulations. Auditors reports directions. Auditors duty, auditors report directions. What is it? Auditors report directions. The auditor has to give 2 reports. The auditor of an NBFC will give 2 reports. 1 to the board of directors, 2 to the RBI. What is the second report? To the RBI. To the RBI he will submit the report. No, that report is called as exceptional report. That report is called as what report? Exception report. In one of the exam they have asked this as a 5 marks question. In one of the exam they have asked it as a 5 marks question. So look at, if the auditor finds that the company has not complied with Chapter 3B, if the auditor finds the company has not complied with Chapter 3B, what is Chapter 3B? Companies Act is divided into multiple chapters. Income tax is divided into multiple chapters. Chapter 6A. Like that, RBI Act is also divided into multiple chapters. In that, Chapter 3 is dealing with, Chapter 3B is dealing with NBFC, where the sections will start with 45 IA. 45 section onwards till certain sections, okay, they all come under Chapter 3B, which are dealing with NBFC provisions. So if auditor identifies this NBFC does not comply with RBI Act corresponding provisions of NBFC, nothing but, or if auditor identifies NBFC has not complied with acceptance of deposit directions, or if auditor identified that NBFC has not complied with scale based regulations. In old books you will find different wordings here. In old books, if auditor identified non-compliance with systematically important directions, non-systematically important directions, deposit taking directions, like that, some different wordings were there. Don't write that answer. Now those directions were replaced by scale based regulation directions. Now we have only two main directions. One is deposit taking directions, scale based regulations. That's it. One regulations, multiple regulations were there, multiple directions were there. Now they grouped into a single direction, scale based regulations. That's it. So if auditor identifies non-compliance by the NBFC with these 3, 1, Chapter 3B of the RBI Act, acceptance of deposit, public deposit directions, 3, NBFC, scale based regulations directions. If at all you identify non-compliance with these 3 directions, you have to file a report with RBI, where you should only report non-compliances. You should not report about compliances. Are you clear? That's an exception report. The auditor has to report findings to regional office. The auditor should only report contraventions. He should not include statement regarding compliance with any of the provisions. Clear? Then miscellaneous. That's not required. Now you need to file a report with board of directors. Correct? Huh? You need to give a report to board of directors. That's like a audit conclusion report. You give audit report. In addition to that, you have to give a separate report. Like what, generally you have to report on, is the NBFC eligible to hold certificate of registration? Is the NBFC maintaining net owned funds? Is the NBFC maintaining capital? Like this, some clarifications you need to give commonly for every NBFC. You need to report it to the board of directors. Like you need to give a report to the board of directors. Yeah, dear company, dear board of directors, you all have complied with all this. Don't worry. Compliance report. That's actually called as what, compliance report you need to file with the board of directors. That too, if an NBFC is accepting deposits, there are additional compliances. For example, NBFC which is accepting deposits, they should maintain liquid assets. What is it? They should maintain liquid assets. And not only maintaining, whatever assets that they are maintaining, they have to inform it with RBI. They have to inform it with RBI. Liquid assets, whatever they are maintaining, they have to inform it to RBI. Quarterly return they need to file. Deposit returns they need to file. Able to understand? Like that, some formalities were there. So regarding those formalities, whether the company complied or not, you have to verify. You verified already as a part of audit, give a report to the board of directors. So there are some points which you have to report as an auditor of the NBFC to the board of directors, commonly for all NBFCs. Some points you need to report. Deposit acceptance NBFCs, some points you need to report. If the NBFC not accepting deposits, some points you need to report. So like that, 3 parts will be there here. Able to understand? This breakup you should understand. Then if you read, you understand all these points. Now look at matters to be included in audit report to board of directors, generally for all NBFCs. What are the matters to be included generally for all NBFCs? Verify whether NBFC has a valid certificate of registration. Ensure that NBFC meets principal business criteria. If the company holds certificate of registration, is it entitled to hold or not? Okay, and check whether NBFC meets net owned fund requirements as per master direction. Simple. Whether the NBFC is validly holding certificate of registration. Nothing but check principal business criteria and then you will understand that. Check whether is it meeting net owned funds requirement or not. That's it. Second one, certificate from stat auditor. In case study booklet, there is one MCQ on this. Okay. So NBFC must submit a statutory auditor certificate. Means the NBFC directors has to get a certificate from stat auditor, SAC, nothing but statutory auditor certificate, and they need to submit with RBI. Within what time they need to submit? They need to submit. The SAC must be submitted to RBI within 5 working days of signing the audit report, but not later than 31st December. So the auditor will give a report to the directors. Within 5 days of that report, they need to get a SAC and then file it with RBI. But maximum tenure is 31st December. Further, in that SAC certificate, what auditor has to certify? He need to confirm whether the company is engaged in NBFC business. Is the company eligible to hold certificate of registration? This registration are they eligible to hold based on what position you will take based on 31st March of the relevant year. Sir, I am doing audit of 25-26, sir. Then 31st March 26 is there, right? On this date, I will check whether the position held by the NBFC, is it satisfying the principal business criteria or not. As on 31st March, total financial assets how much? What is its percentage to the total assets? Like that, you should give generally for all NBFCs these points. Then suppose NBFC is accepting deposits. You have to report some specific points to directors. At the end of the audit, you have to report some specific points to the director. What you need to first of all, verify whether public deposits and borrowings are they within the limits set by NBFC public deposit direction. You know, even a company, they cannot take how much ever loans they want. There are limits on borrowings by the director, borrowings by the company. There are limits. How much public deposit they can take? There are limits for that. So like that, NBFC was given public deposit directions. As per the directions, there is a maximum limit up to which you can raise public deposit, debenture, loans and advances. All put together should be within the limits. Simple. Total borrowings of the NBFC should be within a particular limit as given under the public deposit direction. Whether have they maintained like that? You check it and report it to board of directors. Then check whether excess deposits beyond permissible limit have been regularized. Sometimes NBFC by accident they might take excess deposits. Now it is impossible because it is system driven. Now core banking solution software they implemented, it's impossible to violate. Then NBFCs, you know, generally you might have seen in company law 73 to 76. If a company is accepting public deposit, they want to go for a public deposit. First they need to get a credit rating. They need to get a credit rating from approved credit rating agency. Yes or no? Here also NBFC has to get rating from credit rating agency. If a minimum credit rating agency is not there, they cannot accept the deposit. If at all they accept the deposits, but after that credit rating declined, they should stop accepting fresh deposit, run the deposit till maturity, and don't renew the deposits with the depositors unless they have given written consent. This point is there in the audit procedure for deposit. Look at, verify that NBFC is not accepting deposits without a minimum investment grade. Capital adequacy, confirm whether capital adequacy ratio disclosed in written to RBI is correct and minimum CRAR is prescribed. Simple. The NBFC will file with RBI capital adequacy ratio related returns. Have they filed returns? No, they filed return. No. In that, what information they disclosed? Is it correct or not? You verified. I verified it is correct. That fact reported to board of directors. Next. Did the NBFC violated any restrictions on public deposit directions? Report to the board of directors any violations with public deposit directions. Verify whether NBFC has defaulted on paying interest, paying principal on deposits once due. Is there any default in repayment of deposits? Ensure that prudential norms on income recognition, asset classification, provisioning are as per RBI direction. Ensure that liquid asset requirements are maintained. You know, in one of the exam, in Jan exam only they have asked this question. Okay, whether NBFC is maintaining liquid assets, especially government securities, they should not hold the securities within their lockers. They should hold them with the designated bank. This point they tested in Jan exam or September exam. So NBFC has to, they need to ensure that details of designated banks holding approved securities are communicated to RBI. NBFC will maintain liquid assets. One of the liquid assets is gold. Another liquid asset is approved security. These assets you have to maintain not within your own office. You should maintain it with a designated bank, some scheduled bank. Now with which bank you are maintaining, that information has to be given to RBI. This question was asked in the recent JAN exam. For example, designated bank. Yeah, look at this question, you see. What should be L's observation regarding custody arrangement of investment made in approved liquid asset by so and so NBFC? What should be the requirement? The arrangement is acceptable as approved liquid assets can be held in company own custody. Wrong. Safe custody of arrangement is not relevant. Wrong. Approved liquid assets need not be lodged with the bank. Wrong. Automatically the answer is B. Yes or no? So the company should lodge in safe custody these liquid assets with a designated scheduled commercial bank as required by acceptance of public deposit directions, and also submit a copy of certificate. Obtain a certificate from RBI to that effect, and that certificate you need to submit to board of directors. You see the question? Somewhere the remote point they're picking up and then asking. So every point you need to have a comment. There's a lot. Yes or no? NBFC. What? Feeling sleepy? No, right? Where is this? Where did I study this? You're thinking like that. I hope you're able to recollect. Some students come to marathon to learn first time. They'll ask in below YouTube comment, okay, sir, can I watch? I'm a first timer. Can I watch and learn everything, entire subject? Can I score exemption? Your question itself has an answer. How can you score exemption by marathon? Otherwise, why the hell we sell regular course with 150 hours of duration? Yes or no? Fine. It is possible, but you need to work on ISA material. Next. I hope you're able to understand. You're able to recollect. Fine. Once again, you see this one. You need to file a report with RBI for an NBFC. Sorry. You need to file a report with board of directors for an NBFC which is accepting public deposits. What you need to report in that report? What are the points you should mention in that report? Whether the deposits are within the limits. If there is any excess deposit, are they regularized? Did the NBFC accept deposits without minimum without minimum credit rating? Whether capital adequacy ratio disclosed in the return filed with RBI is in compliance with minimum CRAR requirement? And are there any restrictions which did the NBFC violated any prohibitions and restrictions on acceptance of deposit? Did the NBFC defaulted in repayment of deposits, interest or principal thereon? Did the NBFC complied with prudential norms? What are the prudential norms? Income recognition, asset classification, provisioning norms. And did the NBFC maintained liquid assets, and that too the assets information which they maintain with a designated bank, that list is intimated to RBI? And whether the NBFC has furnished return on deposits with RBI. Verify that NBFC has submitted quarterly return on prudential norms. And whenever an NBFC is opening a branch and closing a branch, they should intimate to the RBI on a prior basis, not even after that, prior. So before opening a branch, they should intimate. After they close the branch, they should intimate. Otherwise, what happens? For example, this classroom is there. I will put a name board below. Yes or no? Muthoot Finance. Yes or no? I will put entire office structure, interior, everything fantastic. I'll make it as it is. Computers, everything I'll put. People will come and deposit gold. 10 lakhs worth of gold. I'll give 5 lakhs loan. Yes or no? I'll give all the documents, everything pakka. If at all I'm able to operate this for 1 month, if I'm able to manage, I can easily create some 50 crore worth of gold. In that 25 crore loan given, but rest 25 crore is there na. I can abscond. So every NBFC before opening and after closing, they need to intimate, and field officers will be there always. In every city, in every town, field officers will be continuously roaming and seeing whether any new bank and FI came. If so, is it approved or not, they'll be checking. So otherwise, if there is no field officer like that, if I open Muthoot Finance management also don't know that there is a Muthoot Finance here. Easy, yes or no? So field officers will be there in every city and town. There will be field officers. That's why IFSC codes, all that, everywhere they're giving intimation. Okay, please check whether the branch is genuine or not. People are doing this in Bihar and all. These incidents happen. Yeah, next. Yeah, they operated one branch of a bank, and people don't even realize that that's a genuine branch. Next. So that's it. Now further, one more point. Reporting to board of directors in case NBFC not accepting deposits. Suppose if NBFC not accepting deposits, no. they need to take a resolution that we will not accept deposits. See whether that resolution is passed or not. So verify board of directors has passed a resolution for non-acceptance and see in reality have they accepted or not accepted. Check it out and see whether they complied with prudential norms. See whether they have complied with capital adequacy, capital requirement adequacy norm, and the reports filed, returns filed for CRAR with RBI, are they in compliance or not? Check it out. And if at all NBFC is classified as a microfinance institution, see whether it is appropriately classified or not. In exam they can ask you only this as a 4 marks. So see, you are at the conclusion of audit of an NBFC. As a part of audit report directions, you have to submit an audit report to the directors of the NBFC, and this NBFC is not accepting public deposits. What are the points you will report? Theory question, 5 marks. Almost over. Clear? Next we have, I will tell you what are all important now. All the important points I covered, ma. Now they have given one NBFC. They took one NBFC called ICC as an example. They gave overall audit checklist. Now in this, no, first few points up to 12, they are dealing with investment procedures. Then loan sanction onwards, they are dealing with credit related. Remember, that's an investment and credit company. So what are the points that you should verify for investments? What are the points that you should verify for credit loans? For loans, what you will verify? Loan sanction verification letter. Security, whether security is properly registered. Get a balance confirmation. In case if the loan is given in the form of bill discount, yes or no, see the discounting charges are duly accounted. Verify that NBFC has not lent, has not invested in excess of specified limit to a single borrower. Generally, to a single borrower, exposure should not be more than certain limit. That's why some banks know, even though they can lend to a single borrower, they won't lend whatever amount they ask. They do consortium lending. Why they go for a consortium lending? For example, National Highway Authority of India want to construct one expressway where they want 1 lakh crore loan, and they went to SBI. SBI can give, but they won't take it, because from a bank to a single borrower, exposure should not be more than certain limits. Like that RBI guidelines were given. So see whether that is satisfied or not. And so verify whether NBFC has a proper system of loan verification, loan appraisal. Loan appraisal means what? When a customer applies the loan, how are you taking the application forward? So how are you analyzing it? That's called loan appraisal. And follow up and analyze recovery performances to ensure manageable level of NPS. See that loan classification and provisioning are as per prudential norms. Easy. So with regard to investment credit company, credit related checklist is easy. Any 5 points? Yes or no? Next. Sir, this company is also investing. So what this company, what we need to check? Dividend income and bond interest. This is important for MCQ. So suppose if an NBFC is engaged in investing and they invested in bonds and securities, verify that dividend income is recognized and accounted for. Ensure dividend income is recognized on cash basis. Okay. Except declared by body corporate in AGM, right to receive the payment has been established. Income from bonds, debentures is accounted on accrual basis only if the interest rate on instrument is predetermined. Interest is serviced regularly. Bonds and debentures, time period will be there, rate of interest will be there. You can recognize it on accrual. Only thing you should see is, are they servicing regularly or not? Dividend, only when they declare, you have a right to receive. That's it. Next, this is one point you can write in ICC checklist. If they ask you ICC checklist, no, sometime in one of the exam they have asked. So write about audit checklist for NBFC which is engaged in investment and credit company in 2023 attempt or 2022 attempt. In one of the attempt they asked this question. These many points were there. Any 6 if you write enough. Able to understand? Right now I told no that. And further NBFC, no, that's it. I think only these points enough, because ICC checklist only they'll ask. They'll not ask any particular thing. They'll ask ICC checklist. Any 6 points you write. Lending points are easy to write. Investment points are little difficult to write. So in investments, no, income recognition point is only bit tough. Now tell me, for every investment you make, contract note will be there, bills will be there. Check that. Board meeting for investment policy. So see whether board resolution is passed for every investment that is purchased or sold. See that investments are classified as long term and short term correctly. See that investments were valued based on NBFC prudential norms. And unquoted debentures, you know what? Unquoted debentures, no, they are not treated as investment, but they are treated as term loan. If at all you are investing in unlisted debenture of a company, that is treated as term loan. That's it. These points enough, ma. Here there is a straight question only possibility here. They won't ask any in-between question. Straight question only. They'll ask 5 marks question. Write about audit checklist of an NBFC engaged in ICC. Any 5 to 6 points only they'll be expecting you to write. That's it. Frauds. In NBFC and banks, there are so many types of frauds that are happening. There are so many frauds that can happen. Oh, almost about 2 minutes. I'll finish this off. Okay. There will be so many frauds that will be happening in NBFCs and banks. Now, banks has to report fraud to RBI. There are so many types of frauds that are happening. So when they're reporting, it is vague. You are reporting that fraud, this fraud, so and so. So RBI has classified frauds into multiple types. So you select that type of fraud and then report. So that RBI will take, for some types of frauds, they'll take a severe action. For some types of fraud, they will ignore. Okay, sometimes cash shortage, it's okay. Sometimes it's frequent. Generally in NBFCs and banks and all, cash shortage is frequent. So RBI has codified types of frauds, so that reporting becomes easy and monitoring becomes easy. So what are the types of frauds? Misappropriation and criminal breach, and fraudulent encashment, unauthorized credit facility, negligence and cash shortage. I'll come back to negligence and cash shortage later. Cheating and forgery, irregularities in foreign exchange, other types of frauds, any other type of fraud, residuary. In exam, they can ask you, what are the classification of frauds by NBFC? 5 marks question. Now look at cash shortage and negligence. This itself can be tested as an MCQ. Now, cash shortage. What is this? Negligence and cash shortage, they are not fraud unless intention is proved. How can you say shortage is there? How can you say that's directly fraud? It could be negligence, it is unintentional, generally it is unintentional. We won't classify it as a fraud unless intention is proved. However, if cash shortage is more than 10,000 rupees, I cannot call it as unintentional. Yes or no? I will classify that as a fraud. Suppose if the cash shortage is more than 5,000 only, and the person who is dealing with the cash knows it, but he didn't intimate. Then again I will classify that as fraud. Even if it is more than 5,000. Suppose if the cash shortage is more than 5,000 but not exceeding 10, he sincerely intimated to head office and management, everybody, then I will not classify that as a fraud. Suppose he didn't intimate, he's hiding it, then I will treat as fraud. Suppose cash shortage more than 10,000, whether intimated or not, doesn't matter, it's always fraud. That's it. Clear? Then we have only one point, how to verify prudential norms. In one of the exams, September 25, a theory question has been asked on this. Okay, a 4 or 5 marks question, how to verify prudential norms. It's easy, based on whatever we discussed till now. Report to board of directors there and all, we saw all this. Verify capital adequacy, verify income recognition, verify asset classification, verify prudential, like that only. Remember, if minimum investment grade is downgraded, if at all NBFC credit rating is downgraded below minimum credit rating, they should stop accepting deposits. Deposits should run off till maturity, whatever existing. Do not renew the deposits without explicit consent of the depositor. Report the position to RBI within 15 days. In one of the exam, a 3 marks question has been asked, or a 4 or 5 marks question has been asked. And investments in approved liquid assets must be kept with designated bank and check RBI certificate confirming this. Jan 26 MCQ. Just now I showed. That's it. NBFC is over. Major points I covered. 90% I covered almost. So no, that gist is covered. If you read now with this backdrop, it will be easy for you to understand. Okay, that's it. Yeah, let's revise audit of banks. Okay, see, actually, if you observe, there is a video of mine on Ch3 Strategy for CA Final, where audit of banks I kept it under 1/4 category. That is for descriptive purpose. For MCQ purpose, you should read 100% syllabus at least one time and logically understand entire syllabus 100%, so that MCQ you will not miss. For MCQs, understanding alone is sufficient. You don't have to mug up and remember, because if you are able to recognize the answer, that's enough. So what skill is required for for MCQs is just if you are able to recognize the answer, that is more than enough. And you can recognize the answer better only when you understand the content. So for understanding an MCQ purpose, 100% syllabus. But for descriptive purpose, you can keep bank audit under 1/4 priority, in the sense last priority. Okay, first you finish, rest all other whatever we have given in the 3/4 strategy, where you can easily remember, easily understandable. So then you give priority to bank audit. Now bank audit seems very lengthy, but if you observe the topics in the bank audit, they're very simple. First they'll give you a features. What are the features of bank audit? Then they will discuss about legal framework for the bank audit. Okay, what is the legal and regulatory framework applicable? Then they will talk about, steps in bank audit. Steps in conducting bank audit. There are totally some 5 steps were there. Okay. First initial considerations, then risk assessment, understanding the entity, then risk assessment, execution, then reporting. Like that, some steps were there. Then we have audit reporting in bank audit. What is it? Audit reporting. Within this, we need to have 2 subparts. One is appointment procedure for auditor. A brief discussion only was given in this particular chapter. How auditors will be appointed. In nationalized banks, how it will be appointed. In a private sector bank, how it will be appointed. Then we have, this one, SLR and CRR. Cash reserve ratio and statutory liquidity ratio. So, audit procedures for this. This is one important question in bank audit. Until now, between whatever I discussed, this is important. By the way, within audit reports, appointment of auditor is there. Audit reporting requirements for banks. Okay, that is also there. Now, you know what? Apart from audit report, the central auditor of a bank, I told you when I'm discussing State Bank of India example in other matter paragraph, I told you there is something called central auditors. Okay, banks will have central auditors. Central auditors, apart from audit report, they have to give various other reports like adverse credit deposit ratio, compliance with Jilani committee, Ghosh committee, and compliance with prudential norms. Auditor has to give a certificate. Auditor has to give an opinion on operating effectiveness of internal financial controls over financial reporting, IFCO4 we call it as. Okay, then auditor has to give a report on so and so, like that. Some additional reports the auditor has to give in addition to a normal audit report. So what are the additional reports which auditor has to give? There is one topic on that. Then CRR, SLR. Then we have, big item is balance sheet items audit. How to do audit of bank balance sheet. This is the biggest topic in the bank, lengthiest topic. How to audit assets and liabilities of the bank, including contingent liabilities and bills for collection. Then we have, apart from this, concurrent audit means what? Then we have internal audit means what? That's it. This is what exactly the composition in the bank audit. Okay, again within audit report you have multiple types. General audit report, which we need to give as per 700 format. Then we should give LFAR format. Yes or no? LFAR audit report, that and all discussion was there. Now for us, the most important thing is CRR, SLR, balance sheet items, and audit reporting regulations. These 3 are most important in bank audit. Once you finish these 3, then you can think of concurrent audit. Apart from this, there is one more important concept: general internal controls in a bank audit. What are the general controls that are there in a bank audit? You might have seen credit card operations, clearings, in-house clearings, all that. Yes or no? Like that, some controls in bank audit, there is some topic is there, that one. Okay, fine. Anyhow, how an MCQ will come, everything we'll be discussing. Now for this, I'll be first taking up State Bank of India, balance sheet. We'll take State Bank of India balance sheet. One after one item will be finishing it. Okay, now 1 minute. Yeah, so let's continue. First, I will start with audit of assets and liabilities. A bank is liable for 3 types of audit generally. One is statutory audit, which is from external auditor. 2, public sector banks have concurrent audit, which is optional for them. It's not mandatory as per RBI. But most of the public sector banks have concurrent audit because public sector banks maintain branch-wise books of accounts. Okay. Private sector, they have centralized accounting. They don't have a branch audit. And that's the reason they also don't have concurrent audit. Everything is centralized. Apart from that, banks have something called internal audit. Internal audit of a bank, internal auditors of a bank, they focus on designing the control, testing the control, evaluation of risk management, evaluation of governance, and they evaluate concurrent auditors, suggestions, everything. Internal audit is a bigger level in the bank. They influence the working of concurrent auditor. Who is concurrent auditor? Concurrent auditors mostly right now were outside audit firms. In most of the public sector banks, for most of their branches, concurrent auditor will be appointed from an outside external CA firm, where they have to work, they have to every day go to the bank and then do audit for almost 21 days in a month. That's minimum rule. And as and when the transactions, whatever transactions the bank is executing, right, Every transaction they need to audit. Concurrent, simultaneous. Understood? Concurrent means what? Simultaneous. Apart from this, annual financial audit, yearly audit, which is statutory audit. So these are the three types of audits. Now we are discussing this chapter predominantly from annual financial statutory audit context. Okay, now let's look at what are the bank assets and liabilities. You know, in our book, they have not given any balance sheet format. They have not given any balance sheet format. I think they have not given. Did they give in the ICA book? No. To best of my knowledge, no, because it was there in CA Inter. Okay, fine. You need to first understand what are the assets and liabilities of a bank. Look at assets. What are the assets of a bank? Cash and bank balances, balances with banks, you know, and money at call and short notice, investments made by the bank, advances made by the bank, fixed assets and other assets. Now look at advances. You see, this is the major portion in the State Bank of India. 42.5 lakh crore. 42,50,000 crore. Okay, that is the total loans and advances given by a bank. So banks will give loans, you know, housing loan, car loan. What are they? Nothing but for banks it is advances. Okay, then investments. You remember, you understood SLR, CRR. A bank has to maintain liquidity ratio. Where that liquidity is represented through these investments. Apart from that, the bank will have some loans and advances with another bank or with RBI. Repo, reverse repo transactions they do. Okay, balances with RBI like that. Then money at call and short notice. Money at call and short notice means, for example, right now one of my customer, ICICI Bank, I'm an ICICI Bank, you know, operating at one particular area in Chennai. One customer suddenly came and presented a check of 1 crore cash withdrawal. I don't have cash. I call my treasury, they also don't have a cash. So I will call another bank nearby and ask money to send cash physically. I'll tell customer, sir, come by afternoon, sir, I'll arrange the cash. So they will send me the money and I'll pay back the customer. Now the money I received is money at call, borrowed. Sometimes I will give money at call given. What is it? I'll give money whenever I call within 24 hours, they need to pay me back. Money at call means they need to pay back within 24 hours. Money given at short notice means what? Maximum 14 days. So that's what money at call and short notice. By the way, in this chapter, the understanding expectation from you is only moderate again. You need to have an exposure on the bank audit. That's it. NBFC audit, this one, SDG, all these chapters, digital audit, in all these cases, the expectation from you is only an exposure. Okay, next. That's it. And you know fixed assets. Then you know other assets. In May 25, there is a question asked. Non-banking asset acquired in satisfaction of claims. There is something called non-banking asset acquired in satisfaction of claim. Simple. I gave a housing loan to one customer. The house is given as a security to me and I gave a loan. He's not repaying now the housing loan. What I will do, if at all he's not repaying, I will start recovery procedure. What is recovery I do here first? I'll ask him to vacate. I'll acquire that property. That's not a banking asset. That's a non-banking asset acquired by me in settlement of claim that I have on him. In satisfaction of claim, that's called non-banking asset acquired in satisfaction of claim, which is not a fixed asset for the bank. First of all, yes or no? That will come under other assets. That will come under where? Other assets. And you know what? These non-banking assets which you acquire in satisfaction of claim, you should not own it. You should not hold it for more than 7 years. You should not hold it for more than 7 years. This question has been how to do audit of non-banking assets acquired in satisfaction of claim. How to do the audit? Where in the balance sheet this will be classified? They asked this question in May 25. So for that reason, you need to understand this. Okay, it is there in ICA book, but not as a format it is given. Okay, it is given as a sub item. Somewhere in one point they'll mention. You just read and don't understand anything unless you see the format. That's it. So now, first thing I will begin with is advances. Okay, how to do audit of advances. Now look at how to do audit of advances. Loans and advances, there's nothing but loans and advances audit. There are so many points which are there with respect to loans and advances audit. Now look at audit of advances. Tell me how advances will be classified. Look at this State Bank of India again. How advances are classified. Look, that's borrowings, investments. Yeah, here advances. How advances were classified here? There are 3 types of advances typically. Bills purchased and discounted. I mean nothing but what? Loan given by me. in the form of bill purchased and discounted, then cash credit, OD and loans repayable on demand, then term loans. Now the same thing you need to show with another classification, a different way of classification you should show. Once again, how much were secured, how much were guaranteed, how many were unsecured. Again you should give with a different classification. How many were given in India, how many were given outside India. Within India, how many were given, how much was given to priority sector, public sector, banks and others. And you know what, a bank has to must and should lend some amount to priority sector. Minimum targets they will be having to lend it to priority sector. Such a kind of minimum lending target will not be there for NBFCs. That's one differentiating factor between bank and NBFC. That's it. So now look at outside India, from banks, others, all that. Now look at this. In ICA book also it is there. Advances are classified based on nature of advance, bills discounted, cash credit, overdraft and term loan. Yes or no? And extent of security, secured, covered by guarantee, unsecured. And place of advance within or outside India. Advances in India are again classified as priority sector, public sector and others. Like that. Clear? So in exam they can ask you a 4 marks question directly. Write about classification of advances as per Schedule 3 of Banking Regulation Act. Classification they can ask you, or an MCQ they can ask you. Are you clear? Remember, advances given will be given as priority, public, like that. Borrowings need not be shown like this. Borrowings will be a different disclosure requirement. This is for loans given, we should give this kind of disclosure requirement. Now next, what is the auditor's approach? What is the auditor approach? You must obtain evidence. For what? Existence. You need to obtain evidence. Completeness. You need to obtain evidence for valuation. You need to obtain evidence for presentation and disclosure. You need to obtain evidence for these assertions. Like what are the existence assertion, completeness assertion, valuation assertion, presentation and disclosure. Now, like for example, a loan is showed in the bank books of accounts, a loan is showed. Simple. That's an amount outstanding on balance sheet date. So is it an amount outstanding on balance sheet date? Is it amount due to the bank? These two talks about existence, and sometimes you can also call it as completeness. Okay. And no unrecorded advances. See that every loan given is accounted. Valuation and recoverability. See that the advance is correctly valued because prudential norms were there, asset classification norms were there. And see that classification and disclosure are as per accounting standard, and see that appropriate provision is made. Then you have internal controls over advances. What are the controls that you should check? Now don't confuse this with general internal controls respect to advances. Now there is one topic that we have. There is one more topic that we have. What are the general internal controls in a bank? Look at. What are the internal controls in certain selected areas? Here also there is a point regarding loans and advances internal controls. There also there is a point regarding internal controls on loans and advances. The difference is here they are talking about what controls a bank will have. There they are talking about what you should test. What you should test. So when the question is regarding evaluation of internal controls in case of bank, that answer you should write. When the question is regarding what are typical internal controls with respect to loans and advances, you should write like this. You should write this answer. That's a basic difference. Now look at this. If you understand this, that understanding will be dead easy. Banks know what controls they should have. They should have credit worthiness assessment. When you go and ask a loan, they won't directly disburse it, yes or no? So credit worthiness assessment, and all the documents must be executed before disbursement. Next, margins must be maintained. You know, banker, no, suppose you want to take a gold loan. You went and kept 10 lakhs worth of gold. They won't give you 10 lakhs worth of loan. They'll give you 7 lakhs loan or 6 lakhs loan. Some 30 to 40% they'll keep margin. That's for fluctuation in market prices. So some margin they'll keep. Then securities must be kept in joint custody. The gold loan, gold which you are pledging with the banker, no, to that gold locker where your pledged gold is there. One official will not have a control. 2 officials will have a control. Joint custody. And securities must be registered in the name of the bank. Why joint custody? You might have seen in Lucky Bhaskar. Yes or no? If one person was given control, what he can do? Only if one centralization is there. Yes or no? If one person, there is no decentralization. If entire control is centralized at one place, what happens? Exploitation. Yes or no? Then all advances, they must be kept within sanction limit and drawing power. And now you know, sanction limit and drawing power will be one and same in case of term loans. Generally, housing loan, both will be same. The car loan, both will be same. But for OD, But for cash credit, sanction limit and drawing power will be different. What is sanction limit? It is based on repayment capacity of the borrower. Drawing power, it is based on security provided by the borrower. For example, you have a repayment capacity of 10 crore. I will sanction you 10 crore loan, but you can't withdraw. You want to withdraw money? Give me security. You gave me security worth of 10 crore worth of current assets. You gave me security of 10 crore worth of current assets. And you have a sanction limit of 10 crore. But the security you gave me itself is 10 crore minus 30% margin. I will give you drawing power 7 crore only. Your drawing power is influenced by the security that you are giving. Provided drawing power cannot be more than sanction limit. And both cannot be negative. A sanction limit cannot be negative. A drawing power cannot be negative. Drawing power negative means what? Customer over withdrawn. Sanction limit negative means what? Customer over withdrawn. And if a OD account, a cash credit account, if they were overly withdrawn, outstanding amount is more than sanction limit, outstanding amount more than drawing power, then it is said to be out of order. And if it's an out of order, it's an NPA. Fine. Anyhow, when I'm discussing NPA on there I will tell you. Next, banks sometimes they can sanction additional temporary limit, where additional temporary limit only for 90 days it can sanction, that to maximum of 20%. Are you clear? Existing limit will be the 20. Right now already customer withdrawn 5 crore. Suddenly he need urgently some 50 lakhs money. Now again bring application, extra loan, approval process. If I say a customer will withdraw here and then go to another bank, because banks are ready to pay this customer. So temporarily without any document verification, primary just risk assessment verification, I'll get temporary limit, but maximum 20% of existing limit, and that extra limit will be given only for 90 days. Hello? Then outstanding balance exceeding sanction limit shall be reported. The operation shall be reviewed at least once in a year. Every year, minimum once, the operations has to be reviewed. Suppose you did not review, up to 180 days after the due date of review. Yes or no? For example, OD account. Every 31st March before, review should happen. Review means, okay, is the borrower still have a repayment capacity? Is he still eligible to hold this much loan? Like that, a bank will do a review. 31st March is the due date for review. Bank did not complete the review on 31st March. 180 days they will wait for review. After review due date, 180 days. Even after 180 days, if they do not review, then it will be classified as an NPA. You will find that later. Ad hoc limit. One point is there. Ad hoc limit, from sanction date you need to review within 180 days. What is ad hoc limit? Temporary limit given to the customer. If a temporary limit is given, you should review it within 180 days and then stop it maximum. From sanction date, ad hoc limit. And regular limit, original sanction amount, I should review once in a year. If I do not review within 180 days from the due date for the review, then it will become NPA. Regular limit, 180 days will be calculated from due date of review. Ad hoc limit, 180 days will be calculated from sanction date. For ad hoc limit, okay, we'll come back to that. We'll once again discuss that. Clear? Easy until now? That's it. So now, what are the controls that auditor has to evaluate? In May 25, the question asked on this is mind-blowing. I don't know how many of you wrote May 25 exam. It was shivering. Those who read this, like, they'll not understand the question until you see actual question. Okay, fine. So, evaluation of internal control. I'll directly open the May 25 question and then I'll show you. Like, what is the level at which sometimes they test. Look at. There is a question in the May attempt. If you see this question, next time when you're reading the bank audit, you will understand to study in this way. The number of questions you practice in MCQs and question bank, that will give you a better clarity when you're reading next time. Okay. Look at what is the question. Now, in the course of performance of, okay, not that, yeah, TH and associates were appointed as stat auditor of a public sector bank for the year 24-25. Advances generally constitute major part of the assets of the branch. There are substantial number of borrowers to whom variety of advances are granted. Hence, they felt that audit of advances is major attention. Okay, so simple, advances is major one. The firm is primarily concerned with obtaining evidence about following while carrying out advances. Amount due to bank are properly supported. The stated valuation is proper. Advances disclosure classified. Appropriate provisioning. Remember what are the audit objective of advances? One point I showed. Existence, completeness, like that one. So this is what their objective. Fine. Next. Audit approach of advances should cover designing appropriate procedure to obtain sufficient appropriate evidence in all those areas. Okay, the engagement partner are assigned the focus areas in advances to the members of the following team. Okay, now here Mr. X was designed to focus on evaluation of internal control. Mr. Y was given substantive audit procedures. Mr. Z was given responsibility to check recoverability of the advances. Fine. Further, it was observed that in case of Kiran Limited, a trading company which has availed a cash credit facility of 10 crore from Indore main branch, the drawing power was not arrived by bank. Okay, as on 31st March, the following details were given. Okay, this is regarding drawing power computation. I will tell you later. Drawing power computation, I think that question is over. Drawing power computation, immediately after this I'll tell you. First one question will solve. Next, what is the question which they are asking? Yes, 10th question. Look at the following audit procedure undertaken by audit team in relation to audit of advances of Indore main branch. So first of all, audit team regarding advances, the following procedures they are undertaking. What procedures? Examine existence, enforceability, valuation of security in respect of securities requiring registration. Examine existence, enforceability and valuation of security. I want you to see where it is covered. Where it is covered. Existence of securities, all that. Evaluation of internal control. And see, tell me, Mr. X is liable for internal control, correct? Y is liable for substantive. Z is responsible for recoverability. Am I right? So, existence, enforceability, valuation. Okay, I think, this particular work is done by whom? Mr. X. Look at. Who is doing this work? Mr. X. That's a controls, compliance procedure. Am I right? So, I will write like this. That's actually internal control evaluation, which I call it as compliance procedure. And verify correctness of the master data updated. This is actually substantive procedure. You see, verify correctness of master data. Then examine whether system laid down for review and renewals for advances followed. System, is there a system for review? System is there or not? We are checking again compliance procedure. See, is that there in our book? Compliance, evaluation of controls. Is system laid down for bank review renewals? See, review renewal word. Yes or no? Hello? Found out? Yes. Okay. Next, examine accounts identified to be problem accounts but which have not been slipped into NPA. Examine problem accounts but those accounts which are not slipped into NPA. Get SMA to list of the borrower. Substantive procedure. Yes or no? Substantive. Hello everyone. Next, review auditor report in case of borrower having credit facility from the bank beyond a cutoff limit fixed. This is regarding recoverability, RC. Do you understand until now? But the question is not that. Look at question. From the above, identify procedures Y should focus on. In the case study, they told X is responsible for complaints, Y is responsible for substantive, Z is responsible for recoverability. Now in this, substantive is 4 and 2. That's it. 2 and 4. The answer is C. See the complexity. You understood? So if you only mug up internal controls 5 points, substantive 5 points, so recoverability is somehow you mugged up, but you don't know which one comes exactly where. You can't find out the answer. So that is the level at which they're asking. Most of the out of 15, I mean, we have 30 marks MCQ, 15 MCQs, 3 to 4 MCQs will be this kind of. So how the test is on the structure of the points, structuring of the points. On that they will be testing. Okay, fine. Next, now in the given question, there is one more point is also there. Drawing power computation, correct? Drawing power computation they have given. Like, so there is a 10 crore cash credit facility. As of 31st March, the following details are provided regarding receivables. Now, total stock 900, which includes damaged stock. Generally, when we are considering drawing power, damaged stock we will eliminate. Only 840 worth of inventory we will consider primarily. Total receivable 800, aging is provided. Okay. So generally, if any receivable is more than 90 days, generally any receivable more than 90 days, we don't consider. Okay. Here they have not given it, they have not given inputs, or probably in the below question they might have given inputs. Okay, fine. Debtors originally 800. Okay, creditors for stock 140 creditors were there. Oh, out of this 840 closing stock, 140 crore worth of stock is not paid by me yet. which means my own stock is how much? 700. Bank will give you loan only on your own asset. If at all you purchased goods on credit, the primary right on those goods will be with the creditor. So he has a primary right on this until you pay. So that amount we should eliminate. So what is your own inventory? 700. Then margin for stock is 25. Margin for debtors is 40. Whereas bank sanction how much ma? 1000 lakhs. You know, they sanction how much it is? 1000. Sanction limit is 1000. Remember, drawing power should be less than or equal to sanction limit. Fine. Now, you know, 700 crore worth of stock client is having. Now, how much I can allow him to withdraw? This is the question. I will not allow full amount. What about my security margin? What is the margin for stock? Minus 25%. Regarding stock, how much I will allow? 700 minus 25. How much is the amount? Tell me. No calculator? Ah? Array no ba, minus 70, minus 25% ba. 525. Okay. So what is it? 525. This is drawing power allowed on stock. Now coming to debtors. Debtors total value 800. Minus, I assume more than 90 days only is not considered. So 100. So what are the debtors? The bank will consider that you are eligible to receive a 700. But what is the margin? 40%. Then what is the amount? 7 4s are 28. You know, 420. So 420 plus 525. 945. Okay. So drawing power is what ma? 945. Now there is a question probably below they might have been asking. What is the drawing power? Okay. Drawing power is 945. The answer is C. Now you understood how to compute drawing power. And guess what? Drawing power computation is not there in our syllabus. It is there in CA Inter. And in the bank audit chapter, they clearly told refer CA Inter book once. It's a requirement for you to study. Okay. So how to compute drawing power? Very simple. You know, stock value take minus ineligible stock, you remove it. Then you get, you know, total stock value minus unpaid stock, you remove. Then you get what? Paid stock. Simple. Arrive paid stock figure. Minus margin percentage is equal to drawing power for stock. Same way. Trade receivable minus ineligible receivable. What is ineligible? Exam they'll tell you generally. In this question they didn't tell you. So we took an assumption that any receivable more than 90 days is ineligible. Okay. Then balance trade receivable you will get minus margin percentage. Then you will get drawing power related to trade receivable. Total drawing power. That's it. This is how you should calculate. Easy or not? That's it. Now, May 25 was one of the toughest attempt. And you know what? One student 3-4 strategy followed and scored 89 in audit. I'm telling you, 95 marks came here, 3-4 strategy. So perfection, if you're writing perfect answer, you'll get the marks. Perfection is important. Now, next. Now look at what are the points we need to verify in controls. What are the points you should verify in substantive and recoverability. These three I will give it to you for self-study. You can easily understand because I told you already there. Now in this one point you need to know. Review problem accounts using SMA1, SMA2 list. What is SMA account? You know, assets, loans and advances we will classify into two types. Regular account, non-performing. Regular means standard. Standard is classified into SMA0, SMA1, SMA2. Suppose a customer defaulted. Today due date is there. And today his bank account does not have enough fund. So bank could not debit the EMI. The very next day, it turns into SMA0. Up to 30 days. First 30 days of default, SMA0. 31st day to 60th day, SMA1. 61st day to 90th day, SMA2. 91st day, NPA. So SMA1, SMA2, it's an account where you need to specially mention about it. Focus on it. Banks will follow up continuously. And guess what? One question is there in the question bank on determining SMA1, SMA2 practically. Where they tell you, for example, today due date is there. And he didn't pay on due date today. Generally what we think, the next day default will start, we will think. But default will start on the same day. Because bank will have a day end process. At the end of the day, evening at 4:35 o'clock, one systems are getting closed. One systems are getting closed for that particular day, day end accounting, day end closing process. Default started on the same day. It's not on the next day. Generally what do we think? Due date plus 1 day. Next day default will start. But for banks, on the same day default will start. Because the moment system closes on the same day, it will show default from the very day on the due date itself. As on the closing time, as on the closing process, bank has not received EMI, then the system will show default from today itself. That question, one question is there in question mark. That's it. Clear all of you? Next. Next, valuation of, yes, verification of asset classification, income recognition. First of all, advances has to be classified based on RBI norms, standard, substandard, doubtful, D1, D2, D3, and then loss asset. Income is recognized only based on actual recovery. For NPA loans, we should recognize income only on actual. See that provisions are made on doubtful recovery. So auditor must be familiarized with himself regarding latest RBI circular. See that minimum provisioning requirements are only minimum. You can have a higher provisioning, no problem at all. Yes or no? And statutory central auditor, branch auditor have to verify prudential norms on the assets, all that, whatever norms which RBI given, see whether they are properly applied or not. That's it. Then classification and provision. See that bank has an automated system for classifying advances without manual intervention. Today banks classifying advances automatically. Ensure classification is appropriate where there is a recovery threat. Ensure secured and unsecured portions are correctly separated. Compare the date of NPA mentioned in current statement with the previous statement. Inquire reasons. Once an asset become NPA, the date of becoming NPA will be constant. Whether it's a current year statement, current year loan statement, or next year loan statement, date of NPA will be constant. If at all date of NPA changed, why it has been changed? Because in between some upgradation might have happened. If at all upgraded, is it properly done or not? You should check. Then next one, I'll come back to that later. Drawing power calculation. Ensure drawing power is calculated based on bank credit policy, and net value of debtors only. We have to consider sundry creditors and stock covered under letter of guarantees. Letter of credit and letter of guarantees we should eliminate. Total stock value minus LC minus guarantee minus creditor, you remove it, then you will get paid stock value. Only paid stock value you should consider. Next, review stock audit and book debts. Where advances exceed a stipulated limit. In CA Inter, you might have seen a stock audit will be conducted if the funded exposure is more than 5 crore. Yes or no? Special focus must be given on comments made by stat auditor. And for construction, work in progress must be on a consistent manner, and mobilization advances shall be reduced while calculating drawing power. For construction companies, they get some advances. These advances are called as simply mobilization advances. We should reduce it while calculating drawing power. Simple. A customer have existing loans, reduce that, then balance loan is eligible to give. We will be giving him loan not based on his gross eligibility, based on his net eligibility. Gross minus existing loans is equal to net eligibility. That's it. Consortium. Consortium means group of banks put together lending. In case of consortium, drawing power of each and every bank will be decided by lead bank. Syndicate loans, we call them as what? A syndicate loans. Next, accounts with temporary deficiencies. Simple. Once you take a OD or cash credit, once in 3 months, quarterly, you have to file a statement with the bank. Suppose a customer missed to file a statement. Do you classify that as NPA directly? It's an account with a temporary deficiency. It's a defect. Deficiency means a defect. Accounts with a temporary deficiency should not be classified as NPA. Rather, what bank has to do? They have to follow up with the customer, get the latest stock statement. So ensure stock statements used are not older than 3 months. The outstanding amount shall be treated as irregular. Remember, it's irregular, not NPA. If the DB is calculated based on older stock statement, which is older than 3 months. Irregular means what? Bank internal audit department, concurrent people, no, they'll be continuously pushing the manager, hey, get latest stock statement. That's irregular means. Able to understand. Next, review of limits. Remember I told you, once a loan is sanctioned, that limit has to be reviewed once in a year. Pakka. Within what time? Once in a year I will review. I agree. Once in a year is periodicity of the review. What is the due date for review? 180 days from the due date of the review. Okay, for regular loan, regular limit. Sometimes you'll give temporarily extra limit, ad hoc limit we call it as. That ad hoc limit has to be reviewed, must and should within 180 days from date of sanction. Okay, that's it. Further, remember, there should not be any frequent ad hoc limit. Array, I gave ad hoc limit, over, 90 days over, again I took it back. Again I gave fresh ad hoc limit, again I took it back. That should not be there. Frequent, it should not be there. And there should not be a short review. The review should be detailed. Next. Remember, NPA classification is applicable borrower wise but not facility wise. A single same customer, I gave him housing loan, I gave him car loan, I gave him personal loan, and one loan he is not repaying. It doesn't matter which loan. I gave him 100 crore totally and he stopped repaying one of it. some amount. That's it. Today he defaulted this. Tomorrow he'll default remaining also. So if one account of the customer became NPA, remaining accounts also will become NPA. Accordingly, provisioning, asset classifications will be equally applicable. Are you clear? Then I'll come back to that later. Provisioning for standard assets. First of all, we generally think provision is required only for NPS, but standard assets also provisioning is required. But guess what? In banks, no, there is no fixed provision for standard assets. For housing loans, the provisioning is different. For different other loans, provisioning is different. For work company, commercial loans, provisioning, NPS, standard asset provisioning is different. So standard asset provisions are, different sectors have different provisioning rates. This in one of the exam they have asked this as an MCQ. Next, restructured. What is a restructured advance? Restructuring means we are making adjustments or offers or concession to a borrower facing financial difficulties. Nothing but modification of terms and conditions. Simple. What are the points which auditor has to check? Verify compliance with RBI restructuring. Bank cannot restructure with retrospective effect. Customer already defaulted. NPA already became doubtful category 1 already. Now you restructure and then classify under substandard. No, not permitted. The moment you apply for restructuring, the asset comes into substandard. Yes or no? Accounts are downgraded from standard to substandard upon restructuring. Suppose if the asset is already in an NPA category, substandard D1, D2, D3 or loss asset, and now it is restructured, it remains in the same category. That's what NPS will remain in same category means. Okay, and that's it. Then upgradation. By the way, all these points 4 marks question. Yes or no? Provisioning for standard asset 4 marks question. Then borrower wise classification, review of limits, accounts with temporary limit, these 3 put together a 5 marks question. Drawing power, a 5 marks question. Understood how they can ask? And all of this has been tested earlier. Next, further upgradation. Remember I told you once a loan become NPA, D1 or D2 or substandard. Now you want to treat it as standard. You can, no problem. For that, upgradation guidelines are given. 2, borrower know whatever pending overdue amount is there with interest, penal interest, everything, he should repay it. Once he repay entire interest, penal interest, everything, all the pending EMIs, everything, and properly he wanted to upgrade as per the rules of the bank, then the bank can upgrade it. That's it. So RBI guidelines are followed for upgrading NPA to standard. Overdue portion must be fully recovered before upgrading. There is a possibility recoveries may be made after cutoff date, but accounts still be upgraded based on balance sheet date. Check for it. Sometimes the customer may not pay as on 31st March, but as on 31st March he might have sent an upgradation request. In 5th April he repaid the full amount and then upgraded. Still the bank can classify on 31st March as a regular account. No problem at all. Subsequent event concept. This point is there in question bank. AS4 linked one question is there in question bank. Accounting standard 4. By the way, for banks, know which standards are applicable. Accounting standards. India's does not apply to banks. Next, sale and purchase of NPA. Generally asset reconstruction companies buy NPS. Banks also can buy NPS. Banks will sell NPA. Simple. I have given a loan to one customer, 10 crore housing loan. Outstanding amount 8 crore is there. Now the customer is not repaying and house value is almost some 10-15 crore is there. But I don't want to take a headache of auctioning everything, all that. There is a ready-made one company is there. They told me, how much I have to recover loan? 8 crore. They told me, I will pay you 6 crore upfront. Okay, you transfer me that. Sale of actionable claim. What is it generally? Sale of actionable claim. Okay, I will sell this my housing loan. It's nothing but similar to factoring concept. In working capital management in CA Inter you might have learned factoring concept. So similar to that. Okay, so I sell my housing loan to the another bank. So now that bank will recover from the customer. They paid me upfront 6 crore. I already outstanding amount 8 crore, amount received 6 crore. I will set off. That's a loss on sale of NPA. I will transfer to P&L account. Sometimes I will make a profit on sale of NPA. I will make sometimes profit on sale of NPA. By the way, here loss or profit is computed based on net book value. I'm sorry, not outstanding loan. Amount received minus net book value. What do you mean by net book value? Outstanding loan minus provision is equal to net book value. Be careful. Don't calculate with outstanding amount. Suppose a customer, I have given 8 crore loan. Regarding to it, 5 crore provision is already made. So net book value of the loan amount is how much? 3. Now I sold it for 5 crore. Yes or no? 2 crore is the profit. What should be the treatment of profit on sale of NPA? You can use it to set off loss on sale of NPS. Profit on sale of NPA can be used to set off loss on sale of NPA, and balance, if at all there, you can transfer to P&L account, but don't use it for reversing the provision. Don't use it for setting off of provision. No, not permitted. You should not reverse the provision. Are you clear? Rather you will write off it to P&L account already. Hello? Yes or no? So if there is any profit on sale of NPA, I should not reverse the provision. Rather that profit will be used by me to use it for sale, loss on sale of other NPA. That's it. Now suppose now look at, I'm selling it now. Net book value is 3 crore. I sold it for 5 crore. How net book value is computed? 8 crore outstanding loan minus 5 crore provision is equal to 3 crore net book value, which I sold it to another bank at 5 crore. Now the other bank is purchasing. Now they will account NPA at purchase price in their books of accounts, 5 crore. Now tomorrow they will recover from customer some amount. No, if they recover only 4 crores, that's a loss. Transfer to P&L. If they recover 6 crore from the customer, ultimately that's a profit 1 crore. They'll transfer to P&L account. That's it. So sale of NPA, purchase of NPA. Most important point. A bank can sell NPA only for a loan which is outstanding and became NPA in their books for more than 2 years. I cannot sell a new loan. I can only sell a bad loan. That too, it must be a bad loan from past 2 years in my books. In my books, it became NPA. It must be in D2 category or D1 category. That's what they're saying indirectly. So it must be there in my book, in the bank books of accounts. For 2 years, NPA should have been carried. Then only you can sell it. On this, one question is there in the question bank. They'll give you date of becoming NPA, date of sale. Which NPAs a bank can sell, which NPAs bank cannot sell. Question bank, one question is there. Are you clear? That's it. Then we have few more points which are CA interrelated points. Government guaranteed advance, agricultural advances, okay, advances regularized, accounts regularized near balance sheet date, okay. These are CA inter topics. These three I recommend you to once watch my CA inter audit of banks marathon. That will really help you. That is important for you. It is just a 40 minutes topic or less than 1 hour. That will give you a very good insight once again regarding entire bank audit, because I showed you drawing power. One question was asked for 2 marks. Hardly it will take half an hour to 45 minutes to watch my CA inter marathon. Just watch there. Okay, that's it. With this, advances, one of the major chunk in the bank audit is completed. Okay, audit of advances, easy or not? Next, fixed assets, not a big issue. It's easy, a routine point. I'm not covering it. So I will cover something which is exclusive to banks. Audit of other assets. In that, important is stationery and stamp, non-banking asset acquired in satisfaction of claims. That's it. Miscellaneous debit balance to government account. These are the 3 other assets which are very important. Now look at State Bank of India. Now you know, right, other assets will be there. No, after fixed asset you will get other assets. Look at this. What are the other assets? Intra-office adjustments. You can see in the book. You will find like this only. Other assets breakup. Intra-office adjustments, first point. Interbank adjustment, interest accrued, tax paid, deferred tax asset, stationery and stamp, non-banking asset acquired in satisfaction of claims, deposits with various institutions, derivatives, goodwill and consolidation, and others. Same. Each of these items we have how to do audit. Understood? So in that we are going to discuss about stationery and stamp, non-banking asset, and miscellaneous debit balance to government account. Probably it will be there in others. Okay. Now look at. So stationery and stamp. You know what? Banks will purchase bulk stationery. Stationery means what? You go to any bank, deposit slips will be there, withdrawal slips will be there, forms. Yes or no? Bulk. They order it in bulk, and they will maintain one. See, right? Stores and spares. When they purchase it in bulk, they show it as an inventory. Yes or no? As an asset. Same here also. They show it as an inventory. Other assets, no, it will be there. Okay. So they show it as an inventory. And whenever a branch is asking, generally at every city, one treasury unit will be there. One stores unit will be there, stores department. So they will be sending all these forms whenever the branch wants. Branch will not have full-fledged stock with them. So they will maintain inventory sheets. So that we need to audit. So ensure stationery and stamps include only exceptional items of purchase. Only bulk purchases will be considered here. Normal, like for example, manager want to buy one pen. So used petty cash and then bought the pen. Will that be catalyzed? Huh? No. Evaluate existence, effectiveness, continuous of internal control. Most important, controls on this inventory. Check it out. And see, internal control, adequacy over stationery in LFAR. Evaluate and report in LFAR. You need to report in LFAR regarding adequacy of controls. Physically verify stationery stamps at year end and check for any shortages. And see that cost of stationery consumed during the year is properly charged to P&L based on consumption records. Clear? Next, non-banking asset acquired in satisfaction of claim. May 25 exam. They have asked it. Ensure non-banking assets are acquired in satisfaction of debt and are intended for disposal. Verify assets with documentary proof, settlement term, court order, all that. Check ownership is now transferred in the name of the bank. Generally, bank will have a POA. Okay. Then ensure that assets are recorded at lower of net book value or NRV. Remember MCQ. Lower of outstanding loan or net NRV. Wrong. Lower of net book value or NRV. What do you mean by net book value, ma? Outstanding loan minus provisioning is equal to net book value. Yes. And see that if there is any dispute, is there contingent liability, and ensure compliance with section 9. What is section 9 says? 7 years requirement. The non-banking asset acquired in satisfaction of claim, it can be carried in the bank books of accounts and balance sheet for maximum of 7 years, not more than that. Within 7 years, they need to dispose it and then recover their loan. Are you clear? Next. Miscellaneous debit balance on government account. What is this? You know, sometimes we pay pension to various employees of government, but government had a tie-up with this SBI. You look on every month first 1 lakh employees list. My employees who retired from my bank. Okay, State Bank of India gave a list to State Bank of India itself. Okay, I mean, or else central government gave a list to State Bank of India. Every month first date you transfer the amount to them. This much pension for each of them. I'll give a list of it. You know, for that government will have a bank account with State Bank of India. Okay, in that they will have a lump sum money deposit. So the State Bank of India, whenever first date comes, they will debit this and then transfer to various customers. Sometimes what happens is this balance will not be sufficient. Still bank will process the payment because it's a government guaranteed. They'll process the payment. Now bank paid extra amount than what is there in the balance. It's like a loan given to government, but it's not a proper loan also. It's a temporary. That's a miscellaneous debit balance in government account. Are you getting it? Now verify aging statement. Okay, examine recoverability of old outstanding items. Ensure reimbursements have been made by branch as per terms and conditions. So whenever I pay to any pensioner, I will claim reimbursement from the government. So they need to pay me. And if they're not reimbursing me, outstanding is there from long period of time, I will check into it. Then I will ensure net balance recoverable head office should be taken as per aging analysis. Verify provisions are needed due to lack of confirmation or justification for the old balance. If at all old balance is there, nobody is confirming, no justification, ask them to create a provision and see that reasons are recorded, reviewed for major variances and compared with previous year. Analytical procedure. That's it. Clear, all of you? See, every point I'm telling you briefly, clearly what exactly it is dealing with. With that understanding, you read again, it will be easy for you. Confident? That's it. Then in capital and liabilities, verification of capital and liabilities. In this, nothing is important. I'll tell you what is important, only that you see. Capital requirement adequacy ratio. What is it? 9% ongoing basis. What is the formula for capital requirement adequacy ratio? You know, take right now how much capital is there? Tier 1 plus Tier 2. Take eligible capital fund, Tier 1 plus Tier 2 divided by risk weighted assets you take. Yes or no? Into 100 if you put some percentage you will get right. That should be 9 minimum. That's it. Able to understand? Next, audit of reserves and surplus, not a big deal. Now current audit procedures for deposits, current and savings account. 1 minute. Yeah, we'll continue. What is the audit procedure for deposits? So current and savings account. Generally banks, you know, they accept deposits. How? Through current account or through savings account. Check KYC compliance. For any new accounts opened during the year, as a branch bank auditor, you should check KYC whether KYC norms are complied or not. Ensure savings accounts are not provided to any others except individual HF and then approved institution. Check interest calculation. See that no interest is paid on current accounts. Get a balance confirmation on a sampling basis with the customer. Debit balance in current account shall be shown under advance. Yes or no? In current account, debit balance means what? Overdraft. Overdraft is a loan given, so it should come under advances. And check RBI compliance with respect to inoperative and dormant account. And you know what? If at all an inoperative account is revived, and if at all in that, if there is a significant reduction in the balance, last year the account was non-operative. This year when I see that non-operative account, the balance withdrawn, there is an amount withdrawn in that significantly. It's an inoperative account. How the customer withdrawn? Review it for authorization. Clear? Next. Inoperative accounts are those accounts where there are no transaction for over 2 years consecutively. That's it. That account is called as what? Inoperative account. For money laundering and all, this is very important. I mean, for money laundering verification. Okay, that's it. Then term deposits, nothing important. Deposits in FCNR, nothing important. Audit of borrowings, you can manage it. Bills payable not important. Contingent liabilities. In one of the exam 2024 May, they asked a question on contingent liabilities. 2023 probably. Okay, in one of the attempt, what they asked, see here, you need to ensure that all the contingent liabilities are accounted. How do you ensure? You need to get a management representation. So what you need to get representation? Get a representation that all off balance sheet transactions have been properly accounted. You know what happened in Punjab National Bank? Banks, there is something called Swift software. There's a software called Swift. That Swift is not integrated with core banking solution. That fact is identified in 2018 when there is a rotation of duty happened. Why rotation of duty control is important? Nirav Modi and company colluded with bank. Letter of credit will be there. Suppose if you want to import some goods from outside India, bank has to give an LC. Okay, so when they give an LC, I can import it. So LC will be communicated through Swift to the other bank. So one of the bank employee has an access to Swift account. He has access to password, everything, and he's an authorized person also. He sent a communication to the foreign bank. Yeah, he's a trustworthy client. You can send him this much credit. And they started. Now, whenever you give LCs, you need to record it in banking software. They record it in Swift. Auditors also ignore to verify the Swift. Okay, so it is missed to integrate with core banking solution. And it was not integrated for more than 10 years like this. And for more than 10 years, every time they get a new LC and they do import goods without repaying it. Banks also could not identify this because it was not reflected in books of accounts and core banking system. Suddenly, all these banks started, when the other bank want to withdraw money, this fellow will come and get a new LC and then get the money and then pay them. That's how they did rotation of funds through this. Suddenly, employee changed here. Rotation of duty. Now, this Nirav Modi team came and asked, sir, I want LC. Sir, you need to pay some security here, so only then LC will be released. No, we are taking from so many years. LCs were given just like that. Then this fellow understood, and then he opened and saw so many pending LCs were there from past 10 years with different banks. Then they discovered the fraud is 18,000 crore 2018. Okay, I lost 5 lakhs in that time. I invested in futures that time only. First of all, I'm not expert in that. So what are the based on the basic knowledge which I have, I've invested. I'm like very strong. One day it's okay, fine, gone is gone. Okay, fine, let me focus on next thing. So that's it. I didn't sit and cry, but still. So that was the experience. So this is what happened exactly. I bought future. Since price is reducing, generally what we do averaging. Reducing, option price, all that. So severity of the fraud, I thought maybe 3-4 days RBI, everything is there. Okay, fine, I thought. Then I did averaging. Total I invested 7 to 8 lakhs. After losing 5 lakhs margin money, then I recovered balance 3 lakhs. After investing 8 lakhs. And I withdrawn 3 lakhs. So close to 4.9 lakh. And out of that 8 lakhs, 5 lakhs is from a borrowed fund. From Indus India Bank. Pre-approved loan I got. But luckily I'm earning some salary that time. So I could able to manage it. That's it. I paid EMI for that until 2023 or 2022. That's it. For 5 years I paid EMI. I mean, sometimes happens. Okay, next. Then after, see, we are not experts. No, we all always with lack of knowledge. We don't understand market movement, everything. Stock market is not about technical analysis. It's about behavior analysis. Stock market is all about behavior. You should think beyond a step above. So, because he will think you'll take one position and then execute. And you should think what position he is expecting so that you should take an opposite position. And he'll be thinking like that. Understood? That goes on. In Telugu, one movie is there. Love for Dad. Nannaku premato. Okay. Appa mela pasam. So fine. So there is a movie like that. In that one movie scene will be there. Where that's correct, dane? Fine. So there is a scene in that. The villain actually, whenever he is dealing with anybody, he'll have 2 balls, one gold ball, one with silver inside. So when you open the cap, so he'll have a gold and silver. Then he'll throw 2 balls and ask him to pick up. Then and he will select, my ball is this. Okay. So then the other party, the hero now will first, sir, give me your phone. Then he'll just switch on the camera and then he'll record it. You throw this particular ball, assuming that I will pick up the other ball. And you assess people into 3 categories. A fool, a clever, extraordinary clever, intelligent. I am not these 3 categories. I am the 4th category. I think like above intelligent category person. When you throw this particular ball, I understood you already assessed me as third category, but don't you know I'm a fourth category? And then he will explain that entire, his thought process of throwing that particular ball, and then he'll pick up the other ball and then show it's a goal, and he won the deal. Such a fantastic, this thing. By the way, why I went there? No. What? Margin loss. So what is it? Huh? Okay, fine. Anyhow, look at this. So, of the balance sheet transactions have been properly accounted. Whether of the balance sheet items were properly accounted. Off balance sheet transactions supported by underlying documents. Year-end contingent liabilities must be disclosed. There are no real liabilities which require provisioning and are included in contingent liabilities. A real liability which require provisioning should not be included in contingent. Estimated amount of financial impact of contingent liability shall be based on best estimate. Whenever you are showing contingent liability, you should also show estimated financial impact. No, that should be based on best estimate. And review guarantees issued on behalf of directors for legal compliance. See that management justifies non-disclosure of remote liabilities. For all this, you need to get a management representation. Now, if they ask a management representation, you should have these points. Sometimes they'll ask you, what is the audit procedure for contingent liabilities? You should write this answer. So what is the audit procedure? There exists a system for non-funded based or ad hoc credit facilities to regular customers. Generally, bank will give ad hoc credit facilities, non-funded facilities, nothing but guarantees, LOCs, only to regular customers. Okay, constituent means customer. Ensure internal control for giving rise to contingent liabilities or proper authorization. Nothing but see that controls are there on LCs who are issuing letter of credits. No, there is a control. Remember, LOC means two meanings were there: letter of credit, letter of comfort. Letter of credit is binding on the bank. Letter of comfort will not bind generally. Okay, anybody, for example, a holding company is there, a subsidiary company, newly incorporated subsidiary company is there. They want to buy goods from one vendor on credit, but the vendor is skeptical about giving credit to this company because there is no history for the credit. Now, this company told the vendor, see, I'm subsidiary of this company only. Then vendor asked the subsidiary company, do one thing, tell your holding company to just give a message to them that they know you. Yes or no? And you are a trustworthy party. Not a guarantee. Just I want a satisfaction that I'm not risking. Okay, that's letter of comfort, which will not bind. Able to understand? Next, in case of letter of credit for import of goods, verify payment is made to the supplier only based on shipping documents and in conformity with letter of credit. In one of the exams, they tested this with bill of lading. Shipping document they removed and then tested with bill of lading in MCQ. So payment to overseas supplier in case of an import will be always based on shipping. The moment he shipped, we have to make payment. Bill of lading means what? Ship reached in India and then goods were landed in India. That's bill of lading. Until then, he will not wait. Once he shipped, done. Duty is done. Yes or no? The shipmaster will give a confirmation that yes, goods were loaded as per specifications. Once shipmaster give specifications, we will understand this in customs. Yes or no? That's it. And see that bank maintains adequate records. Verify internal controls that proper contingent liabilities are identified and recorded. Examine comfort letters issued by bank and verify whether bank has extended non-funded facility to other than regular customer. In such a case, see that bank is verifying customer's financial position correctly. That's it. Claims against banks not acknowledged as debt. By the way, under contingent liabilities, there are various types. Claims against bank, outstanding forward exchange, guarantees given on behalf of the bank, acceptances and endorsements, other contingent liability. Then apart from that, on the face of balance sheet, bank will also show bills of collection. Look at the bank balance sheet once, you will understand. On the face of balance sheet, contingent liability, bills per collection. Now what are contingent liabilities? 12th schedule will be there. Inside that, claims against bank not acknowledged as debt, acceptances, endorsements, all that list will come. Now each of it, how to audit, that is there. Understood? Look at guarantees given on behalf of constituents. If at all a bank is giving a guarantee, see internal controls over guarantee issuance. See who authorized it, what is the limit sanction, how much, whether bank has taken margin security from the customer. Unused guarantee form, olden days. Yes or no? Nowadays guarantees are given through electronic, not all these forms. Ensure stock of forms are physically verified. This syllabus is same even when my super senior studied. The points are same. In my syllabus also the same points were there, but I didn't study. That's a different story. Okay, so the same syllabus, the same point, bank audit is there from past 25 years. These are the points which are there before 25 years. Next, verify guarantee register for expired guarantee and see proper marking of. Verify guarantee validity using guarantee letter, counter guarantees from the customer. Check register with list of outstanding guarantees and see that they are included in this head. Examine expired guarantees are not included in this head. Verify security held as margin and consider provision. Consider provisions of accounting standard 29. That's it. Only that is important, ma. Bills per collection. What is bills per collection? You know, sometimes my customer, who has sold goods to another customer, would have raised a bill on the another customer, and that bill he want collection. So he'll come and submit to me the bill. I'll ask him, what do you want from this bill? You just want me to collect or you want me to discount it? If at all he asks me to discount it, no, based on the credit worthiness of the buyer, I will allow discounting and I'll pay at amount early with some interest amount cutting. Yes or no? The interest amount which we cut, no, that's called discount. Whereas collection means, suppose he told me, I don't want discounting and all, you just collect me on due date. Don't worry, 60 days time limit is there. At 60th day, I will go and follow with the buyer and then collect and then give it to you the money. Now, on bills per collection, what bank will get? Commission. That commission will be recognized as income only when the bill is actually collected and then credited to customer account. That's it. That's the point which is there. Clear? Main points of audit of advances and assets and liabilities, main points we covered. Not everything I discussed, but main points have discussed. Clear? That's it. Fine. So we'll take a small break and then get back. Another half an hour I will discuss. Remaining topics I'll finish it off quickly. Only important topics I'm finishing. Okay, only important topics I'm studying. I'm revising that important topics. First you finish this when you're revising later. After that, if at all you have time, then remaining points you focus on. Okay, that's it. Yeah, let's continue the discussion of bank audit. Now we have few more topics to be discussed. One is regarding audit report. 1 minute. Yeah. So, for nationalized banks, the auditor should state or nothing but should report the following to central government. These items will come under report on legal and regulatory requirements. You remember in audit report, there is a section called report on other legal and regulatory requirement. Below that, the auditor has to report this. 1. Whether balance sheet is true and fair. Whether P&L account true and fair. Apart from that, there are 4 more matters. 1. Did he obtain enough information and explanation and is it satisfactory? Whether transactions of the bank are within the powers of the bank. Have you received from offices and branches returns, summary data from branches and offices? Have you received it and are they adequate for audit? Any other matter auditor consider which he wanted to bring it to the attention of central government. So as per central government, through RBI circular, the auditor has to report on these matters. In case of nationalized banks, you will find reporting on all these matters. You will find reporting in State Bank of India, other matter, report on other legal and regulatory requirement. Below that you will find. Remember, for banks, except Caro, 143 reporting requirements also apply. 143(1), 6 inquiries you need to make. 143 subsection 3, 16 inquiries, 16 matters you need to state whether positive or negative, like that. Okay, that's it. Then what is the format? Same 700 format. And in the other matter paragraph, you need to disclose unaudited branches with advances, deposit, income, interest expenditure, how much. And by the way, Caro does not apply to a banking company. Then further, a bank has to submit the auditors of a bank has to submit long form audit report, which is applicable for all types of banks. LFAR for branch auditor is a questionnaire covering cash and balances with banks, and branch auditor will submit LFAR to central auditor. Then consolidation of LFAR is done at head office by central auditor, and LFAR should be placed before audit committee of the bank after examination, indicating what are the actions and all to be taken. And maximum due date, the board of director, once auditor submit LFAR, on that he might have given some comments, negative things, all that. On that, board of directors have to give their explanation and then submit it to the RBI within 60 days of submission of LFAR by stat auditor. In MCQ, they can ask you this: 60 days from the end of the financial year? No. 60 days from the date of submission of long form audit report by auditor to the bank. Then the directors of the bank has to submit this to the central government, nothing but RBI. Clear? Okay, next. Now, apart from audit report, central auditors has to issue some reports and certificates. Now, what are the additional reports and certificates which central auditor has to give? Simple. Report on adequacy and operating effectiveness of IFCO for long form audit report, report on compliance with SLR requirement, report on treasury operations, report on IRAC norms. IRAC means what? Income recognition, asset classification and provisioning norms. Report on serious irregularities and 143.12, fraud identified for more than 1 crore. You need to give a certificate of compliance on prudential norms. You need to give a certificate on compliance with recommendations of Ghosh and Jilani Committee. You need to give a report on adverse credit deposit ratio in rural areas. In one of the exam, no, this deposit what they removed and then they put lending in MCQ. Credit means lending. Lending to lending ratio, that's not correct. Credit to deposit ratio, that to where? Rural areas, not urban areas. So you need to give a certificate on credit deposit ratio in rural areas, and you need to give a certificate on corporate governance for listed banks. That's it. So any 5 points you have to write. Then coming to concurrent audit. Now the scope of concurrent audit, 4 marks question they can ask. The scope of concurrent audit for the whole bank is decided by bank's internal audit department. The bank internal audit department is also called as Central Inspection and Audit Department, after they consult audit committee and board of directors. High risk transaction with large financial implication should be prioritized. Random transaction testing will also be done for high value. The detailed scope will be approved by audit committee and board of directors. Banks have audit manual with detailed instructions for conducting the concurrent audit. Important question, and I'm telling you what is important for exam. Then what are the coverage in concurrent audit? So many areas will cover. One of the important area is what? Advances. Same. You know, what are the points that you need to verify in advances? You remember any 10 points you write, 5 will match. Okay, there is no special new point here, so nothing to worry. Next, housekeeping. What is housekeeping here? In banks, you know, like floor cleaning, everything should be done, right? Not that. So housekeeping means bank forms, registers they'll maintain, no? Within the bank, every day they need to do certain control activities within the bank. Okay, internally to the branch. Every day and physical cash counting. Day and forms. How many forms we have? How many stationary items opening? How many were closing? How many were consumed? Tallying with the consumption register within the branch. I'm telling you, that kind of certain daily tasks that they need to do, daily activities, some controls they need to execute, and those activities are called as what? Housekeeping. Are you clear? That's it. So verify proper maintenance and balancing of accounts, ledgers, registers, including clean cash. See the timely reconciliation of entries is happening. Conduct a percentage check. Suppose if a student do not study this, and if at all in bank audit housekeeping question came, he will write 5-6 points. Yes or no? Sanitization, everything he'll start writing. Yes or no? Next. So even when I saw for the first time without looking at the answer, yeah, when I was thinking that only, you know, housekeeping means. Okay, later when I saw, oh fine, okay, they mean to internally say internally maintaining the controls. Internally every day they need to do certain controls, daily controls. So those controls, whether they are following or not, that is called housekeeping. Check transactions of staff accounts. Examine daybook to verify how the differences in clearings are adjusted. Verify checks returned or bills returned register and reasons why they were returned. Check inward and outward remittances, DDs, money transfer, telegraphic transfers, all that. So in bank, no, there is something called clearings. Controls, there is a topic called general internal controls in the bank, right? Inside that, one of the point, loans and advances we saw. One of the point is credit card. Another point is clearings. Clearings are 2 types: inward clearance, outward clearance. Simple. If my bank has to clear the check, that's an inward clearance. I cannot clear the check because that's not my bank's related check. That's some other bank related check. Now I will send it to clear outward. So that's outward clearing. Simple. If for example, I'm an SBI customer, and one of my customer has received ICICI check to deposit in his bank account. Now my customer, no, his bank account is SBI, no, he came to me and then gave me ICICI, sir, please credit to my account. Oh, ICICI, I can't clear it. I will send it to clearing house. I will scan it through CTS, check truncation system. I will scan it and then send it to clearing house. Clearing house will send to concerned branch of ICICI bank, and once they will approve it, funds will be credited to the customer account. Now here the check is processed and cleared by whom? ICICI bank. Suppose ICICI bank has received, for me outward clearance, for them inward clearance. That's it, logic over. Next, clear everyone. Next, appointment. Bank has a choice. Concurrent auditor can be internal inspection staff or it can be external audit firm. But within the same branch, employees should not do concurrent audit. So concurrent audit team, if at all you are taking internal inspection staff, should be from different branch who does not have any access to this branch operations. Then internal staff must be experienced. Staff should be independent of the branch being audited. And audit committee decides terms of appointment. And remember, the concurrent auditor cannot be appointed for more than 5 years for the entire bank. For that branch, you cannot do concurrent audit for more than 3 years. If at all you are appointing external audit firm, maximum for how many years they can appoint, they can act as a concurrent auditor, 5. After 5 years, you should remove him. Rotation. For the same branch, how many years he can do concurrent audit? 3. That's it. Then reporting systems, not important. Audit committee, nothing is there in this. Okay. So then we have general internal controls in a bank. General internal controls in a bank. What's the page number? Okay, CRR, SLR is also there. General internal controls. Once these two are completed, we can wind up this particular chapter. Okay. Important questions, mostly whatever is important from exam point of view, I'm covering. Yes. Now look at general internal controls. What are the controls a bank should implement related to credit card? Simple, you can't give a credit card without screening. So you need to screen effectively. Means you need to assess the credit worthiness of the customer. Strict control should be there on issuance of cards and all. No, physical stock of cards will be there. No, you need to maintain a control strictly. See, nowadays, no, cards are dummy. Nothing. Only when a customer applied for it, the card will be activated and all that customer name, everything will be labeled on the card. Okay. So olden days, no, they used to have a card where there won't be name printing in nothing. Olden days. Merchant verification of available limit. So obviously, when you swipe the credit card, no, it will go for checking to the server. And only when the card has a balance, then it will approve the transaction. Yes or no? Sometimes if the balance is not there, it will decline. Next, regular reporting from merchants for settlements accepted by them. Regular reporting should be there. Reimbursement of merchants shall be made only after verification. Ensure statement are sent, to the customers regularly. Monitor overdue payment and stop credit. Periodic review of credit card holder account for limit revision and provisioning for doubtful amounts. Credit cards, I hope you know, right? 50 days credit period you get free. Interest free credit period, 50 days. Credit cards, they'll have, billing period. Let us assume billing period is first to 1 to 30. So on first date of the month to 30th day, within this 30 days, when I swipe credit card and then spend money, I don't have to pay immediately. Next month, 15th, I will get a bill. 15th date I'll get. If it is 1 to 30, then bill will be generated after 15 days or after 10 days. Getting it? Or else the very next date will generate. Immediately after billing cycle will generate. Due date will be for 15 to 20 days. Due date will be for 15 to 20 days. So whatever I consumed, whatever the spends I have in April month, I have to pay to the bank by May 15 only. Which means if May 15 or May 20, if at all I'm spending on 1st of April, I have a credit period of 50 days. Interest free. So how are the banks giving interest free credit period? Because they are not collecting interest from you. They are collecting interest indirectly from the merchant. And that is charged to you in the form of selling price. Understood? So you went and bought some garments, some shoes you bought, some 5,000 rupees you swiped. So the merchant will pay 100 rupees to the banker, 2%. So 2% for 50 days credit period, that to maximum in a worst scenario. A very good amount for the bank. 1% per month on an average, 12% rate of interest. Housing loan, for your information, rate of interest is 8 and of 9. 1% you are getting that, unsecured loan though it is, okay, the minimum 1% per month. If at all customer is swiping it on 30th April, 20 days only credit period is using, still is getting 2%. Bank is getting 2% interest for 20 days. The compounded rate will be 30%, 36% rate of interest per annum if you take it. So big. That's the lucrative point in credit cards. That's why they give points. They encourage credit cards. They market credit cards like anything. So they get commission, merchant commission they'll get. Commission on transactions. 1%, 2%, sometimes 3%, international payments, all that. Next. So that's about credit card. Then check clearing, check truncation system, which is used for quicker processes. And you know what? When a bank receive inward clearing, like when a bank receives check for clearing, where they have to clear, And if the check value is more than 5 lakhs, they need to call the customer and confirm, sir, whether is this a check you issued. Now banks are doing this even if it is more than 50,000. Sometimes what happens, some senior citizens and some people, to save their time, they'll write and put signatures also in the check, and the checkbook is lost. Somebody who have check leaves with sign, they'll put the amount and then send it. So that risk is there. That's why for higher value transactions checks, you always call the customer, get a confirmation orally, and then you process it. And verify signatures. Unpaid checks under outward clearing shall be sent to the customer. Suppose my customer, State Bank of India, he gave me ICICI Bank check. I sent to ICICI Bank. They said balance is not available, so check is written. No, I need to give it back to my customer. That's it. Clear. Next, cash controls. Cash must be kept in joint custody of 2 officers. Daily cash balance checking should be there. Yes or no? Which is missing in Lucky Bhaskar movie. Next, no access to cashier to the customer ledger account. I hope everyone knows that. It is there in Tamil also, no? It dubbed in Tamil also, no? Okay, fine. Then fine. So if those of you who don't know, that's a DQ, Dulquer Salman movie. It will be very fantastic movie. Watch it. Every middle class or below middle class can connect to. I am from below to below middle class earlier, so I can easily connect to. Fine. Cash receipts voucher. Signing off of cash receipt vouchers must be signed off by proper officer. Payment shall be made only after voucher has been authorized. High value cash transactions verified by higher officer. Excess cash will be remitted to treasury. Treasury is also called as currency chest. Banks will not keep huge amount of cash in there. Some 5 to 10 lakhs or 20 lakhs only they'll maintain. Excess beyond that, every branch will have a limit set by head office. As per that limit only they'll maintain. You want to go and withdraw 1 crore cash, they'll tell you, sir, one day time we need because we have to arrange the cash. Right now cash is not there. So that's it. Then what are general internal controls in a bank? Generally, irrespective of any area, generally how controls will be there? Segregation of duty, rotation of duty. Yes or no? Staff rotation will be there. Independent checks by another officer, nothing but segregation of duty. Daily proofing will be done for arithmetical accuracy. Bank forms will be stored securely. Mail will be opened only by responsible officer with signature verification. Mail means what? Simple. When the bank is receiving any couriers, copies and all from postal, courier agencies and all. Now that copy, that mail, whatever they receive, it should be opened by branch manager or it should be opened by somebody who has access to signature book. Because sometimes these includes checks which are sent for inward clearing, checks which are sent for outward clearing, like that checks might be there. So for that reason, a peon should not open. We have a question on this in illustration. S1, S2, S3 like that. Some peon related one question is there. Okay, in illustration. So read that. Insurance must be taken by the bank for fire theft, employee infidelity. Define financial powers of the officer. That's it. Up to 1 crore worth of loan, branch manager can authorize. Beyond 1 crore, zonal manager can authorize, has to authorize. Financial delegation powers. Surprise inspections of head office and branches by internal audit department to check irregularities. Any 5 points you can write. That's it. Then we have CRR SLR. There is my video on the YouTube 4 years back I uploaded on scam 1992. Okay, some half an hour. That's a 1 hour big video. First 20 minutes you watch. You will understand exactly what exactly happened in Harshad Mehta scam. Where CRR SLR requirement is there, right? Relating to this only, that scam is. So banks, they have to purchase securities. That time and all, digital central repository and all not there. Everything happens through manually. Through bank receipts and SGL note will be there. It will be happening through SGL note and bank receipts. Actually, we have investments audit. In the recent exam, investments audit was asked. In the Jan 26 exams, audit of investments of a bank, I think it was asked. Jan 26, descriptive question if you see. I think that only, So, bank. This is Jan 26 only. Yeah, there is a question on this. Yeah, correct. Investments only was tested in the recent Jan 26 exam. Investments related one. 4 members are responsible for investment functions. BRs have been outstanding for more than 8 months. First of all, BR concept is not there now. Okay, they're asking it. Okay, fine. Next. So like investment related point. Okay, I think in advances I covered, investments I missed. I'll cover investments. Once I finish CRR SLR, I'll cover investments because both are linked only. CRR SLR and investments. Okay. What is a CRR and what is an SLR? Every bank has to maintain liquidity reserve. Some 3% or 4% of the demand and time liability. DTL they call it as demand and time liability. So first compute DTL. On that some 3 or 4% you have to maintain directly as a balance with RBI. Another 18% of DTL you have to maintain it in liquid assets. See, first of all, bank is one accepting deposits. Every entity which is accepting deposits has to maintain liquid assets, just like NBFC, just like insurance company, just like a company which is normally accepting public deposits. So is bank. So bank has to maintain liquid assets. Yes or no? Now, just to meet unexpected, demand from depositors, unexpected cash demand from depositors. So liquidity has to be maintained. Now, bank, they have to file every week on Friday. They need to report. Bank has to report to RBI whether the CRR and SLR percentages are maintained. On every Friday, they will file a report. So on the Friday, generally when they are reporting, since they are reporting on that date, the position, on that date, generally the balance will tally for sure. You should verify which dates, not the Friday dates. You should verify non-Friday dates. So in the year, take 12 non-Friday dates, 12 months, 12 dates you take, which are on non-Fridays. Verify on that random day, ongoing basis, that position is maintained or not. The reserve is maintained or not. That's why you should check it on non-Friday dates. Understood? So you need to check 12 non-Friday dates in the fiscal year. The goal of SLR is to maintain liquid asset to handle sudden increase of demand from depositor. Now, and once you verify the resultant report of verification of CRR SLR, remember the auditor has to give a compliance report on SLR CRR. It is in addition to audit report to be given. So the resultant report will be sent to the top management and also to the RBI. To two of them we will send. Once we verify CRR SLR, whatever is our observation, we have to file it with the bank's top management. We have to file it with the Reserve Bank. So two reports you will find. One, in the reports, two reports you will give. One is regarding whether demand and time liability computation is correctly done. Then whether the liquid asset is maintained or not. So one report we should give on computation of DTL, which is the basis for computing liquid asset requirement. And check whether liquid asset is maintained or not. On that you give a separate report. Then what is the audit procedure for CRR and SLR? Okay, so when you are calculating demand and time liabilities, there are some liabilities which you should exclude it in DTL computation. There are some liabilities which you should include in DTL computation, and there are some exempted categories for DTL. There are some liabilities which will not be considered. Sir, what is the difference between liabilities not to be considered and liabilities to be excluded? These are permanently excluded always. These are temporary based on latest RBI circular. So what are the exempted categories for DTL computation? RBI from time to time refine the exemption list. So it will be changing. But inclusions and exclusions are permanent in nature. Now, what liabilities we should exclude? Which do not come under DTL, we should exclude. Demand and time liability means what? Borrowings made by the bank, nothing but. Borrowings means what? Acceptance from depositors. Any amount that I have to pay directly or indirectly to some customer, not to related parties like that. Then those liabilities are called as what? DTL. Apart from that, any other liability is there, we should exclude it. That's why paid up capital is excluded. Capital is excluded. Loans taken by this bank from other banks, excluded. Bills discounted, excluded. Net income tax provision, excluded. Like that, they have given some exclusions. MCQ can come. Which of them is excluded? Which of them is included? They'll ask an MCQ. That's a tough question. This will be tough only. Because first of all, why are they excluding? We don't know. Some points logic we can figure out. For some points, we don't even understand what is it exactly. They say nostro, vostro, all that. Nostro account. Yes or no? Yeah, I know the meaning. That's it. So nostro account is like Indian bank will have a bank account with a foreign bank at outside India, where the balance will be maintained in foreign currency. That's a nostro account. And tell me, a company which has a bank account with a bank, passbook will be there anyhow, but still company will maintain their own ledger, right? Same way for Nostro account, we maintain a ledger account right here. That's Nostro mirror account. What is it actually called as? Nostro mirror account. Now there is Vostro, VOSTRO, where a foreign bank will maintain a bank with Indian account, Indian bank. A mirror account they will also maintain, Vostro mirror account. That's it. Clear? Yeah, don't interpret that much. We don't have to be expert in bank audit. You want to become expert in bank audit, ICA is conducting certification course on bank audit for members. So once you qualify, you can attend it, no problem. Nothing, it will be boring sessions only, not like this. Okay, fine. Next, ensure correct inclusion of liabilities. Liabilities like net credit and branch adjustment account inclusions you try to remember, because a 5 marks question can come. Even exclusions also, any 5 points to it, a 5 marks question can come. Cash collateral received under collateral derivative transaction, foreign borrowings, adverse balance in Nostro mirror account, which are treated as liabilities to others. Reconciliation of Nostro account and pertaining to liabilities in Nostro, outstanding balance if it is there, included in the DTL liability. Interest accrued on deposit should be calculated on each reporting fortnight. That and all should be included in the liability. Exempted category, minimum eligible credit and long-term bonds. Verify incremental FCNR, NRE deposits which maturities over 3 years and above. Verify conversion of foreign currency HSN liabilities based on RBI reference rate. Affordable housing loans. All these must be exempted. Ignore from liabilities computation. Now, when you are taking any foreign currency borrowings, you need to convert them into Indian currency by using exchange rate given by FBIL. Financial Benchmarks India Limited. That's a company which will publish exchange rates to be followed by the banks. In RBI website, exchange rate will be there. That rate is decided by FBIL company. That's it. So that's regarding CRR SLR. Now, another important topic is investments. Audit of investments. Look at this. What auditor has to do? For investments, investments are nothing but for what? CRR SLR purpose only. Or investments also includes another type of investment for controlling interest. Yes or no? Now, the objective is existence, ownership, valuation. See that investments are existing, see that they are owned by the bank, and see that they are properly valued. Review bank's investment policy to ensure that it aligns with RBI guidelines. Ensure segregation of duties within the bank, front office, middle office, back office, for executing and settling and monitoring and accounting trades. For all of this, segregation of duty must be there, like front office, back office, middle office. Jan 26. They have asked a question on this. Next, examine reconciliation of investment account. See verify physically the security and get a confirmation from public debt office of SGL, public debt office of RBI through subsidiary general ledger. Okay, so subsidiary, what is SGL? What is SGL note? In scam 1992 they use this. Okay, first time I watched, I didn't understand. Then I did what is BR, what is SGL note, all that I research I did. Then again I watched it, then I understood. So that's it, just like Ponniyin Selvan movie. So fine. So you watch my video of 20 minutes which I posted on BR everything, you will understand that. See what happened is in that scam movie, very simple. Harshad Mehta is basically a stockbroker. Now he want to act as a broker between banks also. Okay, with respect to movement of securities. That's it. Now banks they have to maintain SLR CRR limit. Some banks might have excess investments. Some might are needing of investments. They need some government securities. Some banks are having excess securities. Now the bank which is having excess securities has to exactly sell to a bank which is in need of security. But that time there is no electronic exchange, all that. So which bank is needing security? Which bank has excess security? Nobody knows. So these brokers, money market brokers will deal regularly with the banks. So they will know which bank is needing, which bank does not need it, which bank has excess. They will identify. Now for example, Canara Bank need 500 crore worth of security. And ICICI Bank has 500 crore excess worth of security. I'll do one thing. From Canara Bank, I'll take money. Okay, and I'll give it to the ICICI Bank. Then I will take securities from ICICI Bank and then give it to Canara Bank. As a mediation job I need to do. Now here in that scam what he did is, he takes money from Canara Bank 500 crore. Now that time what happens, this money is credited to stockbroker account. Whoever mediator is there, his personal bank account, it is getting credited. Now because he has a rapport with all the banks, he will tell the other bank, sir, they paid me 500 crore money, I will transfer it to you. You send me the proof first. You send me. It will take some 10 days for transferring everything. I'll send it to you because those days transactions will take lots of time. Okay, so you give me, because they're asking, because they paid me money, they're asking proof of securities. So sir, securities transferring takes time, sir. I know it will take 14-15 days time for securities transferring, but do one thing. In the meantime, a token, what is the proof that you received some 500 crore money, right? I will give you, don't worry, I'll give you. So for that, give me a receipt that you received the money, bank receipt. That's called what? BR. That BR I will take and then submit to Canara Bank. Now Canara Bank, until securities are transferred in their name, BR will be there as part of documentation. Now this Harshad Mehta started creating fake BRs. This is the story. Understood? Sometimes, he will not get the BR. Okay, and he will invest this money in the stock market. In the meantime, some 15 days time limit will be there, right? He will invest this money in the stock market and then rig the shares. So this is how he manipulated the stock market, where investors lost, bankers lost, everybody. So this is what happened. That's it. You understood? So this understanding if you have, you can just go and watch that particular web series. No problem. Fantastic web series. You want to relax? Just watch it. Next. Now you need to physically verify. Look at. Physically verify investments at the year end. Verify investments which are held with the public debt office, custodians and depositories. In case of BRs, examine confirmation received from the other bank, whether have they really issued BRs or not, and written explanation for any long outstanding BR. Array, you have to transfer securities, take back the BR. If at all BR is there in my books of accounts for long period of time, why? When the securities will be collected. And further remember, BR will not be issued for government securities. For government securities, SGL note will have to be given. All these points were there in 1992. That scam, web series. So RBI passing an order for government securities only through SGL note. SGL note means what? Public debt office of RBI will give that. So if any transaction happen, first it has to be entered in the RBI register. Then SGL note will be given for the bio. Yes or no? Only that will be the proof. BR is not accepted as a proof of securities held by a banker for government securities. Like that, some points were there. This point is also tested in Jan 26 exam. Further, see that investments are classified into held to maturity, held for trading, and available for sale. Verify any shifting happening were approved by Board of Directors, Jan 26 exam. Further, investments must be valued as per RBI guidelines. See that investments were correctly classified at the time of acquisition based on the decision taken, and see that there is if at all any non-performing investment is there, see that provisioning has been made. Income from investment is properly accounted. That's it. Then further, that's it. Now you see Jan 26 question. What points is it? During the course of audit, the audit team seeks guidance of CAM engagement partner for the following observation. The bank hold 450 crore in government securities, 250 crore in debenture, 95 crore in shares, 75 crore in bond. During the audit, it is noticed that the investment team comprises 4 staff members who is responsible for all investment functions. Front office, back office, middle office, that point they're expecting. Okay. There are 5 BRs with other banks totaling 35 crore. Out of these 3, outstanding for more than 8 months. Long outstanding BRs. You need to inquire. Get confirmation. The audit team observed that during the course of audit, bank has reclassified 80 crore AFS to HTM. Bank has to classify investment in 3 parts. And if there is any reclassification done, inquire into the reasons why they have done reclassifications. Outline the procedures he has to advise for verifying these things. So investments audit. You need to write that and then answer. So in Jan 26, they asked it for 5 marks. Clear? So any corner there, they can test. First of all, they should not test this question because it's outdated. The paper setter is also senior citizen. He never know all this latest bank audit provisions, all that. So he has tested BR. He would have remembered scam 1992 and then tested it. That's it. The problem is that only when senior citizens set the paper, old questions only you will expect. What you will expect. Next. Because BR point is irrelevant now. This entirely is now happening digitally. So they should have at least tested something, loans and advances, something which is practically relevant. In CA Final Audit, lot of syllabus is there, which is outdated. Bank audit, best example. Bank audit, PSU audit. You don't know PSU audit is worst chapter is where they talk about parliamentary committees. Why do I need to know how parliamentary committee functions? Parliamentary committees will be there. These are like Financial standing committees, we call them as financial standing committee. MPs will be there, right? They will form subgroups as committees. What the committee has to do? I don't know what I have to do. You are asking what the committee has to do. Estimates committee, committee on public undertakings, public accounts committee, performance audit. First of all, you see entire PSU audit. You will realize one fact that you will not do that audit. C&AG department will do the audit through audit boards. Okay, we will not do the audit. But if C&AG recruit you tomorrow as a part of their team, you must have an idea, right? Yes or no? For that reason, that syllabus is there. Useless syllabus in that. Major entire portion is useless in that. But still 5 marks question. So we have to. That's why I kept it under 1/4 category. PSU audit is something that you can't connect easily. In fact, in May 25, one question was asked in PSU audit. I feel like if I have a gun, I would have shot him. He asked one question. Performance audit steps. 9 steps will be there. I'll show you. Performance audit, 9 steps will be there. You remember that performance audit, anybody? There will be 9 steps, okay? Audit criteria, planning, initiation, like that. Audit design matrix, development, like that, 9 steps. They asked sequencing of the steps. They gave 9 steps list, but zigzag order. Option A, 1, 4, 9, 6. First you should remember those 9 numbers. And here these 9 numbers are different. Then you should first figure out 9. You should number there. Then you should arrange them, renumber it again. Then you need to figure out the option given. Such a cruel question that is. 9 marks. So generally what we tell in the class, when 9 points are any 5 points. We will straight away say any 5 points. Generally that also we don't say. Because each point is a sub 5 marks question. So they asked a sequence, which is like actually very tough. Nobody will remember that easily, that sequence, because nobody will practice that. He don't have any other question, he tested that question. Next. May 25 attempt. Done. Okay. Bank audit is completed. 1.5 hours we spent correctly. Okay. Clear? Fine. Yeah. So we have completed till now reporting, specialized, review. Yes or no? Now we'll begin related service. Apart from that, we completed bank, NBFC, group, and then we completed SDG and ethics. Correct? Huh? Now related services, will begin that. And coming to digital audit, read digital audit from ICA book only for MCQs purpose, not for descriptive. May 25 attempt, they asked a question on metaverse, where now it is about to close. Metaverse is now about to close. That product was so failure. Like Facebook is renamed, right? Meta. Yes or no? Yeah. So that was based on metaverse product. No, like that was launched in somewhere in 2020 or 2021. But later, immediately in 23-24, when AI came, when AI started evolving, Meta lost a lot of importance. Okay, of course, they renamed it as, slowly they are renaming it as AI. So Meta with AI, like that. So, but actually metaverse is an outdated topic. Fine, all that is fine. Metaverse is asked in audit exam. I want to look at the face of the paper setter. How can you ask metaverse and how it is helpful in audit? First of all, is it implemented anywhere? No. Yes or no? So there are some emerging technologies syllabus that is there in digital audit. You study, you realize you don't understand. Blockchain technology, what is the audit implication? First, we don't know what is blockchain technology. Then NFTs, what is audit implications of using NFT? Cryptocurrency related discussion will be there. I don't know, like so much is there, unnecessary syllabus. Simple, IT, our CS also know IT. What do you think? We also know IT. So we want to prove it. So dumped entire IT syllabus into this. Cyber security framework, digital audit, audit digitally. You know that? What is digital audit? Systems audit. Auditing digital means doing audit digitally. Then what is remote audit? Then that is also something like this, digital audit, auditing digitally only, but remote, work from home audit, nothing but. Understood? Work from audit is nothing but through computer, right? So that's what remote audit. Everybody today doing remote audit on technically. So there are so many concepts like that. So my advice is read it thoroughly, understand it, don't try to remember it. Okay, understand it for MCQ purpose. So that's the reason digital audit lengthy. If you want to master digital audit, it will take 15 hours. And within that 15 hours, you can revise 30 standards. Neatly you can revise and get command on that, where the score will be high, certainty of scoring will also be high. In one of the exam, they asked interfaces. What are different types of interfaces? You need to identify and then write about that interface. In IT dependencies below, interfaces will be there. Okay, IT dependencies. One of the IT dependencies they asked. One of the IT dependencies interface, system generated report, like that. So much is there. So I'm just telling you inputs why you should not touch that chapter. More than that, there are many other chapters where you are lacking already. Focus there. Don't try to attempt 118 marks of the paper. Just try to attempt 90 marks of the paper. Okay, and you will have a high certainty of scoring 50 plus. I'm telling this repeatedly because don't do that mistake. So some topics you can keep it as a last priority. Don't even touch it until rest all you become master. So that 60 plus securing is not a big deal. Okay, yeah, fine. We'll begin related services. 1 minute. Yeah. So we'll begin related services. Before that, I just want to give one small clarification. There are few videos on the YouTube channel of mine, like CA Ram Harsha YouTube channel, gold buying guide, insurance policy, some financial related lessons. Okay, you just watch those videos when you're having time. You will get a different perspective on finance. How to create and grow your wealth with debt, which is what I do regularly. So just watch that, you'll understand how wealth growing can be easily done passively. You sit at home and then still you can grow your wealth. So how can you do it? You will understand. Okay, fine. I right now have to do nothing. Every month I passively make 5 lakhs. I have to do nothing, just wealth management. Okay, that one of the method I told there. Okay, that method you see, you follow, you'll understand. So passively, nothing, without doing, I don't have to run academy, nothing. So 3.5 to 5 lakhs I can make every month with debt only, where I take a loan. First I'll buy a gold, put it in bank, take loan, again buy the gold, put it in bank, take loan, again buy gold, put it in bank. Just I need little bit of capital. By the way, here the first condition for a gold loan, you should not use it to buy gold. But banks are not bothered about checking it. But still we need to comply with the procedure. Only then that 9% rate of interest will apply. If at all you are using gold loan to buy a gold, it will be treated as personal loan if at all they discover. And if at all a comment has been passed on that, they will charge 16% rate of interest, 15-16. Instead of that, what you can do, you can give it as a loan to your friends or relatives or wife or somebody, then buy from them. Over. Now what about for example, I'll give it to my wife. Okay, in my wife name I'll open a gold loan and she'll transfer to me loan repayment. Then again I'll go and buy the gold. So like that, if you do leveraging like this, so you can make lot of money. Because if gold depreciate yearly 20%, 20 enough, no need not be miracle like last 2-3 years. Just 20% yearly growth rate or 15% yearly growth rate. My rate of interest in the bank with all charges, everything is 10. And I make 15% a year. 5% I'm maintaining margin. Easily I'm getting 5%. Understood? So like this, there are so many across the world who are doing this. Robert Kiyosaki, somebody, he do the same. Debt. You see me, every product I buy, not phone, small items and all, okay, but bigger items, I only buy with loan. I even posted a video on Mercedes, like how I got it at free of cost. Actually not free. It's an investment planning. Okay, that time I have liquid cash. I can buy in single I can give a single check and then buy, but I didn't do. I won't do that. I bought gold or some other investment I invested. Within 1 year, the price jumped like anything crazy. I got the car at free of cost now. So like that, you have to be smart. Investing in gold or investing in safe assets is not a danger. Okay, so all this slight financial education is there in that particular video. What if tomorrow my job is lost? This is the biggest question everybody, whenever a financial advice is given. When it is lost, you can think of it, boss. Why are you thinking of it now? Yes or no? We worry more in our imagination than reality. So anyhow, all this again they are in that video. So watch that definitely. And immediately I did one more video. What are the things you should do immediately after qualifying CA? Must to do financial things that immediately after qualifying, buying insurance policy, like that, some inputs were there. Watch that. I'll be doing more and more that financial related videos. Okay, so some precautions, all this definitely will help you. Fine. Related services through marathon, if I say this, no, multiple students watch, they'll at least go and watch that. General videos many ignore. In marathon, if I say no, definitely they'll go and watch it. So related services, by the way, don't forget to like the video and comment the video. Okay, yeah. So next, related services. I told you standards broadly divided into two types: assurance and non-assurance. Non-assurance standards, non-assurance engagement is simply related service. Non-assurance is called as related service. What are they? It does not involve basically any assurance. There are two types of related services. One, agreed upon procedure. Two, compilation engagement. 4400 is the standard that is dealing with an engagement to report on agreed upon procedure. 4410 standard, compilation engagement. That's it. Both are non-assurance engagements. In both these cases, you have to give a report ultimately. Okay. For a compilation, you give a compilation report. For agreed upon procedure, you will give an agreed upon procedure report, which is basically confidential in nature. You can find illustrations in ICA book. So agreed upon procedure related reports are confidential in nature. 1 minute. 4400. 4000 series ma, that standards are look at this. How an agreed upon procedure related report. It's an example of a report of factual findings in connection with accounts receivable. Simple. A client approached you and he is asking you to do a debtor's reconciliation. And you have to do some external confirmation procedure. You have to do some aging analysis and then give a report of your findings, what you found. Suppose with respect to external confirmation, what are the findings? Differences. What conforming party replied and what is contained in the entity accounting records. If there is a difference, we call the difference as exception. We call it as exception. The exception has to be resolved. Where is it a mistake in the other party accounts or is it a mistake in our books of accounts? We need to resolve it and then we have to give a findings to the management. This is an activity which management agreed with the auditor. So that procedure is called as what? Agreed upon procedure. You know, in a bank will appoint a stock auditor. The stock auditor will go to a borrower premises and do stock audit and then give a report to the banker. Though it's an audit, audit word is used, typically it's an agreed upon procedure. What is it typically? Agreed upon procedure. That's it. Now you see, the report is basically confidential. Report of factual findings, which means in an agreed upon procedure, what we need to report? Factual findings. In fact, the same is what we do in due diligence and investigation. What we do in due diligence and investigation and forensic accounting? Factual findings. And that we report it. Yes or no? So report of factual findings in connection with agreed upon procedure related to accounts. To whoever engaged the auditor, we perform the procedures which we agreed with you. We obtained and checked the addition of trial balance accounts. We compared the attached list of major customers. We obtained customer confirmations. We compared those statements with the amounts referred in the books of accounts. Where amounts did not tally, we did reconciliation. For reconciliations, we obtained and listed invoices, debit notes, everything. And we report our findings, which means what are the procedures you performed and what are the findings. So first, what procedure is performed in respect of what? And here you see the procedures performed were only to assist you so and so. Our engagement was performed as per so and so standard. And below there are some disclaimers which you should give, because some disclaimers, the above procedure do not constitute an audit, it do not constitute review. Yes or no? We do not express any assurance. We do not express any assurance. Had we performed additional procedure, some other matters might have come to our attention. By the way, our report is purely for the purpose of intention set forth in the first paragraph. This report is only related to account items specified about trade receivable only and does not extend to the company financial statements as a whole. You see the contents of the report. Now look at the reporting requirement. Now look at the reporting requirement. There you will understand. In the agreed upon procedure, what is most important is reporting requirement. So what are the reporting aspects in agreed upon procedure? What are the statements that you should make? You should make a statement that procedures performed were agreed upon with recipient. You should make a statement that you did as per SRS. You need to identify identification of the purpose of the agreed upon procedure. List out the procedures you performed. We saw, no, we listed. And then factual findings including errors and exception, and a statement that procedures do not constitute auditor review and no assurance is provided. A statement that additional procedures might reveal other matters, and a statement that this report is restricted to only those which is agreed and it does not extend to entire financials. See how easy. After seeing the report and then you see this, you understand it. Clear? Now, so these are the reporting. Now look at planning and performing. Obviously, you should plan for effective engagement. You want to perform the engagement effectively, you need to plan it. What procedures you do in basically an agreed upon procedure? All procedures, you write it. Inquiry, inspection, observation, recalculation, reperformance, whatever, write it. Over 5 marks question. Understood? Next. Now look at terms of engagement. Whenever you agree with the management on agreed upon procedure, you must be very clear with terms of engagement. Management might not aware of agreed upon procedure meaning also. They might think you have to do audit. So you need to have a clear terms of engagement so that you will once again explain, see, this is what you asked me. Please read it, understand it, acknowledge me. So engagement letter is mandatory to make sure there is a clear, yes or no, clear understanding of terms between the auditor and management. Look at. So an engagement letter helps avoid misunderstandings about objective and scope and auditor's responsibilities and the form of report. It should list out procedures agreed upon, and the engagement letter also should mention a statement about distribution of the report will be restricted to agreed parties. What matters you will agree in engagement letter? Simple. What nature of engagement? What is the purpose of engagement? Identification of the information for which agreed upon procedure will be applicable. Nature, timing and extent of specific procedure. Limitations on distribution of the report. That's it. Okay. Terms of engagement. This itself can be asked as a 5 marks. Reporting can be asked as a 5 marks. Now tell me, what are the principles of ethics? You should comply with all the principles except independence. Since it's a non-assurance engagement, independence may not be mandatory. Yes or no? What is the difference between audit and agreed upon procedure? In audit, no, we express opinion. Whereas in agreed upon procedure, no assurance is involved. Yes or no? What are the examples of agreed upon procedure? For example, for trade payables. The same is what given in the illustration. That only they copy pasted here. For trade payable, compare names of suppliers and amounts in trial balance with supplier statement. Get a statement or confirmation from supplier, compare the statement, and then report actual findings without providing assurance. That's it. In agreed upon procedure, only a report of actual findings is provided. No assurance is given. Users will draw conclusions based on the findings. That's it. Agreed upon procedure is generally restricted to those who agree the procedure. Others because might misinterpret the result without knowing the context. Over. 4400 over. 10 minutes. Not even 10. 8 minutes. Understood. Next. This also over ma. Okay. Now 4410. What is 4410? Compilation engagement. What is that compilation engagement? A company prepare financial statements for various reasons. To comply with annual reporting requirements, to comply with the holding company requirements or a special purpose framework requirement, whatever, they want to prepare some financial information. You may call it as financial statement, or you may simply call it as financial information. Suppose a company does not know how to prepare segment information. They're asking you to prepare segment information. They're asking you to help them in preparing segment information. Related party disclosures. You're helping them. That's a compilation. Or they're asking you to prepare full-fledged financial statements as per part number 2 of the schedule 3, because they don't know about part number 2 Ind AS and all. They don't have any idea. So they approach you because they think you studied Ind AS. They don't know that you studied only important questions. Fine, joking. Yeah. So they called you for compiling the financials. So here, what is a compilation engagement? The practitioner, remember in this, in both the standards, we don't use the word generally auditor, we use the word practitioner because it's not an auditor. Okay. Now, what is a compilation engagement? A practitioner using his expertise. What expertise we have? Accounting and financial reporting expertise. So a practitioner using accounting and financial reporting expertise assist the management in preparing and presenting financials as per applicable financial reporting framework. You assist them and give a report. What report? Compilation report. What is that compilation report? Stating that I only assisted them in preparing the financial statements. I am not expressing any opinion. Now let's look at compilation report. Look at how a compilation report looks like. First of all, we rarely use this. These are all not there in IC book also, ma. This is there in pronouncement book. Look at the heading, Accountants Compilation Report. We have compiled the financial statements of ABC based on information you have provided. These financial statements comprise balance sheet, P&L, cash flow, everything. We performed this compilation as per SRS 4410. Yes or no? We have applied our expertise in accounting and financial reporting to assist you in preparing and presenting these statements in accordance with generally accepted principles in India. We have complied with the relevant ethical requirements. The financial statements and accuracy and completeness of the information used to compile is your responsibility. It's management responsibility for the accuracy. But remember, if at all apparently I know that information is wrong, which is given to me to compile, if I know that the information is misleading, I will not accept the engagement. I will withdraw from the engagement. See, I am not responsible for accuracy, but that doesn't mean if information is wrong, I will assist you in compiling. Able to understand? If information is wrong for compiling, I will not assist you. If information is right, or if at all I didn't feel the information is wrong, is it right or not? I don't have a duty to obtain evidence on that. Look at, since a compilation is not an assurance engagement, we are not required to verify accuracy or completeness of the information you provided us to compile the statement. Accordingly, we do not express opinion, we do not express a review, conclusion on whether these statements are prepared in accordance with generally accepted accounting principles in India. Clear? Understood the report now? Now look at the compilation report. Look at reporting requirements on compilation. Very easy, dead easy these standards are. Practitioner's report on compilation. A statement that practitioner has compiled the financial information based on information provided. Identification of applicable framework, and if it is a special purpose framework, give a reference to it. Identification of the financial information including the title and date of the compiled information. What are practitioner responsibilities? That he has performed as per SRS and complied with ethical requirements. And explanation that since it is not an assurance, he is not required to verify accuracy or completeness of the information. And the practitioner does not express a audit opinion or review conclusion. That's it. These are the points. Sometimes I'll ask you, what are the elements, what are the statements or disclaimers which a practitioner has to give in a compilation report? A 5 marks question you can ask. Clear? Next. Performing a compilation engagement. Okay, I'll come back to the performing part later. Now, ethical requirements. What are the ethical requirements? Same, just like for agreed upon procedure, what ethical requirements are there? Here also same. You don't have to be independent, but terms of engagement might specify that you have to be independent. So this is easy thing. Okay. Next, engagement acceptance and continuation. When will I accept? First, you must agree on terms of engagement with management and the engaging party, including what is the purpose of the compiled information, what is the use of this, distribution and restrictions. You must first know it. What is the objective and scope of compilation? You must agree. Practitioner responsibilities must be clearly stated. Management responsibilities. What are management responsibilities? 4 marks question. You have been appointed to assist the management in preparing financial information. Yes or no? In this regard, state what are management responsibilities. They can ask you a question like this. Financial information preparation and presentation. Is it in, preparing financial information in line with applicable framework. That's their responsibility. You will only assist it. You only assist them. Designing and implementing and maintaining controls so that the financials are free from MMS. They are liable for ensuring accuracy and completeness of records and documents provided. If they don't give me full information, and if I compile the financial statements and tomorrow the result is wrong, I am not held responsible. Judgments required in the financial statements compilation process. Accounting estimates we need to choose, right? Who should choose this? Management. So they are responsible for preparing financials as per applicable framework. They are responsible for internal controls to ensure financials are free from MS. They are responsible for the accuracy and completeness of information provided to the auditor, based upon which compilation will be prepared. And they are responsible for judgments to be made in preparation presentation of compiled financial information. That's it. Next. Rest not required. Only whatever I'm selecting, that alone you study. Now, how to perform it? First, understand the entity. Yes or no? Including accounting system and records. What is the financial reporting framework and how it is applied in the industry? Understand this. Why? Only if you understand, you will assist them in choosing an accounting policy. You can assist them in choosing an accounting estimate in a right way, reasonable manner. Yes or no? Now, compilation. What do you mean by compiling? So, explain compiling. What are the steps involved in compiling? First step, take records from the company, documents from the company, explanation from the company, judgments that they wanted to take that, and then compile. Discuss significant judgments. Review the compiled information, keeping in view the business and applicable framework. Report any incomplete, inaccurate, unsatisfactory information to management and request them correction. Very important. If you identify incorrect information by default at the time of compilation itself, since you don't have a responsibility and accuracy, just don't ignore it and proceed further. You know that something is wrong, report it. You don't know that it is wrong, no problem at all. You just proceed believing management, but you know that it is wrong. You have to report it. MCQ. Clear? Withdraw if management fails to provide necessary information. Tell me, when do we propose amendments in the compiled information? If I feel compiled information is materially misstated, compiled information is misleading, or amendments are needed to prevent MMS, or financial information does not describe clearly applicable framework. In all these three cases, I will ask management, see, the financial information is not proper, please amend it. Over. Next. That's it. Now again, you need to document it. So engagement level quality control. First of all, engagement partner is responsible for overall quality of the compilation engagement. Yes or no? And he must ensure that engagement complies with quality control policies and procedure. And he should document. What you should document? Sometimes this can be asked as a 5 marks question. What are the documentation requirements in a compilation engagement? Sometimes they will tell you, since it's a compilation, non-assurance engagement, no need to document. Why should I maintain documentation? No, you should document. What you should document? Significant matters that arise during the engagement, how they were resolved, and a record of how compiled information is reconciling with underlying records, and final version of compiled information, acknowledging that management is responsible for that. And practitioner may also include entity accounting records like trial balance, accounting records, information used to compile the information. So what you will document? Significant matters, reconciliation, workings, final version acknowledgement, and additional documents like books and records and documents. That's it. Clear? Over. 4410. Entire chapter in less than 20 minutes. Easy, no? Understood every point clearly? Question bank you solve, okay? Yeah, let's begin. The third chapter, Audit Strategy. Inside that there are some standards. One is 600, which we already completed. Then 610, 620, 540, 450. 4 more standards were there. 520 is there just for namesake they discussed it. It was not in depth. Okay. So these 4 standards we will finish it off. Pending standards. In that 450. What is this standard is talking about? Evaluation of misstatements identified during the audit. So if you identify misstatements, what you should evaluate, how you should evaluate. In the recent Jan 26, in this one question has been asked, communication and correction of misstatements identified. This part has been tested in January 26, almost in every attempt. In September 25, misstatement definition was tested multiple times. Misstatement definition was tested in MCQ, multiple choice question. Like there are various types of misstatements. Factual misstatement, judgmental misstatement, projected misstatement, like that. First of all, the word misstatement in entire auditing subject appeared at so many places. Misstatement, risk of misstatement, projected misstatement, undetected misstatement, uncorrected misstatement, anomalous misstatement, non-anomalous misstatement. Then we have no, not that, material misstatement already. Okay, so yeah, factual misstatement. Okay, like this, expected misstatement, tolerable misstatement. These are all used, these words and all were used at so many standards. For example, tolerable, projected, expected, and risk of MMS. All these four were used in 530 standard mainly. So sampling standard, like that. So first, what is a misstatement? It's a difference between what is reported and what is required as per applicable financial reporting framework. What you reported and what is required as per framework. If there is a difference between these two, then that's a misstatement. And this misstatement can be in four ways: amount, classification, presentation, and disclosure. That's it. Now these misstatements are broadly two types. The misstatements are broadly three types. Factual. These are the misstatements for which there is no doubt. Okay. Judgmental. These are the misstatements where differences were arising from judgments of management concerning accounting estimates which auditor consider unreasonable, or accounting policies which auditor consider inappropriate. These are judgmental. In September 25 or May 25, they gave you some circumstances and asked you to identify, is it judgmental misstatement or factual misstatement or a projected misstatement. What is a projected misstatement? In sampling, no. In sampling, what we do is we take population will be a purchase transaction. We take some sample through stratified sampling method or simple random sampling method or some method we use, and then select the sample. We apply our audit procedure on the sample. We definitely will identify some misstatements. That misstatement's nature and circumstance under which it occurred, we should interpret it. We should understand the nature of misstatement and circumstance under which it occurred. When you interpret this, you understand whether that misstatement is an anomaly or non-anomaly. If it is anomaly, means non-repetitive in nature. Anomaly is what? Non-repetitive. It won't be there anywhere else. This is some unusual misstatement, non-repetitive. Non-anomaly, that is something repetitive in nature. Now, non-anomaly misstatements, if you find, you need to project it to the population. We call that projection as extrapolation. We call it as also, we also call it as what? Extrapolation. Okay, so that extrapolated value in the population calculated using mathematical equation from the misstatement that you find in sampling. That process is called as projection or projected misstatement. Okay, that's it. What is this? Projected misstatement is the auditor's best estimate of misstatement in population, which is based on misstatements identified in sample, where you project to the entire population from where samples were drawn. That's it. Now here, like what auditor has to do? What auditor has to do? First of all, what is the objective of this standard? If you see the objective of this standard, one, based on the misstatements that you identified, evaluate whether misstatements are material or not, and evaluate uncorrected misstatements impact on the financial statements. The objective actually two things: evaluation of misstatements on audit and evaluation of impact of misstatements on audit, and evaluation of impact of uncorrected misstatements on financials. The wordings are so clever. If you identify mistake, it will affect your audit procedures. It might increase or it might decrease. And you communicate. See, what happens generally when we identify mistake? First we apply materiality. Is it material or not? Materiality is at three levels. One is overall materiality, performance materiality, triviality level. Okay. Now, what is overall materiality? For example, 0.5% of turnover. Performance materiality, we might keep 50% or 60% or 70% depending upon the judgment of the auditor of overall materiality. Okay. And triviality level means below this, if any amount is there, that's negligible. Triviality level means above negligible. Okay. There's a difference between significant, insignificant, negligible. Immaterial is different from negligible. Immaterial is different. Okay. Now, for example, why I do like this? For example, the Reliance company, if you see consolidated financial statements, they have a 10 lakh crore turnover. 0.5% means what? 1% means 10,000 crore. 0.5% means what? 5,000 crore. So overall materiality is 5,000. If the consolidated financials are materially misstated beyond 5,000, then I will give a modified opinion. Then I assume financial statements are materially misstated. When you identify 5,000 crore worth of mistake. By the way, when I identify 5,000 crore worth of mistake, what I identified is in the sample. Imagine in the population how much would be. So for performing audit, we don't go with overall materiality directly. We go with what? Performance materiality. I will put some 2,500 crore. If the misstatements which I identified aggregate touching 2,500 crore, in the sample itself mistakes identified is crossing performance materiality, definitely total misstatement in the population would be more than overall materiality. Now this margin I keep, no, that is for undetected misstatement. That margin we keep is for what? Undetected. Like when you are doing audit, we generally identify mistakes. What we need to do, we need to accumulate it. What we should do? Accumulate it. Which mistakes you should accumulate? Those mistakes which are other than clearly trivial. Which are not trivial, don't accumulate. Beyond trivial, accumulate. For example, why triviality level? Here, 5,000 crore, right? The triviality level could be 10 crore or triviality level could be 1 crore. Triviality level could be 1 crore. What is this triviality level signifies? If my team, when they're doing audit, if they found a deviation in a particular transaction or a balance up to 1 crore rupee, they can ignore it. They don't even have to accumulate. They don't even have to gather it. They just ignore it. You saw difference is less than 1 crore, leave it, no problem. This company 10 lakh crore company. Out of 10 lakh rupee, 1 rupee. Why are you worried about it? So ignore it. But if you find above 1 crore rupee, do one thing. I cannot directly say financials are materially misstated. Accumulate it. Now you started accumulating all the mistakes which are above 1 crore, and that accumulated misstatement is reaching performance materiality. Then the auditor will take a conclusion that, then the auditor will have an logic. Then auditor will conclude that overall misstatement in the financial statements is more than overall materiality, which causes him to believe that financials are materially misstated. So we fix performance material. The moment accumulated misstatements touch this, auditor becomes alert. He will go and tell the management, there are so many mistakes. To which management, what they will tell, sir, the mistakes you identified are only in sample. I will tell you that is not there in the population. I bet there won't be any mistake in the population. You verify extra. Don't say in sample this much mistake is there, in population how much mistake. No, it is not there. Most of the mistakes that we find in audits were anomalies in nature. You might have never done extrapolation, projection in reality in audits, because most of the mistakes that we identify were anomalies. Understood? So management will tell this. Then auditor was doubtful now. When I show the mistakes, in sample itself this much is there, in population it will be more than this. So when I started arguing this, management is saying your sample is wrong. Then what can I do? I have to increase my sample size. When the accumulated misstatements are reaching materiality, the audit strategy and planning will have to be revised. Why? Because management will not accept with my argument there. So I may have to revise my audit strategy and plan. I may have to revise my risk assessment. Are you clear? Fine, I did that. Now again I found mistakes, which is again crossing this level. Okay. Now I will go and communicate with the management. See, financials based on the sample, I found so many misstatements. So you please go and in-depth verification you do of that particular class of transaction. You identify what are all mistakes were there, actual amount. If you identify actual misstatement in the population, then we will pass an adjustment entry in the financial statements. By the way, based on misstatement I identify in sample, I will project it, sometimes. When I will do projection, if the mistake nature is repetitive, only when the mistake nature is repetitive, non-anomaly. What is anomaly? Anomaly means what? A misstatement or a deviation in case of internal control. In case of test of details, misstatement. In case of test of control, deviation. That is demonstrably not representative of population. You found a mistake. That's not representative of population. What does it mean? It's there only in the sample. It's not there in population. When it is representative, then I will think it's a repetitive in nature. It's not representative. Anomaly. Anomaly means it's exceptional. Leave it aside. So management will argue it is anomaly only. And you need to judge whether it is anomaly, non-anomaly. If it is non-anomaly, you will project it. And you found estimated mistake. Sorry. Projected misstatement. Expected misstatement is different again. Expected misstatement means based on risk assessment, how much misstatement you are thinking the financials can be materially misstated based on past experience, all that. That's expected misstatement before doing the audit. Projected misstatement is after doing the audit of the class of transaction based on the actual result of the misstatement identified, I will project it. That's projected misstatement. Both are not same. Able to understand? So I projected. Now I found projected misstatement value. Now tell me, can I use that value to adjust the financial statements? Projected misstatement, can I use that value to adjust the financials? No. Projected misstatement will help me to take a decision whether overall financial statements are materially misstated or not. That's it. Now you understand the materiality concept to some extent. Only if you understand this logic, this standard, you can understand. Without understanding this materiality, triviality level, projection level, all this and all, if you think you understood the standard, you understood sentences, not the concept. Okay. Now look at the actual standard. Now, by the way, so you identified misstatements, you accumulated misstatements, you revised your strategy, all that. Still you found some mistakes. Then what you will do? You will communicate it with the management. And they're not responding. You communicate it to up management. Why are you communicating them? To correct it. If they do not correct, so many mistakes I communicated, some only corrected, some of them were not corrected. Uncorrected misstatements, what is its impact on the audit report? You need to take, conclusion on that. This is what the standard is talking about. And if you see 700 standard, while forming an opinion, 3 factors you should consider. 1. Evaluations. 2. Effect of uncorrected misstatements on financial statements. Whether sufficient appropriate evidence is obtained. Based on these 3 factors, you take an opinion. Clear? Now, accumulation of misstatements identified. So look at now, first of all, what is uncorrected misstatement? It's a misstatement which auditor has accumulated but have not been corrected by management. Now, what do you mean by accumulation? 4 marks question they have asked in past exams. The auditor shall accumulate misstatements which are identified during the audit. Which mistakes you should accumulate? Only which are otherwise, which are not clearly trivial, except those which are clearly trivial. If at all it's trivial, insignificant, negligible, ignore it. Up to 1 crore, ignore it. Clearly trivial, remember, that is not an expression of not material. Don't be clear. If at all total misstatements accumulated by me were below 2,500 crore performance materiality, for example, I found a misstatements totally 2,400 crore, that's immaterial. That doesn't mean trivial. Yes or no? So triviality is not another expression of immaterial. Now the statement is matching. That's it. Next, matters which are clearly trivial. What are they? What do you mean by clear trivial? They are of wholly different magnitude than materiality as per 320, and will be matters that are clearly inconsequential, whether taken individually or aggregate, whether judged by criteria, size, nature, doesn't matter. They are clearly inconsequential. Then, if at all you have a doubt whether it is trivial or not, consider that it is not trivial. If you are in dilemma to say yes or no. If you are in dilemma, no is the answer. Yes or no? That's it. So if you think is it trivial or not trivial, say it is not trivial. If at all that question comes, take it above 1 triviality level and accumulate it. If you know that it's clearly trivial, no question, ignore it. Clear? Now look at, now identified misstatements, what I need to do as audit progress. As audit progress, what you should do? You should analyze nature of identified misstatement and how it was occurred. Circumstance, is it because of fraud? Is it because of error? If it is unintentional, I assume it is anomaly. If it is fraud, I assume not only here, somewhere else also fraud happened. Yes or no? That's why you need to analyze the circumstance under which it occurred. Nature, anomaly or non-anomaly. And aggregate misstatements accumulated, you see, the auditor shall determine whether strategy and plan need any revision. Does it need any revision? When it needs revision, when aggregate misstatements accumulated approach materiality. Which materiality? Performance materiality, not overall materiality. Are you clear? If you read 320 standard, you will understand. Okay. Now, further, based on nature of identified misstatement, circumstance, if it indicates other misstatements might exist, then you plan your, you revise your audit strategy and plan, because you thought of completing this particular purchase area now. Now you are feeling that some other misstatements might exist. So which means if you know there are some other mistakes might exist, you have to extend audit process. So you have to revise the strategy, you have to revise the plan. MCQ. Okay. And further, review management. You request management, please review transaction balances to understand why mistake happened, and also ask management to perform procedures to identify actual mistake and make adjustment. If management identified and corrected, just to perform procedures to see that no misstatements remain. Further, if at all, remember one more thing, communication of misstatements. You should communicate on a timely basis. Don't delay it at the end of the day, last minute, don't communicate. Communicate on a timely. The auditor shall communicate all the misstatements accumulated to appropriate level of management unless prohibited by law. This enables management to evaluate, if necessary, take a corrective action. The auditor shall request management to correct the misstatement. Why are you communicating? To correct. If management refuses to correct, understand why are they refusing, because sometimes the management say, sir, according to it's a mistake, according to us it's not. Judgmental misstatement. Yes or no? So understand the reasons. Take that understanding in evaluating whether financials are free from MMS. Suppose they did not correct. Misstatements remain uncorrected. Evaluation of uncorrected misstatement. Now mistakes are not corrected. Now I need to evaluate whether these misstatements are materially impacting the financials or not. I need to evaluate. But before I take this, I will once again re-evaluate my materiality level, whether it is correct or not. Why? At the beginning of the audit, turnover information is not clear. I took based on previous year turnover materiality. Based on previous year turnover, which is the previous year benchmark. Based on the previous year benchmark, I decided materiality, performance materiality, everything. But now this year, turnovers are completely different. So once again, I will re-evaluate whether materiality in the current year is remain same, or because at the end of the audit, I know real turnover. So I will revise the materiality. Revision of materiality concept in 320. The auditor will revise the materiality as audit progresses. When information available at the time when the materiality was selected, and later additional information got to know, auditor got to know, then he will revise the materiality. So re-evaluate. First confirm whether materiality is still appropriate based on actual results, prior to checking uncorrected misstatements impact, and determine whether uncorrected misstatements are material, considering size of the mistake, nature of the mistake, circumstance, how much amount, why it occurred, and what circumstance it occurred, and what is the effect of prior period. Along with this, sometimes we also find prior period misstatements which are uncorrected. That also put together. Current year uncorrected misstatements, prior period uncorrected misstatements to put together. Evaluate what is its impact on the overall financials. Correct? Now communicate uncorrected misstatements and what is their impact on audit report. Sir, I communicated you uncorrected misstatements, your team is not responding, this is what impact. I am going to give a qualified opinion, I am going to give an adverse opinion. Now request correction. If you are ready to rectify, then I'm okay. If you're not ready to rectify, I'll give a modified opinion as usual. Yes or no? Discuss effect of prior period misstatement on current year. Now finally get a written representation. What? Suppose the management said, okay sir, we corrected, but some mistakes are not material, sir, no, unnecessary, they are immaterial, sir, why we need correction? Okay, you feel immaterial, give me written representation that they are immaterial according to you. Okay, and what are the summary of mistakes which management has not corrected, stating that they are immaterial. List of it, please attach it to the representation. Finally, documentation. What you should document? Triviality level document. Whatever the mistakes you accumulated, document. What is your conclusion on uncorrected misstatements? Like you have identified so many mistakes, you communicated, some are corrected, some are not corrected. Identify reasons and then document it. Over. 450 standard over. Understood? Now you read it again. Beautiful standard. Only if you understand 320, performance materiality, triviality level, all this, that background, that first 5 minutes or 7 minutes I told some story, that if you understand only this standard, you can understand. That's it. Fine. With this, 450 is over. Okay. One doubt is management. Here we need to get a written representation if management believes that the misstatements which they have not corrected are immaterial. Management decided not to correct, stating that they are unnecessary, sir, negligible or immaterial misstatements. Why should I correct? For that, whether materiality point is relevant for them or not doesn't matter. No, first of all, See, you asked me to correct. I said, sir, it's not a big deal, sir. That's not a big deal. Why should I correct already approved financials? Okay, why should we correct? That's immaterial. It's unnecessary. That doesn't affect user decision making at all. That's it on that context. Clear? Over. 450 standard is over. Okay. Yeah, let's begin. 540. Auditing, nothing but verifying. Okay, auditing accounting estimates, including fair value accounting estimates and related disclosures. You are verifying the accounting estimates and also related disclosures. What is an estimate? First of all, it's an approximation of a monetary amount. Why are you approximating? Because precise means of measurement is absent. So approximation of monetary amount in absence of precise means of measurement. You know, like some students, they listen, majority in the north side, they listen classes in Hindi. This terminology and all, if you learn in Hindi, you can't connect. To one of my friend, I was sharing, like, who stays they settled abroad long ago. They're just asking us how the market, all that is. We are saying we teach in English, and north side predominant market is in, they listen in English only. 80% of the students of CA students, 80% they prefer in Hindi only. Oh, are they writing Hindi medium? No, they are writing English only. Then how come they listen in Hindi? There's an instant reaction I got, which is fair. That's why the average study time in South who listen in classes in English, they study 8 to 10 hours on an average to get the same result, where North Indian students study 14 to 16 hours. Because for them, they never get the command on the terminology in the class. They never. They understand what is their sentence translations, all that. But next time when they sit and read, it won't get into their mind. Because what is accounting estimate? क्या है accounting estimate में? कुछ नहीं. वो estimate करेंगे, वो accounting estimate है. Okay? उसमें exact measurement नहीं होता. Something like this. Okay? वो accounting estimate. So अभी देखो approximation of monetary amount in the absence of measurement. So वही मैं बोली अभी. I don't know Hindi. I'm not good at that. Okay? I'm just telling. Now you see the other way. What is an accounting estimate? It's an approximation. Why are we approximating? Because precisely we can't measure. Therefore, an accounting estimate is an approximation of, a monetary amount in absence of precise means of measurement. You listen like this and connect to the terminology. Later when you're reading, you still get back to the connection very strong. You listen in Hindi, you can't connect it later. That's the reason why they take lot of time to connect. Even simple, you should not discuss, if you're writing in English medium, you should not discuss that subject in regional language. What if English teacher teaches English in Telugu? In regional language. That's the reason we don't know English. Sorry, you people better. Okay, so our English teacher also explains English in Telugu only. Our Hindi teacher explains Hindi in Telugu only. She don't know first Hindi. She also can't speak Hindi. Okay, I'm good at writing Hindi. I know writing Hindi perfect. All entire grammar, everything perfect. Arey, I scored 80, 90 marks in Hindi. Yaar. Okay, we studied Hindi for 7 years. 3rd standard onwards to 10th standard. Nothing, we can't talk. Because our Hindi teacher explains it in Telugu. Our English teacher explains us in Telugu. So that's why we never develop the command on the language. The same here. So if you discuss the subject which are supposed to write in English in some other language, how can you connect? Immediately people reject. The moment we start talking in English, people will be reluctant immediately. But you pay attention for just 4-5 days. Just pay attention for 10 hours to listen to the class in English. You will never go back to Hindi. The same content, if it is available in English. In fact, it's not just English or Hindi also, for that matter. English, it's not just the language of English. You need to make it engaging. The speaker also has to make it engaging. Punctuations, all that, everything. Correct? If I teach with monotone, you'll sleep. That is one of the reasons. So you have to make, so ultimately what is important is listening to the class in English. That will be easy for you to connect to the subject. So if at all those of you are listening to classes in Hindi, if at all you don't have an English alternative, then fine. But if an English alternative is there, look for it. Try for it. Because don't focus only at the time of listening whether you're understanding or not. Subsequently, when you go and read it, you can't connect it. In FR recent Jan exam, you see, theory oriented paper. Who wrote theory oriented papers in FR correctly? In fact, in FR is like a theory paper only, 50% theory paper only according to me. FR is a theory paper, not audit. FR is theory basically, because you have to write all the note points, no? You have to write all the entire measurement criteria, recognition criteria for Ind AS and all. You need to write sentences, then only the computation. But we are good at only computation. And we only write computation. We think we get full out of full, but we don't get. Because you are not writing entire corresponding theory, provision, everything. That's it. I'm just telling so that through marathon it will reach to larger crowd. No, this is genuine, right? Am I right? The logic is genuine or not? You tell me, how do you express something clearly trivial in Hindi? How do you express? Clearly trivial is not another expression of immaterial. How should I convince in regional language? Tell me. It's tough. Yes or no? Globally, you have to see the classes, international standards on auditing. Some people, professors will be there. They take the class. You watch it, you'll sleep it for sure. You'll sleep for sure. You're not feeling sleepy, watch their classes. Really, you just watch their classes internationally, how the professors they teach. The students, no, they by default research and come and sit in the class. So they discuss the subject. They don't teach actually. They discuss it. Here we teach, we don't discuss it. I mean, the paper standards are also different. Their exam structure, our exam structure, everything is different. Fine. So this is one important point. You have to educate your juniors. Okay. So tell them to listen the class in English. Marathon, just tell them to watch in English. They'll understand. The moment they watch 1 hour, they will understand the difference between their learning and this learning. Next. You see, mostly we get some comments from North Side students. Okay, they comment, I mean, positively. I was reluctant to watch. After watching half an hour, I realized the language importance. Almost in all the marathons, I will find these comments. Majority of the marathons. First of all, they'll be reluctant to watch. They'll open, English, close. That's it. Straight instant reaction. Some, okay, let me try once in English. No, let me try once. They try. And half an hour, those who, hook up to the video, they'll not go back to Hindi version. Majority of them. Provided the faculty is knowledgeable and talking with sound logic, not something just mugging up. Okay, that is also one of the reason why they are bringing disrepute. Okay, fine. Look at now. In this standard 450 standard, there are some standards like this. They will test you 320 materiality, 530 sampling, projected misstatement, expected misstatement, tolerable misstatement, the closure, the total misstatement to tolerable misstatement. The sample has not provided representative means. That's how they will write. How will you translate in Telugu? How will you translate in Tamil or Hindi? So you can't. So when you discuss the subject using those terms directly, that will connect. You saw 450 standard. I hope you understood. Why I have to give all the triviality background, performance materiality background? Without that, you can't understand that standard. You feel like mugging up, you feel like remembering. One practical question, if at all, the test, that's it, gone. So you need to understand thoroughly. So auditing, accounting, estimate. So estimate meaning I told. Now here there are few more definitions. Management point estimate. What is it? It is nothing but amount selected by the management for recognition or disclosure. It's an amount which management computed based on an estimate, their own developed estimate. Then sometimes auditor will also develop an estimate for checking whether management estimate is right or not. Auditor's point is an estimate, is an amount or a range based on audit evidence to evaluate management point estimate. Tell me, estimate means what? Lack of certainty. Am I right? Uncertain. Estimation involves uncertainty. That is called estimation uncertainty. What is estimation uncertainty? Lack of precision. And that is something inbuilt. That is something inherent. So estimation uncertainty is the inherent lack of precision in measuring an accounting estimate. What is the outcome of an estimate? Useful life of the asset is an estimate. The outcome is depreciation. Yes or no? NRV workings is an estimate. The outcome is closing stock valuation. So what is an outcome? Actual monetary amount that results from the resolution of underlying transaction or event addressed by accounting estimate. Actual transactions that is accounted, actual amount that is disclosed in the balance sheet because of the result of the estimate. So that's outcome. Clear? Now what auditor has to do? in that important thing is understand how management identifies the need for estimate. You should first look at, is there a mechanism in the company where they identify need for accounting estimates? Look at the accounting controls. Look at accounting estimates related controls and processes set. So what mechanism they implemented to identify, like first of all, management is responsible for determining whether estimation is needed, ensuring it meets the financial reporting framework. Simple. Deal what products companies, look at what products companies selling, what are they buying, look at the terms and conditions of transactions. In these transactions, see whether are there any violations possible. If violations are possible, see whether provision is required. Simple. How to identify whether any transaction requires an accounting estimate? Look at the terms and conditions, look at the contractual obligations, look at the agreements, arrangements. Able to understand? Next. Here, your understanding, your auditor risk assessment will help identify circumstances requiring accounting. So first ask management, how are they identifying? 2, your risk assessment is there, right? That will make you understand where and all accounting estimates are required. Now further, inquire management, the changes in transaction, accounting policies, all that. Suppose if a management failed to identify, auditor may need to assess internal control deficiency. Generally, if a management does not identify accounting estimate, that's a significant deficiency in internal control. Means see, you know what is significant deficiency? 265 one standard is there. Communicating deficiencies in internal control to those charged with governance and management. So deficiencies are 2 types: significant deficiency, other deficiency. Okay, significant deficiency is a deficiency or a combination of deficiencies, you know, that require the attention of they merit the attention of those charged with governance, and those deficiencies remaining are all called as other deficiency. Deficiency means what? A control which is required to prevent, to detect, to correct a misstatement. A control which is required, a control which is necessary to prevent, detect and correct is missing. Or a control which is implemented to prevent, to correct, to detect was ineffective. An ineffective control is a deficiency. Missing control is also deficiency. Why? First of all, for example, company has not made provision for warranty obligation. I asked the company, why you didn't provide? Oh, forgot sir, actually. Why you forgot? You didn't establish a process for it? We didn't establish a process. That's a significant deficiency. In one of the exam, MCQ was asked. Clear? Next. Now look at, when you're understanding, you know, understand how management identifies accounting estimate, and understand how inquire management about changes in circumstance, like does entity entered into new transaction? Are there any changes happened in terms? Are accounting policies changed? Regulatory and other changes, new conditions or events. For example, a new business models are evolving. For example, you take car companies, electric car companies, they are using now bus battery as a service. What is it? You see MG, there is a car called Windsor, or even now recently Maruti has launched e-Vitara. One car is there where you just have to buy the car, no need to pay for the battery, and every month how many kilometers you travel in the car, monthly minimum 1500 kilometers will be there norm. Per kilometer you pay 4 rupees, and if you're using extra kilometers, simple, per kilometer add on 4 rupees. So if at all you want to buy the car absolutely with battery, 15 lakhs is the car price. You don't want to pay battery cost, do one thing, pay 10 lakhs and then take the car. Every month, based on number of kilometers you drive, pay monthly per kilometer into 4 rupees battery consumption cost. You see the business model. Yes or no? This requires an accounting estimate. Yes or no? So every month customer has to submit period. Yes, our customer has to submit. First of all, company will take some deposit from the customer, and from that they need to allocate the revenue. For allocating revenue, they need to get a statement from the customer regarding how many kilometers they roam in that, how many kilometers they traveled in that month. Sometimes the data may not be readily available as on 31st March. So you need to estimate the revenue for the 31st March because customer may not be reported that time. See? Yes or no? Now another one. Today EV cars. Many companies are manufacturing EV. For example, Toyota. Till date, they have not manufactured, you know, EV car. Or maybe very 1 or 2 models only they have released it. So for example, if Toyota is launching EV car, they are new to the industry, new type of transaction, and changes in terms. For example, until earlier, I give a battery warranty of 5 years, but now I'm giving 10 years warranty. Okay, accounting policy relating to accounting estimates have been changed. For example, battery as a service, revenue recognition principle will change, and regulatory other changes outside the control of management. that might result in accounting estimate. For example, I told you Australia, they're banning social media. Yes or no? Did I tell you? In Australia, they're banning social media for people below 16 years of age. In India also, if they're banning the companies which are social media giants, for them the revenue, that will badly affect their advertisement expenditure, their advertisement revenue, everything will affect. And new conditions or events that occurred, some new conditions. For example, government might bring a new EV policy where they might say, no, it's a manufacturer who should dispose the battery, which means the manufacturer has to identify disposal cost, and then that also has to be added to product cost. Yes or no? All that. Now, so inquire management, 5 marks question. Then next one, how management makes estimate. This itself is 5 marks. How are they making estimate? They use some method here. They use some model to make an estimate. Yes or no? Look at the method or model. Look at the controls. What process they implemented. Are they hiring an expert? What assumptions are they using? Are these methods changed? Did management address estimation uncertainty? Like every estimation involves uncertainty. You need to address the uncertainty because degree of uncertainty is higher for certain estimates. The degree of uncertainty is lower for certain estimates. Useful life of asset. For example, in 2018-19, classic example, Reliance Industries Limited in 18-19 year, they changed useful life of 4 lakh crore worth of plant and machinery from 30 years to 50 years. They increased it useful life. That what is that 4 lakh crore? Cash generating unit, refinery. What is that? Cash generating unit, refinery. I hope you know CG concept. Yes. Fine. So refinery will be there, right? That refinery, entire refinery useful life has been estimated from 30 years to 50 years. Yes or no? So now tell me, useful life there, high estimation uncertainty. 50 years, only time will tell. Yes or no? Next, review outcome of prior estimate. On this, one question is there in question bank. In TYK itself, it is there, one question. Fantastic question. The auditor has to review outcome of prior estimate. What is it? Last year, company provided warranty provision. This year, they incurred actual warranty expenditure. This year, actual expenditure will be an example whether my provision created in last year is correct or not. So, last year created provision, warranty provision. This year, I actually incurred. That's an outcome. So, compare it. Okay. Further, you need to review, right? You know, review outcome of prior period estimate, right? You need to review the prior period estimate outcome, right? Why are you reviewing it? Is it to judge whether management ability of making estimate is correct or not, or to know what changes has caused, what circumstances caused between the actual amount and estimate? The second one. So the review is not intended to call into question judgments made in prior period. Remember, last year management made judgment and those judgments were reasonable based on the information when the judgment was made. Subsequent developments might change. Yes or no? Like this one question is there. Auditor has asked management to provide prior period data regarding accounting estimate evaluation, to which management replied, no, you are doing current year audit, why prior period data is irrelevant? What do you reply to the management? One question is there. That question you cannot answer even if you read the sentence standard, because there the wordings are completely different. Some new concepts were added there. Look at that question in the question bank, exceptional question. Clear? Further, if estimation uncertainty is there, 4 marks question. Now I hope you understood, right? How management makes estimate, 5 marks. Inquire management about changes in circumstances, 5 marks. Understand how management identifies the need for estimate. Look at the risk assessment process followed by the entity. You do risk assessment process, you know circumstances. Inquire the changes in the circumstances, and if management failed to identify, consider that as a significant deficiency in internal control. Next, estimation uncertainty. For estimates where significant risk is there, the auditor should evaluate whether management considered alternative assumptions, whether assumptions used by management are reasonable. Application of financial reporting framework, management's intention and ability to carry out specific course of action. So if at all estimation uncertainty is there, whether management considered alternative, generally wherever accounting estimates which involve high estimation uncertainty, management should do sensitivity analysis. Like for example, we all know environmental liabilities. Environmental liability, site restoration expenditure. At the time of initial restoration, site restoration, sometimes we also have to restore the site after the factory license period is over. Yes or no? That we need to bring it to present value. Now, first of all, to bring it to present value, right now how much expenditure you can incur, add inflation rate, take future value, then bring it to present value at discounting rate. Now, inflation is one assumption. Now, what is the proof that inflation is 7%? Because different publishers report different inflation rate. RBI reports one inflation rate, industry reports another inflation rate, independent survey organization report another inflation rate. Sensitivity analysis, one inflation rate change will affect the provision rate. Yes or no? So there you need to consider how, whether management considered alternative assumption or alternative outcome, why others were rejected. You need to evaluate that. Whether assumptions used by the management are reasonable. Inflation 7% they used, is it reasonable? And application of financial reporting framework while calculating accounting estimate, no, did they apply framework correctly? And management intention and ability to carry out specific course of action. The company saying useful life of the machinery was 50 years, revise it from 30 to 50. First of all, can the company run for 50 years? Or is management has ability to use this machinery for another at least 2 years? That's it. If at all company, you understood that estimation uncertainty was unaddressed, company did not address it. Now you do one thing, you develop auditor point estimate, check whether management estimate is correct or not. You know, when they are making accounting estimate, they didn't consider estimation uncertainty. When they did not consider estimation uncertainty, how can I believe that estimate? So now I will make an estimate. Why am I making estimate? To check this estimate right or not. So when accounting auditor point estimate will be developed, if uncertainty is not addressed by the management, then the auditor will develop auditor's point estimate to evaluate the management estimate. You understood where auditor will develop an auditor point estimate? Generally, you will not find in your audits. Auditor will not develop auditor point estimate, but in some cases, auditor will develop his own estimate when estimation uncertainty is not addressed by the management in developing their accounting estimate. Clear? Then finally, okay, how entity makes estimate, how entity identifies I saw, what are the changes I saw, and how management makes estimate I saw, whether they address estimation uncertainty is there or not I saw, and now I will see whether management recognizes the estimate. So recognition and measurement. So whether measurement basis, how they measured provision amount, how they calculated, how the measurement, is it appropriate and consistent with the framework requirement, and whether management decision to recognize or not to recognize. For example, contingent liability is there, that's an accounting estimate, they decided it's a remote liability. So whether to recognize a contingent liability or not to recognize contingent liability, the decision, is it appropriate or not? And evaluating reasonableness. Once you saw the accounting estimate is recognized in the books of accounts, see whether it is reasonable or not. Suppose you felt it is unreasonable, so you need to give a modified opinion. First you will request the management to change it. If they do not change it, you will give a modified opinion. Further, the auditor should obtain sufficient appropriate evidence that disclosures related to accounting estimates comply with framework. Tell me, what are the disclosures you should give regarding framework? What are the disclosures you have to give regarding estimate? You have to give assumptions used, methods of estimation, basis for selection of estimate, changes from prior period, estimation uncertainty sources, and what are its implications. These are all the points which management has to address. These are the points which they need to disclose in the financials. Now, especially if at all you find there is a significant risk, please evaluate estimation uncertainty disclosures. If at all any accounting estimate where significant risk is involved. When do I say significant risk is involved? When estimation uncertainty is high. When estimation uncertainty is high, that's a significant risk accounting estimate. So I need to give disclosures of the uncertainty. Are you clear? Next, get a written representation from management regarding reasonableness of significant assumptions used in accounting estimates. Finally, documentation. Please document basis for conclusion on reasonableness. If at all any management bias is indicated, then indicators please document. Management bias, qualitative aspects of entities accounting practices, like this, some points were there. You can understand them only when you travel with the management for a certain period of time. In the first year of audit, you don't understand management bias. Only when you do audit for certain number of days, only for certain number of quarters, only when you analyze the pattern, you understand. For example, we are accumulating misstatements as per 450 standard, and we have a responsibility to timely communicate it so that they will correct it, so that the financials are free from MMS. So every quarter we are communicating mistakes. You know, every quarter some 15-20 mistakes we are identifying, material mistakes, and then we are communicating to the management. Some of them they are correcting, some they are not correcting. Okay, fine, they kept some mistakes in quarter 1 without correction. Quarter 2 also I communicated, some they corrected, some they did not correct. Quarter 3 also same thing happened. In Q4, I was just worried. Like every time they're correcting some instantly, some they're not correcting. I saw the pattern. They are correcting those mistakes which increases profit. They are not correcting those mistakes which decreases profit. Management is biased towards profit. That's how I discover management bias. Analyze the pattern. Understood? Hello? Over the standard almost. Easy, no? I think I taught the standard much better than in regular class. In 25 minutes. In my regular class, I take some little bit in depth. Sometimes at some places, if you go depth itself, that will be risky. People can't understand. But anyhow, I revise it multiple times, all that. My students also, they will also see, Arey, inga ivolo simple sollirukanga, they'll be thinking. Fine. Look at now. What is right about risk assessment procedure for accounting estimate? As an auditor, you must evaluate degree of estimation uncertainty in accounting estimate. You should always check, is there any uncertainty involved? See, accounting estimate itself means uncertainty. Some degree will be there. If it is high degree, then the problem will be high, significant risk. The auditor must determine whether high estimation uncertainty give rise to significant risk. Significant risk means it is a risk that requires auditor's attention. Auditor's major attention will be required if it is a significant risk. You know, when we do risk assessment, we identify so many risks. We need to classify the risks into multiple levels, high risk and low risk. High risk is called a significant risk. If it is a significant risk, I will give major energy, my nature, timing, extent of audit processes will be diverted, will be directed towards this. Engagement team efforts will be directed towards significant risky areas. So if you identify high estimation uncertainty, see whether does it lead to significant risk. Sometimes no, even though high estimation uncertainty is there, some scientific calculations are possible. Some experts can be hired, yes or no, and we can resolve that high estimation uncertainty where it may not result in significant risk. Next, based on risk assessment, auditor should determine whether management has rightly applied financial reporting framework, whether methods used are appropriate, if changes are there, whether the changes are appropriate. So when you're doing risk assessment, first evaluate, is there a degree of estimation uncertainty, does it result in significant risk, and check whether management has appropriately applied the framework, check methods used by management are appropriate, changes are they appropriate. Further, what is the audit procedure for accounting estimate? 4 marks or 5 marks? For accounting estimates, I always look for subsequent evidence. Subsequent evidence means even occurring after balance sheet date. You created a provision for warranty. For example, no, insurance companies, they create something called claims incurred but not reported. Insurance companies create provision for claims incurred but not reported. Nothing but, I sold car insurance policy. You know, in the policy, there is one term. Within 60 days from the date of accident, you should report it. So that you will get the entire cost of reimbursement, entire expenditure, whatever you incur for repairing the car, you will get the full reimbursement. The only condition, from the date of incident, any damage, any car damage, any accident, minor or major, anything, 60 days time is given for you to intimate. Yes or no? As on 31st March. From February 1st to 31st March, many incidents would have happened, but not reported to the insurance company. Yes or no? What is the guarantee? For example, you know, a customer, March 1st, one of the customer to whom insurance policy I sold, car got damaged. The repair cost is 2 lakhs, but he has an insurance with me. I have to bear the 2 lakhs expenditure technically. And car accident happened as on March 31st, already it happened. Claim incurred by me, but it is not yet reported to me. I don't know. Only until customer reports me, I don't know whether how many customers incurred, towards how many customers I need to reimburse, I don't know. But already accident happened on the day. Condition exists on the day. Now customer is reporting me somewhere in the April. Until then I can't wait without finalizing my financials. So now I will finalize financials including creating provision for claims incurred but not reported. How do you know? Without reporting, how do you know how much provision should be created? Past experience. Actuary. I'll go to actuary and I will get the provision calculation from him. Now he calculated provision and accounted in the books. Now April 30 or May 15 came. Still financials are not yet approved. Check subsequently how many were intimated and what is the estimated cost and how much provision created. You can understand. Able to understand. So that's it. So determine whether events occurring up to audit report date provide sufficient appropriate evidence regarding accounting estimate, and test check the data used by management for making the estimate. For example, insurance company creating provision for claims incurred but not reported. Evaluate method used by the management for measuring the estimate and assumptions used are reasonable or not. For claims incurred but not reported, management created some provision, no? Logics behind it, reasonable or not. Test the accuracy of the data, completeness of the data, relevance of the data, consider source of the data, reliability of external data. If external data is used for claims incurred but not reported, no, we take statistics of road transport department, accident statistics, medical statistics we take, and recalculate the estimate, checking internal consistency. You got the external data, you got some reliable data, recalculate and check internally whether it is consistent or not. Test check effectiveness of controls over estimate, and sometimes auditor will consider whether specialized skill or knowledge is needed to obtain sufficient appropriate evidence, particularly if expert assistance is required in certain aspects of accounting estimates. For example, expert as actuary assistance in claims incurred but not reported provision, actuary assistance for employee benefit expenses determination, retirement benefits especially. That's it. 540 over. Understood? I discussed more than a revision. I discussed it actually full standard neatly, because this is one standard which is very tough, where people don't understand at all. Every line, for every word I give a practical example. Okay, that's it. So 540 is over. Clear all of you? Yeah, let's begin. SCA 620, using the work of an auditor's expert. First of all, from our point of view, from CS point of view, who are experts? Anybody who has expertise in any field other than accounts and audit, because we are experts in accounts and audit, right? So anybody having expertise, expert is an organization or an individual, okay, which has expertise in any field other than accounts and audit. If that expert work is used by management for preparing financial statements, we call him as management expert. An expert, a person, an organization or entity which has expertise in any field other than accounts and audit, and whose work in that field is used by auditor for obtaining sufficient appropriate audit evidence, then we call this expert as auditor's expert. If expert work is used by auditor for obtaining audit evidence, we call him as auditor's expert. If the expert work is used by management for preparing financial statements, we call him as management expert. Now, that's what the first 2 points. Expert may be an individual or organization which has expertise in any field other than accounts and audit, whose work in that field is used by entity for preparing financials, management expert, whose work in that field is used by auditor for obtaining evidence, audit's expert. Now, remember, this standard does not apply if at all when you are using the work of management expert, or when you're using experts who are part of the engagement team and are specialized in accounting and audit areas. If at all the expert is part of your team who are already expertise in accounts and audit, that is not covered in the standard. You are using experts assistants who are not part of your team, or maybe they are part of your team sometimes, yes or no, but they are specialized in other than accounting and audit. These auditors experts are 2 types: internal expert, external. Internal means what? The expert is belonging to the audit firm or network firm or associated entities. External expert means who is not an internal expert. Simple. Means if at all a friend of mine who is a lawyer, I want to take a legal opinion, okay, and I consulted him for getting a legal opinion on certain matter related to a financial statement, then that's an external expert whom I'm consulting. Understood? Now, so where and all examples, by the way, even though you are using experts work, you have ultimate responsibility. You can't blame the expert later on. If at all based on the expert opinion you gave an inappropriate opinion which resulted in significant loss to the shareholders' interest, for example, you are only primarily answerable. Remember, whenever we say sole responsibilities for the auditor, means for the opinion expressed you should only be responsible. You can't escape saying expert is there, that's the reason I simply believed upon him and then I gave the opinion, not me, you go and punish him. No. One more thing, if the expert has done some fraud in the process of providing the service, and if it is proven, and auditor has acted diligently here and complied with 620 requirement fully, but expert is the one who indulged in fraud, he has a regulatory, just like how we have a CA regulatory complaint there. They will take care. See, I told from the beginning, every time, though they say absolute responsibility, audit responsibility, everything, what they will look at the end of the day, when any investigation is going on, they see whether you complied with standards on auditing or not. If you are not complying with standards on auditing only, then the issue will come. If you prove that you are acting diligently, skillfully, carefully, and complied with standards on auditing, legal and regulatory requirement, and did the audit and gave a report, nobody can touch you. If you prove you have a proper documentation on that. Yes or no? You simply tell, Arey, why are you punishing me? I did audit as per standards. And that's how the output is. If I have not done the audit as per standards, then you can punish me. Yes or no? That's it. Now, first of all, do I need an expert? First of all, determining the need of an auditor's expert. Need. Is there a need for you to hire an expert? Now, yes. First of all, where do expert assistance is required? Where expert assistance might be required? At any stage of audit. It may be for understanding the entity. It may be for assessing the risk. Or it may be in helping me to design and perform the procedure. Or expert assistance might be required in evaluating sufficiency and appropriateness of audit evidence. Or his assistance might be required for me in evaluating misstatements identified. You can write fifth point like that. Evaluation of misstatements identified. At any stage of audit you may need the expert help. Expert is what? To obtain evidence. Evidence means what? Information. Information means what? About what? Some new company, battery as a service, MG launched. I want to know what exactly that. I want to call an expert there. I want to understand the business model. Pharma company appointed me as an auditor. I have never done pharma audit, but I know I can do it by learning it. Now I need to consult some pharma specialist to understand the entity. Yes or no? Next. Further, how much level of understanding you have of the other field? Simple. See, do I need an expert? It is influenced by how much understanding you have of that field. Tell me, generally, how do we get understanding of some other field apart from accounts and audit? Generally, by auditing those entities, experience that I gained by auditing those entities, or I can discuss with my fellow auditors who performed that audit, or I can attend coaching classes. For example, a company is calling me for reporting on sustainability. BRSR report, they're asking me to give a assurance report on sustainability. I don't know. It's okay, no problem. Certification courses there. Go learn that and then go and do it. So whether the auditor need an expert, for that first they're answering where expert assistance is generally required at any stage of audit. Understanding, designing and performing, assessing risk of MMS, obtaining sufficient appropriate evidence, evaluating material misstatements identified. At any stage of the audit, I might need an expert. And it also depends upon whether I need an expert, depends upon how much understanding I have of the other field. This understanding can be obtained without an auditor's expert sometimes, like through formal courses, through experience, by inquiring fellow auditors. Suppose I don't have all this access, yes or no? Then I will go and hire an expert. But before I hire an expert, entity has prepared financial statements using management expert, I will look at first management. Now look at considerations on deciding to use an expert. See, need of an auditor expert. Are you needing an expert? The answer is different. Are you, do you need auditor expert only? The answer is different. The above question is, do you need an expert? When do you need an expert? Where do you need an expert? Okay, expert is needed, I agree. Already management hired one expert and they calculated provision not just based on some random calculation. They calculated based on one credible expert. Now you need auditor expert, huh? Okay. So if I want to go for auditor expert, first I need to do certain considerations. Check if management has used management expert. Suppose management used management expert. I will look at what is the nature of work he did, scope of the work he did, objective. Whether that expert is employee or a third party. How much control management has on that expert? What is his competence? And which standards is liable to perform the work? For example, people trust my work because I perform audit as per standards and auditing. Same way, an expert will perform as per some standards applicable to him. So which standards is following? What is his regulatory body? What is his competence and credibility? How much influence management on him? Is he employee or a third party? which matter, nature of the matter, scope of the matter to which this work is related to. I consider these points, especially when I'm verifying, when I'm evaluating management experts' work. And check, what is the risk involved in that matter. And check your knowledge with the work of that expert, management used expert. No, see whether you have, last year also you audited, last year also you involved with him, you interacted with him. No, whether, see that, consider that availability of alternative evidence. So is there only, can I obtain evidence only through auditor expert, or is there an alternate way? If alternative way is there, try to get that. If that at all is not there, now if I want to know this particular subject matter, whether it is true and where, the only option is I have to hire my own expert. Sir, management expert is here. No, he is employee. Management has a control on him. He is not competent. He does not follow any industry standards and regulatory requirements. So then you go for auditor expert. Considerations on deciding to use an auditor expert. This is the answer. Some students by mistake write need of the expert answer for this. Be clear. Next. Tell me, you need to evaluate. Suppose, I decided, auditor expert work only. I need my own expert. You may take it from internal sources or external sources expert. For example, you are hiring external expert. You don't have any idea about him. Now, before give him the work, before even interact with him, before even you discuss about the work, first look at his competence, capability of, audit is expert. Evaluate competence, capability, objectivity. What is that? Ask him, what is his qualification? What are his competence? What is his past experience? Objectivity, I need to check. Is this expert has any relationship with the company? I need to ask information. I will also cross-examine. I will ask company also and get to know whether they have any relationship with this expert. I want to make sure the expert I am appointing is objective, independent. Suppose, if they have a relationship, I will see whether any safeguards can be applied. Yes or no? I will see whether any safeguards can be applied. Look at. The auditor should evaluate competence, capability, objectivity. This itself can be asked as a 5 marks question. By the way, above also can be asked as a 5 marks question. Yes or no? Inquire the entity about any interest or relationship with that expert. And interest and relationships means what? What is interest? What is relationship? In financial interest, business relation, personal relation, or expert might be providing already some other services to the entity, and get a representation from audit expert about relations. And also, if relationships exist, put applicable safeguards and evaluate whether safeguards are adequate. And also check, is that expert subject to technical and ethical standards? Check it out. Is that guy subject to ethical standards and technical standards? If at all he is subject to ethical standards, if at all he don't have any relationships, everything, then I will hire him. Suppose, and there are some other matters which might also be relevant. Some other matters are also relevant to you. I will ask whether he is competent or not. Competence in what? Suppose you need to take a legal opinion. Don't go randomly to any lawyer. On what subject matter you need legal opinion? Tax matter, then tax practicing lawyers will be there. IPR related matter, IPR related lawyer will be there. Criminal issue, criminal lawyer will be there. Civil liability, a civil lawyer will be there. Within the lawyer, take a legal opinion. Don't go randomly to some lawyer. So certain other matters, what does it mean? Relevance of the expert's competence to the specific matter, including specialized area within the expert's field. Lawyer is an expert from the point of view of the auditor. Within this lawyer, there are some specializations involved. Actuaries, some specializations involved. Hello? And what is his competence regarding relevant accounting and auditing requirement? So what is his scheme of specialization? And I want to take his report, his guidance on the accounting matter, on audit related matter, how far it is relevant. And whether unexpected events, changes in conditions, evidence obtained during the audit require re-evaluation of expert. So once as the circumstances progress, re-evaluate. Simple. Expert competence, capability, objectivity, evaluation is a continuous process. In exam they'll ask you, evaluation is a continuous process, comment. You need to write this entire matter. Other matters relevant. In exam they can ask you, what are other matters that are relevant? This answer they'll ask you. Hello everyone. And this evaluation is a continuous process. Fine, I evaluated. He's capable, he's competent, he's objective. Hire him. So when you're hiring, what you need to do? Agreement. What you need to agree? What is the nature and scope of the work? What are my responsibility? What are his responsibility? How information will be provided? Correct? The auditor should agree on nature, scope and objective of expert work. Role and responsibility of auditor and expert. Communication, timing and reporting. Confidentiality. I will tell him, look, I have to maintain confidentiality, so I'll give you the data. You also have to maintain confidentiality. Now expert is hired. Now he worked on, he gave the report to you. Will you blindly document it? You have to evaluate the work. Evaluate the work of the expert. What you evaluate? What methods he used? What techniques he used? For giving some report to you, he might have used some data. Is that data relevant? Complete? Integrity? Yes or no? So you need to evaluate his work. And what assumptions you have used in? Are they reasonable? What methods you have used in? Are they reasonable? For example, the expert has used assumptions and methods. May 25 attempt this question. Okay, it was given those of you who are following my GOAT Notes 2025 edition. Okay, please, there is an additional topics PDF which is already released long ago, so that you please download. Okay, or it's already there in question bank. Getting it? Now assumptions and methods. So when you are checking experts work, no, look at the assumptions and methods used. Evaluate, are they reasonable? Significant assumptions, are they reasonable? The auditor should check whether expert has adequately reviewed assumptions and methods used by management. If the expert provides a point estimate or a range to compare with management estimate, please focus on checking the assumptions and methods and models used by expert. Sometimes what expert will give, no, sir, management estimate you are doubtful, right? I will give you my estimate. You compare with that. SA 540 will help you in evaluating experts' assumptions and methods, where the auditor should evaluate whether these assumptions are generally accepted in that field. Consistency with the framework, what assumption method you used and what is there in the framework. Accounting standard, Ind AS, what is there. Rely on specialized model. Now when the expert is developing one value, he used some model, some models he used, statistical models he used. Are they aligned with management assumptions, and assess reason for difference? Suppose no, he has used a different model and management used a different model. Why they are different? Why assumption is different? Ask him the reason, ask them the reason, they'll tell you. And suppose expert is using data, source data. Okay, if at all he see, definitely when he is giving you the final report, he will use some data, right? Behind that, ask the data which is using, source data. Is it, look at the origin of the data, whether the data has controls on its transmission. You see, when we download IT written Excel format or bank statement in Excel format in internet banking, we download in CSV file. Why CSV file? If you change, it won't be saved. So if I ask a client, send me purchase register, he downloaded purchase register in Excel form, which is a CSV, and if at all he converted into Excel and then sent me, I will not take that, because you altered it. If it is Excel, I will not alter it. CSV form means what? Unaltered. Control on transmission of data. What is it called as? A control on transmission. Means you send me the file. How do I know that this file is not corrupted? CSV format is there as it is, then it is not corrupted. Then I will convert myself into Excel before I start working. That's it. Hello everyone. Articles, haven't you? CSV file, Excel file. So no, that's it. And review the data to know whether it is complete and consistent. That's it. Now look at once again. So evaluate adequacy of the expert work. Review reasonableness of findings. What are his findings? Are they reasonable or are they unreasonable? Inquire the work of audit expert. I mean, inquire him. Review working papers and report. Perform collaborative process, like observe how he is working. Examine what data he is using. Confirm with third parties if at all you require. Reperform, you reperform calculations. Detailed analytical to check considerations of materiality. And if required, discussion with another expert in the same field. And also discuss expert report with management. If assumptions and methods are used, the following you should check. If source data used, the following you should check. Over. Then suppose no, you check the expert work, you evaluated, you found out that his work is not adequate. What you should do? Ask him to work more, or you work more, or is not. That's, I mean, that only they said. Perform further audit procedure. You know, agree with the expert on further work needed. Ask him to work more. He is not performing well. Hire, remove him. Hire another expert. Employ another expert. If still auditor cannot resolve the matter, modified opinion, because sufficient appropriate evidence you cannot obtain, because no matter whoever is coming, nobody is able to solve the matter. So which means limitation on the audit. Sufficient appropriate evidence you could not obtain, modified opinion. And when you want to modify the opinion, 705 says if there is a limitation on auditor by the management, by the circumstance, what to do. Finally, reporting. I used expert to work. You see how cleverly the standard has been drafted. Yes or no? Who is an expert? Who is a management expert? Who is an audit expert? You have ultimate responsibility. Do you need an expert? Do you need an auditor expert? Yes or no? And competence, capability, objectivity of the expert evaluation. Hire him and agree with him. Evaluate the work. Work is not adequate. What to do? And then finally reporting. Suppose expert work is over. Report is given. Yes or no? And this report is more reliable. And it leads to a material misstatement in financials. I found a material misstatement in financials according to me, which is a judgmental misstatement. Management is not agreeing. Fine. According to me, it's a material misstatement. Now, I will modify the opinion. Now, I modified the opinion. No. For this, what is the evidence available for me? Expert report. Now, should I refer about expert name in the audit report? You can. To explain people why you modified. But just because you are referring his name, that doesn't reduce your responsibility. You have ultimate responsibility. Sir, I used expert report, sir. Management workings, both everything is matching. I decided to give unmodified opinion. Even now, should I refer expert name in the audit report? Not required, unless required by law. If law requires you to refer the expert name in the audit report, whenever you are using, refer it and state that your responsibility will not be reduced by such a reference. Over. Easy or not? Less than 20 minutes. We literally understood entire this standard. 620 over. Clear? I think I myself loving my revision class than regular class. Because in regular, no, we discuss little bit in depth, but revise multiple times. But in revision, no, it's coming so smooth. Fine. Clear, everyone? This is how you need to learn context, understanding. You understand better, you read it slowly, thoroughly, you remember better. That's it. No mnemonics, no cheat codes, nothing. Not required. And you can't remember that also. You remember 20 to 30, not 600, 700. We have in the entire subject 600 concepts, 500 to 600, because my question bank has 400 plus questions. Untested concepts will be there now. That will be at least 100 to 150 minimum, which are not there in the question bank, which are there only in the concept book. So put together, how many concepts will be there? 550 to 600. How many codes you will remember? How much you will try to remember? Bug up. Understand. Expert work not adequate. Okay, ask him to work more. You perform more and try to resolve. Not possible, try to employ somebody. Still not possible, limitation, modified opinion, over. Like that. You have to simplify the content while understanding. Then first understand what is given. Simplify it, analyze it, understand it, absorb it, then repeat with the same version. You remember like anything. Clear? Fine. Some students, they watch class at high playback speed, 1.5 speed, 2 speed. Oh, where is he going after that? Why are you hurried? People are obsessed with finishing the content than absorbing the content. You can't absorb. If you watch at higher speed, you can't absorb the content. Why do you feel a face-to-face session is very effective? Because it's at standard speed. You can't speed me, no? Yes or no? So, people watch at 1.2, 1.5, they try to, finished, lecture finished. You are also finished. Watch at standard speed to absorb. So, people focus on only listening. Listening will not give you, any learning. Absorption. How much you absorb the content, how much you observed and absorbed. So first process it. When you watch at standard speed, your mind not only listens, it also processes. People are focusing on listening, not on processing. That's the problem. So they want to finish 1.5 speed. I should revise. That's why your revision taking lot of time than the coaching class. Because you're not connected to the subject. Listen at standard speed. Some students, they watch marathon at 2x speed. My marathon is 24 hours. You want to finish it in 12 hours. I ask him why, so that I can revise more times. You didn't understand anything, no. How can you revise? Just living in assumptions, living with myths. I showed ICS study material, not at all time taking to read. You just observe at standard speed. I hope every one of you, whoever is watching video class at standard speed, I hope so. If at all you're watching at higher playback speed, just reduce it. If at all the faculty is really slow, you feel like sleepy, then increase it to 1.1. Worst scenario 1.2. If you're watching any content beyond 1.2, simple. Song you take, a song. Listen at 1.5 speed and then finish the song. You don't feel it. You can also finish the song, no? Exactly. The pitch, the tone at which we talk, the expression, the example, the articulation, all this is you can absorb only when you watch at standard speed. You can watch a movie at 1.5 speed, no? We don't get that, the feel. The song, we don't feel it. That's what exactly applies in everywhere. What we apply at everywhere, apply the same in education. You will succeed faster. But for education, we always have a different rules. That's the reason we are failing. When you sit for, see, when you're watching for movie, I need to concentrate, running notes. Movie theater, not required. Same, how you watch a movie, watch this also the same way. You know how you watch a movie? Lots of intensity, with tremendous amount of concentration. Even if a side drums, everything happening, some band baza is going on the road, doesn't affect you. But when you're studying, somebody moved a pen. Where are you focusing on? Are you focusing on books or are you focusing on others? Yes or no? I will not be disturbed. My focus is raw. You see, when I take a break, I don't even look at this. I don't even think about what next I should teach. But when I sit in the class, I don't think about my phone all the time. My wife is calling. Fine. Okay, fine. So I don't look at anything else. That should be the level of attention. You see me intense when I'm teach. The gripping, I'll make it gripping, the subject. Yes or no? It's like a intense thriller movie you feel like watching. Every topic I discuss, it will be gripping. Why? If at all I'm energetic like this only, you'll not sleep. Audit is dry subject only. You shall not refer effort. If I start reading like this and then just explaining you will hate the subject. So anything you do, intensity, observe how you're doing the things. Is it right or wrong? Observe it. We always tell in our I always tell in my regular class also at multiple places, watch at standard speed, watch at standard speed. Still, already I'm very fast. And on top of it, they're increasing the speed. This is the reason why we are failing. Because you wanted to finish it faster and you're making it multiple attempts. Those who are calm and composed, okay, fine, let me follow the process. They're clearing in first attempt and second attempt at max. Those who are hurrying up the process, the shortest way to succeed is the longest route. You want to succeed in the shortest time possible, you take the longest route. You want to go with the right route, that's the shortest. Usually the route to the success, the easiest and shortest route to the success is right process. Believe in the process, have patience and follow it. Don't expect about result. Will I fail? Will I pass? Will I fail? No, don't worry. First, justify what you're doing. Why I will fail if I study well? That should be the attitude. Don't worry about the result. Yes or no? That's what karmanya, some statement is there. Don't expect result. Don't expect to be successful. Just give your best in what you're doing. Okay? This whatever 40 days, 45 days time you have, give your best. Don't hurry up. Oh, so much is so much. Don't stress. Okay, whatever happens, it happen. Whatever possible, whatever you can finish, that much you can finish. Don't stress about it. Stress is because you're postponing things. If you finish, today you plan to finish some target, 10 hours you sat and 10 hours you studied, you'll be very happy the day. And first part of your day, morning 7:30 to 1:30. If you are super productive, I'm telling you, you'll be super happiest. I'll be very happy always, even though sometimes I feel restlessness. I'll be happy all the time because I'm so productive from morning 7:30 to 1:30. At the end of the day, I get a satisfaction. Today 4 hours recording came, 4.5 hours recording came. I'm progressing. I'm seeing the progress. When you feel stressful, when you feel worried, when you feel like dull, all that, when you don't see progress at all. So simple way to come out of stress is just start executing without expecting any positive or negative result. Just forget about the result. Execute. That's the only way to come out of stress, anxiety, all this. Okay. Fine. 6:20 is over. Then 6:10 we will discuss. Chapter will be over. Audit strategy. In audit strategy, audit strategy, some content is irrelevant at CA final. It is only tested in CA intern. Okay. 450 I covered, 540 I covered, 620 covered, 600 covered. Now 610 alone is left. That is very easy. 610 is. Okay, 5 minutes we'll start that. Yeah, by the way, in SA 620, one more topic is there which is slightly pending. See, because you're using auditor expert work, definitely your nature, timing, extent of audit process will affect. Do you agree? Especially, you have to perform more extensive processes when you're using the work of expert. When the matter is complex and subject to judgments are involved, and you don't have prior experience of working with that expert, and that expert is external to the firm and not subject to quality control policy. If at all is an outside expert, I have to sit and review his entire work carefully. If at all is internal expert, I don't have to monitor also that much. Yes or no? And auditor expert is performing processes which are integral part. For example, I want to hire an expert to understand the entity, which means expert work is integral to the entire audit process. Only when he make me understand the business model, then I can do the audit. So your nature, timing, extent of audit procedures are extensively affected by using the work of expert. Do you agree? That's it. So when deciding timing, nature, extent of procedures, you please consider what is the nature of the matter, risk of MS involved with the expert, significance of his work in the audit, auditor's prior experience with that expert, is he subjected to firm quality control policies. Generally, more extensive procedures are required when the nature of the matter is risky, risk of MS is high, when the expert work is so significant to the audit, and you does not have a prior experience with him, and when he is not subject to firm quality control policies. That's what given here. Over. SA 620 is typically over. Clear? SA 610. Using the work of internal auditor. You can use his work in two ways. One, he will perform the work and that workings you can ask. Two, you can use him directly. That's called direct assistance. What is a direct assistance? Using the internal audit functions team as a part of your team, where you direct them, supervise them, and review their work. So using internal audit function to perform audit procedures under the direction, under the supervision, under the review of external auditor. So that's called direct assistance. So for example, we planned for an audit in a company. We went there. It's an outstation audit. Some 10 of us went. Okay, some 5 senior articles, 2 junior articles, and 2 CAs and 1 engagement partner. So entire team went. As soon as we went there, that atmosphere, that food was not set. Some 3 of them fell sick. We asked management, sir, we want 10 more days extra to finish the audit. They said, no, it is not possible. We need to file this to holding company. They need to file consolidated financials and all. No, it's not possible. How can I finish the audit? Then company said, we have internal auditor team. They are idle now. You can use them. Okay, fine, I will use it. Now what precautions you should take before you take direct assistance? Simple. You need to evaluate them. The team member, what you will evaluate? Objectivity. What you will evaluate? Objectivity and competence. The second thing that you evaluate is competence. So evaluations. Assess the competence of the internal auditor who is providing direct assistance. Assess the objectivity. Assessing objectivity means what? Existence and significance of threats. Assessing existence and significance of threats. How do you know? In evaluating these factors, the external auditor will understand IAF organization status, internal auditor's organization status, and relevant policies. Are they supporting objectivity? Look at the status of the internal auditor in the organization hierarchy, family and relationships that they have within the entity, association with the division or department to which the work relate to, how far internal auditors are associated in that division, and significant financial interest other than remuneration. Do they have any other interest other than remuneration? So when you are checking objectivity of the internal auditor, these are the factors that you will consider. Simple. Don't use their work if they are not competent, if they are lacking objectivity. Prohibition on type 2. External auditor shall not use the internal auditor work if there are threats to objectivity or if they lack competence. If at all they don't know how to work, what is the point of hiring them as a part of your team? Now you decided to hire because they are competent, they are having objectivity. You decided to hire, but don't allocate the following works to them. These works don't allocate. Which works? Works which involve significant management judgment, or work area of work related to higher risk of MMS which require significant judgment, or it related to work which they already performed or they're planning to perform anyhow soon, use that work then. Why are using once again them and do the same work? And in SA 610, no, in this standard, I need to take some decisions, right? Whether can I use this work? Can I use this work or not? That decision making work, don't delegate him. Correct? Huh? Whether to use 610 standard or not, don't ask him. That you should decide. Okay? Decisions related to decisions, the auditor makes under this standard. So these 4 areas, don't delegate them. Areas involving significant judgment, areas where high risk of MMS is involved, areas of work which they already perform or planning to perform, or decisions relating to SA 610. That decision making work, don't delegate them. Any other work you can delegate. Now you delegated, they worked on it. How your article assistant perform the work, you review, right? Same way review that work also. Review the work performed by internal, the external auditor, direct him, supervise him, review the work performed by internal auditor. And when you are directing and reviewing and supervising, remember certain facts. They are not independent of the entity. Yes or no? Review the evidence which they gathered and see whether sufficient appropriate evidence is obtained by them for the conclusions. Internal auditor, no, I gave purchase vouching work. He verified everything and then came back and told everything is true and fair. Look at the evidence and see whether the evidence gathered by them is supporting the conclusion. And before taking him into part of your team, before taking him into the team, first have a formality. There are some activities in one of the exam, no, before taking internal auditors into the team, there are certain activities which external auditor has to perform. Activity, they say, nothing but written agreement. How to formalize this? One way, another way of asking question is how to formalize this? Nothing but written agreement, formalities. 2 agreements I will enter with. One with the management, one with the internal auditor who is providing direct assistance. With management, next 20 days, you will provide your team members as a part of my team and you will not interrupt them. Another agreement with the auditor. Look, you are part of my team, next 20 days, you have to maintain confidentiality. And if at all any threat to objectivity is there, you have to immediately intimate me. That's it. Easy. One part of the standard over. Then SA 610 type 1. See, using the work of internal auditor, right? Type 2 is direct assistance. Type 1, using the work performed by internal auditor. Look at, sir, can I use the work of internal auditors? Yes, you can. Evaluate 3 things. Evaluate objectivity. Yes or no? What is the extent to which internal auditor functions, organizational status, relevant policies and processes support their objectivity? What is the level of competence? Competence refers to knowledge and skill required to perform the task diligently as per the standard. And third point, most important, do the internal auditor follow a systematic and disciplined approach including quality control? What do you mean by systematic and disciplined approach? See that internal audit activities are planned, performed, supervised, reviewed and documented systematically. What do you mean by systematic approach? The work is planned, performed, supervised, reviewed, documented systematically. So if they have a systematic work culture including quality control, and if they are competent, and if at all their organizational status, no, supporting their objectivity, unbiasedness, yes or no? In all these 3, if the answer is yes, 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 use their work. If you see in type 2, third point is not there. Because in type 2, I'm not using his work. I'm taking him into my team. I will tell him how to do the work. So I don't bother about his work approach. Whereas in type 1, he already performed the work and I'm using his work. I want to know by what standards he performed this work. For that reason, I will look at his work approach. Do you understand that? For example, simple classic example, I want to do GST reconciliation for this company. It is a Reliance Industries Limited. They have 35 GST registrations. Or they have 29 GST registrations, or 30 you take. 30 registrations they have state-wise. Now state-wise, they are filing 2 returns every month. And like that 12 months, 24 returns per state they are filing. Plus annual return they are filing 25 into 30, 750 returns. In Caro, I have to give a opinion whether the company is regular in payment of statutory dues to respective authorities. I need to pay. For that, I need to do reconciliation of these 750 returns, which is a significant difficulty in audit. But luckily, Internal auditors have already performed that work. Reconciliation is already ready with them. Can I use that? Yes, subject to these 3 evaluations. If at all the answer is no in these 3, like internal auditor objectivity is not adequately supported, lacks sufficient competence, they lack systematic and disciplined approach including quality control, don't use his work. Suppose in all the 3 cases, yes, answer, positive, yes, use his work. Now when you are using the work, to what extent you will use? To what extent? Don't depend too much on him. Undue reliance on internal auditor should be avoided. As much as possible, you should perform the work more directly, obtain the evidence more directly by you. Use less of the work of the function. Perform the more of the work directly, especially in the following areas. Where more judgment is required in planning and performing the audit, where more judgment is required in evaluating the evidence obtained, or if assessed risk of MMS at assertion level is higher, or IAF objectivity is not supported, or he is lacking competence. When he is lacking competence, when he is lacking objectivity, when more judgment is required in evaluating evidence obtained, or more judgment is required in planning, or when the assessed risk of MMS is at higher, in these cases you perform the work directly, don't use his work. Then where I can use their works? Use their works for doing test of controls. Use their work where for substantive procedures where limited judgment is involved. Use their work for inventory observation, physical count, clerical task. Use their work for tracing transactions in books of accounts. Use their work for checking compliances with laws and regulations. Just now I told GST reconciliation. Use their work for review of components financial information which are insignificant to the group. Use their work in those areas where much complexity is not involved, much risk is not involved, much judgment is not involved. Perform the work more directly where the judgment is higher. The external auditor shall evaluate whether planned work of usage of IAF would still result in you involving sufficiently in audit. See, whenever you planned to use internal auditor work, these areas you planned. Even after using that way, does it still result in you sufficiently involved in audit? Why I should check this? Management should not feel every time he's coming every day, asking internal auditor workings, checking that and then going. He is not at all working. Management should not feel that. Yes or no? That's it. So this itself can be asked as a 5 marks question. Many times it was asked. Nature and extent of internal audit functions to be used by external. Suppose no, you decided which areas you want to use. Now use it. Get the work. Discuss planned usage first. Interact with internal auditor. Okay, hello Mr. I want to use your GST workings. Okay, discuss the planned use with IAF work to coordinate respective activities. I want to use your GST workings. I want to use TDS reconciliation. I want to use Provident Fund reconciliation. Immediately he told, sir, GST is half only ready. Another half is pending. TDS is not at all done. I'll ask him, when are you going to do? I'll do in October. Can you do it in July? Can you do it in June? Can you do it in April month? Immediately after March, I'll ask him. So that I can plan I can coordinate the activities. And the external auditor shall read the reports of internal auditor to understand nature, extent of procedures and what are the findings. Read their reports to understand what they found. And perform procedures. The external auditor shall perform sufficient audit procedure on the body of work of internal auditor to know whether it is adequate. GST reconciliation is sent, no? Don't directly document it. Check whether it is correctly done or not. Verify it. Yes or no? Whether work of IAF is properly planned, properly performed, properly supervised, properly reviewed, properly documented. Do they obtain sufficient appropriate evidence for the conclusions reached by them? And conclusions reached, are they appropriate? And reports, are they consistent? The report, no, internal audit report is it consistent with the work performed? Is the report matching with the evidence obtained? Is the evidence obtained sufficient and appropriate? And did they plan the work, perform the work, review the work, supervise, documented properly? Over. Are you clear? Next. To what extent you will perform this? Okay, I have to evaluate his work. I know. I have to evaluate. To what extent? He's super credible guy, competent guy. He's very qualified, subjected to standards. Then my extent of verification will be low. So the extent of verification will be responsive to the amount of judgment involved, risk involved, objectivity, competence. Easy. Then direct assistance over the standard. So what the standard is exactly talking about? What is the objective of auditor? This standard, first of all, does not compel you to use the work. You are not under compulsion. It's your choice. But if you are using it, remember, you are only responsible for everything. The sole responsibility will be with the external auditor. There is nowhere stated External auditor is not at all required to use the work of internal auditor to modify or reduce your audit procedure. It remains your discretion whether to use internal auditor work or not. Understood? Then objective, what the standard is guiding you. It will help you to determine whether work of internal audit function or direct decision can be used or not. If so, if you want to use, where you can use, to what extent you can use. If so, you want to use so and so place, how to obtain evidence on adequacy of the work. If at all you want to take direct assistance, how to direct, how to supervise, how to review. This is what the standard is telling. Over. 16 standard is over. See how easy. You understood everything, all of you. That's it. When you master certain thing in such a way, your explanation becomes simple. Fine. You found my explanation so simple, understandable? Yes or no? So that's because of the continuous understanding, research, all that. So if I do research enough, my performance here becomes easy. The same happens with exams also. So you see 610, 620, 600, nightmare standards, 540, 450. And you see how simple I broke entire the concept without even making you mug up. This is like this only. Don't, no, I didn't. Every word, every sentence, I will give you a real example. A real example, I'll connect it with that. Forget about real example. I'll connect it here with the sentence. So that level of mastery you will get only when you intensely work on it. That's it. Okay, fine. So we'll wind up. Strategy topic is over. Yeah. So let's begin the second chapter, gap, okay, which consists of certain standards. The standards which are there in this chapter are typically 260, 240, 250, 299, and we have 402. That's it. I think only 5 standards: 240, 250, 260, 299, 402. Yeah. Now within this 299 we have already covered. Okay. Now we are yet to cover these 3. Now here I also want to add one more standard, 265, which is not there in the CA final syllabus, but questions will be asked. Okay, we have in question bank 265 questions. SCA 265 related questions were there, where we have 2 topics. First of all, 265 standard is regarding communicating deficiencies in internal control to those charged with governance and management. Okay, so in the question bank we have a concept called indicators of deficiency. We have a concept called indicators of deficiency. Okay, factors or considerations to decide significant deficiency. Significant deficiency. Like this 2 topics were there. This is one, this is one. For this, what I request you is just watch my CA Inter Marathon. 265 is discussed only in CA Inter Audit book in depth. Either one is solve the question bank on 265 or CA Inter Marathon you need to watch. In CA Inter, there is a chapter called we have this chapter SCA 265 was covered in audit completion and review. No, not completion and review. I think audit evidence only. Okay, in audit evidence chapter only it is 265 is covered. We discuss 450, 265 together at a time. Okay, so 265 standard related discussion is there in audit evidence chapter or something. You will find timestamp also. I'll upload, upcoming CA Inter new marathon I'll upload. Only immediately once final this marathon is get uploaded, immediately CA Inter marathon also will be there. So in that it will be there. So in question bank also, if you just search 265, you will find one standard in MRP category. Past exam MTP questions only were there. So those questions were given. So indicators of significant deficiency, factors to decide significant deficiency. 2 topics were there in the standard. Only those 2 were important. Then we have 240, 250, 260 and 402. And whenever you are discussing 402, you should also come and conclude regarding 3402. That's it. Now, without any delay, first we will cover 260. What is this 260 standard is talking about? This is just a communication related standard. Communications with those charged with governance. What you need to communicate? The standard is talking about the stat auditor, independent auditor, external auditor in the context of financial audit has to communicate those charged with governance certain things. What you should communicate? You should communicate auditor's responsibilities. You should communicate planned scope and timing of the audit. You should communicate significant findings from the audit. You should communicate auditor's independence in case of listed entities, terms of audit engagement, and circumstances where additional information you are including in audit report. Nothing but circumstances where you are modifying the audit report. These are the items that you should communicate. Tell me, what are the circumstances where you will include additional matters in audit report? Simple. One, when you modify the opinion, or when you want to include MURGC, or when you want to include key audit matter, emphasis of matter, other matter, or even there is one more point, MMS in other information. What is it? MMS in other information para as per SA 720. Correct? Modify the opinion as per 705, MURGC as per 570, 701, 706, and MMS in other information as per SA 710. Whenever the auditor is including additional matters like this, you must communicate with management. Are you clear? Not management, those charged with governance. Generally, we communicate to those charged with governance. So communication with those charged with governance is required. You know, how do we communicate? We don't communicate them opinion para separately, emphasis para separately, you know, all this. We directly give them draft audit report. We directly give them a draft of audit report to those charged with governance to discuss how these matters were addressed. Clear? So next. So one is circumstances where you are including additional matters in the audit report, that you should communicate. To auditor responsibilities. What is the next one you should communicate? Auditor responsibility. That auditor is responsible for forming and expressing opinion, and this audit responsibility does not relieve management from their responsibilities, and generally auditor responsibilities will be communicated through engagement letter. Then we will communicate significant findings in the audit. The next thing that we need to communicate is significant findings. Okay, what are significant findings in audit? By the way, 265 standard, 450 standard were there in completion and review chapter in CA Inter, not audit evidence. Okay, we have a chapter called completion and review in CA Inter, which is also 6th chapter in CA Inter. So that is the that contains 260 related discussion. 265 discussion will be there, but 260 also there in CA Inter, but very limited discussion. Here it will be in depth. Now, significant findings you should communicate. What are significant findings? One, auditor should communicate their view on qualitative aspects of accounting practices, policies, and estimates and disclosure. What qualitative aspects that you identified, that you should communicate. Significant difficulties you encountered, that you should communicate. What are significant difficulties? If at all management is delaying information, or unavailability of staff or personnel, or unavailability of required information, unreasonably brief timeline to complete the audit, extensive unexpected effort required, restrictions imposed by management, management's unwillingness to assess going concern when requested. So management is unwilling to assess going concern. Next. So these are significant difficulties. Sometimes in exam a 4 marks question will come. One of the important matter to be communicated by auditor is significant difficulties. What are significant difficulties? Simple. Management is delaying. Management is putting pressure on the auditor. Unexpected effort is required. Like I want to verify GST, and management supposed to would have already completed GST reconciliation. They didn't do that. So significant effort is required from me now to do GST reconciliation. And restrictions imposed by them, management's unwillingness to assess going concern assumption when requested. Remember, we need to request management to do going concern assessment for 12 months from reporting date. They're not doing it. All these are significant difficulties. Then any other significant matter which you discussed with management, whatever significant matters you discussed with management which are especially unresolved, please communicate to those charged with governance. The auditor should communicate significant matters discussed with management. With whom you should communicate? Those charged with governance, like significant events or transactions, business conditions or plans, concerns about management, consultation with other accountants, disagreements with management on significant matters. Where and all, there is a disagreement happen, or where and all management has taken one course of action by consulting some other accountant. Yes or no? Judgmental differences, nothing but all these significant matters, you please communicate to top management and explain them. Why you will also communicate top management where and all written representation is required. You also communicate the form and content of the audit report wherever circumstances are affecting it. Okay, then any other significant matters which you feel were important for oversight responsibilities, if at all those charged with governance should aware of some other responsibilities, you please communicate that. That's it. So another important one, now significant finding, significant difficulties, this is important, this is important. Then another important one is independence in case of listed entity. When you are acting as an auditor for listed entity, you must communicate with those charged with governance, compliance with independence requirement and code of ethics. You must communicate with those charged with governance how you complied with code of ethics and independence requirements. Okay, like the auditor must confirm engagement team and firm and network firms have complied with ethical requirements regarding independence. Okay, now you should also disclose all relationships and matters between the firm, network firms and the entity that may affect independence. You should communicate total fees charge details and how the fees is charged for audit and how the fees is charged for non-audit. So that breakup also should communicate. And definitely some threats would have been there for independence, right? What safeguards you applied to eliminate them, that also you should communicate. The auditor must disclose safeguards which are in place to eliminate the threat or to reduce the threat to acceptable low level which are affecting independence. So in case of listed entity, you should communicate that you, your team and network firms have complied with independence. You should communicate relationships which might impact independence. You must communicate fees charged for audit and non-audit services, and you should communicate safeguards implemented. That's it. In 260 only this is important. Then there is one more point is there. So you have who are those charged with governance? Who are those charged with governance? Those charged with governance depends on governing structure. What do you mean by governing structure? Governing structure depends on culture, legal background, size and ownership. You look at Reliance company, there is no CEO concept. They have managing director. You take IT companies, you will find CEOs. Yes or no? Each company might have a different governing structure. Again, it depends upon the law and regulation. There will be some who will control and take complete affairs of the company without any legal designation in the Companies Act. Able to understand? CEO, there is no legal designation in the Companies Act. Managing director is legally defined. Yes or no? And moreover, CEO and manager both are one and same. Technically speaking, what they do activity wise is one and same. CEO need not be director. A CEO need not be a director. So anyway it can be clear. A CEO need not even be a shareholder. He has provided intellectual property rights for the company based upon which the company is running. That itself is enough. Next. So some entities will have supervisory board. Some entities all the supervisory functions are performed by single board. Executive and supervisory both are performed by single board. In some entities, execution, a company activities are executed by board of directors and it is monitored by committees. Audit committee, CSR committee, governance committee, all these committees will monitor. And governance roles can be part of legal structure. For example, in a company, director. Remember, this standard is applicable for any entity. So who is those charged with governance in that entity? It depends upon governing structure. It depends upon legal framework. It depends upon, ultimately governance is usually a collective responsibility of a governing body. You may call it as board of director, you may call it as supervisory board, you may call it as partner, you may call trustee, you may call any other managing committee, for example, equivalent. In smaller entities, governance may be resting with only one person. And due to this diverse structure, sometimes auditor may not be able to identify correct persons with whom to communicate. So how to identify who are the correct person, who are those charged with governance? How to identify? Ask engaging party. Ask who appointed you. Ask them if at all I have a severe issue, audit report and all, to whom I should address it. So they will tell you. So the auditor may need to discuss and agree with engaging party who are the relevant person to communicate. And your understanding of the entity will also help you. Understanding of the entity will also help you who are top management in the entity. Finally, you should read about documentation. You should establish communication process and documentation, a 5 marks question. The auditor should communicate with the management. What is the form of further communications is going to be, how frequently, timing they are going to communicate, general content of communication. Auditor should establish communication process. You should only establish, sir, let's communicate through mail. Let's update you the audit status once in 3 days. Like that. The auditor shall communicate all significant findings in writing. Yes or no? If oral communication is not sufficient, you need not cover each and every matter from the audit. Only significant matters you communicate. And auditor has to evaluate whether there is a two-way communication. Is it adequate? Remember, only when your interaction with the management is adequate and proper, you get the required evidence. If your interaction is not sufficient with the management, you may not get the sufficient appropriate evidence. So auditor has to evaluate whether two-way communication is effective. If not, what is its effect on the risk of MMS? What is its impact on obtaining evidence, and take appropriate action. Finally, matters which are communicated orally, you should document what is communicated, when it is communicated, to whom it is communicated. If matters are communicated in writing, you please retain a copy of communication as a part of documentation. That's it. Clear? Everyone, 260 standard is over. Fine. By the way, in exam sometimes what they can ask you is, this main point they'll ask you, significant findings means what? Write about significant findings in audit. 5 marks question they can ask. Significant findings means what? Your view about qualitative aspects of accounting practices. The auditor communicates significant difficulties encountered, communicate significant matters discussed, communicate the written representations that you are requesting, communicate circumstances that affect form and content of the audit report, any other significant matter that arises during the audit which according to you require oversight of, which is required for oversight of financial reporting process. Communication of findings includes requesting further information. Nothing but why are you communicating? To get further information. That's it. So with this, 260 standard is over. Clear? Yeah, let's begin. SA 250, consideration of laws and regulations in an audit of financial statements. Nothing but auditor responsibilities relating to auditor's responsibilities relating to laws and regulations in an audit of financial statements, which also, this is one way of writing the heading, and another heading which has is consideration of laws and regulations in an audit of financial statements. Now any of these two headings you can write, no problem, okay, but consideration of laws and regulations in an audit of financials is accurate, okay, or you can even write auditor's responsibilities relating to laws and regulations in an audit of financials. Now, big clients, big listed entities, if you see, the number of laws and regulations that they have to deal with is enormous. For example, there is one company where these companies do basically compliance audit. For example, these companies specifically have a legal department. They will do regularly compliance audits. Compliance audits means what? Whether the entity and their operations, are they being executed by complying with laws and regulations or not? They need to continuously assess it. For that, first entity has to identify list of acts that are applicable. This is one such entity. There is one company which is based in Mumbai. So look at how many acts that are applicable to it. Okay. Now they will have to do a compliance audit like this. They will have to do a compliance audit. You see how many rules, what is the act, what is the act, what is the provision, what is the section, or what is the condition involved in that act. So they need to list out like that. They need to list out what are all the laws and regulations inside that law, how many compliances we need to do, each compliance wise, whether we complied or not, checking it. Such a kind of audit is called as what? Compliance audit. Generally, when we think of compliance audit, we only think of it in PSU audit context. No, compliance audit is popular in every sector, in every type of organization. So an organization should know whether they are doing business in accordance with the law. There will be so many laws which we don't even imagine that they exist. So accordingly, this standard divides the laws and regulations into two types. from audit point of view, auditor point of view, in order to give opinion on the financial statements. Type 1, type 2. What are type 1 laws? What are type 2 laws? Type 1, those laws and regulations which have a direct effect on amounts and disclosures in financial statements. Type 2 laws, other laws and regulations that do not have direct effect on financial statements, but they will have a material impact at a future date if the entity does not comply with these laws. If the entity does not comply with the type 2 laws, they will have an impact at a future date. They may not have impact at immediately, but at a future date they might impact. Penalties, fines, or even going concern issues might come. Those laws and regulations are called as what? Type 2 laws. Now, as an auditor, I should check whether the company preparing financial statements in accordance with laws and regulations. Tell me, what will happen if there is a non-compliance? What will happen? It amounts to contravention, and which leads to penalty or which leads to fine. Now, if this fine and penalty or this contravention is not addressed properly, financial statements might be misleading. So, auditor has a duty to check laws and regulations are complied or not complied. But the problem is, type 1 laws, type 1 laws, especially tax laws and employee welfare laws, we will have competence to verify. But for example, I'm doing audit of a pharma company. Pharma company is liable to comply with so many regulations. There will be international regulatory bodies on medicine, tablets manufacturing, all that. So how many laws and regulations applicable for a pharma company? Whether are they all complied or not? So difficult. So the standard says for type 2 laws, you just have to get an assurance that nothing has come to your attention whether there is any non-compliance. You just have to perform limited audit procedure, which is also actually called as specified audit procedure. You must perform specified audit procedure just to identify non-compliance. If a car is manufactured, even if you are not expert, by just going for a test drive, you can tell whether the car is functioning properly or not. You don't have to check engine, everything, is it assembled correctly, is it everything. You don't have to check that. Just by driving it for some 15-20 minutes, you can understand whether the car is functioning correctly or any odd things were there. So for type 2, such a kind of skill only required. You don't have to be an engineer and then check each and every component scientifically with all this technicalities. No need. Type 2 laws, you don't have to do that verification. Whereas type 1 laws, you must obtain sufficient and appropriate audit evidence whether they are all complied or not complied. Whereas type 2 law, you don't have to get evidence on whether all of them are complied, but you have to get evidence whether there are any non-compliances. You just have to find out non-compliances are there or not, just by performing specified procedures. If those procedures you performed, you did not identify any non-compliance, you assume that type 2 laws are complied. Whereas for type 1, you will get reasonable assurance. For type 2, you get limited assurance. This is the main standard. Now, suppose, yes, I verified type 1 laws and type 2 laws as indicated under this standard. I found some non-compliance or suspecting non-compliance. What you should do? Communicate to management. Suppose you felt management themselves are involved in non-compliance. Communicate to those charged with governance. Check whether disclosure in financials are required or not. Generally required. If at all, because every non-compliance leads to some penalty, some fine, or some contingent liability. If at all it is not disclosed in financials, give a modified opinion if it is not disclosed in financials. Not only that, since there is a non-compliance with laws and regulations, sometimes it might lead to that non-compliance. You might have to disclose it you might have to report it to regulatory authority. For example, when you are doing NBFC audit, if you identify non-compliances by the NBFC with RBI Act, non-compliance with scale-based regulation, RBI has given directions stating auditor has to file an exception report. There is a non-compliance with the law. Scale based regulations you not complied, RBI Act is not complied, some non-compliance is there in terms of, NBFC operations. And what you have to do, RBI mandates you, RBI mentions you, please report it to RBI through an exception report. So if there is a requirement like that to report to some regulatory authority about a non-compliance, check and then report it. So when you identify non-compliance, first report to management. If you are not getting proper information, report to those charged with governance. Yes or no? And if at all it is not disclosed in financials, then modify the opinion. Further, check it out whether do you have to report this to any regulatory external bodies. This is where no-cler concept also comes into picture. What is no-cler? Tell me, what is there in the no-cler concept? Simple. As a part of audit of listed entity. See, no-cler is applicable for CA in practice as well as CA in service. Who is a senior professional accountant? Who is a senior professional accountant in listed entity? Correct? Huh? So, no-cler concept is applicable only for listed entities. To that listed entities, you may be a stat auditor. In that listed entity, you are a CA basically, but working as a director, key managerial person, officer, or some role where you can influence the company operations. Able to understand? So, now, for these CAs, it is applicable. So, listed entity, yes or no, where net worth is 250 crores and above. If at all a listed company has a net worth of 250 crores and above, to that listed entity, for the stat auditor, no-cler provision is applicable. What is applicable? No-cler. As per no-cler, what it says, if you are an auditor of listed entity, as mentioned here, or if you are a senior professional accountant listed entity, as mentioned in the no-cler introduction applicability, if during the course of performing your services, if you come across any non-compliance, what you should do? Check. Do you have a responsibility to report that non-compliance to regulatory authority? Check out. Some regulatory authority. If you have a responsibility, report it. For example, in banks, you have a responsibility to report non-compliances to regulatory authorities. That responsibility is there not only for stat auditor, that responsibility is there for internal auditor, CEO who is a chartered accountant, like that some responsibilities were given. So they have to report to legal and regulatory authority. Now, okay, fine, I found a non-compliance. What I should do as per no-cler? Simple. See, is that required to be reported? If it is required in some other law, then report it. Over. If there is no requirement for reporting it, just document it. Over. That's it. No-cler point says that only. Now in no-cler, non-compliance definition is very wide, which includes fraud. Non-compliance definition is wider, which also includes what? Fraud. In the recent past 4 attempts or 5 attempts in one of the exam, no-cler also tested. Steps for reporting a non-compliance. In that no-cler concept, there is one concept called steps for reporting. Immediately when you identify a non-compliance, what you have to do? Get a legal opinion if required. Yes or no? Like that some steps were there. Okay. So what are the steps? That is important. That is no-cler. Now, what is the difference between no-cler and 250? 250 standard is applicable when you are doing financial audit of any entity. No-cler concept is dealing with listed entities. That's the basic difference. Okay. 250 standard is dealing only in the audit context and only when the laws and regulations have a direct or indirect impact on financials. No-cler, there is no necessity that there should be an impact. Suppose in the company bribery is happening, you have to report. Bribery is also covered in no-cler. Is it there? Yes or no? Corruption by bribery. Yes or no? That is also their part of no-cler. So in no-cler, non-compliance meaning is very wider. Whereas in SA 250, non-compliance meaning is very narrow. In SA 250, typically it is dealing with laws and regulations. You understood the basic difference between 250 and no-cler? Now, what we need to check? In this, one of the important point is, whose primary responsibility for compliance with laws and regulations? Management. Yes or no? Management has to comply with laws and regulations. Management's primary responsibility. For that, management will establish, for complying with laws and regulations, no? Management will establish policies and procedure. Nothing but internal control system. What they will maintain, they maintain a register of laws and regulations applicable to the entity. They maintain register of laws and regulations. They maintain a record of complaints received from the employees. They will implement and maintain proper internal control. They will follow code of conduct. They will train employees to understand code of conduct. Code of conduct includes what? Listing out laws and regulations and then timely compliance thereof. For that, you need to first train the employees. Take actions on non-compliant employees, disciplining. Take actions on employees who are not complying. And if required, appoint legal advisors to help monitor legal requirements. Also take the help of legal advisors so that they will monitor all the legal requirements. Are you clear? Maintain a register of laws and regulations. Then maintain a record of compliance. These are all policies which a company has to follow, under which a director, which management has to establish, so that they will comply time to time with laws and regulations. Clear? Yeah. In bigger companies, no, this entire compliance function will be given to a legal team. Okay, an audit committee or a compliance team will be there, or internal audit function, one subdivision will be there, who will be dealing only with laws and regulations. Now look at what is the responsibility of auditor here. What is auditor responsibility? By the way, non-compliance means what? Act of commission or omission, contrary to prevailing laws and regulations. For that, we have to do some basic risk assessment. What we need to do in the risk assessment? You need to find symptoms. You need to find symptoms, indicators. You see, indicators of non-compliance. Some investigations are going on in the company that indicates something is wrong under some law. Payment of fines and penalties. You see, ledger account, fines and penalty is there. Unusual payment for unspecified services. Purchase of goods at below or above market price, which indicates tax law related non-compliance. Transactions with companies in tax haven. Legal fees. Unauthorized transactions. Negative media comment. All these are indicators of non-compliance. If you see them, investigate them. Now look at what is the responsibility of auditor. What is the responsibility of auditor? Simple. What is the first responsibility? What is the primary responsibility? The auditor has to obtain sufficient appropriate evidence about type 1 loss. Type 2, the auditor has to perform specified audit procedure just to identify non-compliances. Clear? Now look at this inherent limitations point, a 4 marks question. What is this inherent limitations? See, audit itself is suffering from inherent limitations. Within this, the inherent limitations relating to laws and regulations checking is even more greater. Inherent limitation with respect to laws and regulations verification is even more higher. The limitation is even more severe. Why? Because there will be some laws which are not related to financials. You will not find some law not complied. Pollution emissions not complied. You will not find any misstatement in balance sheet P&L. So many laws may not be captured by financial reporting systems, or there is non-compliance, company concealed it. Sometimes whether an omission, whether a commission, is it a non-compliance or not is a matter of legal determination. And sometimes non-compliance will be removed from financial statements or transactions. Some company would have not complied and they rectified it immediately. Because of these reasons, the inherent limitations, because of these reasons, the inherent limitations for the auditor are greater. Clear? Yeah. So their inherent limitations point is important. Now look at what are the audit procedures for loss. First, understand the legal and regulatory framework. What do you mean by legal and regulatory framework? What are all list of laws and regulations applicable to the company? Understand that. Understand the legal environment of the company. Next, the auditor should obtain sufficient appropriate evidence, regarding compliance. You need to get an evidence regarding compliance, not non-compliance. You need to get an evidence of compliance with those laws and regulations that have a direct effect on financial statements. Now, whereas for laws which do not directly affect, perform following procedures to identify just non-compliances. What? Enquire management, inspect correspondence with regulatory or licensing authority, enquire management, top management, entity legal counsel if at all required, to know whether there are any non-compliances. 2. Check any communication received from regulatory authorities By doing these limited procedures, specified procedures, you can easily identify, okay, whether they are all compliant or not, I don't know, but are there any non-compliance? I will try to identify that. Hello? Sometimes there will be laws which have a fundamental effect on operations, yes or no? So auditors should focus on identifying non-compliance with those laws which have a material impact on financials, as consequences can be very high or very varying. Be skeptical. While forming opinion on financials, auditors should remain alert to non-compliances or suspected or non-compliances. So alert throughout the audit. Written representation. Get a written representation from management and top management confirming that they have disclosed you all the non-compliances. This point is there in review topic also. You should get a representation that all the laws and regulations were complied, and also any non-compliances were there, management identified it, they disclosed it to you. Suppose no, you identified a non-compliance. You identified non-compliance. What to do? See, these are the audit procedures for identifying non-compliance. Suppose now you identified the non-compliance already. Now what you should do? First look at the nature and circumstance of the act. What exactly the non-compliance? What exactly they failed? Gather further information to know what is its impact on the financials. Discuss with the management and those charged with governance. If at all management or governance do not provide sufficient information and they could materially affect the financials, the auditor must evaluate impact on the audit opinion and also evaluate non-compliance. What is the implication of non-compliance on the risk assessment, reliability of representation? Take appropriate action. Now look at the reporting part. Reporting of non-compliance to top management. The auditor must communicate non-compliance to those charged with governance unless it is not inconsequential. If the non-compliance is intentional, the auditor must communicate to governance as soon as possible. If management or governance themselves were involved, then report this non-compliance to next level higher authority, audit committee, for example. And if there is no such higher authority, get a legal advice. So this is regarding reporting of non-compliance to TCWG, 4 marks question. Write about reporting of non-compliance in auditor's report. If non-compliance has a material effect and is not reflected adequately, auditor should give qualified or adverse. Simple. If there is a non-compliance and that has a material impact on financials, like some fine or penalty will be applicable, but the company did not recognize it, therefore financials are materially misstated, you should give qualified or adverse. Sir, I am unable to obtain evidence, sir. Company is not giving me the list of laws and regulations applicable. If you are unable to verify whether laws and regulations are complied, you give qualified or disclaimer. And if you are unable to decide whether there is a non-compliance, that's a limitation, which means again you have to give 705. Reporting non-compliance to regulatory. Go and check no clear provisions on this. And simple, see under what act you are doing audit. Is there any law for the time being in force which says auditor should report the non-compliance to some regulatory body? If so, report it to them. That's it. Document what you should document, what non-compliances you identified, what is the result of the discussion that you had with management, governance and other parties. For example, other parties includes legal counsel, which may be internal counsel, external counsel. Over. The standard is over. Look at the standard structure. First they talk about primary responsibilities mainly. Actual standard. Okay, objective of the auditor will be there, all that is there, but main standard starts with primary responsibility. What is auditor responsibility? Audit procedures for identifying non-compliance. Audit procedures when the non-compliance is identified. Reporting to top management, reporting an audit report, reporting to regulatory authority, and finally indicators of non-compliance. That's it. Yes or no? In auditor's responsibility, there they spoke about SA 200 content also. Inherent limitations for laws and regulations are high because of 4 reasons. Yes or no? 1, there will be laws which are not having any impact on financials. Non-compliance would have been concealed. 3, whether a matter is a non-compliance or not, legal determination. 4, some non-compliance would have been there, company would have later rectified it and they removed that from books of accounts. That's it. Because of these 3 reasons, detecting a non-compliance with laws and regulations is extreme tough. Clear? Hello? That's it. That's it. 250 is done. Let's discuss PFI and then all that. Only important points I'll cover, which is exactly important from exam point of view. I will discuss this now. So what is this 3400 examination of prospective financial information? In this, what exactly important is, you see, forecast means prospective information based on assumptions. You see, they did not use which type of assumption, they simply use the word assumption. Whereas projection, if you see, PFI is based on hypothetical assumptions. Assumptions are different from hypothetical assumptions. Here assumptions means what? Assumptions are the one which reflect experience, anticipated experience with no provision for risk of adverse deviation. That's what I showed in the exceptional question. Yes or no? Generally a mix of best estimate and hypothetical assumptions are used to prepare PFI. Now here, even in assurance engagement 3400, the word auditor is used. That doesn't mean historical statutory auditor. Here the auditor who is giving report on assurance engagement, the auditor who is giving report on PFI, he can be a different auditor, not necessarily a statutory auditor. Then, by the way, this standard does not apply where you are examining PFI, which is expressed in general terms in annual reports. If you see any annual report, no, management discussion and analysis, company future outlook related information and all will be there. Even in under SA 720, we need to read other information. Other information means what? Other information included in annual report. And even in 720 standard, they say we are reading other information not to give opinion thereon. We are reading other information to find, inconsistency between other information and financial statements. So that's it. So just because we are reading something prospective financial information, some PFI we are reading, some PFI we are examining, that doesn't mean 3400. 3400, when it apply, when you are specifically appointed to report on PFI, your duty is to give a report on PFI, then only 3400 will apply. Then what is the nature of assurance provided? This itself straight away 3 marks question possible in exam. So PFI relates to future events which are not occurred, may not occur. Evidence used is generally future oriented, therefore speculative in nature. It is different from evidence which is there in historical data. Therefore the level of assurance is very moderate. That's what I told at the beginning. The level of assurance in prospective financial information examination is moderate level of assurance, whereas in controls on service organization, which is called as SOC audit, type 1, type 2 report we will give. Whereas in 3420 Proforma information, yes or no, there in both the cases the level of assurance that we give is reasonable assurance. Next. So an opinion cannot be expressed whether the prospective information, results shown in the prospective financial information will be achieved or not. So next. Now, can a CA in practice deal with prospective financial information? Absolutely yes, no problem. However, there is a clause. Which clause? Clause number 3, part number 1 of second schedule of CA Act. What it says, it does not allow CA in practice to associate with reports where earnings estimates and all will be there. It is prohibiting. However, if you are disclosing the source of information clearly, you are explaining the basis for forecast and state that you did not vouch accuracy. If you mention clearly these 3 points in the report that you are giving, then you are not treated as guilty of professional misconduct. Further, the same rule applies to projections based on hypothetical assumptions, where you clearly have to mention that you do not vouch the accuracy. Therefore, what is the duty of the member who is examining PFI? What is the duty of the members examining prospective financial information? What exactly the duty of the chartered accountant to examine, who is examining? First, verify best estimate assumptions are reasonable, hypothetical assumptions they are consistent with purpose of the information. Why are you preparing prospective financial information? Okay, for that what assumptions I can take, whether the assumptions are matching with that purpose or not, whether the assumptions are reasonable. Assumptions must be reasonable, assumptions must be matching the purpose for which the PFI is prepared, and ensure that PFI is properly prepared. See that the information is prepared based on these assumptions correctly. First, assumptions reasonable or not, check out. 2, whether these assumptions and the purpose are they aligning with each other or not. 3, whether the PFI is prepared based on this assumption, check out. Then see that the PFI is properly presented. Prospective information, the financial statements are there at prospective, whether they are clearly disclosing all the assumptions, material assumptions, best estimate assumption, hypothetical assumptions, are they clearly disclosing the assumptions or not, you should check. Most importantly, consistency. What is consistency here? Sir, PFI, suppose no, sir, historical financial statements, balance sheet, P&L, what is the format applicable for that? Schedule 3, part 1, part 2, schedule 3, part 1, part 2, part 3, depending upon the accounting standard applicable, depending upon the type of the entity, part 1, part 2, part 3, schedule 3 is applicable. This now PFI should also be prepared using the same format. The framework should be same. So the auditor should verify that PFI is prepared on a consistent basis with historical financial statements using appropriate accounting principles. In past, no, I'm using WDV method for depreciating machinery. Even in PFI, the method of depreciation should be WDV. Inventory valuation is FIFO. Even in PFI, inventory valuation should be FIFO. So the accounting policies that we follow, financial reporting framework that we follow should be consistent with historical financial information. And remember, all other auditing standards, whenever you are examining PFI, no, whatever exam, suppose you want to get external confirmation, you can get it. For that, 505 standard you can use happily, no problem at all. That's it. So these are the duties of the member who is examining prospective financial information, easy or not. So what are the duties of the member examining PFI? Assumptions you need to verify. Whether they are prepared based on the assumptions or not, you need to check. Whether assumptions are clearly disclosed on, you need to check. Whether the PFI is prepared on a consistent basis with historical financial information or not, you can use other standards wherever relevant. Then acceptance of an engagement. This is very important. That's what just now we saw in exceptional questions. What are the points the auditor should consider before accepting examination of PFI? What is the purpose? To whom it is distributed, limited or general? Whether best estimate assumptions used or hypothetical assumptions used, what information is included in PFI, what is the period for which they are covering, when to decline or withdraw. The auditor should reject or withdraw if assumptions are clearly unrealistic. Auditor must agree on terms with client through engagement letter. This is a formalized process, yes or no? And when you are reporting on PFI, no, the auditor should assess whether past financial data is reliable. First of all, no, if at all past financial statements are not reliable, and if any PFI is prepared based on the past data which is not at all reliable, generally we will not accept that PFI. Simple. So what are the points a practitioner shall consider before accepting an engagement? That's it, answer over. Then how should we conduct examination? How should we verify? What we should verify? Very simple. What you should verify? Key factors in examination. Here actually it is talking about factors. Okay, so when deciding nature, timing, extent of process, so when you are planning the audit, when deciding nature, timing, extent means what? Planning examination of PFI. When you are verifying, when you are examining PFI, when you are planning this examination, you need to plan the work, right? So when you are planning, you should consider what is the knowledge that you have in the previous engagements. Management is competent or not? What is the likelihood of MMS? Nothing but risk assessment you do. Extent to which affected by judgment. What is the level of assumptions and judgments? Sources of information. PFI is prepared based on some underlying in data, right? Some data from where the data has been gathered. Suitability. Engagement team experience with the business. So not only all that, our team experience, our team ability, that also we should check. Then evaluate source and reliability of the data such as budgets and all. If hypothetical assumptions are used, significant implications must also be considered. Ensure hypothetical assumptions align with financial purpose and not unrealistic. The hypothetical assumptions must match with the financial purpose, nothing but the purpose for which PFI is prepared. And finally, presentation and disclosure of PFI. This itself can be asked as a 4 marks question directly. Remember, examination procedures. What factors the practitioner auditor must consider while examining PFI? This itself. This also can be asked as a 4 marks question. And what are the points PFI must present and disclose? First of all, when you are reviewing PFI, the auditor must ensure the following in the context of presentation and disclosure. In the context of presentation and disclosure in PFI, you need to be careful about the following elements. See that the presentation is clear, informative, not misleading. See that accounting policies are clearly disclosed in the notes to the PFI. If policies are changed from last year, reasons and impact must be disclosed. Assumptions must be clearly disclosed. If assumptions are highly uncertain, that fact must also be disclosed. And the date of preparation should be clearly disclosed. On which date the PFI is prepared and which date assumptions are. Assumptions you have taken, no, assumptions are valid based on a particular date, based on the circumstance on a particular date. Subsequently, those assumptions may not be valid. If results are shown on a range, sometimes prospective financial information, we don't show amount, we show range bound. Okay, basis for setting it, and it is not biased or misleading. See, remember, in a prospective financial information, we don't give report on the numbers, we give report on the assumptions. We talk about assumptions, we report on assumptions, whether assumptions are reasonable or not. If assumptions are reasonable, using this assumption, PFI is prepared or not, we will check. In PFI, sales figure is there. I am not verifying accuracy of that sale figure. Whether that sale figure will be achieved or not, I am not saying that. I am talking about assumption. Yeah, PFI, the sales figure is prepared based on this assumption. Whether that assumption is matching or not alone, I will check. I am giving report on assumptions. Typically speaking, in a PFI audit, in a PFI assurance engagement, we are giving report on assumptions. We are not giving report on the ultimate financial information. Then report components. What are the points that we will mention in the report? Actually, in the, in general, no, we generally see reports in our classroom. In our classroom discussion, we open the reports and then see. But since it's a revision time, that day before exam, so it's very difficult for me to show all the reports and all. So just like an audit report, I hope you have seen audit report, right? Reporting chapter of mine. So just like an audit report, here it's an assurance report on PFI. This will also have the same information. So title will be there, address will be there, identification of information, reference to SCA, and you see opinion will come somewhere at last, in between. Generally in audit report, opinion will come at first. Remember, in entire 3000 series, 4000 of course we don't give any opinion. 2000 series, in both these cases, opinion comes somewhere in the middle in the audit report. In the report of the practitioner, middle somewhere it will come. Why? Because 3000 and 2000 series standards were not yet updated. Getting it? These standards were released somewhere before 2016, and before that time they have released. Whereas if you see 800 series now, opinion comes at first, title, address, then directly opinion, which is in line with our 700 format. Whereas 3000 series and 2000 series, opinion section of the auditor, conclusion section of the auditor will come somewhere in between. Very soon 3000 series and 2000 series will be amended. Probably May 26 attempt onwards, this will be amended. For May 26 for May 26, April 26 and Jan 27, 3000 and standard through 2000 standard might be amended. That's what I'm expecting. Okay, fine. Anyhow, opinion as to what? Whether PFI is prepared based on the assumption. See, we are giving opinion whether PFI is prepared based on assumption. We are not talking about true and fairness of the PFI. Then appropriate caveats, nothing but some disclaimers you should give in the report, which is very important. So sometimes in exam they'll ask you, the auditor, the practitioner must insert appropriate caveats concerning results indicated by PFI. What are the disclaimers he must give? Nothing but this point they'll give. State whether anything suggests assumption do not provide reasonable basis. Here actually this point, this one, and yeah, of course this one, yeah, 3, 4, 5, 6, this one. You must state in the PFI report you are giving, right? It may be a forecast report or projection based report, whatever it is. So state clearly that actual results may differ significantly from projection, and if a range is given, there is no guarantee that actual result will fall within the range. If a PFI is expressed in terms of lower bound, upper bound, like that range, clearly state that the actual result may not fall in this range bound, and you clearly mention that actual results may differ significantly from projections. For projections, clearly state that these are based on hypothetical assumptions, and caution readers against using them for any other purpose other than intended. See, the PFI is prepared for certain purpose. Alert to the users that they are not suitable for some other purpose. And if PFI is not adequately prepared or presented, a qualified or adverse opinion should be expressed or withdrawn. If at all prospective information is not prepared in accordance with the assumptions shown, adverse opinion. If assumptions are not at all reasonable, assumptions are unrealistic, completely, straight away adverse opinion or withdraw from the engagement. Either give a modified opinion or withdraw. Remember, if prospective information is not adequately presented, if presentation and disclosure is not adequate in the PFI, assumptions are not clearly shown, accounting policies are not clearly shown, you must give a qualified opinion or adverse opinion. If assumption itself is unreasonable, you should give adverse opinion. MCQ might come very clear, be clear. And that's it. Finally, you need to document whatever the evidence is there to support report on examination. Whatever the evidence that you gathered for giving a report on examination of PFI, you must maintain documentation. And remember, you must maintain know your client. Know your client means the client data, PAN number, all the details also you should maintain. That is important. That is KYC norms. In professional ethics you might have seen KYC norms. That's it. So this is 3400. Now look at 3420. One introduction I'll give you before I start the actual standard. In the standard, I missed to discuss the intro. So first I'm discussing intro once again. 3420. Assurance engagement to report on the compilation of Proforma financial information included in prospectus. Proforma financial information is included in prospectus. On that you are giving an assurance report. So it's an assurance engagement where you have to report on Compilation of Proforma Financial. Who compiled it? Management only. You didn't compile. They compiled a Proforma Financial information and included that in the prospectus. On that you have to give an assurance report. That time what you should do? Now first of all, when do a company prepare Proforma financial information? See, what is Proforma information? What is a Proforma adjustment? In this standard there are some terms: Proforma financial information, Proforma adjustment, unadjusted financial information of the acquirer, unadjusted financial information of the acquiree. Okay, like that some terms and all will be there. Once we enter into the standard, I will explain you those terms. First of all, when a company prepare Proforma information, this point if you understand, then the standard becomes natural, very easy. You know, recently, for example, the company has acquired one company. You know, this company, the company which we are auditing, for example, there is a company called Delhi, a courier partner, Delivery. They acquired a company called Sport on Logistics. Okay, this happened in 2021-ish year. Delivery company prepared as on 31st March of the last year a balance sheet and P&L. Very recently, somewhere in August or September month, they acquired one company, and now they're going for public issue. Now compared to last balance sheet date and the upcoming balance sheet date, in between they are going for public issue. In between what happened? Acquisition happened. In between what happened? Acquisition happened. In the prospectus, I know very well, you will give financial statements which are audited, latest financials. You are showing 31st March last year latest financials, but which does not include this acquisition. Now, what about the current year financials of this acquired merged entity? Merged entity financial position, merged entity financial performance, you need to wait for another 6 months. But now I am going for a public issue in between. So, here, last financial statements I presented without any acquisition. Recently, I acquired another company, and you want to know the latest acquired, this and combined financial position performance, you need to wait for some time. But now I am going for a public issue. People want to know combined position of the company, combined performance of the company, they want to know, right? But this year it is still not yet over business. Then do one thing. This company last year financials are there, right? What the company which you acquired. And you have your own company, right? Last year financials. You merge it and then show me. Combined financial position you just show me based on the last year only. Assuming acquisition happened as on 31st March itself. Assuming the acquisition happened at so and so date, prepare combined balance sheet and P&L of this company plus a company which recently acquired. I know on that day acquisition not happened. I know that. Just I want to know as a shareholder before I invest in the company. Okay, you already acquired recently one company and now you are asking for funds from us for some expansion purpose, further expansion. I want to know what is your combined performance. That financial statements are called as Proforma financial statements. That financials are called as Proforma financial information. You understand? When Proforma will come into picture in prospectus? So normally you see every prospectus will not have Proforma. Every prospectus that you notice, it won't have a Proforma financial information. Only the company last year financial year is over. Now before they publish a prospectus, some acquisition happened now. And now they are going for expansion. That time only Proforma financial information will come into picture as per ICDR regulations. That's it. This background is important. First of all, when a company prepare Proforma, this point you need to understand. Then the standard understanding becomes easy, because in standard the standard can be understood easily. But why first of all a company prepares Proforma? Why a company prepare Proforma financial assuming acquisition happened at so and so date? Why? Do you understand? That answer will be this. This is the reason why that particular Proforma is prepared. Confident. With this background, you continue watching this Proforma financial information standard, you will understand better. That's it. 3420. What is this 3420 is talking about? Just 1 minute. Just 1 minute. Yes, I'll continue. 3420. Assurance engagement. Be careful when you're writing headings, it must be completely correct, and headings will sometimes carry marks. Assurance engagement, okay, for what? To report on compilation of proforma financial information. Where are you giving it? Included in prospectus. This is included in prospectus. Fine. So what is this? Nothing but this is similar to audit of consolidated financial statements. What happens in consolidated financial statements audit? Holding company financial statements, subsidiary company financial statements will be there. You will apply some consolidation adjustments and the financial statements will be consolidated. Exactly this also. Proforma financial information is nothing but a consolidation of two different company financial statements where we apply proforma adjustments. Here in 3420, no? Here 3420, there is something called unadjusted financial information and there is something called proforma adjustments. There is something called proforma. Unadjusted, this is proforma financial statements or proforma financial information. Actually, the standard uses the word information. Proforma financial information. Proforma financial information. Whereas CFS, consolidated financials, what happens there? Holding company financial statements, subsidiary company financial statements, you will apply consolidation adjustments. So by applying consolidation adjustments on holding company subsidiary, you will prepare consolidated. Here, by applying proforma adjustments on unaudited financial information of acquirer company, unaudited financial information of acquiree company. There are two companies. One is buying company, another one is selling company. So generally the proforma financial information is prepared by buying company, nothing but acquirer company. Selling company is acquiree company. Buying company to buy this other company. Suppose acquirer, if this company want to buy another company, further the company need funds. Further the company want to go for public issue. They want to tell the public that if at all we acquire the other company, this is how our financial position will be. This is how our financial performance will be. Like that they want to show. So proforma financial information is nothing but financial information shown at a past date. If at all acquisition is already completed on that date, this is the very popular proforma financial information. Getting it right now? Now, very simple. How this proforma financial information shall be prepared? Is there any applicable financial reporting framework? Actually, it is called as applicable criteria. It's actually called as what? Applicable criteria. Is there any criteria for preparing proforma financial information? There is no criteria for preparing proforma financial information. SEBI in India has given some guidelines on proforma financial information. Those guidelines can be followed by those who are preparing proforma. We as an auditor has to check whether the proforma financial information is prepared using the criteria which is suitable or not. This is what our duty here. What is our responsibility in this particular report, in this examination, when we are assurance engagement to report on proforma financial information, what is our duty, Our duty is to report on whether proforma financial information is prepared in all material respects in accordance with the applicable criteria or not. That's it. This is what our objective. Look at. So, what is the objective? What is the objective? The entire objective. Ensure that proforma information is compiled by the responsible party. Who is the responsible party? Generally, buying company. Buying company is called as acquiring company. Acquirer. Better. The word is acquirer. Acquirer. R-E-R. Acquirer. Other company is called acquiree. Okay. Acquirer company is the one generally who prepares the proforma financial information. That is responsible party. So, what is the objective of the auditor? Ensure that proforma information is compiled by acquirer company in all respects based on applicable criteria. So, based on applicable criteria, did they prepare PFI correctly or not? Check out. What is applicable criteria? We will discuss that. What is applicable criteria? All that we will discuss that. Okay, we will come back to it. So, applicable criteria, and finally provide a report based on the findings. Now, compilation. This itself can be asked as a 3 marks. Write about compilation of proforma information. They'll ask you directly. Write about compilation of proforma financial information. Who will have to compile? Responsible party. So, responsible party gathers and present financial information to show the impact of a significant event or transaction on unadjusted information as if it has occurred at a selected date. Suppose, as on 31st March 2025, if at all, see, actually our company want to buy another company. This will happen somewhere in the December 2025. But if at all this particular acquisition happened at an earlier date, 31st March itself, if a significant event or transaction like my company acquiring another company, if this transaction happened at 31st March 2025 itself, how the financial position would be if I want to show that impact? That financial information is called as proforma. Proforma is not a real financial picture. It's an assumed financial picture. Remember, that is different from prospective. Prospective is future. Proforma is based on past. Now, so, what are the steps involved in compilation? Identify the source of unadjusted information. Source of unadjusted information is nothing but, acquirer. acquirer financial statements, acquiree financial statements. Now onwards I will use the word RER, acquirer, REE, acquiree. So acquirer financial statements, acquiree financial, nothing but buying company, selling company, both the financial statements. That is the source for information. Okay, and from that, no, we will extract the information that we want. We will extract the information. Now once you extract the information, apply consolidation adjustments. Nothing but here we call it as proforma adjustments to unadjusted information based on the purpose, and finally present the information. Proforma financial information with all necessary key disclosures. That's it. These are the steps involved in compilation of proforma information. Now, what is the practitioner responsibility? This itself can be asked as a straight 4 marks question. Okay, what is the responsibility? Very simple. I am not responsible for compiling. Hello, I am not here. Management will prepare it. This is the responsible party duty. Yes or no? The practitioner's sole responsibility is to report. My duty is what then? Report whether proforma information is compiled in all respects based on applicable criteria. Here, we provide a reasonable basis. It is a reasonable assurance engagement whether applicable criteria used to compile proforma information, is it reasonable or not? We need to check. What is applicable criteria? I already told applicable criteria is used. Applicable criteria is nothing but you prepared proforma information, right? Based on what? How you prepared it? You presented in some format, right? Financial reporting framework, right? That is applicable criteria. The criteria which is used by responsible party to compile proforma. For example, consolidated financials you are presenting. Some accounting standard 21, 27, 28, normal accounting standards, and some Ind AS is applicable. Yes or no? So consolidated financials you are preparing based on some accounting standard. Proforma financial information is prepared based on some criteria. Exactly. So these criteria may be established by standard setting organization, some standard setting organization like accounting standard board, international accounting standard board, or this criteria would have been given under the law, or this criteria would have been given under regulation like SEBI, or the criteria is developed by responsible party itself if there is no established criteria. Suppose if established criteria is not at all there, then responsible party will design the criteria. In such a case, you have even more further responsibility. If there is no established criteria, whether the criteria developed by the responsible party, that criteria, is it proper or not, you need to check. Next, what are the steps involved in this engagement? What are the steps? Generally this question may not be asked, but if at all they ask 3 marks question, what are the steps? First, I need to accept the work. Then I need to plan and perform the work. I need to get written representation. I need to form the opinion. I need to give the report. Simple. Now, engagement acceptance. When will I accept a proforma financial information related engagement? When will I accept an engagement to report on proforma financial information which is to be included in prospectus? When will I accept that engagement? First one, see that I have necessary capability and competence. Remember, this is what they are in the SQC also. A similar requirement is there in SQC also. So I need to check whether necessary capability and competence is there. Whether can I do this? By the way, I will show you. This is one company which prepared. There is a company called SJS Enterprise. There is a company called Plastic. SJS Enterprise is acquirer company. This is acquiree company. Now this company is preparing. They are doing some proforma adjustments and proforma condensed financial statement they are showing. Okay, they are showing proforma condensed financial statements, nothing but summary financial statements. So it's an 810 and 3420 put together. Getting it? Fine. So this is how generally consolidation processes happen. Two companies' financial statements will be there, consolidation adjustments will be done, final figure will be there. So exactly. So this is one report. You can find it in the Google if at all you want to see that. So KPMG have given an assurance report on this. KPMG have given an assurance report on this. This report is in 2021. Okay. So I'm just showing you if at all you want to. Okay. Now, when can I accept the engagement? See whether to have capability, competence. Knowledge and discussion with third party, responsible party. See that criteria is suitable and proforma information is not misleading. See that ultimately proforma information is prepared in the manner which is required for the user. It is not misleading. And see that applicable criteria is correctly applied, suitable or not. And then this third point not required. Now if unadjusted information or acquire or divest information has been audited. For example, acquirer financial statements, acquiree financial statements, they are already audited or either they were reviewed and where there is a modified opinion or emphasis of matter paragraph. That SJS, acquirer company financial statements, acquiree company financial statements. No, we use those two financials. That is called as unadjusted financial information in this standard. In this standard, we call them as unadjusted information. On that we apply proforma. Now, on the unadjusted financial information, nothing but the financial statements of independent these companies. Some modified report is there. Modified opinion is given or emphasis of matter paragraph is given. So consider, think whether that reference has to be given in the report that you are giving on proforma financial information. So you are giving a report on proforma. Should I include emphasis of matter paragraph, modified opinion, which is included in Acquirer company financial statements, acquiring company financial. So just check about it. Suppose no, our entity means what? Selling, buying company, responsible party. Suppose if the entity historical financials, so they were never audited. Yes or no? Determine whether practitioner can gain sufficient, the financial statements, unadjusted financial information is there, right? Which is extracted from the financial statements of the acquirer company. That acquirer company financial statements were not audited. In such a case, see whether you can gain sufficient understanding of the financial reporting framework. See whether that financial statements are reliable or not, whether that statement information is reliable or not. Same way, sir, acquiry is there. Their financials were not audited. Same. See whether financial reporting practices, will you get an understanding or not? Check out. And finally, enter into an agreement. So finally, once you concluded, what you need to conclude, whether you have a competence, whether criteria suitable or not, whether audited financial statements contains any modified report or modified opinion, whether they were not audited. So after considering all that, get an enter into an agreement. If applicable criteria is not publicly available, see that this is adequately disclosed, and confirm that responsible party is accountable. Responsible party is responsible for compiling Proforma based on criteria. And not only that, responsible party should give me access. They should give me access to what? Access to all the documents, additional information, access to the entity, nothing but acquirer company staff. Not only that, access to, if required, access to individuals within the selling company in a business combination. So these are the rights of the practitioner. Sometimes in exam they'll ask you the 7th point alone of a 4 marks question. When while accepting an engagement to report on Proforma financial information, the practitioner has to agree with the responsible party on few things. What are the various terms on which practitioner has to accept these points? That's it. Next, finally, once you accepted the audit, once you accepted the engagement to report on Proforma financial information, what is the work that you need to do? Planning and performing of an audit. The practitioner must assess whether applicable criteria is suitable and see that Proforma information is compiled in all respects based on criteria or not. How responsible party compiled, check out. Sources, get an evidence about from where the unadjusted financial information is extracted. Suppose if there is no audit report is existing on the source, perform procedures to confirm the information is right or not, appropriateness. Ensure responsible party has properly extracted. Get an evidence on appropriateness of Proforma adjustments. I told you, Proforma financial information is nothing but what? Proforma financial information is nothing but what? Unadjusted financial information. Unadjusted financial information plus Proforma adjustment. Unadjusted financial information is what? Acquirer financial statements, acquiree financial statements. Yes or no? This is unadjusted. So now, what are they saying? Get an evidence on the appropriateness of source. Whether the source is reliable or not. Check. Appropriateness means what? Reliability and relevance. Appropriateness means what? Reliability and relevance. Meaning, if no report, for example, on this there is no audit report exist. See that, perform some audit procedures to confirm its appropriateness. See that information is correctly extracted and see that adjustments are properly done. See that adjustments are properly done. Then only Proforma financial information will be proper. That's it. I hope this particular formula will give you a clear clarity on understanding that. Next, Proforma adjustments. Proforma adjustment means what? Sir, what is a Proforma adjustment? This is an adjustment to unadjusted financial information, which includes adjustments illustrating impact of event or transaction as if it occurred at an earlier date, ensuring consistency with applicable financial reporting framework and accounting policies. Presentation, evaluate presentation and review other information. Suppose Proforma financial information is included in prospectus. Prospectus contains some other information. 720 procedure you should apply. Yes or no? Practitioner must review other information in the prospectus to identify any material inconsistency. So in the prospectus, other information is there, right? That other information, is it inconsistent with the Proforma information? Identify that and then address 720 procedure. Do 720 procedure accordingly. Next, I hope you are clear, able to get clarity. Yes. Next. Yeah, I think perfect. Yeah. Finally, you must get a written representation. What representation? Generally, what representation we get? A responsible party. Practitioner shall require representation from responsible party. Responsible party shall give representation that they identified all Proforma adjustments. They identified all adjustments and adjusted all whatever is required, and which will illustrate the impact of a significant event or transaction as if that event or transaction happened at an earlier date. Proforma information, compliance with criteria. That too. responsible party has to give one more. They need to mention that proforma information is compiled based on applicable criteria. See that all adjustments are done, and see that proforma information is compiled using these adjustments based on applicable criteria. That's it. Finally, you will give opinion. Generally, we give unmodified opinion. When do we give unmodified opinion? Proforma information is compiled. Proforma information is prepared in accordance with applicable criteria. Then we generally give unmodified opinion. Suppose if proforma information does not meet applicable criteria, if proforma information is not prepared based on applicable criteria, so issued proforma information does not meet applicable criteria in all material respects. Suppose if at all it does not prepare, then you will give modified opinion. Generally, generally law regulation, if at all they allow modified opinion, then you give modified opinion as per 705 framework you will follow. Then suppose you want to give modified opinion, but SEBI does not allow. SEBI clearly prohibits that a proforma financial information report shall contain only unmodified opinion. Modified opinion is not permitted. But mistakes are there. In the proforma information is not prepared as per applicable criteria, I can give modified opinion. In such a case, ask the party to make necessary changes. Ask the responsible party, your responsible party, your proforma information is misleading. Please make changes. They are not making changes. Withdraw from the engagement, because you are supposed to give modified opinion, and the lawyer is not allowing you to give a modified opinion. He is not amending it. So withdraw or take a legal advice. That's it. Now, can I give emphasis of matter paragraph? Yes. A practitioner can also include emphasis of matter para to highlight significant issue fundamental to the user's understanding of proforma. The paragraph must only refer to matter clearly disclosed. The practitioner must obtain sufficient appropriateness that it does not affect all that. Remember, emphasis of matter paragraph can be used to refer to any matter which is disclosed in proforma information. In proforma financials, some important points for that. I can highlight it in emphasis of matter paragraph. That is one. Two, when I can use emphasis of matter paragraph, condition provided the matter does not affect nothing but the matter is not materially misstated. Very simple. The matter is not materially misstated. And finally, the report. So in the report, you need to mention a statement. You need to mention some statements. Statement that engagement was performed as per 3420. Statement that it's a reasonable assurance engagement and involves procedures to assess whether applicable criteria provide reasonable basis. Reasonable assurance engagement involves where we are performing some procedures to identify whether applicable criteria is reasonable or not, and the related proforma adjustments are appropriate or not. Whatever the procedures, generally what procedures we perform to get this reasonable assurance, the procedures that we perform depends upon nature of the entity, type of event or transaction, engagement circumstances. So there is no specific procedure to be performed. It depends upon the circumstance of the engagement. And you need to, how the opinion, the proforma information has been compiled on the basis of applicable criteria. The proforma information has been compiled based on the compiled on the basis stated, and documentation. That's it. You see, opinion comes somewhere at the last. In entire 3000 series and 2000 series, opinion section will come somewhere at the last of the report, because these standards were not yet updated. They were all issued before 2016, before 2017 they were issued. That's it. So with this 3420 is also completed. I think I have finished it within 40 minutes. Yeah, very good. That's it. So with this 3420 and 3000 both were completed. I hope you have thoroughly enjoyed this particular revision. Wait for the next revision. I'll come back with the next revision. Okay, 402 3402 will start. Thank you. Perfect. I hope you're all clear now. Yes. Yeah. So let's proceed discussion of two important standards, 402 and 3402. Even in the last November exam, every exam you see, many a times a question will come from this particular standards, any of these two standards. Okay. Sometimes both can also be tested if you're lucky enough. Now, 402 and 3402. First, pay attention to the heading carefully. 402, audit considerations relating to an entity using service organization. We are conducting audit of an enterprise, an entity, and that entity is using service organization services. At that time, what we need to consider specifically, that is what 402 is talking about. Means 402 is talking about auditor of the user entity. 3402, assurance report on controls at service organization. So this is a different standard. Again, there is a service organization, inside that there are some controls on that assurance report. That is 3402. Now in this particular standard, there are the terms, these are the terms which are very, very confusing for many. I made it in a simplest way to give you a brief idea about what exactly the terms are talking about. Now, before I discuss about this, I want to give you one example here. Suppose my company is a manufacturing company. I am a manufacturing company. For example, we are manufacturing. Best example which I have taken in class, HUL, Hindustan Unilever, which is manufacturing many cosmetics and all. Now, they had a tie-up with Amazon warehouse. nothing but Amazon e-marketplace, e-commerce operator is there, right? So with them they have a tie-up. Now what is the tie-up? In the Amazon, this HUL will list all their products and all. This Amazon, HUL, Hindustan, this company, nothing but user entity we call. Amazon warehouse is nothing but service organization. Now Hindustan Unilever will maintain majority of their inventory which they manufacture in Amazon warehouse. This company inventory, some 70-80% of the company inventory is completely sold through online directly through Amazon website. Now, every time when Amazon receives an order, this company will send goods to Amazon. Amazon will deliver to the customer. Why entire this process? Amazon told one option: we have a warehouse. You please keep all the goods manufactured in this warehouse. So the Hindustan Unilever can reduce warehouse cost. Fine. So Hindustan Unilever, whatever goods that they are manufacturing, they are storing it with Amazon. Inventory lying with third party. 501. That standard you can apply here, and not only that, 3402 also, 402 standard can also be applied here. What is 402 says about? Now Hindustan Unilever inventory is lying with Amazon. Now Amazon is maintaining inventory records completely, inflow, outflow, everything, and Amazon warehouse will periodically send Hindustan Unilever stock statements. They will periodically send stock statements. Based on these stock statements, Hindustan Unilever in the balance sheet valuation will be done. That's it. This is the entire the arrangement between Amazon warehouse and Hindustan Unilever. Suppose now I am doing audit of HUL. Getting it? I'm doing audit of HUL. For me, 402 standard will apply. Now 3402. Now this Amazon warehouse is maintaining inventory records, inventory of various third parties. One of the third parties, our client, Hindustan Unilever. Now we want to know, as an auditor, we want to know whether Amazon is maintaining proper inventory records, whether Amazon is maintaining proper internal controls on the inventory. We want to know. Now we want to visit the Amazon warehouse. Amazon warehouse is not permitting us. Sir, Amazon warehouse told, sir, like you, there are many other vendors, sir. Now, Hindustan Unilever is there, some other companies there, X companies there, Y companies there. Their auditors also want to visit me. I cannot permit every one of you to visit and check. When will I do business? Amazon warehouse replied that. So, but we want to know, we as an auditors of Hindustan Unilever want to know whether Hindustan Unilever inventory is properly safe or not with the Amazon warehouse. We want to know. For that, what Amazon warehouse did, they appointed one special auditor called service auditor. They appointed an auditor called service auditor. He will give a report. He will give a report called SOC report, Systems and Organization Control report, which is also called as type 1 report and type 2 report. The service auditor will give either type 1 or type 2. Okay, he will give some report, sir. So what report? He will give a report on controls maintained at Amazon. Controls maintained at Amazon warehouse, where these controls will affect various user entities, third parties. So controls maintained at Amazon warehouse, are they proper? Are they designed correctly or not? So whether user entity, financial items and all, whether Amazon is protecting correctly or not, this auditor will verify and then give a report to you. Now user auditor using this reports, getting it, 402 standard will apply. Now service auditor is appointed, right? He should give type 1 report, type 2 report, right? How to give this type 1 report, type 2 report? What service auditor has to do? What is his responsibility? That is covered under 3402 standard. If any of you understand this example, that's it, standard is done. Typically speaking, the standard is done. This example, if you don't understand and read blindly the standard without understanding the background, there is no point of reading that standard. Now that's about the standard. I hope you are able to understand clearly. Fine. Yeah. Now let's look at. Now there are some keywords which are involved in this particular topic, 402 and 3402. There are some keywords. Like, what are the keywords exactly? Just a minute. Yeah, what are the keywords exactly? Control set service organization, because SA 402. Considerations relating to an entity using service organization, audit report on control set service organization. You see, control set service organization, what does it mean? Control set service organization means what? Control description. There is a word called control description, and control objectives and related controls. What is it? Another word? Control objectives and related controls. Hindustan Unilever auditor want to know whether controls implemented at Amazon warehouse, are they proper or not? Now for that, what I want to know first, what controls they implemented? That is control description. Why is that control? That is control objective. What exactly they implemented? Related controls. These 2 points will be called as description of system. This is called as what? Description of system. Assurance report he will give, right? Service auditor will give assurance report, right? Assurance report on description of system. Just like description of system is like financial statements. In normal financial statement audit, we will give audit report on financial statements, right? But here we will give assurance report on description of system. Description of system means what? What control they implemented, what are the objectives, what process is exactly implemented. That is called related controls. Now in the standard, they will talk about two types of reports, type 1 report and type 2 report. What is type 1 report? Type 1 report is a report on both, by the way, there are two types of report, type 1 report and type 2. Both are regarding reasonable assurance only. In both the reports, we will provide reasonable assurance only. Who will provide? 3402. Service auditor will give type 1 report, type 2 report. Service auditor will give this report. Okay. What he will give? Service auditor will give reasonable assurance on whether on the description of system, as well as he will give a reasonable assurance on whether controls, like they have given objectives and controls, right? Whether these objectives and controls, are they suitable? What control we implemented, is it suitable for the objective or not? Yeah, so suitability of the controls to meet control objectives. Getting it? So we will give a report on description of the system, suitability of the controls to meet control objectives. If at all we are giving report on what description of the system, whether system is described correctly or not, and whether the controls are suitably implemented or not, if at all we are only talking about these two, that at a particular date we are talking about, then that's a type 1 report. Suppose we are talking about description of system, we are talking about suitability of controls, we are also talking about operating effectiveness of the control. You see here we are only talking about what system is described, whether it is suitable or not. Suppose we are also talking about operating effectiveness, and where in the report what controls they tested. How do we know whether a control is operating effectively? Service auditor will do testing. Under 3402, whether a control is operating correctly or not, whether a control is operating effectively or not, service auditor will do something called testing. So the testing related information, reporting on operating effectiveness, reporting on test of controls performed. If entire this is covered in a report, then that report is called as type 2 report. This is called SOC2 audit. We also call this as SOC2 audit, where when we are giving type 2 report, we don't give report on a specified date. We generally give the report throughout the specified period. Generally type 2 reports are given for throughout the period, whether controls are operating effectively throughout the period. Then you will also talk about test of controls throughout the period. Generally in our EVO class and all, we discuss about real reports. We take some reports and then discuss all that. But now this is a revision class before exam, that too we don't have that much time. We have to revise quickly. Okay, that's it. I hope you are able to understand. Now let me directly first discuss 3402, then we'll go to 402. 3402, assurance report on controls at service organization. Okay, what is this assurance report? Here Amazon has appointed one separate auditor, service auditor. He may be the statutory auditor, he may not be statutory, that doesn't matter. Okay, Amazon has appointed one service auditor. Now that service auditor has to give a report on controls implemented at Amazon, nothing but controls implemented at service organization, which will affect user entity financial reporting. These controls will affect user entity financial reporting. Suppose if Amazon is not maintaining inventory records correctly, if the controls of inventory are not correctly done, then reporting of inventory details to the user entity will be wrong. If reporting of information is wrong, user entity financial statements might be materially misstated. So that's it. So that's why Amazon appointed one service auditor. Dear service auditor, we implemented controls on inventory belonging to third parties. Whether these controls are operating effectively, whether the controls that we implemented, what controls we implemented, we developed a document. So on that, please give a report. That's what exactly Amazon is asking the service auditor. Now this SCA is applicable. Now this SCA is applies only if service organization is responsible, for making assertion about, okay, it's okay, I think that applicability is not a big deal. Non-applicability is most important. Non-applicability, what is it? Suppose Amazon appointed one auditor. Sir, we have so many controls in our organization. Please come and report on operating effectiveness of controls. You please come and check our controls and give a report. Where this report is used by Amazon only. Suppose if Amazon appointed auditor and the auditor is giving a report on controls, the user is also Amazon only. This standard does not apply. When the standard is applicable, Amazon appointed service auditor, where he will give a report on controls. That report will be forwarded to third parties. We call them as user entities. Then only the standard is applicable, where user auditor has to only report whether service organization controls are operated as described. Whatever controls Amazon described, whether are they operated as per the Amazon description or not. If at all, he just have to report on that. where the report is not given to any user auditors, user entities and all, this standard does not apply. Or where, this standard does not apply, where the user auditor has to report only on controls at service organization unrelated to financial reporting of user entities. Yes. No, where you are giving a report on controls at Amazon, service auditor is appointed, where he is giving a report on Amazon. Okay, Amazon related some controls. These controls are unrelated to user entities. Then also this standard does not apply. Indirectly, when this standard is applicable when service organization appointed auditor where he is reporting on controls, getting it, where that report is related to user entities, where that report is used by user entities and their auditors. 3402 will apply only when 402 point of view user entity auditor is asking this report. In that context only 3402 engagement will apply. Suppose if a company voluntarily appointed one auditor, service auditor, okay, one auditor. First of all, we will call him a service auditor only when 3402 standard applies. Suppose a company appointed an auditor voluntarily. Sir, please check all our controls in our organization, give a report. Compliance auditor they appointed, for example, where he has to check the controls and then give a report, compliance report. Where we are not giving this report to any third party and all, this standard does not apply. That's it. Very important applicability of the standard. MCQs they might be asking. Now, who is a service organization? Service organization is a third party organization which is providing services to user entity. Amazon warehouse is providing services to Hindustan Unilever. User entity is what? Who is using services of service organization? Hindustan Unilever is maintaining their entire inventory at Amazon warehouse. So Hindustan Unilever is a service organization. Now, why controls at service organization are important? Why controls at service organization? Now, Amazon is implementing so many controls relating to inventory. Why are they important to user entity? Very simple. The controls which are inventory related controls, if these controls are not functional, if they are not functioning properly, or if the controls are not correctly implemented, if the control design is inadequate, suitability is not proper, control is not proper, it will result into reporting of wrong inventory. Reporting of wrong inventory to user entity will affect their financial statements, material misstatement. Yeah, so impact. Controls at service organization may be relevant to user entity financial reporting, as these controls sometimes may relate to presentation, disclosure and auditing evidence. So that's it. Here we have given some example called payroll example. You can also see that payroll example. Okay, scope of the controls at service organization under 3402. What is the scope of the control? Controls includes controls over user entity information system maintained by service organization. Amazon is maintaining an information system, inventory records, which is relevant to user entity. Yes or no? So that is only included in the scope of control, and other internal control component at service organization related to this. Controls related to description system of relevant. However, remember, controls of service organization for their own preparation and presentation of financial statements are not relevant in this standard. Even Amazon is preparing financial statements. For that reason, they have some financial controls and all. That is not relevant in the standard. In this standard, which controls are relevant? Service auditor. Which controls are relevant for the service auditor? Those controls which are influencing user entity information system, user entity financial reporting. If that is affected because of the controls of service organization, those controls are relevant for the service auditor. Now ultimately, remember which control is relevant in the service organization. There are so many controls. Some controls are for their personal purpose, service organization. Some controls are user entity related. Now, which controls are relevant for the service auditor, which is not relevant, is a matter of professional judgment. That's it. User auditor means the auditor who audits and reports on the Hindustan Unilever user entity. Service auditor is a professional accountant. He is a professional accountant in public practice. He is a professional accountant in public practice who, at the request of service organization, provides an assurance report on its control. Service organization requested the auditor to give a report on controls at service organization, and that report is forwarded to user entity. For that reason, we are appointing that auditor is called a service auditor. What is his objective? Very simple. His objective: ensure that service organization system and controls, they are fairly presented. Like verify, you need to verify whether service organization description of its system. Service organization prepared one description of system. That system is forwarded to Hindustan Unilever. Whether the description of the system is it presenting design and implementation throughout the period or at specified date in a type 1 report. And you need to assess one more responsibility of service auditor. Service auditor has first responsibility whether description of system is fairly representing the actual system implemented. 2, whether the controls related to control objectives were they suitably designed throughout the specified period. Whether control objectives and the actual controls implemented, are they suitable or not, we need to check. Further, in case of a type 2 report, most of the service organization, they will go for type 2 audit, type 2 report only. They don't go for type 1 report. In reality, you rarely find type 1 report, you only find type 2 generally. Okay, if included, determine whether controls operated effectively to achieve control objectives throughout the period. So every process will have some objective. See, Amazon has implemented so many processes. One process is, for example, only when the goods are actually received and goods are actually delivered, inventory record will be updated. Because of this particular process, inventory record quantity accuracy can be maintained. If quantity accurately is there, automatically financial reporting will be accurate. So this is the control objectives. Getting it? And where service auditor will provide a report based on service auditor's findings in accordance with these objectives. So objectives are 3: verify description of the system, verify whether control objectives are suitably designed, and third one, in case of type 2 report, whether they are operated effectively, and finally you need to provide a report. So accordingly, there are two types of reports, assurance reports. There are two types of assurance reports which a service auditor will provide: type 1 report, type 2 report. Type 1 report is what? First of all, service organization description. First of all, there is a description of system. There is a document which talks about what exactly the system implemented, and a written assertion by service organization. Service organization will give a written representation in the description. What written representation? They will say that description is presenting the real system implemented and controls are suitably designed at a specified date. Service organization is giving one document inside that what controls they implemented, what controls they have designed, what controls they have implemented, whether they're suitable or not. They're giving all those descriptions. Getting it? And we, service auditor, now what service auditor, what is type 1 report? Type 1 report is service auditor report. This is actually type 1 report, this type 2 report. This is about the report. Okay, what is type 1 report? Type 1 report is a service auditor's assurance report about reasonable assurance about matters covered in. So I will read service organization management description letter document, all that. Whatever I read, no, is it real or not, I will verify, and then I will give a type 1 report. Now, whereas in a type 2 report, no, service organization management, no, they will also mention that they will in written, they will assert that controls are operating effectively throughout the period. So service organization management is saying controls are operating effectively. I need to give a report on the description. So for that, what I will do, I will give reasonable assurance, and I will also do test of controls in order to know whether controls are operating effectively or not. So accordingly, type 2 report will contain description. One more paragraph in the type 2 audit report. In type 2, we will give assurance report, right? Let's use the word assurance report. We will give a type 2 assurance report, right? In that report, we will have one more para. The test of controls performed and results thereof. Like that, one more paragraph will be there. Okay, then how do I proceed with this engagement? But before I go into that, let me directly tell you about modified opinion. When service auditor will give a modified opinion, directly they can ask you this as a 4 marks question. Okay, service auditor will give modified opinion if he concluded that description is not fairly, like what Amazon in reality, what controls they implemented and what they are showing in the description document, they're not matching. Controls were not suitably designed. They designed some controls, but they're not suitable for the objectives. Or controls are not operating. If controls are not operating effectively and I'm supposed to give a type 2 report, then also I will give a modified opinion. Or I am unable to obtain sufficient appropriate audit evidence. If service auditor is unable to obtain evidence, then also we will give modified opinion. Then the service auditor opinion shall be modified and assurance report must clearly explain the reasons. Further, service auditor has to document. He must prepare documentation where an experienced auditor can understand how you planned the work, what is the result, and significant matters. Experienced auditor should understand all these three. In such a way, service auditor should document. So straight away, this can be asked as a 4 marks question. Documentation can be asked as a 3 marks question. Next, and I told you, this itself can be asked as a straight question for 4 marks. Write about additional reporting requirements in case of type 2 report. Generally in a type 2 report, no, there will be another section, separate section on control testing. In type 2 report, title will be there, address will be there, identification of controls, so much will be there, opinion section will be there. Apart from that, there will be another separate side heading. Okay, that side heading will be test of controls performed and the results. Here you need to clearly state which controls tested, whether testing is on a sample basis 100%, what kind of testing you did, and you should also report deviations. If deviations are identified, specify the sample size and what deviations exactly, describe that. Even if the control objectives are achieved, sometimes no deviations will be there. What control they implemented, that control might not be working effectively. Some deviation might be there. But because of this, there is no MMS. Because of this, there is no fraud. Because of this, there is no error. Even if there is no error or fraud, control is deviated, right? Control is not operating effectively, right? That has to be reported. That's it. So these are the additional reporting requirements, which itself can be asked as a straight question. Then this is regarding service auditor's assurance report. This is not a big deal. So This is not required. It's okay. I think in this there is nothing important. By the way, date of service auditor report. It must not be earlier than the date when service auditor has obtained sufficient appropriate evidence. That's okay. That's a normal thing. It's okay. No issue. So that is not important. Further, representation point, most important, straight away 4 marks question. You know, when a service auditor is conducting, you know, when a service auditor is providing assurance on controls at service organization, in the process of that work, service auditor should obtain some written representations. What are they? Obtain written representations from a service organization stating, reaffirm the assertion regarding description of the system. The described system, no, get once again a representation that the system description is correct or not. Further, you should get a representation that all relevant information is given to you. Further, you need to get a representation that management has disclosed the service auditor. Service auditor is asking declaration from company. Dear company, give a declaration that you showed everything to me. What exactly? Non-compliances, frauds, deviations, which will impact user entity, because my report is being used by user entity. So you have a responsibility to show me what are all non-compliances you did. You know, design deficiencies in controls which management is aware of. Instances where control fail, where and all control fail, when and all control fail. They will have a list of control failures, exceptions reports that they need to disclose. Subsequent events that could impact assurance report. For all of this, I must specifically obtain written representation from management of service organization. This is important question. Then, now, acceptance and changes in terms of engagement. This is most important. Another important question in this particular standard. So how can I proceed with this engagement? First, service auditor. No, whenever a company requested you, a service organization requested you to act as a service auditor, immediately you should not accept blindly. SQC says you should check competence and capability. That's what once again here they highlighted. The service auditor must ensure capability and competence before accepting. Verify criteria used to describe the system. Some COSO framework, COCO framework, COBIT framework, some framework company will use for controls related description preparation. Okay, so whether the criteria followed by the management of service organization to prepare description of system, is it suitable and available for user entities and user auditors? Check out and see that the engagement scope and system description of useful, like service organization is appointing me to do audit of some controls, right? Whether these controls are relevant to user entities, check out. If service organization requests a scope change, suppose now after you were appointed, they are asking you to change the scope, see whether it is reasonably justification is there or not. So very important. So criteria, it's okay. I think that is enough. That's enough. Okay, so these 2 points are important. That's it. 3402 standard is completely done. That's it. Very simple. The standard is very simple. I don't know how many of you thought it's so complex, so much is there. No, it's very simple. Now, having understood 3402, now we'll go back to 402 standard. Okay, 402. Now 402 is a little more complex compared to 3402. Now look at this 402. Just 1 minute. I hope you're now you got now little clarity on what exactly 3402 is about. Just comment, just give your comments. I'll be happy to see whether you're understanding properly or not. Whatever questions I'm touching, wherever I'm saying that this can be asked as a 4 marks question or 3 marks question, 2 marks question, if you're studying that confidently, if you're revising that confidently, sufficient. Very tough standards actually. 402 content is simple, but the terminology used is very tough in the standard. 402 audit considerations relating to an entity using service organization. Fine. So now I'm the auditor of HUL. I want to ask Amazon, dear Amazon, our HUL inventory so much is there with you. I want to come and physically verify. For that Amazon told me, sir, you can't come physically, sir. We have so many third parties like you. If everybody comes physically, how Amazon will do business? Fine. That their concern is right. But I want to know, as a HUL auditor, my inventory is there with the Amazon. Whether the inventory is maintained in a proper good condition, existence and condition proper or not. Whether quantities maintained properly, because records are maintained by them. I want to know whether they're maintained properly. For that, what Amazon told, sir, don't worry. We will give you type 1 report, type 2 report. What is type 1 report, type 2 report? Sir, don't worry. You are the HUL auditor, right? You want to know whether our inventory records are maintained correctly. Whether your inventory records are maintained correctly here or not, you want to know, right? For that, we appointed one auditor, sir. He already gave a report on whether we are maintaining reports correctly or not. I will forward that report to you. Oh, the service organization is forwarding me type 1 or type 2 report. Now, in this context, what is my responsibility exactly? What are all I need to consider? That's what 402 standard is talking about. Now, if you see in this diagram, description of system, you see description of system, it includes complementary user entity controls. There is something called complementary user entity controls. What is complementary user entity controls? See, whenever our company, Hindustan Unilever, whenever we are outsourcing some work to them, we also have to maintain some records, right? Regarding whatever we are outsourcing there, some incidental records and all we need to maintain. So for that we need to implement some controls, right? These controls are called as complementary user entity controls. Complementary user entity controls are controls implemented by user entity, which is assumed by service organization things to be implemented, and accordingly they will plan their services. Sometimes they are correct, but if user entity controls, complementary user entity controls, if they are not implemented effectively, misstatement will happen in financial statements because of our client only. Now you need to check, you need to know, I mean sometimes 315 standard says we have to verify operating effectiveness of our controls as well as service organization controls. That time complementary user entity controls, are they operating effectively or not, also we have to know. Next, fine, I'll come back to it. Now tell me, services provided by service organization, are they relevant to user entity financials? Yes, they are relevant. When they're relevant, a service organization services affect user entity financial reporting if they impact any of the following. If at all service, Amazon is providing me services, right? Some services they are providing to HUL, right? If at all those services impact some transactions in the HUL, getting it? Or if they're impacting procedures where accounting is affected, or if they are impacting accounting records, or if they're impacting events and conditions related to financial statements, or they're impacting financial reporting process, or they're impacting journal entries, non-recurring entries, unusual entries, in all these cases service organization services are deemed to be relevant to user entity user auditor. Straight away a 4 marks question. What are the factors the auditor has to consider to identify whether service organization services affect user entity financial reporting? Service organization services, they are affecting user entity financial reporting. Then only those services I am bothered as a user auditor. That's it. So objectives of the user auditor. Here, types of service auditor report, exactly I already spoke. Type 2 report, type 1 report. Type 1 report is what? It's a report by service auditor where he is providing reasonable assurance including opinion on description of the system, objectives and related control, suitability on a specified date. Whereas in a type 2 report, it's a report by service auditor giving reasonable assurance on opinion on the description of system, control objectives, suitability, operating effectiveness. Not only that, in a type 2 report additionally operating effectiveness will be there as well as E point. Okay, description of service auditor's test of controls and results will also be there. So in a type 2 report, what test of controls he performed, that will also be mentioned. Then understanding of the services. This was asked in November 24 exam already, but don't think, many of you will think since in November 24 it will not be asked once again. There is no guarantee like that. Okay, so understanding of the services provided by service organization. So as a user auditor, I must understand what kind of services they are providing to me. First, what is the nature of services? Are Hindustan Unilever inventory is maintained in the Amazon warehouse, that inventory physically they are maintaining, records also they are maintaining. So understand the nature of service, understand nature of services, and what is their significance to the user entity, what is their effect on the user entity controls. And this you can get an understanding from, this information you can get from user manuals, service organization and user entity will have some contract, all that. Okay, materiality. Also understand, second thing that you should understand is materiality of the transactions processed. Our client Hindustan Unilever inventory balance sheet, 40% of the balance sheet asset total value is inventory. Inside this inventory 90% of the inventory is with the third party. So what is the materiality of the transaction processed by service organization? If the transactions are immaterial, yes or no, they might still be significant due to the nature. Okay, fine. This point is not required from exam point of view. This first point is enough. And then second factor, first understand the nature of services service organization is providing. 2, materiality of the transactions affected by services provided by service organization. 3, degree of interaction. Understand the degree of interaction between the user entity and service auditor. Generally, how this refers to how much control the user entity has over service organization processing, how far we are influencing, how far they are influencing. Relationship. Also understand, is there any relationship between HUL and Amazon warehouse? Are they related parties? Identify. Understand the relationship between user entity and service organization. Like look at the contractual terms and conditions, look at what services they are providing, see whether there is a huge dependence or not. Try to identify any related party relationship is there or not. If related parties, no, 550 standard also will apply. Next, then See, obtaining an understanding of internal control relevant to audit. Generally, whenever we are doing audit, no, whatever internal control relevant to audit, we must obtain understanding. This is what mentioned in 315 standard. Yes or no? So the user auditor evaluate, design and implementation of relevant controls at user entities. So that is our responsibility. But some transactions are processed by service organization. Related to that, controls are also maintained at service organization. Therefore, I need to understand controls at service organization. Since I want to understand controls at service organization, I am taking type 1 and type 2 report. Simple as such. Okay. So the user auditor get a sufficient understanding of nature and significance of services provided by service organization and what is their effect on the user entity internal control. What exactly the nature of service provided by them, what is their impact on the user entity internal control, get an understanding. Sometimes we are unable to obtain understanding from the user entity. When I'm interacting with user entity, they are unable to explain me clearly what exactly they're doing. In such a case, I will directly ask type 1 type 2 report, obtain type 1 type 2 report. Suppose type 1 type 2 report service organization does not prepare or they're not sending me, then I will contact organization through the user entity to obtain necessary information. If at all still I'm not getting information, then I will visit the service organization, and perform processes to gather necessary, or I will send another auditor to provide necessary information. I will use another auditor and send him there, ask him to get the entire information and then send it back to me. So this itself can be asked as a 4 marks question. Wherever I'm telling marks can be asked, that only is important. This itself can be unable. If user auditor cannot obtain sufficient understanding from user entity regarding services provided by service organization, then user auditor can request type 1 type 2 report. If type 1 type 2 report is not there, contact the service organization. If they're not responding, visit the service organization. If you don't have time to visit, or if it is difficult for you to visit, it is there at a very remote location, arrange another auditor there to visit service organization. Any of this can be done. Then okay sir, type 1 type 2 report they gave sir. Type 1 and type 2 reports by user auditor of user entity using type 1 report or type 2 report. So when you're getting type 1, first before start reading it, type 1 report, type 2 report is given by service auditor, right? Who is he? Is he a chartered accountant like you? Is he also competent professionally? The service auditor's competence check out. What is his independence check out? Is this guy independent from the service organization? Amazon appointed service auditor. What is the relation between them? If they're unrelated to each other, then that report I will trust. Adequacy of standards. Service auditor gave type 1 type 2 report, right? By following which standards he conducted that work, check out. He also followed 3402, then happy, you will trust it. And if auditor is decided, okay fine, I first decided service auditor's professional competence, independence, capability, competence, standards, all that. I felt he's very genuine. Now I decided to use his report. Then I will evaluate whether description and design of controls is as at a particular date or is it for a particular period. Is it relevant for the audit? Okay. So now service audit report is there. Amazon has given type 1 type 2 report. I am doing audit for 24-25 financial year. Amazon he has given type 1 type 2 report of 21-22 3 years back report. That is not relevant for me. So evaluate whether description design of controls is for a date or period. Whatever the date, for whatever the period type 1 type 2 report is given, is it appropriate for our audit? Check out. Okay, there is a in 315 there is a requirement. Once in 3 years we have to do an ad hoc complete review of internal control system. It's already more than 3 years. Type 1 type 2 reports were older than 3 years. May not be useful for me. Next, assess sufficiency, appropriateness of evidence provided by the report, all that. Then complementary user entity controls. Suppose I'm the auditor of HCL. I identified complementary user entity controls. If that is the case, you need to check whether user entity has designed and implemented complementary user entity controls. What is a complementary user entity controls? This itself can be asked as a 3 marks question. These are the controls which service organization assumes. Service organization assumes. What they assume? They assume that we implemented. Okay, that will be implemented by user entity to achieve control objectives, and they are identified by the service organization description of the system. Fine. Finally, responding to the assessed risk of MMS in relation to services provided by service. Whether check if sufficient appropriate evidence is available from the records held at user entity. If not, perform additional process to obtain necessary information. If user auditors risk assessment expect that controls a service organization is operating effectively, actually this is not that required. It's okay. This is a bit tough. If at all those of you have not studied, leave it. It's okay. No problem. Using a type 2 report as auditors. This was also asked many times. A 4 marks question. When user auditor decided to use type 2 audit report, type 2 report as an auditor, what extra points you should consider? Assess whether description of the system, design of the system, operating effectiveness of is it for a particular date or is it for a particular period appropriate for the audit. In type 1 also we have seen similar point. So type 2 report they have given when the type 2 report is prepared, for what period it was addressing, is that period, is that date relevant for my audit? Suppose if the type 2 report is very old report, I may not use it. Next, complementary. the user auditor must determine whether complementary user entity controls are identified by service organization are they relevant. If so, understand whether user entity has designed and implemented the control. If required, test the operating effectiveness. So when you're using type 2 reports, these are the type 2 report talks about controls implemented by service organization at service organization. Now in the description document, no, complementary user entity controls also they spoke about. Oh, our client also has to implement some controls relating to this outsourcing activity. Whether these controls are operating effectively or not also you should check. So when you're using a type 2 report, first to look at when that report is belonging to. Is that report appropriate for my audit, relevant for my audit? 2, if complementary user entity controls are also there, see whether they are operating effectively or not. And the user auditor must evaluate the time period covered by test of controls and time lapsed since the last testing. This type 2 report talks about some test of controls where when they tested long ago, see whether the test can be relied or not. And the user auditor must assess whether test of controls performed by service auditor and the results are they relevant to the assertions in the user entity financials. So by the way, I'm talking about inventory. So and the service auditor has also performed some test of controls on inventory. Are they relevant or not? Check out. Then suppose no, you identified. Okay, so user auditor, no, I will ask our management, I will ask our client HUL, dear HUL, did service organization reported you any material misstatement in inventory records, any non-compliance with loss, any uncorrected misstatements, any frauds? Remember a similar thing, service auditor also will get a written representation from service organization that any frauds, non-compliances, MS, all that. Yes or no? Here user auditor will ask user organization, user auditor will ask user entity, dear user entity, did service organization intimated you any frauds, any non-compliances, any material misstatement? Please give me. And the user auditor must assess how such matters affect nature, timing of further audit procedure. Finally, this is very important. You know, regarding this, one exceptional question is there. In your ICI, test your knowledge question number 13 is added. Inside this, what happened, you know, the type 2 report was provided by service organization, which was based on carve-out method. That method and all irrelevant, okay? Akram, while reviewing unmodified report, or you see this one, unmodified report drafted by his assistant, found that a reference has been made to the work by service auditor. Oh, we are the user auditor, right? We are giving audit. We are giving opinion on Fab Limited. You know, we are the auditors of Fab Limited. On Fab Limited, our audit firm decided to give unmodified opinion. And assistant already prepared the audit report with unmodified opinion. Inside that, service auditor name is given. Not permitted. You see now, you know, suppose no, after doing all this, no, in which context, services of service organization our client is using, no, on inventory related thing, on inventory, we decided unmodified opinion is required. Enough. We decided to give a positive opinion, unmodified opinion. In such a case, in audit report, can I talk about service auditor, service organization, all that? No, prohibited. The user auditor should not refer to the work of service auditor if audit report is unmodified unless mandatory in law. If required, the report must clarify. Suppose no, sir, law says it is mandatory, sir. That's why we are reporting, sir. If at all you are talking about service auditor, your report clearly state that reference will not reduce user auditor responsibility. Just because I'm talking about service auditor, that doesn't mean my responsibility is reduced. Ultimately, inventory related controls are operating effectively or not is my responsibility only. Next, suppose no, after using type 2 report, I got to know that inventory records are materially misstated. To that extent, financial statements are materially misstated on inventory. I requested management to rectify inventory valuation. They did not. So I decided to give modified opinion on inventory. Now I have to explain in basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion. Why I gave a modified opinion, I have to give reasons. No. To make the people understand the reason behind my modification, I can refer about type 1, type 2 report, service audit report, all that. Again, just because you are referring in basis for modified opinion section regarding service audit report, that does not reduce your responsibility. That fact you should mention. The user auditor must modify the opinion according to 705. If they cannot obtain sufficient appropriate evidence about services provided by service, or you are unable to obtain evidence, then you will modify. 2, if reference to service auditor work is relevant for modification, please clarify that reference does not reduce auditor's responsibility. 1, when you are unable to obtain evidence, no, you give modified opinion, or you got an evidence and concluded material mistake, that time also you give modified opinion. If reference to service auditor work is relevant, see, you want to tell the people why you modified. I modified because service audit report I could not obtain, or service audit report I obtained, I found a material misstatement based on their report. I want to tell the reason. For explaining reason purpose, you can refer about the service auditor's name, and such a reference will not reduce the user auditor responsibility. Now in this case, you know, on Fab Limited, you know, the auditor is there. Who is the auditor here? Akrama something, yeah, CA Akram. while reviewing unmodified report which is drafted by the assistant found that a reference has been made. You are saying unmodified audit report, reference is given to service auditor, all that is not correct. Here you see, in the view of the above, contention of Akram in removing reference to work done by service auditor in order, because it's an unmodified, cannot refer to be, correct. So that is proper. Yes or no? Is in order. Is in order. In order means what? It's proper. That's what they mean to say. So the user auditor shall not refer to work of service auditor in the user auditor's report containing unmodified opinion unless required by law. If at all such a reference is required by law, user auditor shall indicate that reference will not reduce the responsibility of the user auditor. That's it. 402-3402 is completed. 45 minutes it took. It's okay. Fine. I covered decently at least. That's it. This is a newly added question. Here, no, carve out method and all that wordings and all used. Don't get tense, leave it. Okay, this is regarding reference in the audit report only. This reference in audit report is exactly similar to SA 620 standard. In SA 620, using the work of auditor's expert. Can an auditor refer about auditor's expert name in the auditor's report? No need in case of unmodified opinion. But if you are giving modified opinion based on his findings, to tell the people why you give a modified opinion, you can refer about his name. That's it. Are you clear? Ultimately, remember, you are only responsible to obtain. You are only responsible for obtaining evidence on controls at service organization, operating effectiveness. Everything is your responsibility, primary responsibility. Okay, but since you are unable to verify that, you are taking type 1, type 2 report. You are using it and then concluding. That's it. Clear? Yeah. So with this, 402-3402 is completed. That's it. I hope you thoroughly enjoyed. Please give your comments if at all you thoroughly enjoy. You thoroughly understood. I understand. I finished very fast because exam here, getting it. So I tried my level best to bring you some clarity on 402-3402, such a very complex topic. That's it.